Meloni's government is working on a plan to raise an extra €1.5 billion from Italian lenders. This would be by postponing their tax deductions. So we'll continue to watch that sector. We often get news flow surrounding thinking there. And JP Morgan turning more cautious on the European short-haul airline sector. So we'll watch airlines, including EasyJet, at the open guide.
We certainly will. We'll keep an eye on all of that. I'm going to throw into the mix what is happening with Kering right now. Keep an eye on UBS. There's plenty of other stock stories that we need to be focused on as well. The tech read across from the United States is going to be interesting. The FTSE 100 out of the gates with a mild negative first print. We are down less than 0.1%. We'll see what else happens across Europe. We're expecting a very flat, very cautious start. There's a lot of major risk events about to emerge for the market to digest. Retail sales is going to be one of those big ones out of the United States. Then, of course, we get to the Fed meeting, which is going to be resolved tomorrow. Got Trump here. What's going to happen Thursday? I think that's going to be interesting for Keir Starmer. Friday, obviously, we've got to factor in this call between Trump and Xi. There's a lot of things coming up. So the market taking a very cautious approach this morning. The Stock 600 is up by less than 0.1%. The IBEX is absolutely flat. The CAC 40 is mildly negative. The FTSE 100 is barely budging. We await in anticipation of these key events, and that is when the trades may kick in, but not yet. That certainly seems to be the narrative, Val.
Well, when it comes to the sectors picture, it looks like we've got 12 in the green to start the first moments of trade. The remaining 8 in the red. At the top of the basket is basic resources, auto parts, technology also at the top of the basket. And this is interesting because tech really did outperform yesterday, SML being one of the biggest drags to the upside. That looks like that tech trade is continuing today. At the bottom of the basket, you have things like insurance, telecom. I also want to note that when it comes to single names, we have EasyJet down over 2.5%, that weighing on the airline sector. That's after, as you mentioned, Anna, JP Morgan said they were cautious on the short-haul flight industry here in Europe.
Yes. Let me just weigh in on a couple of names that are on the move this morning. So starting with the basic resources sector, you mentioned this, Valerie, that's doing pretty well. There's some gold miners in the mix there, and we should mention that gold touched another new high, didn't it? So Fresnio is doing well on the back of that one. And then the auto parts sector doing okay. Yep. And I noticed that Ferrari has a new buy at Berenberg. So, another day where things are kind of quiet and some of these ratings changes are cutting through. I think
there's a note out on some of the gold miners this morning, so that may also be lifting some of those names as well. In terms of the downside, it's interesting. So L'Oreal and Unilever and Haleon are all soft this morning in the consumer side. The pharma space is once again soft as well. It was a story yesterday, so just bear that in mind too. There doesn't seem to be a kind of clear sense of direction here, though, coming out of Europe. SML is the top gainer. Tech seems to be performing reasonably well. Ferrari's up on a note. Rheinmetall is trading a little bit sort of softer, a little bit firmer as well this morning. But I'm struggling to see an obvious kind of narrative outside of broker notes having an impact on some of the single names.
Yeah, that's it then. Just waiting for the Fed. Is it Wednesday yet? Is it Thursday morning yet, in fact?
Waiting for the Fed, that decision coming out on Wednesday evening. Joining us now to discuss central banks and markets is Bilal Hafeez, Macro Hive CEO. Thanks for joining us this morning. And I hear you're calling for a 50 from the Federal Reserve.
Yes, we are. I mean, it's going to be a very close call. So it's, we're saying like a 52% chance of a 50, but we're leaning towards 50. And the reason for that is that there's been a clear deterioration in the labor market. We've had the benchmark revisions, which show much slower payroll growth. We've had negative payroll prints now, if you look at the private sector after the revisions, and wage growth has been slowing as well. So taking that all together, we think 50 would be our base case for Wednesday.
Do you think that would come alongside Powell showing some urgency on wanting to get to neutral, even below neutral? How would he frame this in the press conference?
Yeah, it's a good question. I mean, the way it would get framed would be we'd see a change in the dots for next year, and he probably would talk more about trying to move policy from restrictive to neutral. He's always reluctant to talk about what the level of neutral is. He tries to stay away from discussions of R-star and so on. But I think the narrative will start to shift from we're moving from restrictive and we want to move to neutral. I think that will be the rhetorical shift.
I mean, Bill, doesn't 50 smack of an emergency and some sort of panic, or does it not anymore? I mean, we had a 50 last year, didn't we?
Yeah, we had a 50 last year, and some significant figures at the Fed, like Waller, have he called for an easing earlier a couple of months ago. So, while it could sound like it will certainly be unexpected, but I think there'll be a good rationale for it. And whether the market views it as an emergency or not is up to the market. But I think there's enough of a case that it could be justified.
Okay, and this could, what market impact would that have? Continue to weigh on the dollar? I know you've been quite negative on the dollar for some time, and you would expect that to continue then on the back of
absolutely. So I think this would help spur broader dollar weakness. In recent months we've seen more moderation in the dollar weakness story. I think that will sort of expand.
Do you think that gets talked about in the Fed meeting? I mean, with Myron around the table and.
Well, I mean, I don't think they'll talk about it so much at the
He might
Fed.
try.
Yeah, he may try and talk about this as a sort of longer-term story of them trying to sort of bring about change in the trade balance and so on. But I think for now, if you look at Mirren's stance, it would be there's a deterioration in the labor market. People's fears about the tariffs are overdone. Mirrors often talk about the tariff derangement syndrome that everyone sort of faces, and so he'll argue that inflation's not the problem, labor market is. The labor market's weakening, and so we have to cut rates.
Is this sort of sideshow compared to the fact that we are seeing the White House trying to take the Fed over? How seriously do we take that? The boss of the Council of Economic Advisors is going to have a chair at the FOMC today.
I mean, I think this is an important and big shift, that we're seeing in the Fed. I think already it's had an influence on the Fed. We have a model, an AI model that interprets the hawkish dovishness of Fed statements. And since Trump increases rhetoric against the Fed, they became much more dovish since then,
right?
Separate to the data. So it's already having an impact on the Fed stance.
Is this an economy that, therefore, we could expect to be run hot? Is that something we should take seriously? That you run the economy hot, you accept the inflation, you get the nominal growth, you deal with the debt. How far does this go?
Yeah, we'll have to see. I mean, the one thing we have to remember is, in the end, while Trump and the administration can have an influence on the Fed, the Fed, even with appointees from Trump, will still have a lot of leeway in terms of how they implement policy. The Fed's probably the most independent it can be of any agency that exists within the US. So that means that they'll try to run as hot as possible, but they will keep an eye on things like inflation expectations and those sorts of factors, which at the moment are fairly well anchored. So at the moment, at least, that doesn't suggest that the market is viewing it as a loss of credibility by the Fed.
Bilal, do you think that the Fed has to be reinvented?
It's a good question. I think all central banks need to be reinvented to some extent across the world. What we saw after COVID was that they were too late to hike. That was one issue. Another issue is all central bank balance sheets, the Fed and others, are way too big, so that there's an issue around all of that. And then also, if you look at, say, the Fed, they changed their framework just as inflation took out by introducing FATE. So that tells you the timing of the framework was wrong. So that tells you there is a need for reform. The question is what those reforms should be. For me, dealing with the size of the balance sheet is a big fundamental issue for all central banks around the world, and that the relationship between the balance sheet and the fiscal side is probably going to be the big story for years to come.
In that manner, do you think that central banks should have the power to undertake quantitative easing?
I think that it should be heavily curtailed, especially if you're in an environment where fiscal deficits are running much larger, because otherwise you run into the risk of fiscal dominance, where the monetary authority and the fiscal authority start to merge together.
Does the Treasury have control of that? QE.
Well,
because that's an argument that's being made.
Yeah. I mean, the Treasury can. They can set up an account to buy Treasuries back. Yeah. They can do buybacks, certainly, but they can't necessarily print money. So what we're saying there then is, should the Treasury take control of the central bank balance sheet? And I think that's not the appropriate action to take.
And in a UK context, Bilal, because of course the losses that the Bank of England makes on QT feed through to the UK Treasury. So how should that conversation? How should that conversation develop, do you think?
Yeah, absolutely. And I think that is one mechanism to curtail the influence of the Treasury on the central bank, because they have to take the losses. So they should continue to have that loss that goes to the Treasury. In the case of the Bank of England, the question now is that will they be reducing their quantitative tightening that they're engaging in or not? And given the fiscal issues, there could be some political influence here in the UK even, where they start to slow that down in order to stabilise the gilt market.
So we talked a lot about the way that politics perhaps combines with central banking. I want to ask you about AI and technology and how that feeds into central banking as well, because I know you've thought a lot about AI. And do you see this as maybe inflationary in the short term, deflationary in the medium term? How should market participants, broadly defined, think about AI from that macro landscape?
Yeah, from a macro landscape, I mean, simply put, AI in general should be productivity enhancing, in which case it should be deflationary or disinflationary in the long run. In the short run, the clearest manifestation of AI is a massive CapEx boom that we're seeing in the US. So in the first half of this year, there was probably as much CapEx in AI than there was consumption, which is just quite phenomenal, probably one of the largest private sector CapEx booms we've ever seen. And so far, that hasn't really been that inflationary. So that tells you that even in the short run, with a demand boom going on, because there's more CapEx than consumer, it's less inflationary overall.
But you make the point that there could be, inflation in energy prices as a result of this?
So for me, the ultimate constraint for AI is not so much chips, data centers, it's power. And I think that will eventually be the inflationary driver, where there will be a shortage of power in the US, electricity and so on, and electricity prices will start to rocket higher, and that will ultimately be the inflationary sort of dynamic for AI into the broader economy.
When does it start to meaningfully enhance productivity? When do we start to see the companies that are investing all this money start generating a meaningful return on this investment? How far out is that? Because at the moment, there's a lot of hope in a very narrow portion of the market, which is enhancing everybody's risk. And this is a stock market that rockets higher on tech, that we don't know when it's going to deliver.
Absolutely. It's unclear when we'll see the productivity sort of being delivered. I mean, if you look at the dot-com boom, we did see a jump in productivity in the latter half of the 1990s. But then in the 2000s, productivity dropped thereafter, even though we had this big sort of dot-com boom. At the moment, at a sectoral level, the clearest jump in productivity you are seeing is in the tech sector itself, where essentially companies don't need as many programmers because people are just vibe coding, so to speak. So that's one area. Outside of that, it's unclear what the relationship is between AI and
when does it make money?
It's making money if you buy tech stocks right now.
Sure.
So that's where it is making money. In the case of use cases, at the moment, it's unclear what the exact use cases are outside of a hardware story. That building chips is probably where you do make money right now.
Okay. Does that worry you?
Of course it worries me, but the clear thing right now, I would say, is that the demand for AI is just off the charts. There's no sign of that slowing down. So
demand, pay for demand, that's a slightly different thing. Anyway, Bilal, I'm being told I have to stop now. Carry on with this conversation all day. Bilal Hafiz, Macro Hive CEO, thank you very much indeed. Call 6 looks like this. There are actually a few names out there that have been being moved around by broker notes this morning, so just be aware of that. But you do have the pharma space catching a bid once again. Tech looks like it is leading the charge, as you can see. What is interesting is a company associated with that data center story, Schneider, under a little bit of pressure today. Let's talk about some of the other moves that we're watching. Here's Chloe Melly.
Good morning, guys. So a little bit of weakness across Italian banks this morning as the Italian government is drafting plans to postpone tax deductions for that sector to raise an extra 1.5 billion euros. So we can see a bit of weakness. The weakest one is Monte Paschi. Banco BPM is actually doing quite all right, but a little bit of weakness on the back of that tax news this morning. Moving on to Ferrari. Ferrari was rated a new buy at Berenberg and also raised to outperform at Mediobanca. Berenberg analysts said that it was a really compelling long-term investment, and it noted the loyalty of the extreme loyalty actually of its customer base. So the shares are moving up on that. We're up now almost 2.5% on the back of that. Moving on to EasyJet, which was cut to a neutral rating at JP Morgan. JP Morgan noted that the extra capacity growth meant that there was too much supply and too little demand, and that really impacted pricing. So on the back of this downgrade, EasyJet is down this morning. We're down 2.6%. Moving on to the beauty sector, L'Oreal and Beiersdorf are also down this morning. They were both cut to underperform and hold at Jefferies. Jefferies noted that the growth there was normalizing and that injectables and weight loss drug actually could potentially hurt that beauty sector a little bit. So they are down on the back of that. L'Oreal especially down 2%. And finally, Trustpilot, the customer review company, had really good earnings this morning. It raised its adjusted EBITDA target, and it said that AI was really pushing that business forward, and therefore it is up 8.7% this morning. It was up more than 15% earlier, but it did really good investor review for Trustpilot this morning.
Okay, thank you very much, Chloe. Chloe Melly with the latest on those equity movers. Coming up, we'll talk about one stock that is moving a little this morning, down by 0.7%, and that is UBS. Shares a little weaker this morning after lawmakers voted against delaying stricter bank capital quality rules. We'll discuss what it means for the banking giant, what options the banking business has. That's next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Welcome back. A little softening, I would say, in the European picture this morning. We've gone from flat to negative over the last 17 minutes. Started off fairly flat, maybe pricing in some of what we saw yesterday in the United States. That has now unwound, and we are starting to soften. We're near session lows. The FTSE 100 is down by 0.2%. The CAC down by 0.4%. The DAX is down by 0.4%. The IBEX is actually down by 0.6%. So some quite significant. There is some weakening in terms of share prices that we are watching this morning. Quick look at some of the stocks that are standing out. Let's take a quick look and see what is happening with UBS right now. It is down pretty much in line with the market, I would argue, in terms of what we're seeing. A little bit of softening maybe coming through, but the Swiss market is down by 0.3%. So UBS is softening a little bit more than that, but not by much. This comes, of course, after Swiss lawmakers voted against a second attempt to delay strict bank capital quality rules in Switzerland, which will lift UBS's capital requirement by some $3 billion. We're joined now by Miriam Belazou, our Swiss finance reporter in Zurich. What are the likely options now being considered as a result of this vote by the management at UBS?
So we're looking at a wide range, actually, from just minor tweaks, like just potentially doing SRTs, which is an instrument that a lot of banks are using at the moment, or the bank could be looking at just downsizing or spinning out its investment bank. That is something that UBS had already done, downsizing the IB under Emotti in 2008 after the financial crisis. And that's something that also Credit Suisse was looking at doing in the run-up to its collapse. We're also looking at potentially doing upstreaming. This is something that would help the bank over time reaching the 26 billion that the Swiss government is asking for, and just also remaining disciplined, pretty much just setting aside capital each quarter and reaching that amount, because it will take 6 to 8 years, roughly, for the implementation period. So the bank has time to look at these options. So these are the kind of minor tweaks, but we're also looking at more sort of tectonic measures, such as relocating the HQ, which is something we had reported a couple of months ago. And this could be something that the bank could do via M&A, just to kind of shift the problem to another location and kind of going around the Swiss government's regulatory hurdle.
Miriam, how are those changes being received in Switzerland? The fact that UBS is floating, possibly leaving Switzerland, is that something that is having any take-up by the business community as something they want to prevent?
Yes, this is something that would be dramatic, really, for the country. That would, for the Swiss government, rid them of a huge conundrum, obviously shifting it to another regulator. But for the Swiss economy, it would be completely disastrous. Bear in mind that now, with Credit Suisse gone, UBS is the last remaining global major bank in the country. And also, it is core to Switzerland's economy and identity. And it is also one of the major employer in the country. So it would have tremendous effect on the economy and on the general public as well.
And so what's the investor view here, Miriam? I mean, we can see the stock down a little today, but the wider market is a little weaker today. So what's the bigger picture investor view?
So it's sort of split. We have Sevian, the activist investor that has been quite vocal about being supportive or being of the view that UBS should relocate. And then there are other kind of quieter voices, but more numerous, that are kind of worried about the payout. UBS hasn't said anything about the next buyback program. They committed for this year. They're sticking to their plan, but there's a big question mark as to the buyback program and the payout for investors next year and the following years. And this is something that obviously is on investors' mind, and that UBS will have to sort of tread carefully there.
Miriam, thank you very much. Miriam Balazi joining us there, Bloomberg's Swiss finance reporter in Zurich. Let's talk about another business making headlines this morning, Verisure, which is an alarm and security systems company. It's said to be considering launching a €3 billion IPO in Stockholm as soon as this week. Let's get more with Pablo Meo Quechero, who is Bloomberg's Europe Equity Capital Markets reporter and has this story for us. Pablo, good morning. So give us the details on this possible offering and how significant it could be.
Thank you so much for having me. Well, it could be the biggest IPO in Europe since Porsche's in 2022, according to our data. So sources have told us they could raise around €3 billion, largely in fresh capital that will be used to pay down debts. And obviously, it's a very exciting story for Europe after 3 years of muted IPO volumes. That's not to say that we haven't had some good IPOs in the last few years, but obviously having such a headline maker, so to speak, tap the market, that would be quite good for IPO momentum. So we're all kind of watching carefully and expecting the transaction to hit the screens over the coming days.
Pablo, how busy are we expecting this IPO window to be here in Europe?
Well, with a little bit of luck, it'll be one of the busiest we've seen in a while. There's at least a dozen companies, roughly, looking to go public in the current IPO window. That would be a major boost for Europe's IPO market. Now, having said that, the IPO market is by definition fickle and temperamental. So, something could happen tomorrow that could all of a sudden shut the window close. So we need to be careful and we need to account for that. But if all goes to plan, we could end the year on a high after what was a very slow first half of the year due to tariff-induced volatility.
In terms of kind of what is happening, just break it down for me, just segment it a little bit for me. What are we expecting next? Where are we seeing the most activity? Does that reflect anything about what is happening in individual countries, maybe around Europe?
Of course. I think arguably, well, let me start by saying that the pipeline is quite diverse. It spans across Europe, but you could argue that Stockholm, Frankfurt, Zurich, and maybe London will concentrate the bulk of the activity during this window. There's already 3 sizable IPOs in the market. You got Nova Bank in Sweden. It's a Scandinavian lender. In Zurich, you got Swiss Marketplace Group. It's a classifieds business. They're looking to raise around $1 billion. So it's a pretty sizable IPO. And then in Frankfurt, you got Ottobock, which is a maker of prosthetics and other type of medical equipment. So you got 3. You got Verisure, hopefully coming down the pipe. There's a bunch of others. There's even a couple in London. But obviously, you got a budget in the horizon, and it's TBD what's going to happen. But with a little bit of luck, we could end the year on a high.
Yep. Well, certainly it would be nice. Pablo, thank you very much indeed. The view from the IPO market. This comes back to the story we were discussing a little bit earlier about reporting, I think. Mm-hmm. Why would you want to become a listed company in this world where you can remain private for much longer? Yeah, and in some ways, the reporting story kind of in the United States, less reporting, less onerous reporting requirements, maybe encourages people to come to markets because, the kind of the gap between public and private maybe narrows a little bit.
That was certainly the view I think Bilal was sharing with us, that was another lens to look at it through.
But then you come back to the UK, which doesn't have this requirement and yet struggles with IPOs.
Yes, other things at play.
Currency risk being one of them, of many other things.
There's plenty of other factors. Talking of risks in the UK, we turn our attention to Donald Trump's state visit. We're discussing the implications of that next with Peter Westmacott. This is Bloomberg.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
This is the opening trade. We're 30 minutes in today's European cash equity session, and it's increasingly looking a bit sour. We did start off with equity futures at least looking positive this morning, and that's now flipped clearly into the red. The Euro Stoxx 600 is down 0.25%. The underperformer being the DAX, down near 0.4%. FTSE 100 also in the red as Trump prepares his state visit, landing tonight in the UK. Guy?
Big picture, 2-to-1 down versus up, 390 down, 192 up. That's what the internals look like right now. We've slightly changed the metrics around what is happening with the volume. We've gone for the 20-day average to give us a better picture. And actually, for the first time in a very long time, we're actually starting to see volume ticking up a little bit. So we're up 18% versus what we've seen over the last 20 days. This is we obviously enter a crucial period for these markets. We're analysing what is happening with the Fed into that meeting. It starts later today. We're watching it very carefully. 52-week highs. We've got some. We've also got some lows as well, which is worth paying attention to. Rheinmetall in the defence space, new high for that stock. Antofagasta in the copper space, up nicely as well. The gold trade seems to be on as well. There's some upgrades for names like Fresnillo this morning. And Banco BPM up by 0.3%. So that's interesting as well. The banking story front and centre. There are some downgrades, though. No, there are some areas that we're seeing some weakness this morning. And actually, it's kind of slightly related to kind of consumer healthcare. Haleon is down by 2.64%. Beiersdorf, maker of Nivea, down by 1.4%. Alcon in the eyewear space, down by 1.23%. So that space under quite a little bit of pressure this morning, Anna.
Let's get into some of the other stories that we're following this morning, and we'll start with developments at the Fed then, Guy. An appeals court has blocked US President Donald Trump from firing Lisa Cook. The 2-to-1 ruling came just hours before the start of the Fed's meeting to vote on rates. This while Trump's ally, Stephen Miron, has been confirmed as a Fed governor by the Senate. The SEC says it's prioritizing a proposal by Donald Trump to change company reporting in the US to once every 6 months from the current quarterly results. The Securities and Exchange Commission, the SEC, says it's pursuing a proposal to further eliminate unnecessary regulatory burdens on companies. And Google says it will invest £5 billion in the UK over the next 2 years to help meet growing AI demand. The announcement comes as Chancellor Rachel Reeves opens Google's new data centre in Hertfordshire. That's coming later today, apparently. This comes as Donald Trump is set to unveil deals during his state visit that Bloomberg understands could total more than $10 billion. Val.
Well, for more on the $10 billion of deals that we're expecting, we're now joined by Bloomberg's Lucy Meakin. Lucy, what kind of details do we know so far? And is there any prospect that that $10 billion number could grow over the course of this visit?
Well, we can always hope, right? So, as I say, we've got this headline figure of $10 billion that we're expecting. That includes a science and technology partnership. And that should include billions of dollars of new investment, which is key. You always want the new investment. There's also talk of Trump and Starmer unveiling a defense technology pact. And then, as Anna just said, we've already had this Google unveiling £5 billion worth of investment over 2 years for AI development. I think that's going to be largely centered around DeepMind. If you are familiar with their boss, he is British himself. He grew up in North London, not far from where that data center is, I think. So it's going to be interesting. But yeah, we've got NVIDIA's Jensen Huang, we've got OpenAI's Sam Altman, both coming into town to talk to the Prime Minister. So we could see what we'll get.
Yeah, it's going to be interesting. Yes, I think our colleague Tom McKenzie spoke to Demis Hassabis just last week on some things that DeepMind and his other businesses are doing. We've also, in the UK context then, Lucy, had data out on the UK labour market this morning. A lot of it seemed to be in line with expectations. Any key messages to take away?
I would take away it's cooling, the labour market. But I'd also take away that if we're looking to the Bank of England, firstly, I still don't expect anything this week. And secondly, I think it's actually the inflation data tomorrow that we should look at to take the two in the round if we're going to look at what this will mean for rates. But yeah, it's certainly cooling. We had payrolls dropping for a 7th month. Wage growth is the lowest level in, I think, 3 years. And vacancies are still dropping, and they were already below pre-pandemic levels.
Lucy, great stuff. Thank you very much indeed. Bloomberg's Lucy Meakin on what is happening here in the UK today and over the next few days. So let's talk about the next few days. Donald Trump's state visits, politically fraught. I think that probably is the understatement of the week. Certainly, it comes at a difficult time for the UK Prime Minister, Keir Starmer. He has a lot of navigating to do over the next few days. Peter Westmacott is a former British ambassador to the United States. Peter, what are you expecting from this trip?
Good morning. Well, it's a very high-profile state visit, of course, to state the obvious. It's shorter than most state visits are for a number of reasons, partly because they've all decided that they don't want to have President Trump coming through the streets of London and risking protests and so on, which would make it more difficult. I think what this is really about is a fundamental objective of trying to make President Trump feel positive about the United Kingdom, relations with the UK, and hopefully become a bit more ready to listen to UK arguments on some of the really important global issues where Washington and London are not entirely on the same page. And it is personal. You know, Donald Trump is somebody who has a very personal, transactional, one might say, approach to the presidency. But it's important, therefore, for him to feel that he's had a great time and that the United Kingdom is rather special for him. At the same time, as your correspondent's just been saying, there is the potential for some pretty serious business to be done. The UK is proud of the fact that on AI, it is something of a leader. And so we look forward to doing some business as well during the pomp and the ceremony and the protocol and the carriage rides.
Do you think, is the geopolitics the main objective of the Starmer administration? Is a meeting of minds on geopolitics, on what happens in Ukraine or what happens in the Gulf or what happens in other parts of the world the objective here? Or is this more about the transactional nature of the administration's approach, and this is about tariffs, and it's about trade, and it's about investment? Which do you think of those two things are the greatest priority for the UK administration?
I think it's really hard to decide because both are right now extremely important. The UK government is not in a great place in terms of economic growth, wage levels, productivity, foreign trade, and all those things are difficult. And the United States, most important partner, biggest single trade partner and investment partner for the UK in the world. Donald Trump has been somewhat protectionist with tariff wars and so on, and is a bit whimsical sometimes in the way in which he deals with trading partners. So the UK really wants to firm up, if you like, the much better relations on trade and investment that was visible when Keir Starmer went to the Oval Office. That went well, but there's more work to be done. And this matters hugely to the government's economic agenda, which is faltering a bit. But I don't think we should underplay either the importance of the foreign policy agenda. For the UK, I think European security and Ukraine and standing up to Putin and discouraging him from invading other countries in Europe is really a top foreign policy priority. But I will be very surprised if there isn't also some frank talking about what's going on, Israel, Gaza, Palestine, possibly even Iran, although that at the moment is not the hottest ticket. And then there's China, where there is an important conversation to be had, but it's not, if you like, right now. It's not today's crisis. It's just really important strategically.
Do we think there's any political ground to be made by Prime Minister Keir Starmer in standing up to President Trump on any particular policy area? Peter, I ask this because there was evidence in the Canadian elections and the Norwegian elections that standing up to President Trump on areas where you disagree can pay dividends. Of course, the Prime Minister has taken a very different stance and arguably gained momentum from a very different strategy, a much more conciliatory strategy with the United States. So what would you advise on that front?
I think that the standing up to Donald Trump argument, the Love Actually moment with Hugh Grant, if you like, to reduce it to the cinematographic, is, it's tempting, if you like, as an observer or as for media purposes, but it is not something that works very well with this president. He does not like public criticism, particularly in front of the TV cameras. He likes to be seen to be appreciated. He likes praise, of course. He is transactional, though. He's a deal maker, as he keeps telling us. So I think there are ways in which you can talk to President Trump and try and move him in a direction where you are worried that he's not in private on policy, which stop short of public criticism. I don't think that works very well. But I do think that in terms of transactions and so on, there are ways in which the United Kingdom can remind him of what the UK brings to the party, and that, we are not free riders like he thinks much of Europe is. The United Kingdom brings a great deal to the party from the point of view of US interests. And I think behind closed doors, there's an awful lot of substance to be discussed in that area.
Yeah, and what if the president decides to weigh in on UK politics, as we saw Elon Musk do over the weekend, perhaps talking about the Unite the Nation rally, as we saw Elon Musk do at the weekend? What would your advice to the Prime Minister be if he starts to do that, perhaps even in a press conference in front of him?
Well, he did it before. I remember back in June, I think it was 2018, when he was rather unhelpful to Theresa May when she was in the middle of difficult Brexit negotiations. He weighed in with an interview with the Sun newspaper, which was really very unhelpful. Was it designed to be helpful? I don't know. I suspect that the president has learned from experience that this doesn't go down extremely well. He is a host. He is getting an unprecedented second state visit. My guess is he will not want to mess that up. He values his relationship with the royal family. He does appear to have a very strong personal link to Keir Starmer. He will be aware of the political and economic pressures that the government is under. I don't think he'll want to make that difficult. If he does, if something goes wrong, if a wheel falls off by accident, my guess is that Keir Starmer's reaction will be, to shrug and say, kind of, that's life, rather than to make a drama out of a crisis, or the other way around.
Peter, Trump is also bringing about many leaders in tech. We have Jensen Huang, NVIDIA CEO, Apple's Tim Cook is also joining him. Do you see that maybe he's going to want something back for this investment that's being pledged by UK businesses? We know that the president is transactional in nature. Do you think there's something to the other flip side of this card that he's going to ask for?
I'm not aware that there's anything particular. Those investments by Google in DeepMind and OpenAI and the other tech guys and other US companies which are already big investors in the UK, they will not be making those investments unless it's in their own business interest. Will he be looking for UK firms to make comparable investments in the US economy? I don't know. What we do know is that if you want to become a significant defense partner in terms of supplying expensive high-tech defense equipment to the United States, you've got to be making that stuff in America. America imports almost nothing from abroad. You've got to be manufacturing. So it may be that in the defense sector, if we want to thicken up that partnership, that he'll be looking for evidence of significant UK investments. But otherwise, I think he will be looking to see stronger business links. Sometimes that's good for him, sometimes it's good for his friends. It's certainly good for the UK because it is a significant message of confidence in the future of the British economy.
Peter, it was mentioned that Mandelson was a key part of this tech investing and getting these deals together. Do you think that losing him as a UK ambassador will make a difference in the relations with the US?
I think you're right. He was very much an architect of that technology partnership. He told us all about it. And he has experience when he was trade commissioner in Brussels of doing serious negotiations. He's quite, I wouldn't say he's a trade wonk, but he's very much skilled in that area. And he was a very successful Secretary of State for Trade and Industry when he was in a previous British government. So he's been very much involved in that. All that said, a great deal of the heavy lifting on these issues is done between White House and 10 Downing Street. Varun Sharma, the Prime Minister's business advisor, has been very much involved in a lot of the tariff stuff and the other trade and investment negotiations. I think Peter Mandelson obviously was an effective ambassador during the months that he was there. But I see no reason why there needs to be any damage, if you like, to the substance of that relationship, provided the United Kingdom chooses somebody fairly soon of sufficient skill and stature to take forward the momentum of the relationship, which at the moment looks set fair. And if the state visit goes well, there will be plenty of good reason, both for smiles on the face of the President and the First Lady, and for the British government to feel that it's been, job well done.
Peter, thank you very much. Thanks for joining us. Former British Ambassador Peter Westmacott, former Ambassador, of course, to the United States. Thank you for joining us. Good to get your perspective. Coming up then, President Trump has also been busy when it comes to the Federal Reserve agenda. He's been blocked, though, from removing Fed Governor Lisa Cook, while Stephen Miron is confirmed to the Central Bank Board. More on what that means for the future of the Fed next. This is Bloomberg.
For Trump to have been, you're never too young to learn AI. That's why he's urging the government for school kids as young as 6 to be taught how to use it.
Within this system, from first grade, they all start with the AI education. They play 4 years, just playing. And then from 5th grade, they start to develop AI by themselves. And STEM and robotics, I see very clearly how Vietnam should be in future. Vietnam just about 100 million people, young people, good education, and latest technology. That's the only way to go. Education not contribute much profit for equity, but from the country point of view, that's most useful contribution, what equity should do. And today we're thinking about every kids, not in cities like Hanoi or Ho Chi Minh City, but kids in the countryside should got the good education. That's what we're going to do now.
So you're leapfrogging?
Yes, exactly.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens.
I'm Matt Miller at the Circuit de la Sart in Le Mans, and this is Bloomberg.
The president of Apollo Global Management sees plenty of investment opportunities on the continent as governments struggle to meet industrial spending demands. Speaking exclusively to Bloomberg's Francine Lacqua, Jim Zelter said he's particularly interested in Germany.
This is the most unique period of time in Europe. You know, for the first time in decades, I think there's the good thing about this administration is that the memo has been sent out about global growth and responsibility and accountability. And as a leadership in the countries around Europe are trying to figure out what that means for them, there's certainly a conversation that Apollo wants to be a part of, and we find ourselves being the recipient of a lot of dialogues and part of a lot of dialogue. So very exciting time. It's not a clear picture. And like usual, Europe has many different stories in terms of the continent and each country, what their objectives and needs are. But very exciting time for Europe, and we've been very public and pronounced about what our ambitions are, whether it's $100 billion in Germany or several $100 billion around the continent. We believe we're going to be a player in that dialogue.
So where do you see the best deals actually in Europe? And when you talk about dialogue, will that translate into actual money being spent in Europe?
Well, I think before you get to deals, you know, around the globe right now there's this massive global industrial CapEx needs and global industrial renaissance, which is really the provision of capital for whether it's energy, former utilities, transmission lines, whether it's energy sustainability and the modernization of that, whether it's data centers. You know, we find ourselves in a situation where, you know, for the most part, corporates and consumers, our balance sheets are pretty solid, where governments are a bit more challenged. So I think there's a realization that there's a dramatic need for CapEx, and governments on their own are not the solution. And so, you know, every country in Europe has a different objective in terms of their fiscal policies and their fiscal ambitions, and they have great ambitions but a limited budget to provide that. So I think as the world of finance continues to evolve, you know, certainly we've been quite active in Germany. Yeah. We've been quite active in France. You know, Athora in their recent announcement of the purchase of PIC in the UK, which is a different conversation. But you know, I think we find ourselves, particularly in those two countries, and yes, some in Italy and some in Scandinavia as well. So it's fairly broad brush, but these are massive ambitions from which to fund.
That was Apollo's Jim Zelter speaking exclusively to Francine Lacqua on the opportunities in Europe for private credit. Well, let's take a look at the risk events on the horizon. Later this morning at 9 a.m., we have the German ZEW survey. Later this afternoon, U.S. retail sales drops at 2:30. At 2:15, U.S. industrial production. And maybe most importantly, the Fed meeting starts today. All 7 governor seats will be taken after Myron's successful confirmation in the Senate yesterday evening.
Yeah, absolutely. So that's certainly something we're focused on. Let's get an opinion on this. We're joined now by Bloomberg opinion columnist John Authers, who's been writing about the Fed. Another dramatic day then in store for the Fed. We've heard about Lisa Cook. Trump's attempts to remove her have failed so far, at least, John. Stephen Myron is going to be there. What difference does it make that Lisa will still be there and Stephen will be joining? What difference does it make, do you think, to the dot plot we're presented with or to the conversation around the table?
Not, well, to the conversation around the table, to which unfortunately we're not going to be privy. I would imagine that's going to make a very big, very entertaining difference. Stephen Myron has accused the current governors of tariff derangement syndrome, which isn't very polite of him. He's made a number of very strong criticisms of the Fed, and so he's likely to make somewhat of a pain of himself, one would think, and that will make it quite entertaining. In terms of the dot plot itself, I doubt it will make that much difference. I also doubt that it'll make much difference to the outcome today or tomorrow. The key question at this point is concerning Lisa Cook and whether the attempt to force her off the board can succeed by February, which is when the governors have the opportunity to veto the candidates for the next round of presidents of the regional feds. And that, if you've got a majority of the 7 governors, which would require Lisa Cook to be replaced by February, then you can also ensure that you have a majority of the overall FOMC by choosing the regional feds. It's a labyrinthine structure, but that's what really matters. I think the attempt to force her off in time for this week's meeting was more a sign of intent than any real practical impact on what's going to happen this week.
It's really interesting because we all thought initially that it was an attempt maybe to sort of force her off. To change the kind of the rate outlook, but it's a much kind of longer, bigger picture. Maybe attempt by the Trump administration to take over the Fed. I read the piece this morning, John, fascinating on that front. Would an end to quarterly reporting by US companies be market positive or market negative? I can't figure that one out. What do you think?
A lot would depend on the details. Personally, I actually do think there's quite a lot to be said for moving away from quarterly reporting, because it does indeed encourage a lot of very short-term thinking on the part of managements and actually also of investors. The standard practice in Britain is for annual reporting supplemented by interim reports every 6 months. And I don't think there is any significant lack of transparency in Britain. So that, this has been something that long-term investment advocates have argued for a while. You'd get somewhat of a limitation on the opportunities for short-term trading strategies around earnings season. You would have to have safeguards such that if companies know that something materially good or bad has happened, they do have to tell you about it in timely fashion outside of the normal reporting cycle. You certainly need quite a lot of thought and detail to go into this. And as I understand it, quarterly reporting is at the moment actually in the law, so you do need Congress as well. So it will take time. But I think it's ultimately market and economy positive.
Okay, John, really interesting thoughts as ever. Thank you very much indeed for joining us on television this morning. John Authers, Bloomberg Senior Editor for Markets and Bloomberg Opinion Columnist. It's really interesting what he says about Cook. This is not, like, in some ways it doesn't matter about this meeting. It just matters that she is gone from a White House point of view by the beginning of next year. Today's kind of a red herring in some ways. And isn't going to change the outcome a great deal. Like, she's notionally dovish as well.
Yeah, I was mentioning she's not necessarily a standout hawkish member of the FOMC governing board. But it's just interesting to see this process move along, because this is the first time we've ever seen a president try to remove a governor. And essentially the market is going to get clarity over what is cause to remove somebody and what is not.
And the Supreme Court has previously acknowledged that the Fed is different and that the president isn't as directly in control of them, and therefore that's different and cause matters. But we'll see whether President Trump tries to bring the Supreme Court into this one as well, and we make any movement there. John, in his piece that you referenced, making that point.
We're going to watch, we're going to see what the outcome is. They're all sitting down together. As John says, it would be nice to see, to be a fly on the wall maybe at that meeting. Tension in the room? I would have thought a little bit. Anyway, we're going to continue the conversation here on Bloomberg Television. We're going to count you down to that Fed meeting and its result tomorrow. Francine's up next. The Pulse is up next. This is Bloomberg.
the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world, right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility. There's still room to maneuver. Reduce the opportunities. It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Stocks hit a new record as investors bet on a Fed rate cut tomorrow. President Trump's governor pick, Stephen Miron, is confirmed, but his bid to fire Lisa Cook is blocked. The SEC says it's prioritizing Trump's proposal to reduce the frequency of earnings reports after the president called for an end to quarterly disclosures. Plus, Google announces a £5 billion AI investment in the UK as President Trump prepares to unveil billions of dollars of deals during his state visits. Now, there is quite a lot going on. It's definitely a mood-on kind of day. So welcome to Tuesday. Look, U.S. stock futures edging higher. The S&P 500 powering through the 6,600 mark on Monday. You can see those futures currently at 6,688. Look, the other big story is, of course, what's happening with gold at 3,686. It closed in on $3,700 an ounce as the metal seems to extend its record rally, again fueled by expectations of as many as 4 quarter-point Fed cuts by January. This is a picture across the board for European stocks. Now, a little bit different as, again, there's taking stock of euro, dollar, and everything like that. The CAC, but also the DAX and the FTSE down between 0.2 and 0.4%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, a crucial Fed meeting begins today. Ahead of it, an appeals court blocked Donald Trump from firing Lisa Cook as she challenges her dismissal from the Fed. Now, while the Senate confirmed Stephen Miron as a governor, that means governors could be involved in the meeting, both of them. Outside of the Fed, President Trump says he'll speak with the Chinese President Xi on Friday after reaching a consensus on TikTok. And domestically, Trump is also pushing to reduce the frequency of corporate earnings reports. So there's a lot to discuss with Isabel Mateo-Silago, Group Chief Economist at BNP Paribas. And then in a second, we'll also speak to Ross Matheson for everything to do with the SEC. And then we'll speak to Ben, of course, in Madrid over China. Now, Wall Street's main regulator said it is prioritizing a proposal for Donald Trump to reduce the frequency of corporate earnings. But away from that, Isabel, a lot of the focus, actually all the focus is on Fed. Right? Are we expecting, I mean, the market is now pricing in a lot of cuts before January. Is that how you're seeing it?
So good morning.
Good morning.
Great to be here. So yes, the market is expecting that the Fed is going to respond to the slowing down in job creations by delivering sequential rate cuts, and we pretty much agree with that call. And that, of course, would be a pivot from the June positioning, which was very much emphasizing we'll do whatever we have to do to fight inflation. So, but the motivation of that decision will be very interesting, as well as how the dot plot shapes up.
But Isabel, I mean, why not go for 50? I mean, so the market is expecting 25 and then a series of cuts. Is there worry about inflation? Because if you're not too worried about inflation and you look at deteriorating labor market, go big.
Right. Well, maybe one of the FOMC members will make a case for 50, but let's not forget it remains a balancing act. Inflation is accelerating. It is moving away from target. It is now much closer to 3% than to 2% and rising. And I think there's a consensus to expect this acceleration to continue as the impact of tariffs gets passed through increasingly. And so the question is, how quickly is the labor market slowing down? We know that there's been a massive slowdown in job creation, but we also know that there's been a slowdown in labor supply. And so the unemployment rate is actually not far at all from what is believed to be its long-term equilibrium rate, which is 4.2%. It is at 4.3%. So I think it makes sense for the Fed to tilt a little bit its posture towards paying attention to employment, but it's not as if it can take its eyes away from the inflation ball.
So, Isabel, overall, what's more perplexing? The fact that it does seem like, the labor market has deteriorated quite quickly, or it seems like we're at a standstill. And I don't know whether it's expectations, it's animal spirits, or it's a little bit wait and see, or is it more perplexing that inflation is where it is?
I really think the Fed has to pay close attention to both sides of its mandates. Now, when you look at all the data that we have on the U.S. economy, you see two things that are showing signs of slowing down perhaps a bit faster than would be comfortable. It's the labor market and it's the housing sector and construction. But all the other signs about the economy, be it, consumption, retail sales, industrial production, business confidence, all of that is not signaling that there is a problem or a risk of recession. And so, again, the supply shocks that this economy has been exposed to, be it from tariffs, be it from the crackdown on immigration, the whole economy has to adjust to that. And that means the Fed has to move very cautiously. And again, in a very balanced way between the risk to employment and inflation. I think that's what it's going to do.
Isabel, I want to talk to you about central bank independence, but also the other big story is Wall Street's main regulator said it's prioritizing a proposal from Donald Trump to reduce the frequency of corporate earnings report after the president again stepped into a long-running debate over transparency in American capitals. Our very own Rosalind Matheson is here. Ros, I mean, this took many probably by surprise, but a key Wall Street change could be coming, and this really changes everything. If you end quarterly reports, I mean, probably a lot of CEOs will be cheering, but it changes the markets completely.
It could, and of course Donald Trump has floated this before and regulators have looked at it a bit before. Here we are again, and the SEC is going to prioritise having a look at this again. As you're saying, there are pros and cons. You can see that some companies would be thinking terrific. They say it's a burden, it costs money. It also causes short-termism. People focus very much just on what's in front of them. Investors can go down rabbit holes on stuff that is very short-term. On the other side of the coin, quarterly reporting came in for a reason, which is transparency, and to allow investors to have a very clear sense of where a company is going. I mean, Donald Trump will say, well, other countries around the world have different requirements. Look at China, look at Europe. I mean, many companies in Europe are not compelled to report every quarter. Many of them do. They choose to anyway. And in the environment that we're in, where the world is changing very quickly around us, policy making is changing very quickly, company outlooks can change very, very quickly. And so the argument would be there that quarterly reporting at least gives a sense of where a company is going in a very fast-shifting global landscape around things like trade and investment.
Rose, I mean, the other big story is that basically Donald Trump is suing the New York Times for a very large amount of money. What are the implications of that?
Well, he does have a history of suing media outlets that go back many, many decades, and he's had success with that, and he's also had failure with that. Of course, he's in the middle of suing News Corp over an article in July which was alleging that he had sent a suggestive birthday card to the deceased sex offender Jeffrey Epstein. He's got that lawsuit going at the moment. Now he's suing the New York Times in Florida, interestingly, for more than the market cap of the New York Times. And it seems to be a broad allegation here. It doesn't seem to involve specific articles or one specific report that was made, but that the New York Times has an agenda against him and against his administration, and that collectively the body of work the New York Times is producing is about sort of being a mouthpiece for the Democrats. And so where it goes or how long it takes remains to be seen. Obviously, it's a massive amount of money that tends to get changed in the minute, and some of these media companies have settled with him before, but it seems to be different this time because it's not about a specific article or an opinion piece or something. It's more just about saying there's an agenda by a news organization. So obviously potential ramifications from that.
Ross, thank you so much. Ross Matheson there with the very latest, of course, on the Trump administration. Isabel, I guess the Trump administration is pushing boundaries, and I don't know whether this has an implication on the wider economy. For example, when it comes to central bank independence and what they're trying to do with Lisa Cook, it's probably just a victory in their eyes that at some point she has to go. The market is largely ignoring it, but does it change the way policy is made in the U.S.?
So first of all, I'm not sure the market is ignoring it. I think the market is looking very closely at the developments in that space, and I think the market is going to look very closely at the answers that the chairman gives at the press conference tomorrow to get a sense of whether the decision that is made by the FOMC is at all influenced by politics and the attempts around Fed independence. My expectation is that he will do his utmost and will be convincing in explaining that the cut that they almost certainly will announce is directed by economic data, and that they will continue to act in this way. But I think the market is watching this development very closely. It's true that you would say, well, if the market were worried about Fed independence, you should see more an inflation risk premium, you should see a steeper yield curve, but the market is also pricing a lot of other things happening at the same time, including the slowdown in the labor market, etc. So I think it would be a mistake to say, oh, the market is ignoring the risks around Fed independence.
But overall, Isabel, I mean, I guess the question is there a market belief that whoever then becomes either a governor or the chair will follow economics rather than political influence?
Well, so far you have to assume that this is going to be the case. But as I said, markets are paying close attention to this, and any hints to the contrary, I suspect, will have an impact on market pricing, particularly in bond and FX markets.
Okay, Isabel, thanks so much. We'll get back to that, of course, and we'll talk a little bit about China. But President Trump says he'll have a phone call with China's Xi Jinping on Friday after officials meeting in Madrid reached a framework deal on keeping TikTok app running in the U.S.
I'm speaking to President Xi on Friday for confirmation of that, and, frankly, more importantly, a big deal. And we've had very good meetings. As you know, we were in Europe, our people, Scott Bessent and Jameson Greer, and others. And it was a very big meeting with China. And, they're treating us with respect. We treat them with respect, too. But it was very successful.
Well, our Ben Sills is in Madrid. Ben, were these talks mainly about TikTok in the end?
It does seem to be that's the case. I mean, obviously there was a lot of speculation that they'd be addressing the broader trade issues between the US and China, but it's certainly in terms of the deliverables, that seems to be the main thing that's come out of it this week. Yeah, absolutely.
And Ben, what can we actually expect from the call between President Trump and President Xi?
Well, I think the first thing we want to try and get out of it is a sense of what's in this deal. We don't really know what the so-called framework agreement will mean, how the US will be able to address the national security concerns relating to TikTok, how they'll be able to make that palatable to the Chinese. So the first thing we'll be looking for is details of that. And beyond that, we know Trump is aiming to have a face-to-face meeting with Xi Jinping in the next few weeks. And I think they'll be looking to lay the groundwork for that meeting to go ahead.
Ben, thank you so much. Ben Sills there in Madrid with some big news, of course, on U.S.-China and the way forward in that relationship. Still with us, Isabel Mateo-Silago from BNP Paribas. Isabel, I mean, how do you look at China right now?
China is slowing down. The news on Monday showed a broad-based slowing in economic activity. And frankly, it may be one of these cases of bad news is good news, because I think it's showing, including to the Chinese leadership, the limits of a growth model that has led to overinvestment and overcapacity. And that finally, we think the right kind of stimulus might be coming through, excuse me, to support a rebalancing towards consumption and end this kind of constant oversupply, overinvestment, which has led into a bit of an impasse. So big slowdown, and we expect now a more deliberate effort to boost consumption, which could be a relief for the rest of the world, frankly.
I mean, again, the million-dollar questions is with President Xi and President Trump speaking on the phone on Friday. Does it mean anything for the economy longer term, or actually because it's so uncertain, the relationship the two men will have, it doesn't? You can't really translate into an optimism for markets.
So I think the market expectation is that the trade relationship is going to remain broadly where it is. In other words, with very high tariffs, which imply a much lower level of exports from China to the U.S., but nothing very disruptive, except for the fact that so far China has been very successful in redirecting its exports that used to go to the U.S. to the rest of the world, and in particular to Europe, but also to ASEAN, and putting a lot of downward pressure on export prices in these areas. So it's a question that is important for the entire global economy, not just for the bilateral relationship. But I think that the base case is they're going to find a way to effectively reconduct this sort of truce with tariffs at the current level, no major improvement nor deterioration.
Isabel, what have we learned about tariffs so far? There's a lot. I mean, there's not, because there's also this case, and we're unclear whether it's legal and lawful, but they're more deflationary than maybe initially some economists thought.
I'm not sure I would agree with that. I mean, first of all, it's early days, because the tariffs, are not yet fully in place. Yeah. As you mentioned, there are some legal challenges underway. We're still waiting for the outcome of the Section 232 investigations, which will be very important for pharmaceutical products, semiconductors, other products, which for some countries are the bulk of their exports to the U.S. But actually, what we've seen so far is it's been a headwind to the U.S. economy. We've seen the U.S. economy really decelerate. We've seen employment and activity indicators in sectors impacted by tariffs slow down more than the others. Whereas in the rest of the world, the picture we're seeing is a picture of resilience. Why? Because trade has been redirected by and large away from the U.S. to the rest of the world, and as well other economies have taken steps to support their own economy. But what I would say so far, if anything, is surprising resilience of the global economy to this tariff shock.
Where does Europe sit in this?
Well, Europe is in a very good place. I mean, as I'm sure you noticed, the ECB revised its growth expectations for this year quite meaningfully by 30% just last week. We are even more optimistic now. We think growth this year could reach 1.3%, and we see this as, frankly, an acceleration process that is going to continue, thanks to mostly thanks to the extra investment that is taking place out of Germany and to a lesser extent in the rest of Europe. But this is a very clear sign of a continent that has been energized into adopting, good self-help policies in response partially to the tariff shock.
But do you worry about France in particular? I mean, given the ratings, given what we heard on Friday, and the inability or complexity of finding a budget?
Yeah, so France has been a little bit, for domestic reasons, lagging behind the rest of the Eurozone in terms of this accelerating growth momentum. Having said that, even France has surprised to the upside. You know, both the Banque de France and INSEE revised up their growth projections for 2025 just last week. So we're not looking at 0.7, 0.8, depending on whom you believe. And so, sure, now there's a return of heightened political uncertainty, and there is a need to do some proper fiscal consolidation, and that's going to be a headwind to growth going forward. However, you know, we're pretty confident that a compromise can be found with the new Prime Minister reaching out to, you know, both the left and the right. It's not an insuperable problem, frankly. Probably the scale of consolidation that the previous Prime Minister had in mind, you know, around 44 billion euros, close to 1% of GDP, that was too ambitious. We think, you know, you could aim for around 0.5% of GDP of consolidation over the next few years, and that this is something the political system could stomach. But obviously, these decisions are very hard, and somehow they're only ever made under pressure. But I think we're now at a space where, you know, and the French economy remains strong, remains dynamic. We're in fact seeing a return of positive job creation, positive business creations. The aeronautics sector, which was impacted by supply problems in previous years, is back on track. So I don't think we should be overly pessimistic about France, but it's true that it's been lagging behind the rest of the Eurozone.
Isabel, thank you so much. Isabel Mateo-Silago, there, Group Chief Economist at BNP Paribas. Now, coming up, Trump's state visit may provide a brief diversion for Keir Starmer amid calls to replace him as Prime Minister from his own party. We'll have the details next, and this is Bloomberg.
Whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
I think you always have the comparison between different points in time, and they're more balanced now. And personally, I think they are quite balanced in terms of upward and downward potential of inflation.
Well, that was the ECB Governing Council member Martin Kocher. Now, during his trip to the UK, Donald Trump is expected to announce economic deals valued at over $10 billion. Google has already announced a £5 billion AI investment in the UK ahead of the state visit. Now, the state visit comes at a politically tense time for the Prime Minister, Keir Starmer. For more, I'm joined by Alex Morgan and Kit Rees, editor of Bloomberg's Markets Today. So thank you both for joining us. I'm quite excited about the pageantry. There's going to be, the royals in full view. But this comes at a really delicate time, Alex, for the Prime Minister, because there are so many calls within his party for him to resign.
Well, it's feeling quiet, isn't it, Francine, UK politics? Feeling quieter to you than 14 months ago? Obviously, it's not. And that was the key premise upon which Keir Starmer's election campaign was based, wasn't it? He was going to restore a sense of calm after 14 years of Conservative rule. Here we are, 14 months in, and he has lost his Deputy Prime Minister, his Deputy Leader, Angela Rayner. He's also lost, of course, having sacked the US ambassador following that Bloomberg News investigation into connections between Lord Mandelson and Jeffrey Epstein, which went on longer than originally thought. And he's also lost his head of strategy now. So Keir Starmer, having tried to reset the government, version 2, as it were, after a difficult summer, is now what we'd call this version 3. I mean, it's a really noisy time for him, as you're saying there. Maybe this state visit bringing some sort of respite. The eyes will be on, of course, the US-UK relations rather than the turmoil within Downing Street itself.
So what can you tell us about who could replace him? We want names, Alex.
Well, names. And this is a really tricky thing. There's actually a brilliant article today by our colleague Alex Wickham saying that the one thing keeping Keir Starmer really safely in place is the fact that nobody really knows who would replace him. I mean, that's extraordinary when you look at the fact that, just, as I say, 14 months ago, we were talking about this broad, albeit shallow, Labour landslide. So it's got a shallow vote share, but a broad sweep of the board where they looked, really a commanding lead. Now we're talking about Operation Save Keir, according to some insiders, number 10. Now, who could replace him? Well, of course, the Labour left have been agitating for the government to take more of a left wing, less of a centrist position. But in terms of names, I mean, it is really difficult, of course, because as our colleague Alex Wickham is saying, there really isn't an obvious successor. Now, for Keir Starmer and his team, who, of course, have now been looking to reset after a reset, that's good news. But the Prime Minister is looking vulnerable at the time, and, of course, he's wanting to project strength in front of the US President.
I know. I mean, I never actually envy central bankers, but I feel like today maybe the Bank of England governor has an easier job than the Prime Minister. Kit, what can you tell us about the jobs data and the fact that a lot of economists think the BOE are now, done cutting?
I mean, I'm sorry to disappoint, but I don't think the wage growth data is actually going to move the needle in terms of what the Bank of England might be thinking. So, we've seen it moderate, but it's still probably a little bit too high for their comfort. I mean, there's a massive focus on inflation. The Bank of England wants to get it down to 2%. And so we're going to be getting tomorrow's data, and we'll see if it indeed has done. It's not expected to. The print is expected to be at 3.8%, so still uncomfortably high. And again, this means that markets have been kind of pricing out another rate cut this year. So they're expected to keep rates on hold at the meeting on Thursday, and November's also looking less and less likely. So still a lot of uncertainty in the economy. Obviously, they don't want growth to stagnate while inflation remains high, but we'll have to get a few more data points to get a firmer read on that.
Yeah, and Kit, what are some of the concerns that the BOE has raised recently? I know they have the tariffs to contend with the US. There's a lot of trade concern at the same time. A lot of it is actually self-inflicted by the government.
I mean, that's very true. I'm sure they're taking all of those things into account as well. I mean, one thing is it's just really all about inflation. They're worried that it's just been persistent, it's very stubborn, and, we've had some of the more hawkish members, like the Deputy Governor Claire Lombard-Delli, also flag concerns that food prices are high, and this is obviously very much more salient for consumers in terms of, inflation expectations, how households must be spending. So it's all about inflation and the labour market for now, and that's probably what it's going to be for the foreseeable future.
Okay, I mean, at least, if you're the Prime Minister, how do you define success in the week where Donald Trump comes to town?
Goodness me, I think, do you know, there's a talk of this press conference, which of course will have between Keir Starmer and Donald Trump, where it's said to be giving Downing Street aides nightmares because the awkward questions over the sacking of the US ambassador, Lord Mandelson, around those Jeffrey Epstein ties we mentioned from the Bloomberg investigation, what's said to be giving them nightmares is the idea you'd have Trump there, of course, who has himself been trying to distance himself from that story, to minimise that story in the US, and Keir Starmer to his side being asked repeatedly by journalists those kind of questions. So success, maybe Francine, is avoiding awkward moments.
Yeah, no awkward moments, maybe a couple of deals. Kit and Alex, thank you so much. Kit Rees and Alex Morgan. Coming up, we'll talk a lot more about the Fed and the impact on emerging markets. This is Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about sports and eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now. You should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Stocks hit a new record as investors bet on a Fed rate cut tomorrow. President Trump's governor pick, Stephen Mirren, is confirmed, but his bid to fire Lisa Cook is blocked. The SEC says it's prioritizing Trump's proposal to reduce the frequency of earnings reports after the president called for an end to quarterly disclosures. Plus, Google announces a £5 billion AI investment in the UK as President Trump prepares to unveil billions of dollars of deals during his state visits. So the Federal Reserve policymakers begin their next meeting later today, but exactly who will be voting was still up in the air with just hours ago. Now, Donald Trump's Fed nominee, Stephen Mirren, was also confirmed to the board by the Senate last night, paving the way for him to join the meeting. But his bid to fire Lisa Cook from the board was blocked by an appeals court, meaning she too is set to vote. Well, let's bring in John Authers, Bloomberg's senior editor for markets and Bloomberg opinion columnist. John, thank you for joining us. I mean, there's a lot going on. What are you expecting, us to be talking about post-Fed?
Well, I think we're most likely to be talking about a 25 basis points cut, and we'll be most interested in what they've said about the future. In terms of the drama around this meeting, everybody now assumes that Stephen Mirren will dissent from whatever the majority of his colleagues have said in a more dovish direction. And obviously it'll be interesting to see exactly how vocal, how strong-worded that dissent is. He has accused his new colleagues of tariff derangement syndrome in the recent past, so that will be the soap operatic element of it. For the future of the Fed, everything is about Lisa Cook, and at this point, and the date that matters is next February, when the Fed governors, the 7 who sit in D.C., have the option of vetoing people who've been put forward to run the regional Feds, which is ultimately the moment at which it might be possible to gain a majority of the overall FOMC. That would absolutely require Lisa Cook to be replaced by then, and that's where the end game is. I think this has been a power play trying to get her off the committee as soon as this week. It doesn't surprise me that she wasn't being given adequate due process, according to the courts.
John, Yeah, I absolutely love your column today, right? Because it's basically, the drama over who votes you think has profound implications. And that's probably the biggest question, exactly who will be voting and how and everything. Yes. Why do you think the markets are not pricing in a jumbo cut? Would it be the right thing to do, 50 basis point cuts, and then let's revisit?
But I personally don't think it would be the right thing to do because I tend to be relatively hawkish about inflation. Every sensible measure of core inflation is above 3% and either stalled above 3%, which is the upper range of the Fed's target, or actually rising. Given the most recent claims data, the most recent unemployment data, I think it's eminently reasonable for risk management purposes to cut by 25 basis points. I don't myself see the call to go for as far as 50. One of the big ironies is that Lisa Cook, obviously she's well to the left of Donald Trump, but on this specific issue of interest rates, generally speaking, people of her philosophy will tend to think that unemployment is more important than inflation if you've got to choose, which would mean you would think she would be one of the ones who'd be more likely to go along with a bigger cut. So it's similar to the kind of thing that often happens with the Supreme Court, that presidents want a particular candidate because of some particular issue at the time, and then discover that on other issues they diverge completely. That's why I don't see the Lisa Cook drama as being terribly relevant for this particular meeting. It's hugely relevant for the future.
But the market is the market pricing in, or at least is the market asking itself the right questions about what it means longer term?
Sorry, I should have answered that better. I think the market is working on the assumption that that this meeting isn't affected, and I think it's also working on the assumption that one way or another, the really extreme attempt at a power grab that isn't going to happen. That between the Supreme Court and also potentially just with whoever is ultimately on the FOMC from next February, that they will not go along with the very forceful attempt by the administration to look for fiscal dominance, to assert dominance over the Fed. I think if you had a very clear sign that might not be right, which would most obviously be if the Supreme Court rules that Lisa Cook can go, that would be quite a big deal. And then obviously if the new FOMC sits and begins to suggest that it really is prepared to be a different FOMC that sees its mission as being one to keep borrowing costs low, that would again really shake confidence in the dollar, really make international markets worry. I think it's probably right that for the time being that is seen as on balance unlikely. They probably are underpricing that risk.
John, as always, thanks so much. My go-to person, first thing in the morning, John Authers, Bloomberg Senior Editor for Markets and Bloomberg Opinion columnist. He writes every day, and it's always a funny and brilliant read. Now, emerging market stocks poised for their longest winning streak in 3 months. The latest run of gains comes as traders ramped up bets of a series of cuts by the Fed. Well, we're now joined by Motunde Lawal, head of EMEA Corporate Credit and Emerging Markets Corporate Debt at Barings. Thank you for joining us. There's just a lot going on. I mean, the day before the Fed probably cuts, how are emerging markets behaving right now?
We've had a good September so far. So emerging markets have had a good September. We're up something like 45, 46 basis points last time I looked in terms of where we are month to date. So we're having a very good month. But I just wanted actually to just comment on something very quickly that John mentioned around the Fed cuts and the Fed's dual mandate. There is increasing chatter that this labor market coolness that is behind the need for wanting a bigger than a 25 basis point cut could be due to AI productivity gains. Yeah. That doesn't actually require the labor market input. So it's going to be quite interesting when we hear the sort of commentary that accompanies the Fed decision tomorrow, just to see actually Are they going to factor that in? And are we actually going to see bigger cuts coming through later? But, I mean, EM markets are in the party as well.
On that, I mean, John Authors had this great piece in saying, like, maybe they need a third mandate, right? Maybe we should look at the Fed and see what else is there in terms of social cohesion or something like that. Would it likely to be under this administration?
Possibly not. Possibly not. It just seemed quite... that there's a strong willingness or strong desire from the Trump administration to just keep borrowing costs low. I think it's less about the inflation mandate or the labor market mandate. It's just really about stimulating that growth and just having borrowing costs low. So probably not. Or if that's a third mandate, then yeah, maybe.
So exactly, that could be a mandate, and then you know, to hell with the first two. Tunde, give me a sense first of all of how much you're expecting from the Fed. So is it 25 basis point cut?
25
is bigger?
Yeah, 25 is the consensus. I think if we see more than 25, then people start to worry and think, is there something I don't know? But 25, I think, is baked in. I think expectation probably generally is we should see another 25, 2 more 25 cuts into year end. So sort of taking it to 75 for the end of 2025. And I think that's what the market is pricing in. And generically for my asset class, I think rate cuts in the US are quite positive. You know, we see the investors likely to move from money market funds into riskier assets. EM tends to benefit from that. And, you know, the underlying fundamentals and all of that are good. So EM is very much in the party, as it were, as we start to see the rate cuts. But with this particular FOMC meeting, I think the focus is going to be around the commentary that accompanies the 25 bips when we get it. And then it's really about the board composition and the leadership and where do we go from there.
So what's your take on China? And actually, does a 25 basis point cut help or hinder China?
Well, the whole China debate, the U.S. cut in itself, apart from the general boost that it gives to all of EM, nothing specific for China. I think where the market is getting some euphoria from China is the positive noise that we're getting around. There's a TikTok deal, you know, Xi and Trump may speak on Friday, and we're getting closer to what seems to be the positive direction towards some sort of deal ahead of this November deadline. I think Besant has signaled that maybe they can extend that deadline beyond November if they need to. Those are the positive things that the market is taking into account. And you know, China in itself has its anti-involution policies that are going on. So to that extent where there's a bit more growth, there's a bit more sort of euphoria in the world, that's positive for the sort of products that the Chinese manufacturers and everyone is pushing out because they're getting them into these other countries without having to undercut from a pricing perspective.
Does China need to stimulate their economy a lot more because of these pockets, real estate, you know, concerns or question marks about consumers?
Yeah, so we got pretty weak data yesterday from China, and you know, immediately you had the calls for we need more stimulus, we're going to get fiscal, we're going to get monetary. But it's to be expected. I think anti-involution is just, you know, it's how do you define it? It's trying to get more. It's using more resources for production without getting more productivity gains out of it, right? And so you see very clear example of it where the China EV market, where, you know, you're getting all these fantastic electric vehicles being produced, but it's a race to the bottom in terms of the pricing war. And so that in itself has knock-on implications in different parts of the supply chain. Suppliers don't get paid. Dealers are sitting on inventory that depreciates pretty quickly as soon as you put it on the forecourt. And buyers buy a car, they drive it off, resale values are plummeting. So there's no winners in it, and it's just a race to the bottom. And so from that perspective, you can see that the weak data was to be expected because the supply side you're seeing it's the big coal industry, steel, aluminium. Those are the ones where you're seeing the sort of production numbers come off as the anti-involution policies seem to be kicking in. And then on the demand side, you have the base effects from the trading on subsidies from last year. So there's a bit of weakness both on the demand and the supply. But as you say, real estate was quite weak. I think new starts and new home sales were down double digits, almost 20%. And so there is obviously expectation that we will see some sort of stimulus. There's got to be stimulus to stimulate a bit of the demand side. And then there's going to be some support for real estate. We did get some stimulus at the very end of August on real estate, so that hasn't quite fed through to the data we got yesterday.
Because it's always a bit of lagging.
There's a bit of lag in it.
So now, how much is there a rally left actually in emerging market assets?
Well, how long is a piece of string? It's all relative, isn't it? So right now, the spreads on our asset class, we're sitting around 190, which is about 4 or 5 basis points from quite post-GFC tights. And could we go tighter? Potentially, yes, because it's really about the sort of technicals around it. You know, if you're getting US cutting rates and people are seeking higher risk, high yielding assets, there is the potential for more fund flows to come into asset classes like emerging markets. And if you look at the funds data as well, it is supporting that. You know, EPFR data, which is predominantly retail, at the end of May, net flows into emerging market debt as an asset class was minus, I think it was minus 12 billion. At the end of Friday of last week, we were at plus 8.5 billion. So it's a round trip of about $20 billion of inflows in 3.5 months. That is telling you something. That is telling you that, one, people are forward seeking higher risking assets. People are seeing the underlying growth potential within EM. And we've already spoken about this, that the bulk of EMs actually are not hugely vulnerable to all these tariff noise that we've had. So actually, you know, you're getting paid quite decent yields there, you know, something like an all-in yield of around 7% to be buying EMDs. So what's not to like there?
There you go. Thank you so much for joining us. Spotlight there on emerging markets with Omotunde Lawal, head of EMEA Corporate Credit and Emerging Market Corporate Debt at Barings. Now, let's also bring you a developing story. In Israel has intensified strikes on Gaza City, with the military saying it has launched the next phase of its operation in Gaza. Army radio reporting that 2 divisions are maneuvering into the heart of Gaza City, which the military says will be encircled from all sides in coming days. Now, Israel has told civilians to leave, with the military stating that over 350,000 residents have left. Now, coming up, our exclusive conversation with Apollo President Jim Zelter on the future of investment-grade private credit and the outlook for Europe. That's next, and this is Bloomberg.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Well, private credit's efforts to finance investment-grade companies is going to come down to its partnership with banks. That's according to Jim Zelter, president of Apollo Global Management, one of the world's largest alternative investment firms with about $840 billion of assets under management. Zelter also sees plenty of investment opportunities in Europe as governments struggle to meet industrial spending demands. Well, he spoke to us exclusively.
This is the most unique period of time in Europe. You know, for the first time in decades, I think there's The good thing about this administration is that the memo has been sent out about global growth and responsibility and accountability. And as a leadership in the countries around Europe are trying to figure out what that means for them, there's certainly a conversation that Apollo wants to be a part of, and we find ourselves being the recipient of a lot of dialogues and part of a lot of dialogue. So very exciting time. It's not a clear picture. And like usual, Europe has many different stories in terms of the continent and each country, what their objectives and needs are. But very exciting time for Europe, and we've been very public and pronounced about what our ambitions are, whether it's $100 billion in Germany or several $100 billion around the continent. We believe we're going to be a player in that dialogue.
So where do you see the best deals actually in Europe? And when you talk about dialogue, will that translate into actual money being spent in Europe?
Well, I think before you get to deals, you know, around the globe right now there's this massive global industrial CapEx needs and global industrial renaissance, which is really the provision of capital for whether it's energy, former utilities, transmission lines, whether it's energy sustainability and the modernization of that, whether it's data centers. You know, we find ourselves in a situation where, you know, for the most part, corporates and consumers, our balance sheets are pretty solid, where governments are a bit more challenged. So I think there's a realization that there's a dramatic need for CapEx, and governments on their own are not the solution. And so, you know, every country in Europe has a different objective in terms of their fiscal policies and their fiscal ambitions. And they have great ambitions, but a limited budget to provide that. So I think as the world of finance continues to evolve, you know, certainly we've been quite active in Germany.
Yeah.
We've been quite active in France.
Do you think that Europe will be just more competitive after the Draghi report? We talk about it, but have we seen anything concrete?
Well, our economist Torsten Slok had a nice review of the Draghi report a year in. And in terms of specific accomplishments, I think they've accomplished 11% of the objectives in there. And there's a lot still being discussed and debated, which is a little bit disappointing, or very disappointing. But I think in due course, more will be adopted.
Looking at different sectors,
Yeah.
Is enterprise software in a little bit of a bubble?
Well, when you look back in my career, whenever there was a period of time where there was an excess amount of capital funding in asset area, whether it was dark fiber in the late 2000s, whether it was shale in the 13 to 16 era in the U.S., or whether, you know, enterprise software the last 4 or 5 years, a lot of capital has gone into that business. Great companies were purchased at very high multiples, some not only double-digit multiples, but double-digit multiples of revenue. And so clearly, if you look at areas where between disruption and different economic growth vectors, that sector is one where there will be a greater dispersion between winners and losers. But I think that sort of highlights as I mentioned last week, you know, it's interesting. In my career, the last 30 or 40 years, most CapEx in big industries went to companies that were either coming out of a different regulatory regime or a technology regime. You know, think gaming, think cable, telecommunications, maybe even transport with airlines, or others. And those were all non-investment grade companies. The companies that need the capital going forward are typically more investment grade counterparties. So that helps us because of our business model in terms of how we've funded our liabilities, not only through client capital from other sovereign funds and pensions, but also from the retirement services balance sheet.
Is there something else that you think is overstretched in terms of valuations?
Well, I certainly think with the capital going into data centers today, I think each one stands on its own economic merits, and determining if it's best to be a debt provider or equity owner Those are questions depending on structure and counterparty. But certainly, there's no doubt that the society will benefit from the broad growth of AI and data centers. We're all using it more often. It's just a question of who will be the economic winner. And I think that we're active in both the debt and equity, but certainly I think that as the capital needs are so massive, there certainly will be winners and losers.
What's your take on the UK specifically? It's a big week. The King is hosting the President. We're expecting deals on the back of it.
Yeah. Well, I think, I'm not privy to any particular announcements, but when you think about what has gone on the last several years in the UK or in the US with the growth of data centers and other areas that private credit and private capital have funded, if you're the UK government, you have to have your shopping list, and attracting foreign capital along with industry and growth should be a great driver of economic growth.
Well, that was Jim Zelter, president of Apollo Global Management, speaking to us exclusively. Now, Swiss lawmakers voted against a second attempt to delay stricter bank capital quality rules to lift UBS's capital requirements by some $3 billion. Now, we're joined by Miriam Belezu, our Swiss finance reporter in Zurich. Miriam, so good to speak to you and have you on TV. So what are the likely options being considered at UBS?
So, Francine, we have a wide range, actually, of options going from the smaller tweaks that UBS can do to something a bit more mega and tectonic. We're looking at smaller options such as potentially just upstreaming. So the bank has already sort of baked in $5 billion, and there's a potential for more from Credit Suisse UK unit or from UBS's US subsidiary to be adding on to that number and reaching eventually the $26 billion. We're looking also at more UBS staying conservative and disciplined as it's always been, and just getting to that number just organically by being just a bit more conservative in its kind of dividend and payout plans. And then there's some more, let's say, dramatic options, such as potentially downsizing the investment bank, which is a big focus. And this is something, bear in mind, that UBS had done in the past under Sergio Amotti, shortly after the financial crisis. And there's also an option to potentially carve out the Swiss business, which is also something that Credit Suisse was looking at doing just in the run-up to its collapse. And obviously, last but not least, would be in just relocating and doing that via M&A, potentially buying, let's say, a business in the US and then, relocating that way. So these are the kind of options that the bank is looking at. It's very broad, and no decision's been made just yet.
So, Miriam, how would these changes be received by Switzerland, but also by investors?
It's a bit of a mixed feeling. I guess the relocation, so part of the Swiss government would probably rejoice that would rid them of a big conundrum. However, for the country, that would be a big loss. Obviously, UBS is the last remaining global bank that we have here. So it would be, and it's obviously core to the economy, core to Swiss identity. So that would be a disaster from that standpoint. And for investors, Cevian, which is the activist investor that holds 1.4% of UBS's stock, they've been vocal in saying that the company should leave.
Thank you, Miriam.
So
as always, Miriam Belezu there. Something to look out for. Our Swiss finance reporter there with the very latest from Zurich. Up next, Bloomberg Brief with Vonnie Quinn, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Fed tensions and appeals court blocks President Trump from firing Governor Cook. The Senate confirms Stephen Miron to the board. Rethinking earnings reports, the SEC says it's prioritizing President Trump's push to reduce the frequency of corporates' quarterly reports. And a 25th record high of this year alone. Equity futures now extending gains as investors await retail sales data ahead of the Fed's decision. And for the proof, just look at futures. We have S&P futures and NASDAQ 100 futures pointing to gains after nice gains yesterday on AI enthusiasm and, of course, Fed rate cut enthusiasm as well. Though it should be noted that the VIX is above 15 today. We have gold also at a record. Of course, if interest rates are coming down, gold is potentially a nice metal to own, if you like, and we also have central bank buying, but we're very close to 3,700 now and at a record as well. Let's take a look at yields because we are, of course, going into the first of 2 days of that Fed meeting. That 10-year yield started yesterday at 407. We're down to just under 403 right now. Elsewhere, we're down about a basis point or so across the curve. The 2-10 spread now is below 50 basis points. We'll be watching out for anything that comes out in the next 2 days. But let's get to some individual movers now. Over to London and Valerie Titel.
Good morning, Vonnie. Let's start with Oracle because it's rising yet again in the pre-market, up 3.5%. This comes after a CBS News report saying that Oracle could play a key part in U.S.-controlled ownership of TikTok. This comes a day after the Treasury Secretary Scott Bessent claimed they had come to a framework agreement on TikTok. When we wait to hear details, we have to wait till Friday until President Xi and Trump speak on the phone to agree on the framework. But it seems like Oracle is seen as one of the key beneficiaries of the deal. Let's move over to Dave & Buster's. This one's an earnings story here, Vonnie. Their adjusted EPS was less than half of that of expectations, a double earnings miss for Dave & Buster's, sending the stock down near 17% in pre-market trade. They had some issues with weaker margins on the back of some lower foot traffic in their flagship stores. Lastly, let's end on comics, a big business in comics. Disney is investing 2% in Webtoon, which is a digital platform for housing comics, also has it easy to read on smartphone devices. Now, this could potentially be a deal that could see Disney house all of its comics on the Webtoon platform, which would amount to 35,000 comics. Webtoon is up some near 50% in pre-market trade after this investment. Bonnie?
I'll have to have a look a little later on. Valerie, thank you so much. And later in the show, Callum Pickering of Peel Hunt joins to discuss the economic and political trade-offs for the Fed. But first, let's turn to our top story. An appeals court has blocked President Trump's attempt to fire Fed Governor Lisa Cook, keeping her in her post for now. Let's get more detail from Bloomberg White House correspondent Catherine Lucy. So, Catherine, what are the details? What did the court find?
Yes, good morning. That's right. The court has said that she has to remain for now in her position, and that means that the timing is significant here because the Fed has this two-day meeting starting today, and that likely means that she can attend this meeting. Although one thing to note is that President Trump could still try and appeal to the Supreme Court. But for now, this means that she remains in her post. And looking more long-term, what it means is that this is going to continue to work its way through the courts. Her fight to remain in her role is going to continue.
And that meeting just starting in a few hours from now. Meanwhile, Stephen Miron won his Fed post after the Senate confirmed him. It was a 48-47 vote happening just a few hours ago last night. How long before he joins the Fed's board? Will he be walking in as well today?
That's right. I mean, it was a close vote last minute, but it means that he should be able to stroll right into this expected meeting today, which obviously a lot of people, including President Trump, will be watching very closely to see what happens with interest rates.
Have we ever had this before where we've had potentially an extra governor sitting in the seats? What does it mean for the dot plot, Catherine? And, you know, will both be able to have a voice today, do you think?
I think we have to see how today plays out. As I understand it, both can. But I think the key thing, really big picture to think about here, is just how unprecedented the president's actions are as he continues to put pressure on this Fed board. He has spent, most of the year really pushing for interest rate cuts, trying to have influence here, and trying to really push them in ways that we haven't seen before. Obviously, presidents in the past have made their views known to the Federal Reserve, but this is a very intense campaign by President Trump.
And of course, Stephen Miron is keeping his job on the Council of the National Council, Economic Council, the Council of Economic Advisors. Will he walk back into the White House literally after he's finished with his FOMC meeting today and before he goes back tomorrow?
I don't have insight into his exact movements. He has said he's taking a leave of absence, and so we'll have to see how that plays out. But obviously a lot happening today with the Fed.
Yeah, absolutely. Catherine, thank you so much. That is Bloomberg White House correspondent Catherine Lucy. Staying in Washington, the Securities and Exchange Commission said it's prioritizing President Trump's proposal to reduce the frequency of corporate earnings reports. For more, Bloomberg's Suzanne Lynch joins. So, Suzanne, the president posted about this in his first term and again now yesterday. We've obviously thought this through. What are the potential upsides and also the costs?
Well, we have seen, some suggestion from the SEC that it's going to consider this, but we have been here before. Donald Trump did suggest changes in his first term. That really didn't lead to much change. So let's see how this goes. But it's an interesting intervention by the president, again, into corporate America, into one of the pillars of corporate America. He believes that the costs of too much disclosure are putting American companies at a disadvantage. Others, however, believe that this would be a break on transparency and would be bad for investors, for regulators, in terms of getting oversight into how a company is performing.
It's fascinating because the SEC says it's prioritizing it, and that sort of brings its own warning. Now, separately, Trump also filed a $15 billion lawsuit against the New York Times. Can you give us some details around that?
Yes, this was lodged, a suit, late on Monday night. It was taken in the state of Florida, obviously a Republican stronghold and basically the home of Donald Trump and his family now. And in this lawsuit, Donald Trump accuses the New York Times of being a mouthpiece for the Democratic Party. He takes issue with a book that was written by two New York Times reporters, as well as other articles. It's a big figure, 15 billion, well past the New York Times market cap. And it represents the latest attempt attempt by Donald Trump to sue American news organizations. We've seen similar efforts when it comes to ABC, CBS, and we saw some settlements in this case, in those cases. So yes, definitely a further escalation in terms of Donald Trump's relationship with the media.
Yes, and as you said, we have seen that he's had some success with this kind of attitude. What has been the response from the New York Times?
And so far, we're waiting to hear from the New York Times on this, whether they're going to fight this case. As I say, it refers to a book that was written by two New York Times reporters that is very critical of Donald Trump, as well as some articles. Trump also takes issue with the newspaper's backing of Kamala Harris in the last presidential campaign, as well as their criticisms in articles of Donald Trump. He talks about their criticism of him being unfit for office. So I think Donald Trump has made no secret of his views on what he sees as the mainstream media, but this definitely is a further escalation by the sitting president of the United States to yet again take on a pillar of the American system, in this instance, the media organization like the New York Times.
Suzanne, thank you so much. That is Suzanne Lynch there. Over in Switzerland, lawmakers have voted against a second attempt to delay stricter bank capital quality rules for UBS, which will lift lenders' capital requirements by some $3 billion. For more, let's bring in Miriam Balazou, Bloomberg Swiss finance reporter in Zurich. Miriam, this is quite the challenge now to UBS. What are its options? What's it looking at?
It's looking at a very various option, a very wide range of options, from something small and technical, like just upstreaming of capital. They already have $5 billion baked in, and there's option to a prospect to get more from CS UK units or from UBS's subsidiary in the US. There's also options of also downsizing the investment bank, which is something that UBS has done before, actually shortly after the financial crisis under Sergio Ermotti's leadership. That was a path that the bank had chosen. There's also the option of spinning it out. Same on that topic, spinning out the Swiss business, which is something that Credit Suisse had looked at in the run-up to its collapse in 2023. There's also more technical things that the bank can do, like SRTs, which would be sort of shifting credit risk to outside investors. And then obviously there are broader, bigger and more sort of tectonic options, such as relocating completely. And this could be done via M&A and buying, for the bank to buy potentially a wealth manager, let's say in the US, that would allow the bank to kind of relocate altogether and solve and go around the kind of Swiss regulatory hurdles that they're facing here.
Yeah, there are a variety of options that it can consider. That's obviously the board's decision, but investors and analysts will surely have a say. What are they saying right now?
It's kind of a mixed views, I would say, because for some investors, let's say there's the activist investor Sevian that has a 1.4% stake in UBS. They've been quite vocal about the bank having no option but to leave. But then there are other sets of investors that are anxiously waiting and looking for more guidance on the next payout, the next buyback program that UBS is going to do. UBS is committed to the $3 billion buyback program until the end of this year, but there's a question mark for the years to come, and that's something that's big on investors' mind. So that's something that everyone is waiting anxiously about. And analysts are quite split, but they also are of the view that the company can achieve that number by just being disciplined and just staying conservative and eventually reach that number organically, because that's also something it can do and set aside money quarter by quarter. It's a long process, right? So they might get there.
Absolutely. Miriam, thank you so much. That is Bloomberg's Miriam Balazou in Zurich. Now to other top stories trending on the terminal this morning. UK job losses moderate. The number of employees on payrolls dropped a further 8,000 in August, which was fewer than forecast. While it was the 7th consecutive decline, the shakeout has slowed, a sign that the UK jobs market could be past the worst of the slump. Google said it will invest nearly $7 billion over 2 years in the UK. The plan was disclosed just as President Trump is set to announce economic deals totaling more than $10 billion during his visit to the country. The spending will cover Google's AI unit, DeepMind, as well as AI research related to science and healthcare. Israel intensified strikes on Gaza City overnight as Secretary of State Marco Rubio warned Hamas has a very short window for a negotiated deal to end the war. He left Israel for Qatar, where he said he would try to encourage Qatar's leader to re-engage in mediation talks. Coming up, we'll bring you our exclusive interview with Apollo President Jim Zelter. That's next. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Tomorrow, the Fed decides.
The real debate is going to be about the outlook.
The economy's slowing as inflation's picking up.
The Fed's going to ride to the rescue and cut rates.
The risk is that you could see a reacceleration of inflationary pressures.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
I've never seen the equation this messy, ever.
Maybe this is going to be a central bank predisposed to running the economy hot.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now to a Bloomberg exclusive. Apollo Global Management President Jim Zelter sat down with Bloomberg's Francine Lacroix on opportunities in Europe and beyond. Take a listen.
This is the most unique period of time in Europe. You know, for the first time in decades, I think there's the good thing about this administration is that the memo has been sent out about global growth and responsibility and accountability. And as a leadership in the countries around Europe are trying to figure out what that means for them, there's certainly a conversation that Apollo wants to be a part of, and we find ourselves being the recipient of a lot of dialogues and part of a lot of dialogues. So very exciting time. It's not a clear picture. And like usual, Europe has many different stories. in terms of the continent and each country what their objectives and needs are. But very exciting time for Europe, and we've been very public and pronounced about what our ambitions are, whether it's $100 billion in Germany or several $100 billion around the continent. We believe we're going to be a player in that dialogue.
So where do you see the best deals actually in Europe? And when you talk about dialogue, will that translate into actual money being spent in Europe?
Well, I think before you get to deals, you know, around the globe right now there's this massive global industrial capex needs and global industrial renaissance, which is really the provision of capital for whether it's energy, former utilities, transmission lines, whether it's energy sustainability and the modernization of that, whether it's data centers. You know, we find ourselves in a situation where, you know, for the most part, corporates and consumers, our balance sheets are pretty solid, where governments are a bit more challenged. So I think there's a realization that there's a dramatic need for CapEx, and governments on their own are not the solution. And so, you know, every country in Europe has a different objective in terms of their fiscal policies and their fiscal ambitions. And they have great ambitions, but a limited budget to provide that. So I think as the world of finance continues to evolve, you know, certainly we've been quite active in Germany. Yep. We've been quite active in France. You know, Athora, in their recent announcement of the purchase of PIC in the UK, which is a different conversation. But, you know, I think we find ourselves, particularly in those two countries, and yes, some in Italy and some in Scandinavia as well. So it's fairly broad brush, but these are massive, massive ambitions from which to fund.
That was Apollo Global Management President Jim Zelter speaking exclusively there with Bloomberg's Francine Lacroix. So it is the first day of the FOMC meeting. Let's take a look at those markets, as we've been seeing pretty much constant records for the major indices. It would be a 10th day of gains today for the NASDAQ 100, and indeed, futures on major indices are pointing higher. As you can see, S&P futures with a nice green number there. This after the S&P rose yesterday by 0.5%, and the NASDAQ 100 was up 0.8%. Of course, AI enthusiasm leading it, but in the background, Fed rate cut enthusiasm, no doubt as well. The VIX also, though, above 15, we should note. We have gold at another record as well. As you can see, we're above 3,700 right now. 37.32. Continued central bank buying, also a little hedging going on there as well. The 10-year yield at 4.03, that's all the way down from 4.07 on Monday when we opened. We have the 2-10 spreads below 50 basis points right now. The US dollar is weaker as well as the FOMC begins. Not unusual, but we have the yen strengthening as well. We, of course, have the BOJ meeting later on this week. No movement expected, but certainly it is giving a little bit of support to the yen, which is up about 0.5% versus the dollar today. Coming up, Cook versus Trump. A look at what's making headlines in your front page news. Next, this is Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, on the Wall Street Journal, an appeals court has rejected an emergency Trump administration request to remove Fed Governor Lisa Cook. The judge said there was merit in Cook's claim that she wasn't given proper notice or opportunity to respond to her firing. The administration could seek intervention from the Supreme Court. Next up, on the New York Times, the Senate vote to install Stephen Miron as Fed Governor. This opens the door for him to join the Fed meeting, which kicks off in just a few hours. Miron said he planned to take only a leave of absence from his role as chair of the White House Council of Economic Advisers. And the Washington Post reporting that the suspect in Charlie Kirk's killing appears to have confessed to friends in an online chat before being taken into custody. A Discord message sent from an account belonging to Tyler Robinson said this: "Hey guys, I have bad news for you all. It was me at UVU yesterday. I'm sorry for all of this." A member of the group chat shared an image of the conversation with the Post and confirmed that it came from Robinson's account. All right, we are about to head into day one of a two-day FOMC meeting, and here is how markets look. We have potentially another green day on our hands for equities after the S&P rose 0.5% yesterday. Futures pointed higher as well today. The Nasdaq 100 had its 9th day of gains yesterday. It would be a 10th one today if that were to continue, and certainly futures there are pointed higher as well. The dollar is weaker. Typically, going into an FOMC meeting, you do see that, but we also have a BOJ meeting this week, and the yen is much stronger. The dollar potentially a winner after those meetings occur. And the 10-year yield down to 4.03 from 4.07 on Monday. Elsewhere, we're down about a basis point across the curve. The 2-10 spread below 50 basis points. And I do want to mention the VIX as well, above 15. Get lots of economic data this morning as well. Coming up, we're going to catch up with Callum Pickering of Peel Hunt on the Fed's dilemma. This is Bloomberg.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Fed tensions and appeals court blocks President Trump from firing Governor Cook. The Senate confirms Stephen Myron to the board. Rethinking earnings reports. The SEC says it's prioritizing President Trump's push to reduce the frequency of corporates' quarterly reports. And a 25th record of the year. Equity futures extending gains today again as investors await retail sales data ahead of the Fed's decision. So let's just take a look at those futures because they are pointed higher on the S&P and the NASDAQ. It would be a 10th day of gains for the NASDAQ 100 if this continues today. And several of those important stocks, such as Tesla, are higher in the pre-market. Of course, it's AI enthusiasm as well and rate cut enthusiasm. Very likely to get a rate cut tomorrow. Gold, though, interestingly, also very close to that record that we hit. It was above 3,700 just a few minutes ago. Gold up 0.4% right now. The VIX above 15 as well. That might be another little indicator of how the market is feeling. And the dollar is weaker today by about a quarter of a percentage point. At least the index is. The yen stronger. So let's get to some individual stocks to watch now. We go over to London and Valerie Teitel.
Good morning, Ivani. Let's start with Oracle because the speculation is rising that it could be the key beneficiary of U.S.-controlled ownership of TikTok. There was a CBS report out earlier saying that Oracle could play a key role in the TikTok deal. So we're seeing Oracle shares up 3.8%. Note they rallied yesterday on the announcement of the framework. We're still scant on details. We have to wait till Trump and Xi have their phone call on Friday. Let's move on to earnings. Dave & Buster's double earnings missed for them, and the stock is getting punished in the pre-market, down nearly 18% so far this morning. Their adjusted earnings per share came in basically half of what the street expected. They did take a hit on margins and are experiencing lower foot traffic in some of its key stores. Lastly, let's end on comics. It's a big business. Vani, Disney announcing a 2% stake in company Webtoon, which is an online platform for reading comics in a vertical smartphone platform. Disney wants to use this key partnership to house 35,000 of its own comics eventually on the Webtoon platform, making a comics-only subscription available for Disney. So Webtoon is up 48% after the announcement of this Disney stake. Bonnie?
Well, now that you've introduced me to it, I know what I'm doing with my afternoon. Valerie, thank you so much. That is Valerie Teitel in London. Callum Pickering of Peel Hunt looking ahead to tomorrow's rate decision, writing, quote, While the Fed typically reacts more eagerly to downside risks to employment than upside risks to inflation, rarely has the bank faced such complex economic and political trade-offs on the eve of a likely rate cut. Callum joins me now. He's chief economist at Peel Hunt. So just give us your outlook, Callum. You say it's a likely rate cut. How many more by the end of the year?
Well, that's the big question. I think we get a rate cut this week. The Fed won't disappoint the market. The question is, do we then get 2 more cuts before the end of the year or just 1 more cut? And this, again, just returns the Fed to the question that we've been asking all summer, which is, will the Trump policies, the anti-growth, inflationary tariffs, will they push the Fed further away from its employment mandate or its inflation mandate? The inflation risks are still persisting, let's be clear, but recent labor market data have been sufficiently weak for the Fed to cut this week. Now, will the Fed say, actually, we're at the stage we can totally look through inflation risks, let's get on top of the economic risks? I don't think we'll be there yet. So I think the market will be hoping for an answer to this question, can the Fed cut 2 more times this year? I'm not sure the Fed will be prepared to give it. That will be basically a data-dependent call.
Well, and Callum, we can't ignore the fact that the calculus literally changed in the last few hours once again. Do Cook and Myron both walk into this meeting? Do they both get a voice? Has this ever happened before, that there's been an extra voice?
Well, that's the complication. And for me, I'm speaking just purely as an economist here. I find the administration's approach to the Fed a little bit puzzling. Clearly, the administration wants the Fed to cut rates. That's so much is clear. But the way to get a central bank to lower interest rates when faced with potential inflation risks is to strengthen the credibility of the central bank. You know, President Trump should be saying, Powell's just the ultimate genius. There's no way I can ever imagine he won't hit the inflation target. Markets should just trust him to set policy as he wishes. That's the way to get the Fed to cut. That's the way to strengthen credibility. Instead, what we have is this overhang of political uncertainty and these clear attempts by the administration to try and put some pressure on the Fed. That, in market terms, smacks of fiscal dominance. That's where markets start to worry that the Fed might start cutting interest rates, not because it's focused on inflation or employment, because it's trying to help the administration out. You politicize the Fed, you add to inflation risks, you make it harder to cut interest rates. So I see a bit of a paradox here which needs to just resolve itself, and I think it's the data that will resolve it for us in the end.
When and where do we see that filtering through to the market, Callum? Because sure, we've seen, you know, a big jump lower in Treasury yields, but to a certain extent, I mean, it hasn't been, you know, maybe reflective of a threat to Fed independence just yet.
Well, it's just one of those things that lurks in the background. I don't think it's just a US story, actually. We see it over here in the UK. We see it a little bit in France. We've even seen it in Japan, actually, where the long end of the curve is just a little bit weary of a few things. First, how are we going to process this huge increase in debt issuance as our populations get older, given current fiscal trajectories? Second, inflation seems to have returned to the global economy, not in a major way, but it's there. The balance of demand and supply has changed. We now have to deal with inflationary risks. And then you have, in the case of the US, this politicization of the Fed. So I don't think it's something that permanently affects pricing in markets, but every now and again, you'll find that there's just some political tinder there, which can be lit easily. We're not worried at the moment in bond markets. Everything seems to be calm. But 2 weeks ago, we were in April and we were in February. That's 3 times already this year. So I think we're just going to be going through this repeated cycle of little wobbles.
Callum, I presume Myron will get a dot, right? Will it be extreme? Will we see the whole dot plot skew a little more dovish because of Myron's dot?
A little bit, but I think the market will be able to just spot it and look through it. I think that would be my guess. The question for the dots will be, again, what will the skew be? And what will be the terminal rate? So if you look at market pricing, markets are saying the Fed might go 150 basis points more, which would be significant. That would take monetary policy in the US from probably slightly tight to actively easy. My base case is for 100 basis points of cuts. I think we'll see a bit of resilience in the economy into next year. But the question over that terminal rate will be important. If the market is validated on 150 basis points, I think we'll see 2 things. 1, equities will really, really like that. But 2, I think we'll start to see questions in the bond market about whether or not that could add to a bit of inflation.
You know, there is also the possibility that the Fed actually sounds less dovish after this meeting. Would the market react to that, given that it's pretty clearly expecting a dovish FOMC meeting?
it's going to be pretty hard for the Fed to sound hawkish if it cuts when inflation is already above its 2% target. I think this is really key. Keep in mind as well, I mean, if you think about the target as an average inflation target, this should actually be a Fed that's prepared to undershoot versus 2% for a while. Of course, that's not going to happen. I think the shock to markets might be if Powell signals that already the Fed has basically decided, that the process for cuts will be cut, then skip, then cut, which would then mean only one more cut probably in the December meeting. One should also keep in mind, this time last year, the Fed cut 50 basis points because we were facing downside surprises to the labor market. So already if the Fed goes 25 basis points, it looks somewhat hawkish.
Yes. Callum, I want to ask you about the dollar because today we have the yen at 146.95, so below 147, and the euro above 118. Do those levels become a little more extreme, and is it a dollar story, or is it more the other currencies that are benefiting?
I think it's a little bit of both. In the case of Japan, you would expect at some point the BOJ just to try and get rates up a little more. For the Eurozone, the ECB may have one more cut, but maybe not. And what we're probably likely to see is a bit of a cyclical recovery in economic activity. So that should attract some inflows. But I think we're probably in a structural dollar bear market. And that doesn't reflect so much issues in the US economy, so much as it reflects just the closing of some growth gaps around the world. So in 2022 and 2023, the US economy was just steaming ahead, 3% growth, big fiscal backstop. The rest of the world was struggling because of global uncertainties, issues with trade. Europe was hit by gas shortages. We had almost no growth in Europe in those years. Now that transatlantic growth gap is narrowing, inflows from the US should turn into inflows into Europe, and that should push the dollar down.
All right, Callum, thank you so much. That is Callum Pickering there of Peel Hunt. Coming up, Fed Governor Lisa Cook keeps her post for now. Your DC update next. This is Bloomberg.
You missed it on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
is Bloomberg Brief. I'm Bonnie Quinn in New York. Tensions rising in the Trump-Cook showdown. An appeals court has blocked the White House's attempt to remove Fed Governor Lisa Cook from her post for now. That's just ahead of the Fed's September meeting kicking off today. Let's get more detail from Bloomberg White House correspondent Catherine Lucy. So, Catherine, what were the details of this particular decision?
Hey there. Yes, the court has ruled that she can remain in her position for now while her lawsuit to stay on the board proceeds. And obviously, heading into today's expected Fed meeting, that means that she is likely or certainly can attend that meeting, barring some kind of last-minute appeal from the White House to the Supreme Court. So it really is sort of another turn in what has become a very intense showdown between Cook and Trump.
And that meeting starting in just a few hours. President Trump's economic advisor, Stephen Myron, also won his Fed post after the Senate confirmed him in a 48-47 vote a few hours ago last night. Does he already join the Fed board then today?
That's right. Last minute vote, coming right down to the wire. But yes, he can head into this meeting today. And you see that sets up a situation where he can be there as President Trump obviously has been pushing very hard for an interest rate cut.
Well, separately, President Trump has urged now the SEC to change rules around companies' earnings reports. Now the agency says it's prioritizing the case. So what is the latest on that push? What would be the consequences?
That's right. They say that they're prioritizing this. This obviously comes after President Trump has called for this, which would be a significant change to how proceedings are usually carried out. We'll have to see what happens, though. President Trump made a similar push back in 2018, and while there was a review, ultimately there were no changes finalized.
We'll wait more on that, obviously. The president also heading to the UK later this morning, this big visit that we've been anticipating. What are we expecting? What's on deck?
Yeah, he has an action-packed 2 days. So the president's expected to arrive in the UK in the evening tonight. And then on Wednesday, he will have a full day of events with the royal family, with King Charles, culminating in a banquet dinner Wednesday night. This is his second state visit. He had one during his first term. So there'll be a lot of fanfare associated with that on Wednesday. Then on Thursday, he will have a series of diplomatic meetings with Prime Minister Keir Starmer. That's going to include some tech executives and CEOs for a series of announcements about investments. And then he and Starmer are expected to have a press conference.
All right, Catherine, thank you so much. That is Bloomberg White House correspondent Catherine Lucy. Over in Israel, Jerusalem, intensifying strikes on Gaza City overnight. Prime Minister Netanyahu says the nation's military has now begun an intensive operation. Secretary of State Marco Rubio spoke to reporters as he landed in Doha.
As you saw, the Israelis have begun to take operations there, so we think we have a very short window of time in which a deal could happen. We don't have months anymore, and we probably have days and maybe a few weeks, so it's a key moment.
Joining us now from Jerusalem is Bloomberg's Dan Williams. Dan, this Gaza City operation announced by Israel almost 6 weeks ago, it's taken quite a long time to implement. What are the reasons?
Well, I'd say that as that saber was being drawn, a saber that Israel said was required to finish off Hamas, to decapitate Hamas, if you like, it was also being rattled. And I think it's no accident that this final push into the heart of Gaza City was launched as Rubio, the top U.S. diplomat, launched a spontaneous bit of shuttle diplomacy, flying from Israel to Doha, to Qatar, for a very short visit, emergency talks with the Qatari leadership about, he said, possibly getting Hamas to surrender. So it would appear that even while Israel has now, after several weeks of planning, launched this operation, thrust into what remains of what it says is the last Hamas bastion in the Gaza Strip, it still hopes that Hamas can be convinced to lay down its arms, hand over hostages, and avert this showdown, a showdown that will cost Israel in terms of troops, casualties among troops, among the hostages who are still alive, and certainly among the hundreds of thousands of Palestinian civilians still in that conurbation.
And then how does it all square with the Secretary of State, Marco Rubio's visit to Qatar today? He's trying to get the Qataris to start mediating again, right?
Yes, I mean, it's sort of a minuet. You have the Israelis going in strong and loudly and destructively with this operation. It's worth noting the Israelis haven't said explicitly that their troops or tanks are presently in the heart, in central Gaza City. They say they're on the way there. It's a distinction that's important because as soon as you'll see tanks in the heart of Gaza City, you'll know Gaza City has fallen effectively, and Hamas will certainly know that. So while the Israelis are signaling that they're going in the coming days and weeks, Rubio is signaling that there is a way out, a non-violent way out. If Hamas that's being represented in mediation talks by Qatar, can be convinced to surrender and end the war that way.
So tanks and troops on their way, according to the Israel Defense Forces, to Gaza. As you say, if we see pictures of that or if we know that they are there for sure, what else does that signify?
Well, Israel hopes that would be the end of the war militarily because its strategy has been dubbed by Israeli media as what's called conquer and crush, meaning Israeli forces advance slowly. They churn up anything that might be used by Hamas for military installations, bunkers. That includes a great deal of Palestinian dwellings, and effectively make sure that there can be no return there. This requires corralling Palestinian civilians in DP camps, large DP camps in the central of the Gaza Strip, effectively depriving Hamas, what fighters survive, of the weaponry to continue the fight. Israel hopes that will spell a de facto victory and a recovery of those hostages, dead or alive. If that fails in the Gaza City, then they may continue to a number of townships in the central Gaza Strip, where they have also yet to conduct such operations. I think it's clear that the Israelis would like to see this end conclude with victory over Hamas in Gaza City sooner rather than later.
All right, Dan, thank you so much. That is Bloomberg's Dan Williams in Jerusalem. Turning to tech now, Google announcing its plans to invest nearly $7 billion into the UK's AI economy over the next 2 years. That's ahead of President Trump's state visit to Britain, which begins Wednesday. Let's go straight to Bloomberg Tech Europe anchor Tom McKenzie for more. So, Tom, what do we know about all of this investment?
Yeah, well, we are expecting, of course, a flurry of deals, as you suggested, from the tech space, from those tech leaders over the next few days as part of that visit by President Trump to the UK, that state visit. And we have the first details coming through from Google. So £5 billion, about $7 billion US, as you said. A lot of that money will go to Google DeepMind, which is headquartered here in London for research and science and pushing forward on that front. But there will also be money allocated to a data center as well to help power some of the Google services that UK citizens and businesses use, of course, and the mapping as well. That commitment of £5 billion or $7 billion US being funded over 2 years, says Google. And to your point, they have said they are playing their part, trying to help build this AI economy in the UK. We are expecting, of course, deals, as I said, as well, from the likes of NVIDIA and OpenAI. So we're watching for that as well. Further commitments, of course, from the maker of those AI accelerated chips, NVIDIA, and OpenAI as well. Largely, you would expect on the infrastructure underpinning AI, and those deals could come through in the next 24, 48 hours.
Yeah, absolutely. And then, you know, the other eye-popping thing was that these talent wars continue, these AI talent wars. OpenAI has hired the former CFO of XAI. You have to tell us the details of this.
Yeah, Mike Liberatore, who's only been, or had only been at XAI just for a number of months, in fact, as you say, the CFO of XAI. They've been spending heavily on infrastructure as well to build out, of course, their AI proposition. He now has, according to CNBC, been poached by OpenAI. It's a reminder as well of the talent wars. They continue. We've seen Mark Zuckerberg signing checks for $200 million to poach talent from some of his competitors. OpenAI is not sitting on its laurels on this front and now has poached the CFO, who's going to be reporting to Sarah Fryer. He's going to be the business chief executive, or the business executive, focused on spending on infrastructure, and he'll be reporting to OpenAI's CFO, Sarah Fryer. And what it could do as well is just really underscore the tensions between OpenAI, between Sam Altman and Elon Musk, and those tensions have kind of burst into the open, particularly at the beginning of this year when Sam Altman told me that he feels sorry for Elon Musk and that he thinks Elon Musk is trying to hold back OpenAI. So it will be another source of tension, you would have thought, between Musk and Sam Altman.
No doubt, absolutely no doubt about that. Our thanks to Bloomberg Tech Europe anchor Tom McKenzie. Coming up, retail sales and a treasury auction will get you set up for your trading day. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller at the Circuit de la Sart in Le Mans, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead for the day. First up, President Trump heading to the UK this morning around 8:30 Eastern Time. Also at 8:30, we'll get retail sales data, and that's followed by industrial production at 9:15. And then the Treasury will auction $13 billion of 20-year notes a little later on. Let's take a look at some movers before the bell. CBS News reporting Oracle could play a key role in that US-China TikTok deal that's sending Oracle shares higher to the tune of 4.4% now in early trading. Hershey double upgraded to a buy at Goldman with a price target of $222. 2.4% of the early trade. And Webtoon, Disney is taking a 2% equity stake in the company and making all of its marquee comics available via a single subscription. As you can see, that sent that stock almost 50% higher in the pre-market trade. But it is day one of the Fed meeting, the FOMC decision coming out tomorrow. So let's take a look at the macro environment. We have futures on equity indices pointed higher once again. If today is a positive day for the NASDAQ 100, that would be its 10th straight positive day. So obviously it's setting up for that. Dollar weaker, you might anticipate that going into a week of meetings by central banks, particularly the yen, which is stronger today versus the US dollar. It is below 147. The euro is above 118. And if we look at yields, we're just a basis point lower pretty much across the curve. We're at 353 there on the 2-year. The 10-year yield is interesting. We're at 403.75. We started the week at 407, if you'll remember. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg. What is not baked in is the idea that we may actually end up needing these cuts.
Right along with everybody else, I expect a quarter-point cut.
We don't see the economy going to above trend growth. So this is a kind of a muddling through scenario.
I don't think anyone would be completely shocked by, a more dovish bias here.
If they do 25 bips or if they do even 50, the market should be able to take it.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday, the 2-day meeting begins. The Federal Reserve getting together ahead of tomorrow's decision. As White House Fed pick Stephen Myron is taking a seat at the table, a U.S. appeals court is blocking President Donald Trump's latest effort to remove Fed Governor Lisa Cook.
So if you weren't interested about what's happening in Washington, D.C., which begins today and ends tomorrow, well, this is going to be fireworks. The idea of a Lisa Cook, Stephen Myron showdown is made for primetime TV. The reality is that might make really good headlines, but the actual fireworks for markets may happen in the guidance going forward of what they plan to do with policy, of which Stephen Myron is a temporary part since he has such a short term.
We've already had the fireworks in the markets.
That's true.
Record highs on the S&P 500, on the NASDAQ 100. Bank of America out with their fund manager survey so far this morning. These are the headlines. The most bullish survey since February, equity allocation the highest in 7 months, and this, a record. Say stocks are overvalued going into this Fed decision.
They say stocks are overvalued and they keep buying. Particularly tech stocks are overvalued, and they keep buying tech stocks to a significant degree. Why? Because of rate cuts. And this hinges on the tension, the idea that you do get some sort of rate-cutting cycle that gives power to the equity rally at a time where they don't see weakness. Just to give you a sense of this, if you look at the internals of the survey, it's pretty fascinating. Not only are they the most bullish on equities going back 7 months, but about 39% of respondents to the survey want companies to increase capital spending. That is the most since December. So this is a forward look into growth and optimism. It goes beyond just a one-time pop at the same time that they're clamoring for a rate-cutting cycle.
We started the week asking this question. Can this Federal Reserve meet this market? Just how far is Stephen Myron, now Governor Myron, willing to push things? Just how low is that dot going to be?
Yeah, and how much will the market care considering that his term is up early next year, right? Is he more of the noise or the signal as to who will replace Chair Powell come next spring when there is a new Fed chair? Look, this really is the question. Can the Fed confirm what's in markets, which is a rate-cutting cycle that brings Fed funds rates close to 3% or even below that by the end of next year? If they can't, how significant is the blowback, or are people going to take it in stride and find another reason to be bullish?
And if they do, will it look credible or will it look political? And that's a very, very different conclusion.
You know, one thing that I was struck by is that one of the biggest potential pain trades is a stronger dollar. This, to me, is a fascinating moment because a lot of what we're talking about, the idea of a Fed that's easing quickly and maybe isn't as credible, but it doesn't really matter because it's going to juice growth, that story has led to this persistent weakening in the dollar. If you get a reversal of that, how violent could the pain trade be, given the fact that this has been such a consensus bet?
As we speak, dollar weakness. Euro dollar through 118, 118.12 on that currency pair, the highest, potentially if we close here, since September 2021. Some euro strength on the screen, at least so far this morning. That's some of the price action for you. Coming up this hour, we'll catch up with Henry Allen of Deutsche Bank as stocks hit fresh record highs. Brian Gardner of Stifel as an awkward FOMC meeting gets underway. And Elias Galou of Bank of America on the valuation fears across Wall Street. We begin this hour with stocks hitting new all-time highs ahead of the Fed's two-day meeting. Henry Allen of Deutsche Bank writing the following: the backdrop remains bullish, but there's currently a great paradox in markets. Henry joins us now for more. Henry, good morning and welcome to the program. Let's talk about that paradox. Briefly describe what is at the epicenter of this market for you.
Well, as I say, there's this great paradox because on the one hand, you've got a lot of signs of caution. So gold prices at a record high, even in inflation-adjusted terms. And we've seen clear signs of weakness in the US labor market. We've got geopolitical risks, tariffs still floating through. So a lot of sign of caution, and hence investors are pricing in more rapid rate cuts. But then, as you said, we've also got risk assets at all-time highs. The S&P 500 hitting a succession of record highs, now on track for 6 out of 7 weekly gains. And actually, US IG credit spreads yesterday were at the tightest since 1998, which is, again, portraying a much more bullish backdrop relative to those fears that a lot of people are talking about. So I think if we take out the noise and look at the fundamentals, and growth still looks pretty robust according to GDP trackers, I think we're still in a pretty good place.
So, Henry, the problem I think a lot of people have got at the moment, the payrolls data, we've had a huge step down in the payrolls data, which has led the Federal Reserve to this very moment to consider interest rate cuts. And this market, as Lisa and I have talked about, seems to be overweight rate cuts, but underweight the reasons for them. Is there any reason that's going to flip anytime soon?
So I'm not too alarmed by that for a couple of reasons. One is that actually, if you look at the break-even payroll number, given Trump's moves to clamp down on immigration, actually it suggests the break-even number to keep the unemployment rate steady is as low as 60 to 70,000. So in and of itself, the fact that we've seen a slowdown isn't a cause for alarm. The other thing, and this might again seem paradoxical, is actually from the benchmark revisions we saw last week. Yes, they were very heavy, record numbers, and indeed 911,000 lower for the year from April 24 to March 25. But there is actually potentially a good interpretation of that, which is because 2024 was revised down quite a lot, actually the slowdown in payrolls that you see on the chart from 24 into 25 doesn't look like much of a slowdown at all. Actually, we're still running at levels pretty similar to last summer. So payrolls, yes, they're subdued, but actually the GDP trackers like the Atlanta Fed running still above 3% are looking on the stronger side. And perhaps one way you can explain that is actually the productivity growth is running pretty decently because persistent in this cycle, growth has been surprising on the upside.
So, Henry, this to me is the sort of potential key to the paradox, this idea of productivity allowing some sort of growth and optimism around risk assets without commensurate inflation. Yet then why should the dollar weaken so substantially if the U.S., according to risk assets, is going to be a bastion of growth?
So I think the dollar weakness isn't so much because of the growth picture, which is pretty strong. I think the dollar weakness is coming because there are genuine worries among investors about US institutional credibility and about the credibility of economic policy making. I mean, partly that's a tariff story, not just the tariffs themselves, but the fact we've had so much uncertainty and volatility in those rates. But of course, coupled with that, we've got this attack on the Fed's independence from Donald Trump. I think some of that is over-egged, but clearly Trump is the first president ever to publicly seek to fire a Fed governor in Lisa Cook. He's not the first president to try and put private pressure on the Fed, but he's the first to do it so openly. So I think that's what's generating nervousness and is leading to a bit more skepticism about US assets. Even if the growth picture is very strong, I think those worries are still at the back of investors' minds.
Do you think then, because of the growth differentials where they're at, that maybe this weak dollar story has been overplayed?
I don't think it has, because actually I think particularly when you couple the institutional credibility issue with the fact the Fed are now cutting rates and set to embark on an easing cycle, at the same time that the ECB have now finished their easing cycle, and other central banks, indeed the Bank of Japan, expected to keep hiking, I think what you're going to see is that interest rate differential between the Fed and other central banks tighten. So I can see fundamental reasons why you'd expect the dollar to keep weakening, at least on a kind of medium-term, 18-month horizon. Yes, there will be blips on the way and narrative shifts from month to month, but I think the medium-term path of the dollar is still definitely a weaker one when you couple up the fact that the Fed are cutting rates into a pretty benign backdrop, coupled with the threats to the institutional credibility and the fear that the Fed might go pretty aggressively on cuts if Trump is successful in shaping the Fed board to his liking.
Henry, I just want to stay on this and put all the pieces together. What I hear from you is this Federal Reserve is about to cut because of the labour market data we've seen recently, but ultimately you shouldn't be too worried about the labour market data. So Henry, with that in mind, how hot do you think this Fed is about to run things going into 2026?
Well, I think that's a really big risk and something that I would be worried about if I was sitting on the FOMC. I mean, one thing I'm really struck by is that money supply growth in the US is already picking up. It's the fastest since 2022. And actually, another thing that I'm really struck by is that if market pricing is even vaguely correct and we get another 100 bips of cuts in the next year, that's coming on top of 100 bips of cuts in the last year from September to December 24. So that'd be 200 bips of cuts in 2 years. And if you look back at recent decades, almost always when you've seen 200 bips of cuts in 2 years, it's been because of a recession. You've only once seen that in a soft landing scenario, and that was under Paul Volcker in the 80s when he was bringing rates down from incredibly restrictive territory. So not a scenario like today at all. So, you throw on that scenario, which is unprecedented in modern times, of the Fed cutting aggressively, 200 bips potentially in 2 years, into a soft landing rather than a recession, and we're running a monetary experiment that we haven't been running in many, many decades. You've got to go all the way back before the Fed Treasury Accord when the Fed wasn't really independent for something like that. So it's going to be really striking. I think the risk with that is, then inflation starts to tick up more aggressively, particularly when you then couple that onto the tariffs and the fact that leading indicators of inflation like the ISM services prices paid, where that's running at the moment, 65, 70, that's consistent with CPI in the 4s. So then you chuck on a load of Fed easing onto that, then I'm certainly worried about inflation in the coming year.
So Henry, if you're worried about that, other people might be excited about the prospects for gold, about the prospect for equities, something that tracks nominal GDP quite nicely. Henry, what would you be pushing into? What would you be excited about if that's the direction of travel for this Federal Reserve?
Well, I'd certainly be excited about gold, like you say. I mean, already last week we had a huge milestone because it exceeded its previous inflation-adjusted peak at the start of 1980. And that was an environment when inflation was raging in double digits, when Paul Volcker was radically trying to clamp down on inflation by huge hikes in interest rates. So the fact that we've now got this backdrop where inflation might be accelerating, there's doubts about the credibility of US institutions, interest rates are now coming down, and gold, of course, doesn't pay a dividend, so that's inversely correlated with interest rates, then I think gold is definitely the place to be at the moment.
Henry, if inflation does pick up, how much of a pain trade is that for all of the consensus trades that we're seeing right now?
I think it would be a difficult one. I think whether inflation picks up and what that means on the market front really depends on the Fed reaction function, because it will be a very different picture if the Fed can kind of look through that as they're currently doing, because inflation is still above target, yet the Fed are talking about rate cuts. If the Fed looks through that, then I think the equity backdrop could be pretty benign. But if you get then the 22-style reaction function, where the Fed suddenly clock that actually this is getting out of control more aggressively, and you do see more aggressive Fed posture, potentially even them turning to hikes in 26, 27, then I think that would induce a more negative reaction from risk assets, particularly in the equity market, because a common theme, if you look at the big sell-offs of recent years, 2022, 2018, even 2015-16, is it's actually coming when the Fed is pivoting in a hawkish direction. So if inflation gets to a point, particularly if it gets into the mid-3s, 4s, where the Fed can't ignore it, then I think that's the pain trade for this equity rally.
This could get messy. Henry, appreciate it. Thank you, sir. Lots to think about there. Henry Allen there of Deutsche Bank. Looking at gold. Gold up for a third consecutive session. Gold up this year by more than 40%.
And a lot of it does come on this question of what is the alternative to the fiat currency of choice for the past 3 decades, 4 decades, 5 decades, which has been the dollar. There is a real question here about that paradox, how it's going to be resolved, or whether it can just coexist with this idea of the risk rally, this excitement for the U.S., while at the same time seeing gold rally and dollar depreciate.
And stocks continuing to rally too. All-time highs coming into Tuesday. Futures up by 0.2%. With an update on stories worldwide with your Bloomberg Brief, here's Yahara Anand. Hey, Yahara.
Good morning, John. President Trump's economic advisor, Stephen Myron, is joining the Federal Reserve Board after the Senate confirmed him last night. Lawmakers voted largely along party lines to approve Myron's nomination, setting him up to join the Fed's 2-day policy meeting starting today. Meanwhile, a U.S. appeals court has blocked President Trump for removing Fed Governor Lisa Cook from her post for now. The 2-to-1 ruling came just hours before the start of the Fed's meeting, and while the decision makes it more likely Cook will attend, President Trump could still ask the Supreme Court to step in. And the president has filed a $15 billion defamation and libel lawsuit against the New York Times. Trump is accusing the paper of serving as a, quote, mouthpiece for Democrats. The lawsuit criticizes the Times' endorsement of former presidential candidate Kamala Harris and cites the paper's news and opinion articles. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next on the program, Stephen Myron gets on the board.
I will act independently, as the Federal Reserve always does, based on my own personal analysis of economic data. I plan to dutifully carry out my role pursuant to the mandates assigned by Congress. Independence of monetary policy is a critical element for its success.
Up next, the latest from Washington with Brian Gardner of Stifel, live from New York City this morning. Good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Later on this morning, the two-day FOMC meeting begins. The Federal Reserve gets together, and before that happens at 8:30 Eastern Time, the last significant data point before the Fed gets around the table, U.S. retail sales just around the corner. Bramo, a few hours away.
And this to me is important. How much do consumers keep spending? Can we just keep dismissing the negative sentiment in the sentiment surveys because they never seem to be confirmed by what people actually do, just simply what they say?
Equities keep underweight in that story, that's for sure. Positive again this morning by 0.2%. Under surveillance this morning, Stephen Myron gets on the board.
I will act independently, as the Federal Reserve always does, based on my own personal analysis of economic data. I plan to dutifully carry out my role pursuant to the mandates assigned by Congress. Independence of monetary policy is a critical element for its success. The Bureau of Labor Statistics data on various measures has deteriorated steadily in quality over time. I do think it is time for a fulsome examination of the process, of the regulatory process, to sort of think about where we want it to be going forward.
So here's the latest this morning. The Senate narrowly confirming Stephen Myron to the Federal Reserve, setting him up to participate in a key policy meeting that starts later on this morning. Bloomberg's Tyler Kendall has the latest. Morning, Tyler.
Hey, John, good morning. So this caps off what's really considered to be an unusually fast process by Washington standards. We know from a strategic standpoint that Stephen Myron was chosen in part because he had already been through the Senate confirmation process once for his role leading the Council of Economic Advisors, and perhaps that helped to speed things along. Worth it on that note to mention that Myron intends to take an unpaid leave of absence from that position instead of resigning it altogether, which raises questions about perhaps the longer-term impacts of Myron's confirmation confirmation since this post is temporary and only goes until January. But I'll point out that President Trump has previously floated that Myron could be up to replace Fed Governor Lisa Cook if the administration is successful in ousting her, though they did face a setback last night. And it really felt like we were on a collision course for a moment there, because within a matter of 5 minutes, the Senate had confirmed Stephen Myron, and an appeals court based here in D.C. had ruled in favor of Lisa Cook, saying that the president cannot oust her while the broader legal questioning of her firing plays out in court. It was a 2-1 decision here by this appeals court, which ruled that President Trump very likely violated Lisa Cook's rights to due process by posting her termination in a post on Truth Social. Importantly, though, the majority opinion here did not weigh into the question on whether or not President Trump had sufficient cause to fire Cook in the first place. And we're expecting that question to really come to the forefront when the Trump administration very likely appeals this to the Supreme Court. John, at this point, that could really happen at any moment. We're expecting that emergency appeal to go straight to the U.S. Chief Justice John Roberts, because he oversees the D.C. Circuit.
That story is not going away anytime soon. Tyler Kendall with the latest in the nation's capital. To extend that conversation, Brian Gardner of Stifel joins us now for more. Brian, welcome to the show. Could you share with us how you think Stephen Myron will approach this meeting that starts later on today?
Well, I guess it's interesting because you have the economic projections coming out, so he's going to have a say in what the dot plots look like. Being a Trump nominee, I think even though he's soft-spoken, I think he's going to be a little more outspoken in his views. It'll be interesting to see if he gives a statement, issues a statement afterwards, especially if it's a 25 basis point cut versus a 50 basis point cut. Trump was talking about big yesterday. What if it's just 25? Does Stephen Myron then give a dissent and voice his views of why it should have been 25? So I think that's what a lot of people, myself included, are looking for.
And he might get some company on the FOMC if he did something of that nature. What's more interesting to you? How Stephen Myron votes and what his views are, or how other people on the FOMC Board of Governors responds to him?
Much more interesting what Christopher Waller does and says, because Waller's name has been floated for the Jay Powell job as chairman. And look, Waller has talked about an insurance cut. And I think most people interpret insurance as a 25 basis point cut. Cut a little bit now, wait and see, take your time, see how it all evolves. 50 would be much more aggressive. If somebody comes in on Waller's flank and says, no, we should have done 50, how does Waller react to that? How does that play in the White House? So I think the intrigue of Waller's decision within the context of the broader FOMC move is the most interesting part of this meeting.
I'm also interested in how the market responds to this and how we interpret the market moves so far. Market has pretty high expectations for a dovish tilt and an ongoing rate-cutting cycle. We were just speaking with Henry Allen of Deutsche Bank, and he said that he thinks that the dollar weakness is largely hinged to this question around Fed independence. Do you think that that's the common view among the clients you speak to?
Not yet. I think that's a conversation that I'm going to be having with clients more down the road. For now, independence really just comes up very casually. I think the issue of independence really plays out longer term if inflation remains sticky where it is, or firms up even more, becomes even more of a problem, and the Fed is forced to pivot later away from a dovish stance back to a hawkish stance. What does a new chairman do? This is not a Jay Powell question. This is a question for Jay Powell's successor. So that's when I think the intense questions and worries about Fed independence kind of manifest themselves in the market. For now, those conversations I've had with clients and colleagues are still relatively muted.
Brian, is that because they're struggling to understand what 2026 actually looks like? My focus is going to shift there almost immediately. When we get the dot plot, of course, the immediate conversation is going to be, is it 2 rate cuts for 2025 or is it 3 rate cuts? And then all of a sudden it's 26. And the question I'm asking myself is the guidance from Chairman Powell about 2026 worth anything when in the next few months we're going to find out who the next Fed chair is actually going to be? So, Brian, I'd ask you the question, are clients not talking about it because they just don't know what to do with 26?
Yeah, I think that's a great point, Jonathan. I think people are looking past Powell to an extent, but we don't know what that is yet. We may get some clarity in the coming weeks. There have been stories about the Treasury Secretary interviewing potential replacements. We may get an announcement on a nomination earlier than usual. Powell's on the job into May of 2026. Maybe we get a nomination announcement at the end of this year, early January. For now, I think we're in a holding pattern. Everybody trying to figure out, okay, who's after Jay Powell? What does that person look like? How independent can that person be from the administration? And, to Myron's comments at his Senate confirmation hearing, backing up Fed independence, reaffirming Fed independence, how much does the new chairman lean into that message of Fed independence and then act on it later? Because as we all know, rhetoric is one thing, but the markets are going to have to see action, by the new chairman when he or she takes office.
Brian, when you zoom out to try to understand the context that some of these Fed pressures are coming in and what the president's ultimate goal is, do you have a framework of understanding what the urgency was to get Lisa Cook off the Board of Governors before this meeting? Why that has been such a pressing concern and might even continue to be a fight ahead of tomorrow?
I think a lot of it is political, leaning into 2026. Jonathan just asking about, investors thinking about 2026. Well, let me offer a different context for that of 2026 is the midterm elections. I am surprised at the level of intensity that the White House is leaning into the 2026 midterm elections. Not that any administration takes them lightly, they don't, but between the redistricting battles that are going on in the states and trying to make sure that the economy is on track and strong going into the midterm elections, I think those kind of play hand in glove. So I think that is part of the calculus here.
Brian, it's such a good point, and a good point to lead the conversation on. Thank you, sir. Brian Gardner there of Stifel on the politics at the moment. David Kelly of JP Morgan Asset Management writing this. To the extent that the Fed's decision this week is seen as a capitulation to political pressure, a new layer of risk is being added to U.S. financial markets and the dollar. Will it be seen as political capitulation?
That's the reason why people are watching the dollar. Ultimately, if the Fed has a dovish tilt, does that end up weakening the dollar further, even as it juices risk assets? I was looking at some studies put out there over the past couple of days from Deutsche Bank showing that the proportion of hedged equity exposure, hedged to the dollar, has become the greatest in decades. So this is where we're at right now.
Dollar weakness again this morning, euro dollar 118. Coming up next, Elias Galou of Bank of America Securities on record valuation fears on Wall Street. Plus, Danny has your morning movers. Oracle rising on the odds of a deal with TikTok. Their stock is up by 4.6%. From New York City, you're watching Bloomberg TV.
when we look at the businesses in the UK and the business in Switzerland, is our view that those businesses are subscale, and the amount of capital that it would have to go into those businesses to get it up to scale to meet our strategic ambitions would be misplaced. SPAR being where it is and how competitive the South African market is, we really just want to refocus on our home markets. Our liquor brand, Tops, has been around for also about 25 years. And through independent retailers, we've become the single biggest retail liquor brand in this country. Our business has the ability, and our independent retailers have the ability to compete directly with the chains. And we are now the second biggest supermarket brand in this country.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Reclaiming record highs to start the trading week. Equity futures up again by 0.2% on the S&P. On the S&P 500, a 5th day of gains in 6. On the Nasdaq 100, 9 consecutive days of gains on the Nasdaq 100. The longest going back to November 2023. There's a lift to this equity market once again. In the bond market, 2-year, 10-year and 30-year bond yields pulled lower in yesterday's session, down again this morning by almost a basis point, 352.83. Going into the Fed's 2-day meeting, that starts later on this morning with some dollar pressure. Dollar weakness. Check out euro dollar this morning, 118. 118, haven't spent much time above 118 through 2025 so far. Haven't done that since the summer. This from Kit Juice of SocGen this morning. I reckon the market is less long euros than I feared. The chances of a move to 120 this month have improved.
And frankly, that's been the trajectory so far. It's interesting that the shift toward betting on some sort of questions around Fed dominance have shifted away from betting against the long bond, which has been actually one of the biggest points of rallies, and actually shifted to more the dollar, and that has been where it has stayed. And this sort of is this bet that is consensus but keeps on climbing.
How long before ECB officials come out and just say, enough of that, less of that?
120, yeah. That's what we heard, right? Didn't Centennial of Portugal say that?
Summer.
Yeah, exactly. That was what he said. Yeah, and then, here we are.
Back at those levels again. 118.14 on euro dollar this morning. 3 hours away from the opening bell, let's get you some single names, some morning movers. Oracle in focus. Danny has more. Hey, Danny.
Yeah, another good day for Larry Ellison. At least that's how it's shaping up. Yesterday, Oracle got a boost over the news that an agreement was inching forward for TikTok between the U.S. and China. Of course, Oracle had been in that original group of bidders. There's a CBS News report overnight also saying that this time around, Oracle is active in the talks for some sort of deal that would help TikTok continue to operate in the U.S. It didn't talk about structure. That wasn't reported on, but still shares are up 4 1/3%. Elsewhere, New York Times falling this morning with Trump overnight posting on Truth Social that he would be seeking a $15 billion defamation suit against the paper, accusing them of being what he called a mouthpiece for the Democratic Party, citing their endorsement of Kamala Harris. That $15 billion defamation lawsuit, by the way, is more than their market cap is, so those shares falling 1%. Finally, a double upgrade by Goldman Sachs to the chocolate maker Hershey's. Those shares up 2.4%. The analysts over there citing a couple things. For one, saying higher prices, tariffs, those are all well understood and baked into the share price now, but they say they have iconic brands, so they have pricing power. Separately, an industry magazine said that Hershey's has started to raise prices for things like Kit Kats, Reese bars, Payday, so get ready to pay up for your chocolate. John.
Danny, appreciate the update. Danny, thank you. More from Danny in the next hour. What did you want to add on that story?
Chocolate.
Oh, yeah.
Sorry.
You've got something to say about Hershey's chocolate?
I wonder how much they're just producing the actual volume of cocoa.
Are you a 60 to 70% kind of person? We keep going back to this story, don't we?
I mean, have you met me? Of
course. If it's not 60, it's not real.
Yeah, totally. But also, you just don't want it to be like 2, and that's sort of what also has been happening. All right, this is not what everyone needs to know.
The other thing I wanted to say about Oracle is I feel like every day is a good day for Larry Ellison.
I was going to say the same thing. It's every day is a good day for Larry Ellison, and Hershey's doesn't have a lot of time.
He's on a boat somewhere and he's feeling good. I have no doubt about that every time I hear his name.
He probably is sailing because he's a sailing competitor, or on one of his islands because he owns Hawaii. you know, things like that.
Basically, Lanai, right?
Basically.
I think, yeah.
Looks beautiful.
Been there before. Beautiful
Have you?
island, yeah.
You were his personal guest?
I was not, no.
Please tell us
I
more.
was not. There are a couple of hotels there that the average person can frequent if they wish.
Yeah,
right?
for a cost.
Good to know. Yeah, for a cost. It's another time for another story, all right? On our radar this morning, the Fed's dual drama, the Senate confirming President Donald Trump's economic advisor Stephen Myron to the FOMC. Meanwhile, Fed Governor Lisa Kirk will keep her post after a last-minute court decision. Elsewhere, US and Chinese officials reaching a deal to keep TikTok running in the United States, a framework suggesting the app will switch to US-controlled ownership. President Trump and China's Xi Jinping will confirm the deal on Friday. And finally, what a story in the last 24 hours. The SEC prioritizing a proposal from President Trump to reduce corporate earnings reports. Trump posting on Truth Social, companies should report on a 6-month basis to save money and emphasize long-term planning.
Yeah, and this is something he proposed the first time around when he was president back about 9 years ago. There's a real question here about whether the SEC will go through with this. Okay, I'm biased. Yesterday I came out, my knee-jerk reaction was to say this is bad. Less transparency is bad. Okay. I'm a journalist, want to dig through the details. I started looking, and actually in Europe, as you know, most companies are only required to report about 6 months, every 6 months. But most of them report every quarter because that is the investor demand. On the flip side, some companies say, look, the amount of energy and money we have to spend going into these reports is onerous, and we could invest in other technologies and more long-term goals. So I'm sensitive to that, but I'm also realistic to the idea that even if you remove that requirement, a lot of these companies will still do that, just like they do in Europe.
I'd be very interested to see who trades at a better premium, just from a valuation perspective, based on the amount of clarity and transparency they offer on a quarterly basis or a 6-month basis. That would be my test for all of this.
I wonder if it's the banks more, just not because people think that they're hiding something, but because of how much more onerous it is for them to go through and report every single line item in a way that doesn't subject them to some sort of oversight. Adina Friedman of NASDAQ came out and actually wrote this post and she's talking about how important it is to reduce some of the regulatory requirements, given how much companies have moved to the private markets, right? How much is that the backdrop for some of this push?
You know what I'd like to see the banks do anyway, which is report after the close instead of doing that mental dump in the morning where all of them report at the same time.
And not biased,
and
not self-serving in any way.
No one actually reads the earnings reports properly until later in the day.
No one reads until later in the day.
Well, I'm sat here, you know, it's difficult to read all the earnings reports at any given
I understand.
time.
Do you want to talk about more? I know it's been difficult
I just prefer it when the tech earnings come out after the close. You have some time to go through things, you listen to the calls, everything's just a little bit more relaxed instead of the mad rush before the opening bell.
I think a lot of people are relating to you right now.
Hopefully it's not just me.
It's not just you,
Maybe
actually.
it is just me.
No, I think it's the whole idea of like into markets versus after markets.
Right,
and
yeah.
I don't think that that's what the SEC is.
It might be just me, in which case, okay. Let's turn to markets. Valuation fears rising on Wall Street. Bank of America's Global Fund Manager Survey saying a record 58% see global equity markets as overvalued. Elias Galou, the senior investment strategist at Bank of America Securities, joins us now for more. Elias, what an interesting moment, and welcome to the program. Picked out 2 bullet points from your survey this morning when it was released. We've got this equity allocation that's the highest in several months, and at the same time, you've got these valuation fears dominating too. Elias, how do you think we're going to reconcile those two things?
John, I think, it's one of the great points from the Global Fund Manager Survey. On the one hand, investors see global stocks as the most overvalued on record, but that was already the case last month when you and I met. And at the same time, they increased their exposure to global equities to the highest since February. In fact, valuations is the one factor that matters most over the long term. But in the short term, investors focus on the cycle, and this is a cycle that's dominated by strong macro forces, which are huge monetary easing. There have been 95 rate cuts year to date, and from tomorrow, the most important central bank in the world will join the rate cutting party. And on the other hand, there is a micro force like no other. I'm talking, of course, about AI, and investors, FMS investors, are very bullish about AI. They think this is a deflationary force. They think this is a force that is already lifting productivity growth, and that is why they continue to buy the stock market and to buy the very expensive tech sector despite sky-high valuations.
Elias, they are bullish on AI, bullish on the equity market. How bullish are they on growth? I understand that everyone's long rate cuts at the moment, but is that leading to an improvement in the outlook?
Look, amongst the huge convictions from FMS investors, the one that the Fed will be cutting and global central banks will deliver further rate cuts is maybe the most conspicuous, right? We have a share that is greater than 80% of FMS investors who expect short-term rates to be lower. You mentioned the dichotomy between sky-high valuation on one hand and an increase in equity exposure. The other dichotomy in the FMS is the fact that everyone expects rate cuts. A net majority see at least 4 rate cuts from the Fed in the next 12 months. And on the other hand, investors are actually very highly concerned about inflation. And consequently, the expectations that bond yields will rise in the next 12 months is the highest since August 2022, when inflation was a few points higher. So I do believe that this view that the global economy is heading into a global soft landing is at the heart of global investors' stock optimism, but ultimately they think the global economy will weaken, but inflation as well is going to stay elevated. Altogether, the soft landing conviction is the one that explains why investors' optimism in terms of stock exposure is rising.
Elias, I want to stay on that for a minute. You said that the number one tail risk right now is inflation, exactly because of what you just put out there. We're seeing inflation above 2%. We're seeing inflation above 2.5%. What will it take for this to manifest itself in the psyches of investors?
Look, I do believe that the conviction that, yes, inflation is here to stay above target, but AI, which is, again, dominant micro force that is driving investors' bullishness, will be able to lift productivity growth over the long term, help profits growth and help margin, is what is also holding investors' optimism in an environment where inflation is above target. It's the fact that the hyperscalers are able to increase capex, right? In an environment where inflation is high, usually investors would be a little bit worried about corporates increasing capex at the extent hyperscaler are doing. And yet, in this survey, we find out that the CIOs, the typical fund managers participant, is asking CFOs to focus on capex more than anything else. The conviction that AI is the dominant macro force is why, at the end of the day, investors are bullish and they think inflation yes, it is a concern, but is not detrimental to stocks.
And it fits this puzzle, this idea of how you can have ongoing growth without commensurate inflation and maybe a pretty tepid rate of hiring. I am curious about your view on the dollar, because we've been talking a lot about the weakening trend that we've seen over the past number of months. You said that the fourth quarter pain trade seems to be a stronger dollar. Just how overweight are investors to this idea of a weakening dollar right now?
Look, if you look at the fund manager survey in itself, investors say they are underweight the dollar. We hit peak dollar bearishness in June. Since then, it stabilized around that level. But when you look also at the hard positioning data, the flows data, to us it feels that investors are emotionally bearish on the dollar rather than physically bearish. If you look at the flows data, the picture that we saw over the summer is quite mesmerizing, because in fact we didn't see any net new inflows to US equity funds, but at the same time, in August, we actually saw the biggest monthly inflow to US bond funds, driven by near record pace of inflows into US IG funds. So if investors were truly bearish, physically bearish on the dollar, they would not be buying US bonds at a record pace. So we think it's really a matter of hedging. Investors want to hedge against a weaker dollar, but they are not ready to sell the beloved US assets. And we think that US dollar bear market, or the debasement of the US dollar, is to us the cleanest investment theme into 2026. The price of gold, the price of cryptos signal that the dollar will weaken further.
Elias, before you go, I just want to squeeze this in. You're sitting in London. The president's going to join you in the next 24 hours or so. He'll arrive in the UK as well. You've got these contrarian long trades in here, bonds being one, the other UK equities. Elias, why does that jump on the page to you?
Look, this is why I'm in London today, just to be an advocate of UK equities, and a very unloved asset. What struck me in the fund manager survey is that investors were already underweight UK stocks, but what happened in September is that they decreased their allocation to UK equities by the most since 2004. matching the biggest drop on record. So if investors truly believe that the economy will be heading into a soft landing, that bond yields will remain anchor and we won't see a big breakout of global government bond yields, I think there is one asset that is very cheap, very much under-owned, and in which you can get a big bang for your buck. It's UK equities.
Interesting. The pessimism there. Just amazing. Elias, appreciate your time. Thank you, sir. Elias Galou there of Bank of America Securities on the latest fund manager survey. I love reading through this, just capturing, putting some numbers on where we've been. Investors cut EM and EU equity longs. They covered US shorts and added to longs in tech. Surprise, surprise. The biggest cut of large over small cap longs since December 23 speaks to the move we've seen in the Russell over the last month.
Yeah, the idea that people are betting on the cyclical part to really outperform. What I found interesting was Elias also went on to say that people keep piling into tech even though they view it as the most overvalued sector, which sort of speaks to this AI bullishness. And the reason why people are saying, let's look at Asia, let's look at other places to get exposure to this story, because we believe in the story, but we're just a little worried about valuations.
The Nasdaq move continues this morning, up another 0.3%. With an update on stories worldwide, with the latest, here's your Bloomberg brief with Yahara. Hey, Yahara.
Hi, John. Secretary of State Marco Rubio is in Qatar today. It comes just a week after an Israeli missile strike on its capital targeted Hamas officials in a residential area. Earlier this week, Rubio met with Israel's Prime Minister Benjamin Netanyahu as Israel intensified strikes on Gaza City overnight. Rubio also warned Hamas there's a very short window for negotiations to end the war. Meanwhile, prosecutors in Utah are expected to file capital murder charges against Charlie Kirk's alleged assassin. 22-year-old Tyler Robinson will make his first court appearance today. Investigators have used DNA evidence to link Robinson to the murder, including a screwdriver recovered from the rooftop where the fatal shot was fired. And Alphabet's Google said it will invest $6.8 billion over 2 years in the UK to boost AI development. The tech giant disclosed the plan just as President Trump is set to head to London today. OpenAI and NVIDIA are expected to pledge investments in UK data centers worth billions of dollars during Trump's visit. That's your Bloomberg Brief. John?
Yahara, thank you. I've just got one question. Where's the energy coming from? We could spend some time on that story in about 45 minutes' time. I think you've got more to say on Hershey's. Is that right?
Well, okay, so some people were saying, why do you hate Hershey's so much?
Sure.
The amount of cocoa content is 11%, just above the 10% legally required to be considered chocolate in their average.
That's the threshold.
Hershey
I didn't know that.
I didn't know that either.
Okay.
So 10%. So once you get to 9%, what do you call it?
Barely chocolate is basically what you're calling it
Mocha
right now.
infused.
Almost chocolate. Something like that.
I'm just saying, I like actual chocolate.
There you go. Okay, you done now?
I hope so.
All right, good. Okay. Up next on the program, making a deal for TikTok.
You had the framework that's been agreed to with TikTok. Will China continue to have a stake in the company? Or
Well, we haven't decided that, but it looks to me, and I'm speaking to President Xi on Friday for confirmation of that. It's important, and it can maybe even bring us closer to China.
A conversation up next with Angelo Zeno of CFRA from New York City. You're watching Bloomberg TV.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road.
we're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Record highs coming into Tuesday. Equities up again by 0.2% on the S&P 500, up by a third on the NASDAQ. The run on the NASDAQ continues. 9 days could become day 10. Under surveillance this morning, making a deal for TikTok.
You had the framework that's been agreed to with TikTok. Will China continue to have a stake in the company? Or
well, we haven't decided that, but it looks to me, and I'm speaking to President Xi on Friday for confirmation of that, and, you know, frankly, more importantly, a big deal. It's important, and it can maybe even bring us closer to China. I was surprised. I didn't expect it to that extent.
So here's the latest this morning. US and Chinese officials agreeing on a framework to keep TikTok running in the United States. Angela Zeno, senior equity analyst at CFRA, speculating Larry Ellison and Oracle are likely to be involved in the new agreement. Oracle hosts TikTok user data, and Trump has voiced support of Ellison in the past. Angela joins us now for more. Angela, welcome back. It's almost 5 years to the day, I think, that we were talking about a tie-up between Oracle and Walmart to address this issue, and here we are 5 years later, still trying to work it out. We're going to go into the realm of speculation, so forgive me. What do you think the ultimate end game is going to look like for this company?
Yeah, so thanks for having me, John. I think the ultimate end game here is a situation where and we still obviously don't know here, but you're going to have basically an algorithm that's going to have to get sold to set off to a U.S. company. There's going to be basically a duplicated recommendation algorithm that kind of gets powers a new, let's call it, app out there, and it's going to be owned, we think, by Oracle and a consortium of investors out there. And when you kind of think about all this, it's a tough situation because exactly how this all looks remains to be seen. But our view is it's one where just given the conversations we've seen and where Oracle kind of sits here in terms of hosting the data and what have you, they really do have to play a role in all this, and that's how we're kind of looking at it right now. But there's still clearly a ton of moving parts and unknowns with all this.
Does TikTok remain in the same position, or is there some sort of change in the competitive landscape for social media on the back heels of this?
Yeah, I mean, and that's a great question. So we do think, when you kind of look at the market reaction yesterday, right? I mean, most of these stocks actually within the social media space actually rose, and not surprised by that. I mean, I think for the most part, the overall, I think the market's already priced in the fact that, hey, listen, TikTok was going to remain here in the U.S. I think, ultimately what you do see here, if it is owned by, Oracle and a consortium of investors out there is, I think I think it becomes a little bit of a mess in the sense of execution. You're going to have to see essentially all the 170 million plus users out there kind of roll into potentially a new app. You're also going to have to see this new kind of entity operate without, likely the help of ByteDance and, their expertise on that side of things and what they've accomplished here over the last several years with TikTok. So in some sense, whoever's acquiring these TikTok assets benefits from the potential monetization that TikTok offers here on the ad spending side of things. Clearly engagement is extremely high. Who they cater to in terms of the younger audience, very attractive in nature. But when you start thinking about execution, some of the hiccups that we could see along the lines here from a new entity, we do think 1, 3, 5 years down the road, there's a lot of uncertainties and potential messiness. And because of that, I think that was a big reason also why the Metas, Alphabets of the world also saw a positive reaction on the news yesterday.
And this might be too much of a reach to ask, Angelo, but do you have a sense of what any kind of TikTok deal could mean for U.S. tech companies in China, their presence there, whether there's any crossover?
I think when you kind of look at some of the noise that had come out over the weekend as well in terms of, some of the back and forth with, both what U.S. had implemented as well as what some of the greater kind of scrutiny that we saw from China themselves. I think they're clearly both trying to put themselves in pole position in terms of the greater dialogue here. I think what China really wants on the technology side of things is really greater access to potentially NVIDIA's more advanced chips, likely Blackwell, as well as high bandwidth memory, which is something they don't have access to at this point in time either. So that's really what we think kind of China wants from the U.S. in terms of this back and forth dialogue here over the next couple of weeks and months. We'll see whether or not and to what extent they get some of that. But that's where I would think kind of the focus for China is at the moment.
Angelo, final question. You said Oracle and a group of investors. You didn't say the White House. Does the U.S. government get a piece of this?
Yeah, I mean, I would suspect that they would. I mean, at this point in time, right, you look over the last couple of weeks and months, it seems like the U.S. is playing a bigger role in all this in terms of taking a piece of, some of the assets in some of these, companies. So, yeah, I would suspect that the U.S. government probably wants a piece of this, and I would suspect that they do get it.
Interesting. Angelo Zeno of CFRA. Angelo, thank you, sir. That raises a lot of questions about a competitive landscape for other companies. Remember Meta, Mark Zuckerberg's seat at the table next to the president in that recent dinner? Just how favorable their treatment might actually be if the government's got a stake in their main competitor.
I mean, it raises a lot of questions. What does that stake look like? This already has been raised with social media companies owned by members of the administration themselves. So just the questions will continue.
A lot of questions on this one. Up next on the program, Paul Quincy of JP Morgan, Monica Guerra of Morgan Stanley, the former White House trade advisor Kellyanne Shaw, and Ian Lingen of BMO, the second heir of Bloomberg Surveillance. Up next.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
I'm not fleeing U.S. equities at all.
The stock market just wants to look past the weakness in the data.
It's a more uncertain environment than what we would prefer.
I would just from a fundamental perspective still prefer the U.S. over Europe.
The market's going to trade off the narrative that we have a dovish Fed.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. A 9-day run of gains on the NASDAQ 100. That run continues this morning, up by a third of 1%. All-time highs. Record highs on the S&P, up another 0.2%. In yesterday's session, to start the trading week, bond yields pulled lower. Down again this morning at the front end of the curve. Your 2-year bond yield down a basis point, 352.62. Going into this data right here, it's about 90 minutes away. Retail sales in focus before the Fed meeting begins.
This, to me, is really a question, not only whether consumers have kept spending in the face of a lot of uncertainty and bad feelings that they represent in certain surveys out of these places in the Midwest, but also how the market responds to that, right? If people are just ratcheting back spending a little bit, does the market treat that as a good thing because that means that the Fed can keep cutting rates and that can really foster this optimism that we're seeing in equities? Or are people starting to get seriously worried about a turn in this cycle? Right now, weak data has translated into Fed cuts. It has not translated into expectations for a softer economic trajectory.
This has been a theme on this program through August into September. This market appears to be overweighting the rate cuts and underweighting the reasons for them. Does bad news ultimately become bad news? Does that story reverse?
Yeah, and how much of this really hinges on the story that AI is going to magically improve growth, improve productivity without causing some sort of inflationary spiral that leaves consumers feeling even worse when they go to the store and have to buy eggs and Hershey's chocolate? This, to me, is a real question going forward. And ultimately, people are banking on AI all in, hyper-leveraging it to it in every facet of the economy, and we're all along for the ride.
Record highs again this morning. Just how hard is the Federal Reserve willing to run this market? Pretty hot right now based on the forecast we're looking for from the Federal Reserve tomorrow afternoon. Equity futures on the S&P 500 positive here by 0.2%, a lift again to stocks this morning. Coming up this hour, we'll catch up with Paul Quincy of JP Morgan, with stocks delivering another record high. Monica Guerra of Morgan Stanley, with a new Fed governor joining the board, and another keeping her seat. Plus, the former White House trade advisor Kellyanne Shaw, as trade talks lead to a Trump Xi call. We begin this hour with stocks hitting another all-time high as investors eye a Fed rate cut. Paul Quincy of JP Morgan writing, markets have recovered to new record highs. If policy risks come back into focus, equity valuations are now elevated and markets will struggle. Paul joins us now for more. Paul, good morning.
Good morning.
It's good to see you. Let's just go through where things are at right now. Earnings good, jobs data not good. Is one much more important than the other?
Yes. It's always about the earnings, and that's how we got here, right? I remember being back on Bloomberg in the middle of April. We were about 1,200 S&P points below where we are now. The market was moving 5% a day. It felt like a crazy time. And in the end, yet again, the optimists have triumphed, right? And the reason the optimists have triumphed is earnings. So we just had, of course, second quarter earnings. We're done with that now. They were terrific. Of course, AI was the shining star, but really across the market, there are plenty of companies that are beating expectations, and it's really that's been underwriting this, this incredible recovery that we've seen.
To your point, Paul, earnings have stepped up, but payrolls growth has stepped down. Are there limits to how far that story could diverge?
Look, the big driver of earnings, we have to be realistic, is the AI investment boom, right? That is what's got everyone's attention, and whilst the earnings are good overall, that has been the kind of central piece. That's been the biggest driving force in the second quarter earnings and this year. So the famous Magnificent Seven are going to do mid-20s earnings growth. Everything else, we're still waiting a little bit for that broadening out of profits to come. We think it will come. We think it comes into next year. We think next year, by the way, is better for earnings overall than this year, as we see it right now. And we think the gap between the 493 and the 7 probably narrows as we get into next year. But without question, the best part of it is coming from those mega cap tech stocks.
You have seen, though, this broadening out to that point, and you see that continuing early next year. What makes you confident about that, given that there have been a number of studies, say from MIT, that have pointed to a lack of monetization by some of the smaller companies that have been spending quite a bit on this new technology?
Yeah, look, it's early days, right? I think we have to be humble about AI and recognize there's still a tremendous amount we don't know. We lean optimistic. We think these big investments that have been made, these gargantuan investments, are going to have a positive impact. And they're big enough that they're impacting a whole bunch of companies outside the usual suspects. So you think about the whole value creation chain, right? From the electricity generation and transmission, the data center construction, the cooling, the memory, all the things that go into that. And then, of course, the downstream adoption, too. So I think you're going to see plenty of positive news coming from all of that. And that alone is going to be enough to help, help the market broaden out.
How much does this market need the rate cuts that a lot of people have priced in order to keep going? How much do we need to see 150 basis points of rate cuts or more by the end of next year?
So look, risk-reward, again, I keep thinking back to April, risk-reward looks very different now, right? It's great, stocks have gone up, but we're now 24 times forward earnings for the S&P. That's one of the highest numbers we've seen. And within the market, you've got the memes and themes running hard. People are feeling pretty good about life, right? So I think it's really important to stay active, recognize the opportunity set changes, and also think about where returns can come from in the rest of the world, too. So we've been spending a lot of time talking to clients recently about emerging markets. A New York private banker said to me last week that his clients had somewhere between nothing and 0% allocated to emerging markets. And if you think about the last 5 years, that's not been wrong. You've had around, 6-7% returns. That's less than half what you got from the S&P. But on a forward-looking basis, we think that's going to be much different, and that's really starting to change as we go through this year, too.
Well, tell us why you think that might change. What's behind that?
So we put out something about 3 months ago, 5 reasons to like emerging markets, right? Number one, where it seemed to be, we're not really macro people in equities, but we're in a weaker dollar environment, that's usually positive. Secondly, the hit from tariffs we think is a little bit overstated. So, for example, in China, 80% of the revenues of the companies in the Chinese stock market come from China. In India, it's pretty close. That's number two. Number three, China seems to be through the worst. Things are not great, but at the margin, they're getting better. 4, India's growing strongly. And 5, probably the best one for us as stock pickers, don't forget there's a ton of technology stocks in emerging markets, too. So about 20% of the earnings from the emerging market index come from technology. And you can buy those companies at much, much lower ratings than you pay in the US. And they're joining in this AI boom, too.
Am I just buying Chinese tech? Isn't that just a different wrapper for the same thing?
There's a lot more in emerging markets than that. There's 28 different countries. There's over 1,000 companies. There's a lot more you can invest in than Chinese tech, although we'll find some opportunities there as well.
And Bank of America was talking about investing in Chinese tech as well and other emerging markets. But isn't that out of the fire into the frying pan, or out of the frying pan into the fire? I get every single expression wrong. Going forward, just because ultimately if you're worried about policy uncertainty, well, isn't that the epicenter of it?
Again, it's risk-reward, right? So the emerging market index trades at about 13 times forward earnings. That gives you a little bit more of a cushion there should things not work out quite as well as everybody expects. We're coming out of one of the longest periods we can remember in which clients have had no interest in emerging markets at all. Allocations, as I said, pretty low. So I think all of those factors give you some comfort. If you're worried about the enthusiasm towards U.S. stocks, the high valuation that you have to pay in the U.S. these days, even though most of that we think is justified, then I think adding a bit of emerging markets in your portfolio is going to help you in the next 5 years. or has it really held you back in the last 5?
Speaking of emerging markets and growth stocks, European bank stocks, and I don't mean to say that that is an emerging markets because I will get a lot of hate mail, but there is this sense that they've come pretty far. It's been tripling in the past 4 years, I believe, and you've seen an incredible surge in valuations across the board. Is that overdone, this optimism in the European region, in particular, hinged by their banking sector?
It's a great question. Our European investors love to show me the chart that illustrates European bank performance versus Magnificent Seven. European banks have considerably outperformed. It's not even close, actually, in the last 5 years. Look, from here, those returns are going to come down, that's for sure. But you have to consider the starting point. European banks were priced as if they were going to destroy value forever. It took 15 years to get past the financial crisis. So they've moved from extremely cheap to sort of reasonably priced, and with still pretty good momentum. Now, there are some risks, right? The more money European banks make, the more likely they're to attract regulation and taxes, the more likely they are to sort of think about M&A, which is more questionable, rather than returning money to shareholders, which has been terrific. Dividends and buybacks are a big part of the story. So it's a bit more balanced. But I still think there's money to be made. And I think the broader point, again, is there are 2,500 companies in the world that you can invest in large cap, right? So just looking at 7 of them is not the right way to run a global portfolio. It may not be European banks, but there are going to be other opportunities that are going to put their head up and are going to make you money as an investor.
Paul, you spend a lot of time going through these companies. What would it mean to you if we backed away from quarterly earnings reports here in America?
Look, we've always thought long-term earnings are what matters. Long-term thinking is the right way to run a company. We think the companies we admire most are run for the long term. And when we look at companies, we think about the earnings that they're going to generate over the next 5 years. That's really where our focus is. So long-term thinking, we think, is just a really good thing.
Do you see any evidence at all that because of quarterly earnings and the shift to that over the last several decades, that the mentality of corporate America has shifted to a more short-term view?
Look, I think if you look at, for example, the massive investments that are being made by the big 5 in data centers, those are not being made to make money next quarter. So I think sometimes people worry a little bit too much about that.
That's a pretty valid point, given how many hundreds of billions of dollars have been announced in capex from just a handful of names.
Exactly. $350 billion roughly this year, up from 200 something last year, well over 400 next year. That's a long-term investment in the future of AI.
And the Bank of America Fund Manager Survey said that investors were rewarding companies for spending their cash on capex, not necessarily investing just in buybacks and dividends. So it seems like people do have a long-term mindset. At the same time, maybe they can do that because they're still generating a lot of cash.
Paul, if we did go to a 6-month basis, do you think companies that stuck with a quarterly earnings kind of cadence, do you think they'd be rewarded?
It's really hard to know, right? That would be a very hard thing to judge right now. Again, I think as long as companies run for the long term, and the best ones should be and are, and investors take a long-term view, that's the way to make money in the stock market.
Paul, appreciate your time. It's good to see you. I think we managed to get through basically all of that conversation with about that much on the Federal Reserve, because that's how important that is to some people at the moment.
Well, it might be important, but what else can you say? I mean, honestly, there's a certain level where either they're going to be dovish or they're not. They're going to be politically influenced. We're not going to necessarily know to what degree. There are all these questions that aren't going to get answered tomorrow, even though we want answers. So we can keep talking about it, and we will. We'll even have a special on it.
We are going to have a special. 2 specials, in fact. One on the trading floor over at Bank of America tomorrow morning, then another special around this desk tomorrow afternoon.
And we'll just focus on the Fed.
And you'll be even more frustrated tomorrow when you don't get the answers you want tomorrow afternoon. So look out for that too.
I'll come up with new frustrations.
Special thanks again to Paul Quincy of JP Morgan. Paul, thank you.
Thank you.
It's good to see you, sir. Thank you very much. Futures up by 0.2% on the S&P 500. All-time highs on the benchmark in America coming into Tuesday with an update on stories elsewhere. With your Bloomberg brief, here's Yahira. Hey, Yahira.
Hi, John. U.S. officials are in India for trade discussions, signaling that the 2 nations may be moving closer to resolving their differences. The negotiations come weeks after President Trump doubled tariffs on India to 50%, citing New Delhi's trade barriers and purchases of Russian oil. Trump earlier said he will speak with Indian Prime Minister Narendra Modi in the coming weeks. And you all were just discussing this with Paul. Wall Street's main regulator says it's prioritizing President Trump's call to reduce the frequency of corporate earnings reports. The SEC says it's pursuing a proposal to further eliminate unnecessary regulatory burdens on companies. The agency has mandated firms to report quarterly since 1970 after a decades-long push to increase transparency following the 1929 market crash. And President Trump is expanding the federal government's crime crackdown. Trump approved the deployment of the National Guard in Memphis. The FBI, the DEA, and other agencies will also be sent to the Democrat-led city. The president says he plans to send forces to Chicago next and is also looking at St. Louis and New Orleans. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later this hour in about 30 minutes' time. Up next, the Fed's new governor.
I will act independently, as the Federal Reserve always does, based on my own personal analysis of economic data. I plan to dutifully carry out my role pursuant to the mandates assigned by Congress. Independence of monetary policy is a critical element for its success.
That conversation up next with Monica Guerra of Morgan Stanley, live from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
The main focus this morning, big data point, US retail sales. Consumers don't feel great right now. We can see that. We can see why. In the labor reports we've had over the last 2 months, how are they spending? Has that changed? That's the story for 8:30 Eastern Time. Equities into that, up again by 0.1% on the S&P. Big tech keeps doing what big tech has been doing for a long, long time. The Nasdaq 100 on a 9-day winning streak, up again this morning by 0.25%. Under surveillance this morning, the Fed's new governor.
I will act independently, as the Federal Reserve always does, based on my own personal analysis of economic data. I plan to dutifully carry out my role pursuant to the mandates assigned by Congress. Independence of monetary policy is a critical element for its success. The Bureau of Labor Statistics data on various measures has deteriorated steadily in quality over time. I do think it is time for a fulsome examination of the process, of the regulatory process, to sort of think about where we want it to be going forward.
So here's the latest this morning. The Senate confirming Stephen Myron as Federal Reserve Governor just in time for the FOMC meeting starting later on today. Joining us now with the latest, here's Tyler Kendall. Tyler, this has been a big focus for a lot of people for a long time. Just who was going to be around the table for that meeting on September 17th?
Right, exactly, John. And we finally seem to have a little bit of clarity here as this nomination for Stephen Myron was confirmed pretty swiftly on a mostly party line vote. And we know that that was partly due to some strategic reasons. A person familiar telling us here at Bloomberg News that the administration chose Myron in part because he'd already been through the Senate confirmation process for his role heading the White House Council of Economic Advisors. That's a really critical part in this because Myron has said that he's going to retain that position. He's going to take an unpaid leave of absence because this is just a temporary role. He did tell senators, though, during his confirmation process that he would consider resigning it altogether if he were appointed appointed to a longer-term position. President Trump does have that opportunity come February. He could appoint Myron to a 14-year term, or he could actually keep him on indefinitely in an acting capacity while he waits to fill that open position. Myron, of course, had served under the first Trump administration for the Treasury Department before entering the private sector and then coming back to help really helm President Trump's economic agenda and being perhaps one of the most robust defenders of his tariff policy. On the other side of this, though, is that we've learned who else is going to be at the table, and that's that it appears that Fed Governor Lisa Cook will be there as well after an appeals court based here in D.C. handed her a legal win last night, actually just 5 minutes between that legal decision and Stephen Myron being confirmed by the Senate. This appeals court says that President Trump very likely violated Lisa Cook's rights to due process when he fired her via a post on social media. But, John, at this point, the administration still has time to appeal to the Supreme Court, but we'll have to see if that actually impacts whether or not she's there for the meeting.
They're going to keep on pushing, that's for sure, based on recent comments. Tyler, thank you. Tyler Kendall in Washington, D.C. With us here in New York is Monica Guerra of Morgan Stanley. Monica, good morning.
Good morning.
So Stephen Myron becomes Governor Myron, and he's at the Federal Reserve whilst taking a leave of absence from the White House. Is that a conflict of interest or just a procedural issue? The Senate only has so much time to have confirmation hearings for Stephen Myron.
I think it depends on how far he goes in a potential dissent, right, is when we're thinking about, is he truly a messenger for the White House, or is he taking a more measured approach? It's going to be a question for a while until, we actually have a couple of rounds, right, of voting on the records.
There's also a question of how much this really changes the Fed's commitment to fighting inflation. It seems like a lot of people are saying in markets, we need to wait and see just how much any kind of independence is compromised when we see how this Federal Reserve responds to inflation coming in hotter than expected, should that happen down the road. How much do you really look at that as the big sort of rubric for how we can understand Fed independence?
For us, when we're thinking about the data-driven Fed, they're going to continue to prioritize that for as long as they can, right? This is something that I think is important to all the chairs, the governors and participants on the board. So for me, again, the data piece is critical. Now, what we're watching really closely is what happens in the room today. If we see Myron go deeper than a 50 basis point descent, for example, does that result in market volatility, right? Does that signal something that maybe the other, participants haven't, captured when we're thinking about potential data weakness, right, and inflationary factors? Does it push the needle for the next meeting, right, and essentially create a leading factor for our expectations?
And it goes to this sort of existential question right now, which is, are we seeing temporary weakness that can be sort of fettered away by rate cuts and by the change in the cycle and some of the one big beautiful bill and some of the benefits that a couple of companies and consumers get in the start of the year? Or is this actual weakness that is going to be pervasive?
Right, and we're just starting to see, right, what it's going to shape up to become. I think what's important and what the Fed is trying to balance, if you're thinking about cuts versus hikes, if you cut too quickly, right, too soon, that can also be inflationary. So if they're part of their mandate or part of their job, right, is to keep inflation under control, right, around at one point, right, that 2% rate that they were targeting. This is going to be a critical factor in their consideration. Now, do you get a deeper descent from Myron? That's one question. And then do you have other joiners, right, if you're thinking about additional dissents in that equation, and does it signal more dovish activity from the Fed in the future?
The president, as you know, has been pretty transparent about why he wants lower interest rates at the Federal Reserve. He wants lower mortgage costs. He also wants lower borrowing costs for the government. He's getting them. Yields are lower. Bonds have really performed quite well. From your standpoint, what's driving that move at the moment to fixed income? Is it a fact of the news being bad and ultimately that's good news for bonds, or is something else happening here?
Yeah, I mean, I've definitely keyed in on that bad news is good news narrative. And one of the things that I think exemplifies that, I'm going to change gears here a little bit to tariffs, is that initially, right, when tariffs were introduced, it was, a huge uproar within the markets, right? You had even bond markets misbehaving. And now with this revenue narrative that they're essentially pointing out, hitting home, reinforcing that's coming in from these tariff levels, if you lose that, right? So while that's good for the business and consumer side of the economy, meaning that lower tariffs makes prices come down potentially, that could create more stress on the fiscal policy side, right? For them to actually pay and support debt and deficit.
Do you think it makes it harder for the courts to strike this down, given how dependent the government is becoming on them?
I don't think that's going to be a key factor. I think they're going to be, doing their jobs, right, as far as looking at the actual legality of IEEPA and the way that it was implemented. Now, do I think that there are other ways to get there? Absolutely. So for us, when we think about, the bad news is good news piece, it's if you get a continued signaling that despite Supreme Court activity, Trump is committed, then markets are likely to continue to stay stable, less volatile.
I just wonder how solid this bond rally is. If we do get a government shutdown, say, in 2 weeks, do you still get a rally into bonds, or do you get it selling, bonds selling off based on some of the policy uncertainty that has been building up over the past couple of years?
Well, what's interesting about government shutdowns is that if they are occurring in isolation, right? If it's the main news of the day, right? Of course, they're never in isolation, but the main news of the day, you actually have positive market performance, right? Investors look through that time period because typically they last maybe 5 days. The longest we've ever had in history is 35 days, which then calls certain things into question because then government contractors aren't getting paid, salaries are not being allocated, and people may not be able to make their rent payment. And so once you get past that 30-day mark, that's when things get bumpy. But for us right now, we don't think it'll extend that long, because if you do have a shutdown, it then sort of gives the president the ability to cut budgets, which the Democrats do not want.
How many times have we seen this movie? Ends the same way, and markets don't seem to care.
Yeah.
See that on repeat, don't we?
I was wondering whether people cared more now just because there was a certain level of policy uncertainty, but evidently the answer is no. No, they don't.
At least not for the moment. Equity futures this morning, positive by 0.2%. A special thanks to Monica Guerra of Morgan Stanley. Monica, thank you. We are about an hour away from US retail sales in America, the last significant data point going into the Federal Reserve's two-day meeting. At least this time we know who's going to be sitting around that table, because there were some doubts over the past few weeks.
And there could still be doubts if there is some sort of emergency appeal on the part of the Trump administration against the recent court ruling on Lisa Cook. Now my question is, how are they going to signal what is going to be the path going forward on the retail sales point, which we are about an hour away? I want to just say I'm watching the breakdown. How much of all spending keeps on getting driven by wealthy consumers and not by the lower tier or the lower two-thirds? And how do Fed officials count that? I don't know.
What happens when you cut interest rates? Who does it help?
Exactly.
And who does it hurt?
Yeah, exactly. Especially if it's long-term versus short-term. These are real questions that we want to answer.
Important questions too. Futures up this morning then by 1/10%. Up next, we'll catch up with the former White House trade advisor Kellyanne Shaw ahead of President Trump's expected call with China Xi. Plus, Danny has your morning movers, the latest in the $3 trillion club.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The winning run continues on the Nasdaq again this morning, higher by 0.24%. On the Nasdaq 100, on the S&P 500, adding a little bit more weight to the rally, up by 0.16. With your morning movers, with your single names, here's Danny Berger. Hey, Danny.
Hey, here's a big add to the Nasdaq. It is Alphabet, which became a member of the $3 trillion club yesterday. There are now 4 companies worth that much. It gains about 1% this morning, this most recent leg of the rally, off the back of that positive court ruling where they avoided the most punitive measures in an antitrust ruling. They also had a city upgrade yesterday. And Lisa, you mentioned that Bank of America survey that investors are rewarding CapEx spending. Even more for Alphabet. They're planning to spend about £5 billion in the UK on AI data centers. That coincides with President Trump's visit. Elsewhere, Chipotle shares are moving higher this morning, too. A little bit of a boost thanks to an announced buyback after the close yesterday in a filing saying that they've authorized another $500 million worth of share buybacks. That adds to a total of 750 million shares. It's something that Chipotle likely needs, considering those shares have fallen 33% year to date. Wrapping things up with a little bit of sell-side action, TD Cowen downgrading Warner Brothers Discovery, pointing out that those recent reports of Paramount Skydance buying Warner Brothers Discovery, saying that it's just speculation, this most recent rally. And the rally's taken it above their price target of $14. That's what's behind the downgrade, because there's been no movement yet on that bid, so shares falling just over 1.8%, John.
Danny, thank you. Thanks for the update. More from Danny in the next hour. One more single name for you, Tesla. Just about holding on to gains in the pre-market. Breaking news just moments ago, facing a probe by the National Highway Traffic Safety Administration over door handles in some of its Model Y cars. Joining us now is Bloomberg's Craig Trudell. Craig, this is something the team have been writing about. In fact, they wrote a big story on it just last week. What's been going on?
Yeah, I definitely would recommend viewers go back and read Dana Hull's big take from last week, along with Emily Chang and Kara Carlson. They looked at Tesla's doors and the fact that they are powered electrically, and when your Tesla loses power, your doors no longer work the way they do normally. Importantly, what NHTSA is looking at here is particularly from the outside of vehicles. Tesla, in its own documents that it gives to first responders, to fire departments, police, they acknowledge that their vehicles cannot be opened from the outside when their cars have lost power. And this is the subject of this investigation. Importantly, though, I should note, they say that while this investigation is focused on operability of the door locks from the outside, as that is the circumstance that is the only one in which there is no manual way to open the door, they do say that they will continue to monitor reports of entrapment involving opening their doors also from the inside of their vehicles. So they leave out the possibility that this may be an investigation that is actually broadened beyond just a single model year of vehicles and about 174,000 vehicles, at least for the moment.
Craig, is this another example of a souring relationship between this company and the government?
I don't think necessarily. I think this is the National Highway Traffic Safety Administration doing its job, keeping an eye on where consumers are sort of, faulting the companies, the manufacturers whose products they buy for malfunctioning. Sometimes they investigate and decide to take no action. Other times they investigate and it leads to recalls. I think the important thing here for Tesla investors is that these are potentially issues that would have to be fixed beyond just an over-the-air update. If Tesla ends up coming to the conclusion that it needs to recall its cars in order to satisfy NHTSA, this could potentially be a costly endeavor for them to have to call these cars back and do some sort of hardware fix to make their vehicles more safe.
Craig, I know you're busy following up on the story, so thanks for making some time for us this morning. We appreciate it. The stock is still higher in the pre-market by 1.33%. As Craig pointed out, the team wrote extensively about this just last week. If you want to check it out, Tesla's Dangerous Doors by the team, the big take of about a week ago. Let's turn to some of our top stories on our radar this morning. The Senate confirming President Trump's pick for Federal Reserve Governor Stephen Miron ahead of today's FOMC meeting. An appeals court also rejecting Trump's efforts to remove Lisa Cook from the board. Elsewhere, the former St. Louis Fed President Jim Bullard joining the short list of names to replace Fed Chair Jay Powell. Treasury Secretary Scott Bessent confirming Bullard interviewed for the job just last week. We'll be speaking with him exclusively on Friday. Look out for that conversation with Jim in a few days' time. And finally, Google announcing a nearly $7 billion investment in the UK. Artificial intelligence. It's the first of several US investments being unveiled ahead of President Trump's state visit over the next few days.
Maybe it's the consolation prize for still having to pay 15% in terms of tariffs. What's interesting, it's not just Google, it's also NVIDIA. Jensen Huang is there, as well as OpenAI, Sam Altman, and this is talking about some sort of increased boost in the United Kingdom. A lot of questions still remain about some of their engagement, given the fact that there are some questions around online rules, as well as just the ongoing questions around national security and beyond. Nonetheless, this is definitely something that Keir Starmer could use right now.
The UK has some of the highest energy prices in the G7. Some of the highest, the very highest. It's incredibly expensive already for consumers in that country. How are they going to power this? Where does the energy come from?
Interesting that you say that. They also have some agreements on nuclear nuclear power plants, and they want to kind of ratify one another's attempts to safely produce nuclear energy exactly in response to this. Sounds good. Problem is, it takes about 10 years to get those nuclear reactors up and running. So in the meantime, you have that short-term cost of living concern that continues to be a preeminent concern in the United Kingdom.
The government's got a lot of work to do on the energy front, that's for sure, and that's going to be a big topic of conversation as those deals are officially unveiled over the next few days. That's the latest on that. Anne-Marie's going to be on the ground in London. We'll catch up with her in a few days' time. Let's turn to trade. President Trump and Xi holding a call on Friday after trade talks concluded in Madrid, Spain. Joining us now to discuss is the former senior White House trade advisor, Kellyanne Shaw. Kellyanne, welcome back to the program. So we get the phone call on Friday between Trump and Xi. What are you expecting to be the outcome of that?
Good morning. Thanks so much for having me back on. Well, I think what this is a pretty significant political and commercial deal. Now, we don't exactly know the terms. All we know is that this involves U.S.-controlled ownership. President Trump teased with reporters yesterday that there may be some government ownership, either U.S. or Chinese, potentially involved in this as well. So we could see some unique deals, kind of like what we've seen over the last few weeks with the Trump administration in exploring U.S. ownership and types of investment credits, but we'll have to see what this ultimately results in. The readout was pretty good. I'm expecting this to move forward.
Kellyanne, what is the larger significance of this, given the fact that expectations were pretty high heading into this meeting, that it wasn't just about TikTok, but the broader dispute between the U.S. and China?
Yeah, I think that's a great question. And we certainly had a deadline coming up this week in terms of ByteDance's need to divest in order to prevent the app from being banned in the United States. That's why the focus of this meeting was really on TikTok. But they met for 2 days. Clearly, they talked about a host of other issues. So the question is, well, what about the other $650 billion worth of bilateral investment and trade and economic relations between the United States and China? Where do we go from here? And we don't know much. So far, the talks have been been relatively narrow in scope. They focused on export controls on the Chinese side for rare earth magnets. They focused on some U.S. export controls. Potentially, we could see some purchases announced as part of a leader-level summit that could come as soon as the APEC summit in October. But beyond that, I think there's a lot of work left to do in this relationship, and I don't expect some grand phase 2 style deal to emerge anytime soon.
So then is it surprising to you that it's going to be capped off on Friday with a phone call between Xi Jinping and Donald Trump, given the narrow scope of what people are expecting?
Yeah, well, again, this is a very significant issue for the president. He ran on keeping TikTok alive, notwithstanding a congressional ban. This is a chit that China has been able to hold. It's a piece of leverage that they're now giving away. So I think this is a sign that they are saying, okay, we are gearing up for some leader-level summit that might have some big purchasing commitments. Maybe they'll talk about fentanyl and some sort of off-ramp there with steps taken from China for confidence building. But again, I don't know that China is also interested in a broad-based phase 2 agreement either. I think China's looking to stabilize the relationship, and this goes towards that, but it doesn't fix all the things that are wrong in the U.S.-China relationship.
Kellyanne, something I was wrong about. I thought we'd move pretty quickly back to the purchase agreement secured in the president's first term. What's the hold-up on that?
Well, I think a lot of water has run under the bridge between Trump 1 and Trump 2. You had the Biden administration who really didn't enforce any of these commitments. And now from China's perspective, this is something that they can give away. This is a piece of leverage. It's that commitments they've already made. They already committed to ag purchases, energy purchases, aircraft purchases, but they haven't really followed through with that. So again, I'm expecting to see them commit to at least that, if not more, in the coming weeks and months. But we'll really have to see what else happens here. Again, the world has changed significantly in the last 5 or 6 years. I just think that the chessboard looks different.
Well, let's talk about the rest of the chessboard. USMCA's got to be renegotiated. The Mexicans seem willing to put the walls up to the Chinese, something we know is going to annoy Beijing. I just wonder how the US and China are going to figure that out in the next year. And I just wonder if that's a recipe already for tension further down the road.
Yeah, and this was really interesting. And I would actually rewind back just a few days to Friday, where the Department of Commerce put 23 Chinese entities on its entity list. China, of course, retaliated with launching its own investigations of anti-discrimination, anti-dumping, and then its finding in the NVIDIA case. But what we have here is a relationship where China and the U.S. can still make progress on politically significant issues like TikTok, while at the same time defending their own interests on other areas of the economic and national security chessboard. So when it comes to Mexico and those tariffs that are now going to go into effect on Chinese imports, I think we're going to see the U.S. asking more and more of that of U.S. trading partners. Now, Mexico is much more reliant on the United States than it is on China. I don't think every country is similarly situated in the same way, but there is this concept of changes to rules of origin that we've talked about and the administration has teased. And I think what that means is the U.S. is going to be seeking from trading partners that if you want access to our market, you've got to limit the Chinese content that is in the goods that are coming into the United States. And I think, to your point, that's going to cause more friction between the U.S. and China.
A lot of companies and economists have talked about how peak tariff uncertainty is behind us, and that's unleashing a lot of optimism at companies who feel like they at least know some of the rules of the road. Do you think that that's right, and that actually there's room to de-escalate further, to see even a further softening in tone, especially ahead of next year's midterm elections?
Yeah, my sense has been that where things are right now between the United States and China, which is something like a 30% to 55% average tariff rate, depending on the good, where we have talks that are ongoing, but we're still separately taking national security and economic measures that may discriminate against the other. I think this is more or less the status quo. And while the numbers may shift around one way or the other, I think this is as stable as things get. And frankly, I think things could go the opposite way. If a year from now we still have China buying loads of Russian oil, if we still have China looking to be slow-walking some of these discussions, if they're cutting off exports of rare earth magnets, this relationship could actually fall off a cliff and get much more unstable. But I think sort of best case scenario from an investor perspective is probably the status quo right now.
Kellyanne, thanks for jumping on. Kellyanne Shaw there, the former senior White House trade advisor. That's how markets view things. So long as there is no escalation, we're okay with that. But ultimately, when you look at the chessboard, to Kellyanne's point, it looks like further escalation is there. The recipe's there, ready-made, further down the road.
If the best case scenario is preserving the status quo, it raises the question about whether people are underpricing the risk for a true escalation or whether it doesn't really matter because companies have immunized themselves sufficiently to some of this uncertainty by, putting robots in the place of all of us.
The market just wants to move on and focus on other things, and it's focused on AI, robots, and all of those things.
Yeah, innovation, how much companies can really shift around some of their supply chains more quickly. And honestly, the adjusting and the adapting of American companies has been really surprising.
Which is why the Nasdaq's on a 9-day winning streak, and it's about to be day 10 based on this price action. Futures up again. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahira. Hey, Yahira.
Hi, John. Just doubling down on that Tesla news you mentioned earlier, the National Highway Traffic Safety Administration is investigating issues with door handles on 2021 Model Y vehicles. The move comes days after a Bloomberg investigation uncovered a series of incidents in which people were injured or even died after being unable to open doors when their cars lost power, particularly after crashes. Meanwhile, the FTC is probing Ticketmaster over whether it's done enough to keep bots from illegally reselling tickets on its platform. The investigation is focused on Ticketmaster's compliance with the Better Online Ticket Sales Act, which makes it illegal to use bots to bypass ticket limits for popular events. A decision on whether to bring a case could be made within weeks. And retired NFL superstar Tom Brady is getting back on the field for a flag football tournament in Riyadh next March. Brady made the announcement alongside Turki Al-Sheikh, a Saudi Arabian sports promoter. Other celebrities and athletes are also expected to join in on the game. Flag football also will be introduced at the Los Angeles 2028 Summer Olympics. That's your Bloomberg Brief. John?
Wait, well, that's ridiculous. Yahira, thank you. Is that true?
Well, maybe it'll be
flag football at the Olympics.
Maybe it'll be the next breakdancing.
How much is Brady getting paid for that?
I mean, well, you can imagine, given some of the money involved in this. Do you think he feels like he's disgracing his former profession by doing flag football, or do you think he's embarking on a support of youth and protecting
definitely the
their heads?
latter, of course. Yeah. I think there's a price for that.
Yeah, you think so?
Without a doubt.
You played flag football?
If you paid me as much as he's getting paid to play in Saudi Arabia, I'll happily play with you anytime you want.
All right, good
we'll
to
go
know.
play flag football at the Olympics together.
All right, well, we'll do a crowdfunding.
Just like the breakdancing, maybe Australia will give us a place on a team,
No,
go and do that?
No one needs to see that.
Okay.
There's certain kinds of publicity no one needs.
Let's move on. Up next on the program, unleashing a bond market rally.
The baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Our policy rate is restrictive, modestly so in my view.
We'll get to that in just a moment with Ian Lingen of BMO Capital Markets from New York City. You're watching Bloomberg TV.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about sports and eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now. You should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Stocks are positive by 0.1%, up this morning by 0.15%. On the Nasdaq 100, higher by 0.2. In the bond market, check out the 10-year. Haven't had a close below 4%, so in the threes, I think, since April 4th, and we were only there for about one session. On the 10-year this morning, 4.04%, just about holding on to those levels this morning. Under surveillance this morning, unleashing a bond market rally.
The baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Our policy rate is restrictive, modestly so in my view. The stability of the unemployment rate and other labor market measures allows us to proceed carefully. While the labor market appears to be in balance, it is a curious kind of balance. Longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored.
Chairman Powell setting us up for rate cuts as the 10-year bond yield hovers near a 5-month low ahead of the first expected interest rate cut of 2025. Ian Lincoln of BMO writing the following: we're encouraged by the modest bid for treasuries. This does trigger our concern that investors are looking for a more dovish cut than Powell is going to deliver on Wednesday. Ian joins us now for more. Ian, good morning.
Morning, happy to be here.
Great to catch up with you. Let's talk about the bond market rally so far this year, outperforming. The bond market bid has returned to treasuries. Let's start with why. What's driving that move for you?
So I think there are 2 main factors. The first is we got through the period of being concerned about a buyer strike in treasuries. Now we know that there's demand at the auction. Now we know there's plenty of demand in the secondary market. The second major issue is that the period for tariff pass-through to really move the inflation complex has largely passed. Now, that doesn't mean that there won't be upward pressure on goods inflation as a result of the trade war, but because it wasn't condensed into a 3-month period and is going to be spread out over 12 months, maybe longer, that means that the market can move on to trading what's next, and what's next is the resumption of normalization.
Do you think that it's a paradox to see both a rally in the bond market and a rally in risk assets that seem to be really hedged on this idea of a reacceleration in growth?
So I have been very surprised by the resilience of the equity market and the fact that we continue to move higher and higher and set new records every day. However, if we put it in the context of a monetary policy adjustment lower that is still holding out hopes for a soft landing, I think that higher equity valuations make sense in that context. It's not until we get a bigger spike in the unemployment rate or a slowdown on the consumption side that we would really start a conversation about a recession. And barring that, as long as the Fed is in motion towards lower rates, I don't think that there's a reason to sell.
Is there a trigger point in terms of 10-year yields that signals to you that we really are seeing weakness, bad news is bad news, versus just simply people getting stomped out of their short, long-term treasury positions and being forced to buy?
I think that at this stage, given how positive term premium is, particularly further out the curve, that we would need to see 10-year yields below 375 or even 365 before I would characterize that as anything more than just going back to the prior range. So we could drift lower in rates just through the process of normalization.
When we quoted you, we talked about the risk going into Wednesday. Just elaborate on that. What is the risk going into tomorrow's decision?
So the market is poised for a very dovish takeaway from Powell. But the reality is, if he goes 25, that means that we're still restrictive, we're slightly less restrictive than we have been, and he will justify continuing to remain somewhat restrictive in all the uncertainties. And so if the takeaway is that we're not starting 25 basis points per meeting, and instead it will be meeting by meeting, I think the market sells off.
How much weight will you put on the dot plot?
The market loves to trade it, and it gets revised all the time, so I'm cautious about assuming that that gets realized.
Do you think that markets have really grappled with the idea of Fed independence, or have they just shrugged it off and say, what does that mean? How can we really even know? And ultimately, whoever's on the Fed board will do the right thing for the economy at a given time, right? So what's the sort of pendulum there for when that starts to matter again?
So if the Fed didn't have the justification of slower payrolls growth and the benchmark revisions lower, I think we would still be having a conversation about Fed independence. But the fact of the matter is the data has caught up with the pressure that was coming from the administration, and so Fed independence can be preserved while still cutting rates.
So we're about 36 minutes away from the retail sales figure that we get out from the United States, and a real question of how to read this, right? What are you looking for to indicate whether this builds on soft payrolls data or whether this kind of flies in the face of that and points to a lot of confidence by consumers?
Well, from a GDP perspective, we look at what's called the control group, which backs out all the components that don't flow through to the GDP consumption figures. And so that'll be the key. And if it is 0.5, 0.6, I think that that's going to be a strong showing for a month in which we saw weaker payrolls growth.
There's another data point in the mix as well this morning that won't get as much attention. Import prices. How important is that as an input to gauge who's paying the tariffs right now and who isn't?
Well, interestingly, import prices at this stage are not going to be as relevant to the tariff discussion. They will be more relevant to putting the final estimates on core PCE for this month, or for the month of August, and I think that that's going to be important because we're tracking at 0.18, which means a very benign print on the Fed's preferred measure of inflation.
Ian, always appreciate your time. Ian Lingham there of BMO Capital Markets. The pass-through, not as obvious right now, but based on experience, it hasn't been the exporters selling into America that have been cutting their prices. It's been domestic companies taking a lot of this on margin, it seems, based on the data we've had so far.
Yeah, or even cutting back expenses in a variety of different ways, which is one reason why people have been looking at innovation or even job cuts in order to respond to some of the tariff costs. It's a complicated picture. Even retail sales, how do you interpret that when so much of the retail sales comes from the wealthiest households? It's very difficult to sort of parse this out and come up with a comprehensive or consistent story.
Are you ready to talk about dot dispersion in the dot plot?
I have a treatise.
How concentrated they might be.
I have a treatise on dot dispersion that I'm going to whip out tomorrow, and it's going to be beautiful.
I'm looking forward to the coverage.
I think everybody
What do you think Stephen Myron's going to be? Is it going to be a throwback to Jim Bullard from all those years ago? Just put the dot at the very bottom of the dot plot and just put it out there for several years?
It depends. It depends on whether he actually wants to have a seat, a permanent seat on the Fed, or whether he's a placeholder to try to be a rabble-rouser. And we'll find out.
Coming up tomorrow, we'll have special coverage of that Federal Reserve decision on the trading floor at Bank of America. Look out for that tomorrow morning. Coming up next, we'll catch up with Alicia Levine of BNY Wealth, Ron Josie of Citi, Steve Rasciuto of Mizuho, Christina Campmany of Invesco.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that three-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We have two crises, two essential crises, and for both it's now or never, democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
What is not baked in is the idea that we may actually end up needing these cuts.
Right along with everybody else, I expect a quarter-point cut.
We don't see the economy going to above trend growth. So this is a kind of a muddling through scenario.
I don't think anyone would be completely shocked by, a more dovish bias here.
If they do 25 bips or if they do even 50, the market should be able to take it.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Bill Dudley really sticking his neck out there. 25 basis point rate cut coming to you tomorrow afternoon.
With that tone, too.
Yeah.
Like everybody else.
Me and everybody else. From New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P 500 up again by 0.14 on the NASDAQ. The longest run of gains we've seen on the NASDAQ 100 going back a few years. We're up again this morning by 0.2%. In the bond market, can we break down into the threes again on 10s? 4.04%. The fate of that move in the hands of this one right here, 29 minutes away. U.S. retail sales, the next big data point for this economy.
Yeah, does it really confirm some of the strength that we're seeing in corporate earnings, or does it confirm the weakness that we're seeing when it comes to the payrolls report? There is a contradiction right now that the markets need to resolve. Are we truly seeing weakness that is the reason why the Fed is cutting? Or are we seeing something that is temporary at a time when companies are still building on profits, a soft patch ahead of what could be a reacceleration with Fed cuts next year?
It's interesting what Deutsche Bank had to say on this issue. We talked about the step down we've seen in payrolls growth, the step up we've seen in the equity market off the back of the increase in expectations for interest rate cuts from the Fed Reserve. And he essentially said, the step down you've seen in payrolls growth isn't because the economy's weak. That might drive the Fed, but it doesn't drive us. He thinks that's a bigger consequence of what's happening on the supply side. The break-even rate for the labor market is a whole lot lower. And you should just take the rate cuts as a bonus because he thinks the economy's doing okay. And the bigger question you've got to ask yourself is just how hot this Fed's going to run this economy as a consequence.
In the past 2 weeks, the St. Louis Fed put out a report that said earlier this year they expected the break-even rate for the jobs number had to be something like 150,000 new jobs created every month. They have recently revised that to as low as 50,000 a month, just simply because there are fewer immigrants coming in to the nation. There's some that are leaving. So that really highlights exactly the point that Deutsche Bank is pointing to, that the headline number really doesn't tell the story.
Retail sales, 8:30 Eastern Time, the next stop for this big debate. Coming up this hour, we'll catch up with Alicia Levine of BNY Wealth. The stocks trade at all-time highs. Ron Josie of Citi as Alphabet joins the $3 trillion market cap club. And Stephen Rasciuto of Mizuho as we break down the latest data. We begin this out with stock steady ahead of a key Fed meeting. Alicia Levine of BNY Wealth writing, we think the Fed cuts twice as inflation remains a problem, but the Fed is cutting into increased earnings estimates. Alicia joins us now for more. Alicia, good morning.
Good morning.
Do you think this Fed's about to run it hot?
It looks like the Fed's going to run it hot because there are disparate signals in the economy. So the job losses that we saw from the BLS survey from the previous year, the revisions are suggesting just much, much slower jobs growth. And the models have actually not caught up to the fact that there might be a new equilibrium in job creation for keeping the unemployment rate in the low 4s, which is the signal. So the Fed's going to cut. It looks perhaps more justified than it did 2 or 3 months ago when this conversation started in earnest. And look, the market's already priced in something like 140 basis points into the end of next year. So it's already in the market.
Well, let's just stay on the labour market just for one more beat. You believe that the step down we've seen in payrolls growth overstates the broader weakness in the labour market?
So I think it's real. It looks like to be a no hire, no fire economy. It is very clear that the younger cohort is having trouble achieving that first job. We've seen it all over the New York tri-state area this summer, people without jobs who just graduated some very fine universities. So that's very real. But the issue is that the firings are not necessarily happening either. We also see that productivity was ratcheted upwards for the second quarter. So it looks like productivity is coming in to support the economy, perhaps not running inflation hot because of it, and at the same time, just maybe a reluctance to hire labor until policy is clearer. But it also seems clear that the equilibrium rate is just simply much lower. Otherwise, we'd have a higher unemployment rate.
But John and I have talked about this extensively. Is this a gap, the gap between corporate earnings and the number of jobs getting created, that has to close? Or is this the new paradigm?
So I think we're in a structural shift. I think we're living through one of those shifts where there are different parts of the economy working at different speeds. So the increased earning estimates are coming from the tech sector, the communications sector, which are not hiring. And yet the margins are going higher, revenues are going higher, and so that's what's driving the earnings estimates. In the end, our faithful S&P is not the real economy, and those two things can exist separately, a weaker labor market along with stronger earnings. Now, at some point, the bifurcation has to be met, meaning you still need positive growth to generate earnings. You can't have negative growth. You can't have a recessionary scenario. But what you have is massive household wealth that's been created in the 60% of households that own equities, 40% which own real estate. And so you're supporting the consumer through financial assets. So we financialize the economy, we financialize consumption. The numbers are in the aggregate. It is definitely a K-shaped economy when it comes to consumption. The lower quintile is not doing as well. They borrow short, they're renting, they're not owning, they don't own financial assets. But the numbers themselves are in the aggregate, and the aggregate's being driven by the top 3 quintiles.
So we're 24 minutes away from these retail sales, and this really has been the question. Can you keep seeing those retail sales come in hot, given the fact that we do see this backdrop of a labor market? I mean, it's not the computers, it's not the robots spending money, right? Is this going to be the new paradigm where your stock prices go up so you can spend money, but jobs are really not plentiful? Is that kind of what we're looking at?
I don't know if I would put it necessarily that way. I think we have a gap. We have a gap in the labor market as we see where AI is taking companies and how much labor is actually needed. In the meantime, will the Fed be running the economy hot? It looks like they're going to run the economy hot.
And we've seen what we've seen in the equity market. Small caps are starting to outperform. We've seen that captured in the Bank of America Fund Manager Survey as well. That feels almost exclusively like an interest rate-driven story. Do you see the outlook and the pickup in the outlook, the improvement, justify the move we've seen?
So, as you said, the small cap move is all about a bet on rates and the direction of rates. what's interesting here is that actually the equally weighted S&P is making new highs as well. So the broadening of the market is happening, and actually earnings estimates and growth estimates for 2026 are moving upward. We'll just point out there's $150 billion of consumer stimulus coming in the first quarter of 2026 through the tax bill. You know, the tax bill is not talked about. We talk about tariffs all day long.
Well, let's do it now.
But there is an offset through the tax bill, which is helping to drive healthier corporates and actually offset some of the costs of the tariffs on the margin line.
What are we expecting to get in that tax bill? What's in that tax bill that's going to drive this reacceleration? Because you're not alone. I've heard a lot of people say this, that you're going to see a reacceleration juiced by what was just delivered. Now, other people would sit around the table and say, that was just an extension of current policy. Don't read too much into it. What's fresh in it? What's important about it?
So the no tax on tips is there. The tax refunds that are coming, the support for families as well is coming all in that first quarter, and the refunds from the IRS to households, and it's all focused on the lower income cohort. So that's out there as well. So you may have a pocket here of, you know, tariffs are moving higher. You know, we had about a 10.5% tariff rate for August. Likely to move higher because the statutory rates are a little bit higher, but then you're having consumer support on the household level, and at the same time, you're having for the corporates CapEx and investment being incentivized and offsetting some of the hit from the tariffs. So you've actually tried to sterilize some of the hit from tariffs while you're bringing revenue into the country. Is this the most efficient way to do it? Of course not, right? Tariffs are not an efficient policy, but it is a revenue source, and it is a way to offset some of the other priorities.
If I were the CEO of a retail company and I heard you talking about this, I'd say, all right, I'm not going to pass along the costs right now to consumers. I'm going to wait until the first quarter, and then I'm going to pass along the costs because they won't care as much if prices go up just a little bit. Why is that not dramatically inflationary for the remainder of 2026?
So it could be inflationary. It could be inflationary. I mean, we've seen retail companies are saying that they've already started to pass on low to mid-single digit costs to the end user customer, and there has not been any pushback. The question is, if you get to double digits, is there pushback? So I think it's a slightly higher inflationary world. I think tacitly, the Fed is saying 3% essentially here, tacitly. Okay, but it's baked. What are they going to do with a degrading labor market? And that's the problem. If they're data dependent, the data has said the jobs market has slowed, and thus far, we have not yet seen a huge hit from tariffs on the inflation side. And so they're in a really difficult place. But the cuts are already baked into the market. So what's the risk here? The risk is that, you know, at some point next year, the Fed says, look, we have to actually hike. Right? That would be a huge risk to the market. That is a tail risk that's not baked in. We don't think that's likely because ultimately we see tariffs as a tax. It's a tax. So yes, you get that inflationary spike and then you get the growth effects pretty quickly. And so we don't think that inflation lasts very long.
How much does 1 percentage point change things when you say that they're tacitly accepting 3 and they're no longer targeting 2? How big a difference is that?
I think that's a huge difference. And I think you see that in the dollar. I mean, I think the weakness in the dollar is reflecting that, you know, the Fed may be moving, like, they're not saying they're moving off, but if they're cutting here with CPI at 2.9%, right? So it's a fact. It's a fact. And so I think it's a bit of a muddle through here. Now, you know, ultimately, if there are growth effects from the tariffs, their tax, the inflation is going to move down at some point.
Listen to the conversation we're having, though. Over the last summer or so, the last several months, there's been this freak out about political capture of the Federal Reserve and the potential for a de-anchoring of inflation expectations. And what I hear from you is that the biggest contribution to that story right now, it's not the White House, it's the way they've been conducting policy over the last several years.
Well, because if you say data dependence, the inflation has not really come through. It's come through on the goods sector, but it hasn't come through anywhere else. And inflation on services is still moving down. You have not seen a huge inflationary hit from the tariffs. What you have seen is a degradation of data in the labor market. And so if you say you're data dependent, that suggests a backward-looking view and not a forward-looking view. I think they're in a very difficult spot here. Like, I don't think this is an easy call. It really is not. Like, people sound very certain about this. It's very uncertain. And so I think that, you know, ultimately, if you believe that if you believe the models on tariffs are wrong, right? Because we still have not had our stagflation yet. Right? Where's the stagflation? It's waiting for Godot. It hasn't happened yet. So if you believe it's a tax, then the slowdown is coming.
Alicia Levine of BNY. Alicia, it's good to see you. Thanks for being here. I'm pleased Alicia said that. I think it is a difficult moment for the Federal Reserve, and I think it's going to be very hard for the chairman to form a consensus on the committee over the next 24 hours.
Especially because a lot of economists and a lot of people who grew up during the financial crisis really are predisposed to being more worried about the scarring in the labor market than they are about inflation that went back down to zero very quickly. So how does that change the view, given that this is a new, different paradigm?
You can get people on side for a risk management rate cut, something like that. To get them on side for something bigger, more aggressive, something that arguably the market is priced for over the next 12 months is a very different story.
It's a difficult moment for the Federal Reserve, especially with all of these other influences, whether it's AI and the potential productivity, whether it's immigration, or whether it's the question of how companies are adapting to tariffs.
That Federal Reserve decision about a day away. Equity futures into that positive again by 1/10%. With an update on stories worldwide with your Bloomberg Brief. Here's Yahira. Hey, Yahira.
Hi, John. The Fed's two-day policy decision getting underway today, and both Stephen Myron and Lisa Cook are set to be there. The Senate confirmed President Donald Trump's economic advisor Stephen Myron to the Board of Governors last night, and a U.S. appeals court blocked Trump from removing Cook from her post, though Trump could still ask the Supreme Court to step in. Meanwhile, Luigi Mangione, the suspect in the murder of United Healthcare CEO Brian Thompson, is due in court today. His lawyers are pushing to have his state murder charges thrown out, arguing that the New York case and a parallel federal death penalty amount to double jeopardy. The judge will also decide a trial date and whether the state or federal case will go first. And Bloomberg News is out with this year's rankings of the best business schools around the world. And for the 7th year in a row, Stanford University comes out on top with the best full-time MBA program in the U.S. The University of Pennsylvania's Wharton School came in second, followed by the Haas School in Berkeley, Harvard Business School, and Northwestern's Kellogg School. That's your Bloomberg Brief. John?
Yahira, thank you. Appreciate it. Up next, the Morning Calls Plus. Ron Josie of Citi as Alphabet joins the $3 trillion market cap club. A conversation up next from New York City this morning. Good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
The big driver of earnings, we have to be realistic, is the AI investment boom, right? That is what's got everyone's attention. And whilst the earnings are good overall, that has been the kind of central piece. That's been the biggest driving force in the second quarter earnings and this year. We're still waiting a little bit for that broadening out of profits to come. We think it will come, We think it comes into next year. We think next year, by the way, is better for earnings overall than this year.
Paul Quincy at JP Morgan Asset Management goes some way to explain the all-time highs of the equity market despite this big step down we've seen in payrolls growth in this economy. Equities are record highs coming into Tuesday. We add to them, up by 0.1% on the S&P, on the Nasdaq up by 0.2 as the Fed's two-day meeting begins tomorrow. Special coverage from the trading floor at Bank of America tomorrow morning. For the team here at Bloomberg Surveillance, we'll have the market voices, Mark Cabana, Savita Subramanian. We'll have the C-suite as well, co-president Jim DeMar, and the chairman and CEO, Brian Moynihan.
I am thrilled to be there again and get their view, especially given how complicated this meeting is. It's not just about whether they cut 25 basis points, whether they cut 50, what they signal going forward, but how they view an economy that is dramatically in flux. And that, I think, is a fair way to describe what we're looking at.
Looking forward to that coverage tomorrow morning. For now, though, let's get you some morning calls. First up, Morgan Stanley reiterating its overweight rating on Tesla, calling the full self-driving software a game changer. That stock is up by 1%. Your second call from Goldman Sachs, double upgrading Hershey to buy from sell. Just don't tell Bramo. Expecting outsized growth from recent pricing announcements.
My kids are thrilled, don't get me wrong.
Bramo earlier, calling it barely chocolate.
Well, it is technically barely chocolate in the United States.
Just about.
Anyway, we can move on.
Stock is up.
Kids buy it.
By 1.3%. And finally, Bernstein lowering its price target on FedEx to $247. Kids buy it. Amazing. Reflecting a headwind from the end of de minimis exemptions, that stock is up by 0.5%. Lisa, never change. Let's turn to tech. Ron Josie of Citi boosting his price target on Alphabet to $280, believing in greater demand and improved profitability at the company. Alphabet now valued at more than $3 trillion. Ron, welcome to the program. What a milestone. I remember not so long ago we were waiting for the first $1 trillion company, and here we are talking about threes, fours, fives, sixes. I don't know where this one's going. Ron, when I go through your note, what stands out for me is just execution, execution. What's changed about their approach in the management team?
Well, I'll tell you, not only the valuation just on a market cap, interesting to talk about. This is a business that's been around for, what, 2.5 decades or more, actually, and search is still growing. Call it low double digits, 11, 12, 13+%. And then you have newer business coming on, such as not only YouTube, but you have Google Cloud. And so what we're seeing is a business that is now embracing and has the right products, it seems, at least the right product roadmap, to better attack the generative AI world. And, you know, it's very clear that search is emerging to maybe more of an answers engine, right? And people's use cases are changing in terms of how we use Google. But at the end of the day, you know, we look at our numbers, we're looking at double-digit growth for the core search business. We're looking at greater demand for Google Cloud, and all that is flowing through to increase profitability. And so we think execution is just improving quite a bit.
What's changed for you over the past couple of months to give you confidence that Google can adapt to a very new moment where OpenAI is an incredible competitor to their main core business?
Yeah, you know, Lisa, it's a bunch of things. And so we've always been of the view that Google's product Halo helps to keep it in the mix or in the loop of everyone's lives. So in other words, of course, we all use search, we use Maps, we use YouTube, Gmail, and the list goes on and on. And so it was a matter of time until, call it Gemini, or we figure out how to better incorporate generative AI tools into the core search product. We're not quite there yet. We're learning still. I think AI overviews, AI mode is helping. The core Gemini app is helping. But at the end of the day, we're seeing Google's tools being more widely adopted. And that's the key thing. I mean, we have to remember, Google has, 7+ products, with more than 2 billion monthly active users, 15 more than 500 million. They have the size scale. It was a matter of time until Gemini and other products actually got to that level. To be clear, search remains, you know, a big question mark, right? Where do we go? And we've been nothing but impressed with what's going on at ChatGPT and what OpenAI has been doing in terms of just bringing innovation to market. But that doesn't mean Google's standing still. And I think that's the key point here in our view on Google.
I do wonder going forward whether Google will be viewed as a search company, whether it'll be viewed as a phone company, an increasing competitor to Apple, especially with some of their AI adaptations that are exceeding what we're seeing from AI, or whether they're seen as some other device company or cloud computing company. What is this company going to look like in 5 years?
You know, at the end of the day, it is full on a technology company. It's an app company. I view it as primarily a consumer company. What's new here over the past couple, call it year or so, is that Google Cloud now is has more products and services to offer their clients. And so whereas a few years ago, you know, the SaaS world was primarily AWS, and of course, Azure was doing their thing. And all of a sudden, with Gemini, Google Cloud now has more than a seat at the table, seeing revenue re-accelerate here, and their commitments in terms of their backlog is growing quite handily. So you ask, what is Google over the next couple of years? Look, I think search is going to evolve into, we'll see, maybe more of an answers engine. We'll see how Gemini and AI Mode and AI Overview and core search sort of merge into one as the Google Cloud business continues to just take more share of the corporate spending market. And I think you're exactly right. We've got the Pixel phones. We had their Made by Google event about a month ago with more hardware devices coming out. We can't sleep on YouTube. And so there's a lot going on. There's always been a lot going on within Google. I think for now, we're seeing this sort of greater clarity on strategy. And, you know, I think it's also important to say, post the memorandum of opinion from Judge Mehta, I think it was on September 2nd, we now have greater clarity on potentially where some of these, you know, the search distribution trial and maybe other trials might go. And I think that actually helps from a product innovation perspective as well.
Ron, can you just build on that? Chrome and keeping hold of Chrome, they have something that many others wanted, including the other AI players. Based on the reports, Perplexity were interested in acquiring that asset. How important was it for Google to hold on to Chrome, and what does it do for the overall business?
Yeah, no, look, I mean, I think Chrome has around 2/3, if not more, market share of the browsing market. Look, I'm old enough to remember when we were in Browser Wars 1.0, 2.0, and here we are again. And look, Chrome with 2/3 of the market here in the US, the entry point to the web on so many different things, including search. I think it's a strategic asset that Google has built over close to 2 decades, I think 15 years or so. And so to see a structural change on a distribution case, it seemed a little aggressive, and that's what we got with the judge. And so now that Google owns it, I think you're going to see Chrome be more that agentic browser. We're going to see Gemini be more infused throughout it. And as that happens, you know, usage should still go up. And at the end of the day, the internet is all about engagement. Whether that engagement is through a browser or maybe through glasses or the phone, you know, I think Google has the tools to keep themselves in front of everyone's lives.
Ron, just in 45 seconds, which is tremendously difficult to do, will that continue to be the entry level to the internet? Aren't we moving away from that? Aren't we moving away from how we traditionally engage with the internet?
I firmly believe this. I think how we interact with apps, how we use the web today, how we sort of just do anything on the web is going to change in the next 3 to 5 years, thanks to generative AI. That doesn't mean that a lot of these companies, such as Google, are going to stand still. And so, you know, later this week we have Meta Connect coming out. We'll see a next incarnation of their Ray-Ban glasses, which is exciting. You know, how we access the web is changing. Generative AI or search is now becoming more an answers engine. And so as we think about this, I think Google is front and center in terms of where these changes are going. So I think it's a fair question.
Let's get you in the studio next time for a longer conversation. I enjoyed this, Ron. Appreciate catching up with you after that call. Ron Josie there of Citi with the latest on Alphabet.
Yeah, and you made a great point about that case and how much that really unleashed Google's willingness to invest in Chrome and make it agentic to tell us everything we might need to know and even some things we don't want to know.
Stock is up by another 0.6% so far this morning. Coming up, retail sales in America, the latest data in the United States going into that Fed decision tomorrow. Steve Rasciuto of Mizuho will be here to break down the numbers from New York City. You're watching Bloomberg TV.
the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
US retail sales about 25 seconds away. Going into it, the score's shaping up as follows. Equity futures on the S&P 500 up by 0.1%. On the NASDAQ 100 up by 0.16. A 9-day winning streak on the NASDAQ 100. Switch at the board and get to the bond market. 2-year, 10-year and 30-year. 10's very close to a 3 handle, 4.03% this morning. 2's at 352.41. As the Fed meeting begins and concludes tomorrow, we've got some economic data to get through. With that data, here's Mike McKee. Good morning, Mike.
Good morning, John. Well, there's an old saying, don't stand in between an American and a cash register, and it looks like that was the case. Retail sales are much stronger than expected, 0.6% gain after a 0.5 in the month of July. The survey thought we'd only see 0.2, and a lot of the weakness was expected to be in automobiles. Retail sales ex-autos up 0.7%, ex-autos and gas up 0.7%. The July numbers have been revised higher with advance headline sales up 0.6 instead of 5, and ex-autos up 0.4 instead of 0.3. Now the control group, which is what everybody watches, it goes into GDP, basically up 0.7% after a 0.3 gain in the month of July. The forecast was only for 0.4, so it looks like it was a very strong back-to-school season, and it looks like Americans were not put off by tariffs, at least not during the month of August. The other numbers we're just getting in here, import prices up 0.3%. That's down 0.1 from last month. The expectation was for them to fall 0.2. Ex-petroleum up only 0.2% from a 0.3 in July. But here's the key. If they aren't going down, it suggests that exporters are not absorbing costs of tariffs, that they are just passing along their normal prices or increasing them a little bit. So that would put the onus of tariffs on the importers, on wholesalers, retailers, and to a certain extent, the American people. But the American people look past it, it looks like, in the month of August.
Michael McKee, stay close. Credit to Aditya Bave and the team over at Bank of America, who were looking through their card data and essentially told us on this program that they saw a consumer re-engaging with the economy and spending was picking up. You see that captured in the retail sales print so far this morning. The market reaction is curious, so let's get into it. Equities stay higher by about 0.1% on the S&P, and the NASDAQ up by 0.2. Push it through the bond market. I think there's a conclusion that this does not change the story at the Federal Reserve. They cut interest rates tomorrow. The 2-year stays anchored around 3.50. Further out, yields up just a little bit, but not too much. Up by a single basis point at 4.05%. I do wonder to what extent this changes the conversation just on the margins, Lisa. How aggressive can you be at the moment with interest rates if you've got some data telling you that maybe the weakness in payrolls is not evidence of more broader weakness elsewhere?
That this is a low hire, low fire jobs market, and people are still spending. It doesn't indicate a market, or an economy rather, that's about to tumble into recession. I'm trying to understand this market reaction. I find it really curious, especially because there's even a little bit of dollar strength coming in on the heels of this, even though it seems like the Fed would cut rates regardless of the fact that consumer spending is coming in hotter than expected. If you want to add to the confusion, even the revisions to retail sales from the prior month were revised upward. They were not revised downward. So across the board, you're seeing this momentum coming into today. The only thing I can think of is maybe the New York Fed Services business activity came in lighter than expected. But if you're going to hinge your entire market bet on that, well, this is a market that's changed.
Yeah, you're scraping the barrel.
You're scraping the barrel.
You're reaching for that this morning.
Exactly.
This is good data. It's better news. Mike McKee, I want to bring you back into the conversation. We know who will be around the table. Governor Cook, Governor Myron. Talk to me about, now they're looking at the totality of the data, how things are set up for them tomorrow.
Well, it's an interesting situation with retail sales. Of course, this is a smaller part of overall spending than services, but we're seeing some strength in just about every category, including the things that have been tariffed. Electronics and furniture stores up 0.3%. Furniture and home furnishings were down by 0.3%, but health and personal, gasoline stations were up 0.5%. Gas prices did go up. Clothing and accessories up 1%. You'd expect that in back-to-school times. Non-store retailers up a strong 2%, and food services and drinking places down a little bit from what they were last month, but still up 0.7%, and that's the discretionary part of retail sales. So we're seeing strength for the American consumer. And if the American consumer is going to keep that up, then the Fed has a question to ask about how much it needs to cut rates.
Mike McKee with the latest. Michael, thank you. I mentioned Governor Lisa Cook. So the latest news overnight. We woke up to this, happened yesterday evening. An appeals court blocked the White House from removing Federal Reserve Governor Lisa Cook. Just a headline crossing a Bloomberg terminal. This coming to you from Reuters. The White House to appeal that court ruling on the Fed to Lisa Cook. Not exactly surprising. Largely expected.
Yeah, the question now is, will it go to the Supreme Court, given the fact that it was an appeals court that did rule 2-1 to keep Lisa Cook in her seat as the adjudication of the actual case goes forward. A real question here about whether the Trump administration's appeal is intended to go to the Supreme Court in an emergency injunction ahead of today and tomorrow. It seems like Lisa Cook will be at this meeting. Beyond that, I don't think any of us are thinking too far.
That drama continues. The latest in this market, an upside surprise on U.S. retail sales. The control group, positive 0.7%. The estimate in our survey, we were looking for 0.4. With us around the table, Steve Rasciuto of Mizuho. Steve, good morning.
Good morning.
It's good to see you, sir.
Thank you.
At the epicenter of your research, I think you're cool at the moment. You asked the right question. Just how restrictive is monetary policy? Clearly, the Federal Reserve's got one opinion on that. What's yours?
Well, the Federal Reserve opinion is 3% is neutral. My view is 4% is neutral. So we're a heck of a lot closer to neutral than the Federal Reserve would be assuming. The difference between us is what you assume for the real underlying rate of interest that's required in the economy to achieve the Fed's balanced trajectory of long-term maximum sustainable employment and low inflation. The Fed thinks it's 1%. We think it's 2%. So if the Fed's credible at a 2% inflation rate, which is arguably questionable as well, then you're at 3% or you're at 4%.
I'm trying to understand this market move. I can't. Can you explain this to me? Why is the bond market just not doing anything on the idea that we got retail sales that were hotter than expected across the board, and it seems like the U.S. economy is doing just fine at a time when, yeah, the headline payrolls number has come in, but a lot of people are saying that's appropriate given some of the demographics.
You know, you're asking the question is, where have all the bond vigilantes gone? And the answer really is they're all either indexers or closet indexers. So all they care about is the performance. It's number one. Number two, there's a global deflationary force out there. Number three, it's hard to short a market in front of the Federal Reserve cutting interest rates, which they're going to do. And then there's a fourth consideration, which is for a lot of people in the marketplace, these levels of yields are attractive. Because they really have never witnessed substantially higher levels of yields, and every time there's been a backup, they've done well by buying it. So you're in an environment where you're expecting the Fed to cut not only once, but potentially 3 times before the end of the year. They're not going to do a jumbo rate cut, although there will be voices around the table for a jumbo rate cut. So in that environment, it kind of makes sense for people who just won't short this market. And if you won't short it, it's hard to make it go down in price.
You said something in there that there's a global deflationary force.
Correct.
If that's the case, why don't we all buy bonds? Because ultimately, then we're not worried about inflation anymore, and we're getting something real for our money.
Well, that's exactly part of the problem. Is you have this global deflationary force, and the question is, you saw the import price numbers going up. They're still relatively tame.
What is this deflationary force? What are you talking about?
It's China. China is the global deflationary force. It's replaced Japan as the global deflationary force. It has to dump product around the world. And that's one of the reasons why I don't think you're seeing the amount of impact from the Trump tariffs, because I think, even though import prices are going up, when you look against the tariffs, they're not going up as much. So I do agree that I think the importers are dealing with some of the tariffs, but I also think that people are exporting are dealing with some of the tariffs, and it's getting absorbed that way. And I think there's an additional factor that people are fearful of in here, and that is whether or not this administration is going to attempt to do something like yield curve control by adjusting the long-term supply of Treasury debt. So when you roll all those factors we talked to together, you can see why it's hard to get the market to short in this environment.
Is that what you're expecting, some kind of yield curve control?
Well, that's the fear. I don't think Scott Bessent has moved towards it, but everyone is convinced he's going to if push comes to shove, because Donald Trump wants lower interest rates. And he has more room to go in terms of raising money in bills. Now, it's also interesting, despite all the money they're raising in the tariffs, you were seeing the budget deficit still deteriorate fairly rapidly. So there is going to be more supply coming down the pipeline, but they may wind up just doing it all in bills.
It's funny that when you talk about yield curve control, I think about monetary policy, and you think about it coming out of the Treasury. How important is that distinction?
Well, there is a big distinction between the two of them because one is a function of a central banker making a decision based on a hard and fast policy rule, and the other is based on a political decision. And it's that politicizing of the interest rate environment that I think is a big part of the factor why yields can't go down.
How long can bonds and stocks keep rallying together at this point, given everything you said?
Well, I mean, the equity market looks pretty good. Look, my forward earnings numbers are very good. My earnings revision factors are very, very good. We haven't pushed multiples to any significant level. I think to get back to the question you asked earlier, which was why is the dollar not doing well? Why did the dollar sell off a little bit on this? I should say improve a little bit on this. And that is because people had been expecting 3 rate cuts. That was the potential. And I myself, when I moved from nothing, I said, might as well just throw in 3. Now you're in a backdrop. Now you're in a backdrop where, are you really just looking at 2?
So that's the reason why maybe the dollar is going to strengthen a little bit. Just going back to this, do you think that bond market investors, bond market traders are whistling past the graveyard just a little bit? Or do you think that they are right to focus on the overcapacity of China, they're right to focus on the ability of companies to adapt and adjust and say, ultimately, this will be a soft landing?
If yields were higher, I'd be more convinced in answering that question, yes. If we were in that 450 area, I think then you could sit there and say maybe the bond market is correct and will hold in, because at least I'm being rewarded somewhat for the risk I'm taking, because I've already got an inflation rate running at 3. Right now, I'm getting no protection from that inflation rate. I'm missing 100 basis points. That bothers me. And it should be bothering the investors. But again, how can you short it against all those factors?
Steve, going into the Fed tomorrow, just a final thought. What I've really sensed from you, from speaking to you, it sounds like you believe it's quite a mistake to anchor the view of the labour market just around a step down in payrolls growth. Is that a fair description of where you're at?
I'm disappointed by the labor force growth numbers. I think I understand what's happening. Companies that have seen their margins being impacted or afraid their margins are going to be impacted have opted for a more cautious route. But they're having to pay their employees more, and they're having to work their existing employees more, and they're still generating the income. I mean, is it a mistake to cut rates 25 basis points? Is it a mistake to get back to 4% on the Fed funds rate, which is where I think is neutral? No, you can live through that. Getting and saying we're going to get to 3 is where I have trouble with this market.
Do we get one or the other tomorrow afternoon? Steve Raschuta of Mizuho. Steve, thank you, sir. Pleasure to see you. Thanks for giving us some time. Let's give an update on stories worldwide with your Bloomberg Brief. Here's Yahara Arnott. Hey, Yahara.
Hi, John. Prosecutors in Utah are expected to file capital murder charges against Charlie Kirk's alleged assassin. 22-year-old Tyler Robinson is due for his first court appearance today in Investigators have used DNA evidence to link Robinson to the murder, including a screwdriver recovered from the rooftop where the fatal shot was fired. Meanwhile, President Trump has filed a $15 billion defamation and libel lawsuit against the New York Times. He's accusing the paper of serving as a, quote, mouthpiece for Democrats and cites the Times' endorsement of former presidential candidate Kamala Harris. The New York Times saying the suit has no merit and that it won't be, quote, deterred by intimidation tactics. And week 2 of the NFL wrapped up with a Monday night football doubleheader that saw the Tampa Bay Buccaneers defeat the Houston Texans 20-19. Baker Mayfield led a game-winning touchdown drive in the final minutes to secure the victory. In Vegas, the Raiders fell to the Chargers 20-19 as Justin Herbert's 2 touchdown passes helped improve Los Angeles to 2-0 on the season. That's Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Thanks for this morning. Up next, we'll catch up with Christina Campmany of Invesco with the Fed's 2-day meeting set to begin. Plus, Danny's got your morning movers going into the opening bell. Oracle getting a boost thanks to TikTok.
When we look at the businesses in the UK and the business in Switzerland, is our view that those businesses are subscale, and the amount of capital that it would have to go into those businesses to get it up to scale to meet our strategic ambitions would be misplaced. SPAR being where it is and how competitive the South African market is, we really just want to refocus on our home markets. Our liquor brand, Tops, has been around for also about 25 years. And through independent retailers, we've become the single biggest retail liquor brand in this country. Our business has the ability, and our independent retailers have the ability to compete directly with the chains. And we are now the second biggest supermarket brand in this country.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
The new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
The reality is, if he goes 25,
that means that we're still restrictive. We're slightly less restrictive than we have been, and he will justify continuing to remain somewhat restrictive in all the uncertainties. And so if the takeaway is that we're not starting 25 basis points per meeting, and instead it will be meeting by meeting, I think the market sells off.
That was Ian Lincoln of BMO, looking for 25 basis points tomorrow. And then the big question is, what comes next? Retail sales dropping just moments ago, about 20 minutes ago. Equity futures still positive by 0.1% on the S&P 500. On the NASDAQ, up by 0.2. A really decent upside surprise for the consumer.
An upside revision to the prior month across the board. Even the control group, which people look at, came in 0.7% increase versus the expected 0.4% increase. We also saw export prices increase more than expected. So why are markets not responding? Because essentially they had baked in at least 2 rate cuts this year, possibly 3. And it doesn't change the trajectory going forward, given some of the deflationary forces, as Stephen Rasciuto is talking about, that people see coming down the pipe.
I always say the first move is not always the right move, and we'll see if this sticks, but this is the move right now on the screen. Yields up by just a single basis point on 10s off the back of that better than expected data, 4.05%. Let's get you some single names. The opening bell about 42 minutes away. With the latest, here's Danny Berger. Hey, Danny.
Hey, John. What a run for Oracle. First, it was those AI-powered earnings. This time around, it is TikTok, with Trump confirming that some sort of framework is in place to reach a deal around this. Of course, Oracle was in the talks when we first had these discussions around TikTok remaining in the U.S. CBS News reporting that they are part of it this time around, too. Not getting any details on the structure of it, but nonetheless, shares are up 4.2%, just under that. Also, Tesla in focus this morning, with the National Highway Administration zeroing in and investigating their electric-powered doors, that great Bloomberg investigative piece that often they don't work when there are issues of power in the car. Shares are still higher, though, 1.2%, still rallying after Elon Musk bought $1 billion worth of shares. So still getting a boost from that, not the regulators this morning. Finally, and I am so sorry to bring this one up again, but Hershey is still rallying, up 3%, one of the best performers of big cap stocks, because it got a double upgrade from Goldman Sachs, saying that not only are tariffs and price increases really well known, but it has pricing power, it's got brand names, so it's able to raise the cost of your Kit Kat bar. John.
Don't apologize. I've enjoyed the Bramo rants all morning.
Oh, boy. I'm gonna
Danny,
get so much
thank
hate
you.
now.
Appreciate it. More from Danny and Matt Miller in about 11 minutes' time with Bloomberg Open Interest. Let's keep it on this market and look ahead to the Federal Reserve. Christina Campmany of Invesco writing the following. The threats to Fed independence and data reliability concerns both should mean higher long-end rates and more term premium demanded. Christina joins us now for more. Christina, good morning.
Good morning. Thanks so much for having me.
The power of the word should.
Should.
Should. That's not happening, is it? What is happening?
It's not happening just yet. We have seen steepening this year, and we have seen some of that, but it feels like the end of summer and the start of this corporate supply calendar that came back, and it feels like there's money just being allocated, and Steve spoke to it in the last segment, of just the outright level of yields. People say, okay, we're willing to put some money to work, but I think when we take a step back and we look at, there's a lot of big forces that are moving this year and big changes, and I think some of these, like Fed independence, what's going on with BLS, like these are big things and they will matter in the long end, in the long run, and in the long end for where rates are, I think.
So what kind of numbers do you think we should be thinking about? Because flattening resumed starting September. Yields started to come down at the long end of the curve. You're thinking about them coming back up to what kind of levels?
Look, I think getting back to 5% in bonds in the medium term is a reasonable number. We're 466, 467. I think that those are reasonable, and it should be a drift. I think, again, part of it is that the one point of the curve that has moved a lot is 10s, 30s, so there's some kind of reallocation of money. But I think you have to take a step back and say, like, where do we ultimately end with the Fed, and what are the underlying dynamics going on? We know that the Fed will most likely begin its easing cycle tomorrow. I think our base case is that it's a similar play out to last year, that they deliver kind of 3 to 4 hikes, 75 to 100, and then kind of assess where we are and where do we go from here. But is there scope for a lot more? Certainly with the changes in the Fed that are expected next year, I think
I guess part of the issue that I'm having, I'm still struggling with the market reaction from this data and what the signal is. And I understand, John, you are correct. The first move is not always the final move or the correct move, and there's a real question here about signal flow. But
It's interesting.
I think you can tell something by the fact that this market does not believe that you have strength in the economy turning into a reason for the Fed not to cut rates. And it's not a reason to sell the long end either. So what will?
Yeah. Well, I mean, if you take a step back and you look at the price action in the last even 2 weeks, you say like the bond is rallying, stocks are at their all-time high, credit's almost at its all-time tights across the board. Like these are very, very tight levels in credit. And you say like, how do these pieces match together? And I think it's this shift from Powell that's reintroduced kind of the theme of last year of we feel like we're tight from the Fed. We feel like we are at restrictive levels and we can deliver some easing, whether that is precautionary, preemptive, or I think once we got the payrolls report in August, like, oh, maybe things are breaking more. So I think the market's still trying to weigh, like, is something really breaking or is the Fed just trying to get a little closer to neutral because 450 isn't neutral? And like the consumer has been very resilient all year. And I think you've had Michelle Meyer on here all year, and even the B of A retail sales numbers from their card data all year have said like, the consumer is being resilient and is still spending, and they're choosier, but they're spending, and you keep seeing that. You see it in today's data.
Over the past couple of weeks, the U.S. bond market has outperformed other developed market bond markets, and I wonder if that's poised to shift. If you could see that change, if you really believe in this deflationary force, this doesn't look like a U.S. market that can continue to trade on weakness if these numbers that we just saw are correct.
Yeah, I think there are some kind of bifurcations that have to happen, and I think we take a step back rates in the U.S. and you haven't seen that trend of late, but like when we look and we run global portfolios, where are places more interesting? We like allocating money to the Australian rates market. We think there's a case in Canada because of kind of more clear deterioration. UK market is certainly a hairy, there's all sorts of things going on there, but there is some value out, I think, in the UK market in bits and pieces too. So
that was one of the contrarian trades from Bank of America and the fund manager survey. No one seems to like that market.
All I could say is even Christina doesn't seem to like it, even if she likes it. She's like, please, I understand
you just have to be a little cautious, right?
Yeah, so it gives you a sense of where people are at with this one.
Just to pick up on this theme of a stronger economy, Scott Kirby of United Airlines speaking earlier this morning and essentially saying that the travel demand story for him this fall and going through the rest of this year is stronger than the broader statistics for the economy show, which again speaks to this retail sales print set against the weakness we've seen for payrolls growth.
If you want to go skiing, if you want to go to a beach, if you want to go to any vacation spot in December, take a look at plane tickets, and it will give you a sense of just how strong that demand is. That's my gauge, is to figure out how strong demand is by checking out some of the popular destinations and what the price tags look like.
Christina, what's your gauge? What anchors your view?
Look, I think there's it's interesting when we look at like planes and just some of the like, what do you feel when you're out there and seeing it? We talk about, and our team travels a lot internationally, the flights to London and back and forth, and that a lot of those flights are a lot more empty, and maybe you're not seeing, because of the change of the weakness of the dollar, you're not seeing as much international kind of travel. But I think you're talking about this tale of two consumers that we've had for a while here, and those that have money continue to spend and can be choosy, and you're even like, you have like the trade down, and like if the Walmart's doing well, and it's just like a choosier, where do I want to spend my money?
We've seen it for a few years, that's for sure. Christina, it's good to see you.
Great.
Thanks for being here. Thank you, Christina Campmany of Invesco. Coming up tomorrow, special coverage from the Bank of America trading floor. Look out for that at 6 a.m. Eastern time. We'll catch up with Mark Cabana of Bank of America, Savita Subramaniam, Jim DeMar, and Brian Moynihan from New York City. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
After punching through 6,600, futures are higher again. 30 minutes until it started trading. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, a resilient U.S. consumer retail sales data coming in hot ahead of the Fed's anticipated first rate cut of the year. And a seat at the table. The Senate confirms President Trump's Fed pick Stephen Myron, while a court blocks the president from firing Lisa Cook for now. And rethinking earnings, the SEC says it is prioritizing President Trump's push to reduce the frequency of quarterly reports. Danny?
Matt, I'm looking at another really good day for Larry Ellison. I feel like I've been able to say that for a while now. It's Oracle surging up 3.4% in the pre-market. CBS News reported that it could play a crucial role in the TikTok deal between U.S. and China. Now, we don't have the details of those yet, but it seems like it will include Oracle. What are you looking at?
All right, Oracle rising. I'm looking at Tesla extending gains as Elon Musk tweets his calendar. And he says, Daddy is very much home. It's a little bit creepy, that phrase, to be honest, but it doesn't matter to Tesla shareholders. They're up 1.4% again today, with Musk explaining in minute detail how he plans to go to work over the rest of the week.
Thank you. I hate that phrase. I hope to never hear it again. Matt, we also begin with retail sales data this morning, crossing about 30 minutes ago. It topped Wall Street estimates. Joining us from Washington, D.C. is Bloomberg's Michael McKee, of the International Economics and Policy Correspondent there for the Fed meeting. Mike, what did the data say?
Well, basically, that the Fed has to think twice about how many rate cuts it's going to do if consumer demand holds up like this. Twice the rate of inflation in the month of August. Retail sales headline up 0.6%, same as the month of July. Core sales, what goes into GDP, up 0.7% after a 0.5% rise the month before. Import prices also came in restrained, up 0.3%, and take out petroleum, they were up just 0.2%, but they didn't fall. And if exporters were cutting prices to absorb some of the president's tariffs, you would have expected a fall in import prices. We did not get that. Key categories in terms of the retail sales report: clothing up 1%. Of course, it was back to school month, so you'd expect that. Sporting goods and instruments up 0.8%, also kind of fits the time period. Food and drink, though, that's a real discretionary category, up a strong 0.7%. And electronics, I threw that in there, up 0.3%. That was one of the areas that's been tariffed. So we would expect maybe a fall there. Instead, we get a rise. And all this is going to be in the discussion as the Fed meets today. And as the Fed meets today, guys, we've got the intrigue of both Stephen Myron, newly confirmed to the Fed, and Lisa Cook, newly allowed to continue in her job by the appeals court, both expected to attend and vote. The market pricing in a 25 basis point rate cut. Question we have is, will there be dissents for 50 basis points from Myron or Waller or Bowman, or will there be no cut and maybe a dissent for no cut? Dot plot will lay out the anticipated rate path. That's what Wall Street wants to know. How many more cuts and how fast? And then, of course, we want to hear what Chairman Jay Powell is going to say. And I'm sure there will be some questions not only about the path of monetary policy, but what was it like in the room with Lisa Cook and Stephen Myron both there?
All right, you covered all the ground for us. Michael McKee, thanks very much for that. Now, Tesla is higher this morning after Elon Musk posted that quote, "Daddy is very much home." He says he will spend the week assessing Tesla's AI and autopilot ambitions. He talks about walking around the giant data center that he's building, Colossus 2. And then he's going to be in meetings for up to 12 hours. He says they're back-to-back. Craig Trudell runs Bloomberg's global auto coverage. And Craig, it's a little bit weird to me that Elon Musk is tweeting out his schedule. Does this mean he wasn't really working at Tesla anymore before the $1 trillion pay package?
Yeah, he's home very much implies that he was away for a time. And I mean, this is in keeping with what he wants us to think, right? It's very much a narrative play on his part and on the part of Tesla's board of laying out this, new master plan for the company, putting targets that are sort of aligned with that plan out there to get everybody excited about the future. Making those targets, sort of tying them to paying Musk again, because that worked out well the last time. And, meanwhile, the company, I think that the real question is the business actually doing any better? And we aren't really getting indications that it is, in terms of, vehicle sales here in Europe have really been weak. In China, the company has been seeing very consistent declines in shipments from its factory in Shanghai. And in the U.S., Tesla continues to lose share of the EV market, which is really going to be challenged after tax credits go away as a result of the Republicans, doing away with Inflation Reduction Act tax credits.
Craig, the share price is reacting to that, but not reacting to the news that the National Highway Traffic Safety Administration will be probing Tesla over the fantastic story with the autos team on Tesla car doors, the Model Y to be specific, not opening if there's a power outage. What would this mean for Tesla, and what do you make of the fact there hasn't been much of a share price reaction off the back of that probe?
Yeah, it's very interesting because we cited within our investigation, our story last week, an example of a young child who was in her Halloween costume, who was trapped in the back seat of her parents' Tesla. That is almost verbatim what the National Highway Traffic Safety Administration is describing here as it opens this probe. This issue of Tesla owners, their vehicles losing battery, And Tesla itself acknowledges in its owner's manuals and in documents that it shares with first responders that, look, our doors just don't open from the outside if our vehicles don't have power. That's a real safety concern, particularly if you have young kids in your car. This is, leading NHTSA to open this investigation. And I would say, it's not necessarily the case that defect investigations are market moving because they tend to take a really long time to play out. And it's hard to tell at this juncture just how costly this could be if it ends up ultimately resulting in, for example, a recall. I would say that, what could set this apart from other investigations for Tesla is it may not be something that they could resolve with an over-the-air software update. And if that's the case, if they actually have to, make some physical change to their vehicles, that could be costly for the company.
Maybe it'll be sold with a hammer from now on. Craig Trudell, our global auto czar there out of London. Catch, by the way, my interview with Tesla designer Franz von Holzhausen this week on Hot Pursuit. That's my podcast with Hannah Elliott. We will ask him specifically about the door handles that I assume he had a large part in designing.
Yeah, and that story, again, that Bloomberg story, really great to show that basically every different Tesla model has a different place for the manual release.
Right, they're maybe hard to find, especially if you're in a panic, right?
Of course.
And some of them are buried under rugs, right? Always carry a hammer. Always have something in your car to break the glass. I do that even in non-Tesla vehicles.
Hey, good to know, and I'm looking forward to that podcast, that interview. Matt, elsewhere, Oracle shares are extending yesterday's gains. The software giant is among the firms that would enable TikTok to continue operations in the U.S. if a framework deal is finalized, according to CBS News. Matt, if you look at Rich Go, literally every day has been a good day for Larry Ellison. He added $10.8 billion to his net worth just yesterday on the rally. Year to date, he's added $167.5 billion. He is the second richest person, so yay, go Larry. Here to join us to discuss the moves for Oracle is Bloomberg Tech's Caroline Hyde. So Caroline, yet again, Oracle making headlines, but this time for TikTok.
And remember, they've been a key infrastructure player with TikTok all along. They're basically providing, in many ways, their cloud offering, and then
remember
Project
we never
Texas.
knew.
But then also think about Project Texas. When we were first thinking about the prior administration under Trump that wanted to ban TikTok, it was looked as an alleviation point that Oracle would say, hold on, we've kind of got a fix here. Within Biden administration, they said, we've got this thing called Project Texas. We can secure just US users' data and ensure that it doesn't get back to Chinese headquarters. Now, this is why Larry Ellison and Oracle are so intertwined in the TikTok story. It's been reported time and time again that there is a consortium of bidders. Blackstone dropped out, but Andreessen and Horowitz's name keeps coming up, as does Oracle's, that might in some way ensure that TikTok can continue to operate in the United States. Now, Bloomberg Intelligence is saying, we don't think Oracle's going to give money. We think that they're just going to provide the infrastructure here and be able to make sure that we can trust the data. But it has been reported out that Oracle could indeed give a chunk of change alongside General Atlantic and others.
Yeah, Larry Ellison has been very popular in the Trump circle. He was right there at the Stargate announcement. He's done well in his ninth decade. Let's talk about Google. Let's talk about Google. They made an announcement about an investment in the UK right as President Trump goes to meet with King Charles, and it seems almost like they're trying to get in his good graces because the Justice Department really has an eye on them.
It does, and Alphabet has had some wins in terms of rulings coming that perhaps it doesn't have to break itself apart when it comes to its so-called monopoly in search, but we're still thinking about ad tech in particular when it comes to Alphabet. But a lot of companies are trying to be in the administration's good graces as they go to the United Kingdom. We're likely to hear from NVIDIA. We're likely to hear from OpenAI. They're likely to do deals with data center provider Nscale in the UK, which is a very young startup, so we'll see how it can really push out $5 billion worth of investment coming from Alphabet, the parent company of Google, into the UK. They're going to be building data centers just north of London. But $5 billion, compare that to $500 billion that was announced in the Stargate project that's here in the United States. These chunks of change need to get bigger, particularly for other countries, because the sheer scale of the focus on AI data center ramp in the US and in the Middle East pales versus what's the small amounts that's going on in Europe. They really need to beef it up. But all of that brings us back to Oracle, really, because that's why Bloomberg Intelligence thinks that they're not going to be putting money into TikTok because they've got so much AI data center build out to be doing. They don't have much cash to spare.
Well, I guess maybe the UK needs to be smaller because I don't even know how they have the power to the energy to power something like that.
And we actually had the Energy Secretary, Chris Wright, on the show yesterday talking about the need for more nuclear in the United Kingdom, this agreement that you're going to see between the US and UK to fast-track nuclear build-out in both countries. But he's been slamming the UK, saying, look, you're not using the North Sea oil as much as you should be. So, yeah, energy's an issue. Also, land? Where are they going to build all these things?
It's such good questions. I doubt we'll get any of the answers in the next couple of days, but we'll look out for it, Caroline. Thank you very much.
Surely it's going to get smaller, right? I mean,
What's
the
gonna
British
get smaller?
Empire has just shrunk.
Oh, you mean like the land literally is going to get smaller, too?
Everything. Probably the economy as well.
Are you just doing this because I'm sat here?
Is Scotland going to stay?
I'm a British citizen too, Caroline. I'm also offended. So there you go, Caroline.
Well, also, we are heads about these things. Sometimes the British need to be told that the empire has got smaller.
There you go. It's not going to help that Google's investing so much money in them. Anyway, Caroline, thanks. Let's get a quick check on futures this morning because we are headed to another record high, even though it is very slight. Some of the gains coming back after that retail sales data. By the way, Matt, NASDAQ 100, if it gains today, it would be 10 straight days of gains, and that would be its longest winning streak since 2021.
All right, so equity indexes are doing well, especially those heavy on tech. Coming up, the SEC says it is prioritizing President Trump's proposal to move away from quarterly earnings reports. Again, that would be really a seismic shift in the way U.S. business is done. We'll talk about it next with America's dad, Nathan Dean. This is Bloomberg Open Interest.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Willow Bay. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Let's get now to high interest. Look what's making headlines around the world. The U.S. is in talks to set up a $5 billion fund to invest in mining. The U.S. International Development Finance Corporation discussions to establish the fund with the investment firm Orion Resource Partners. The potential collaboration is driven by anxiety about the supply of critical minerals like rare earths. The entertainment restaurant company Dave & Buster's, ticker is PLAY, is tumbling in pre-market trading after reporting second quarter results that came in well below expectations. Analysts across Wall Street are cutting estimates and price targets and apparently not going to Dave & Buster's. President Trump filed a $15 billion defamation and libel suit against the New York Times. The lawsuit criticizes the Times' endorsement of former presidential candidate Kamala Harris and cites the paper's news and opinion articles. The case adds to Trump's battles with the press. In July, he reached a settlement with Paramount over a lawsuit tied to CBS 60 Minutes interview. And then Vice President Harris, last year, ABC agreed to give $15 million to Trump's future presidential foundation to resolve a separate defamation claim. He's got a $10 billion lawsuit against the owners of the Wall Street Journal. I could go on and on and on and on and on. He likes litigation.
Yeah, $15 billion also against the New York Times is more than their market cap, too.
Yeah.
That would be painful if they had to do something like that. Elsewhere in Washington, D.C., Matt, though, the SEC says that it is prioritizing President Trump's proposal to reduce the frequency of corporate earnings reports. For more, we're joined yet again by Bloomberg Intelligence senior government analyst Nathan Dean. Nathan, if you just look at what the SEC has done over the past week, so you have them prioritizing this. Last week, they also said it would consider ways to limit the risk of shareholder lawsuits. It also ruled Monday in Exxon's favor that it could use a strategy that would limit the power of activist investors. Is this an SEC shifting the balance of power to corporate America's CEOs?
Yeah, I mean, I would say that's certainly a good way to look at that. I mean, Chairman Paul Atkins, when he came in, he had three priorities, and one of those was capital formation. And this is something that, he's been talking about for the last 20 to 30 years, certainly when he was a former commissioner back in the early 2000s. So I think what you're going to see with this quarterly reporting is when the SEC comes out and says they're going to prioritize it, they certainly are. I mean, they're not in the business of telling the White House no. So I've just put out a note on the terminal just yesterday essentially saying that I think what they're going to do is release what's known as an advanced notice of proposed rulemaking either at the tail end of this year or early next year. And essentially it's going to be about 30 to 40 questions going out to the marketplace saying, look, is this a good idea? Why should we do this? Because when they had a request for comment back in 2018, a lot of the buy-side community, and especially the hedge funds, didn't like this because they want that transparency that comes from quarterly reporting.
So, Nathan, what do you think? What do the other analysts at Bloomberg Intelligence think? Because this has been a debate for a long time. The Harvard Business Review is constantly railing against quarterly reporting restrictions, saying that they're responsible for short-termism, myopic views in the C-suite. And it's interesting that the president would agree with Harvard. Meanwhile, The Economist is always saying, no, we need this kind of transparency. That's why American investing is so exceptional.
Well, it's kind of funny because we just had a call about it this morning, and we had one colleague here in the United States saying, look, this is a horrible idea. I want that transparency. And then we had another colleague over in London saying, look, this is what I get all the time because my companies report on a semi-annual basis. So there's obviously a lot of different opinions here. And this is what the challenge for Chairman Atkins is going to be, because as he goes through this process, he's going to have the buy-side community and the market participants and the investors saying, look, I want this transparency. And back in 2018, BlackRock in particular said that transparency outweighs the benefits of what comes from long-termism. But I would also say that NASDAQ did a study back in 2018, and they surveyed 138 companies, and from the corporate perspective, 75% of those companies wanted to go to semi-annual quarterly reports. So as Chairman Atkins goes through this process, he's going to have to weigh which one is better and which one would he like to see. And that's why I think that there's a decent chance at the end of 2026 or in 2027 that we're going to move to this semi-annual basis, because I think the corporates, as of right now, will probably win out over the buy side.
I mean, Nathan, but isn't it kind of crazy to be like, you get an extra 3 months and that cures your myopic and short-term view? I mean, it's still reporting twice a year.
Yeah, exactly. And that's one of the reasons why one of my colleagues was saying, they don't want to move away from this because it's going to make the challenge of analysts and investors even that much more difficult with the lack of data coming in. You're certainly going to see a lot of folks turning to alternative data to try and figure out and fill that void. But, we'll just say is that, Chairman Atkins, when he comes in, or as he's been in, capital formation is one of his key goals. And one of his key goals was to protect companies. I would also just say here is that one of the consensus that came up in 2018 was this idea of if you're trying to reach a middle ground, you would say for small and emerging companies under a certain market cap, they would be able to report on a semi-annual basis to try and go there and be able to build this long-term story, if you will, before you get into the nuances of trying to report every quarter. But I would just say is that the Securities and Exchange Act of 1934 requires quarterly reports. And so that's something Congress has to change. The SEC can't do that. But there's a lot of flexibility here. So quarterly reports are going to stick around. But using an extreme example, the SEC may come back and say, for quarters 1 and 3, you just need to sign a form and say you're good. It's quarters 2 and 4 where you're going to have the 10Q in the annual report.
Nathan, this story obviously isn't going anywhere. Looking forward to catching up with you on it. Bloomberg Intelligence Senior Government Analyst Nathan Dean. Coming up on the show, the latest Bank of America survey finds that fund managers are concerned about valuations but remain overweight equities. Citi's Scott Kroner weighs in next. You're watching Bloomberg Open Interest.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Up to the minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg. Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bank of America says global equities will likely rally even higher as U.S. economic growth looks under control. The latest Bank of America survey of fund managers shows 28% of them overweight equities. That's the highest in 7 months. The team led by Michael Hartnett says the risk of a recessionary trade war has diminished. Citi U.S. equity strategist Scott Kroner joins us now. Bank of America, the team over there, Scott, goes on to call it bulls galore. Is it the same for you? Is it growth expectations go higher from here and the rally continues?
Well, Danny, I think it's a little bit of a caveat here. Yeah, we're still quite constructive on the structural setup for U.S. equities, but I think we have to acknowledge in this latest run-up to 6,600, which we hit yesterday, that's our year-end target, right? And at 25 times trailing earnings, 22.5 times forward earnings, a lot is getting priced in. So the way we see it setting up here, very simply, is that we think going into the Fed announcement this week and then the Q3 reporting period, we're likely to see volatility pick up a little bit, but as we then get further into the Fed rate cut cycle from here, we think that sets up for a year-end rally. You know, I think back to where our current price targets are, again, sets up for, in our view, a growth plus cyclicals follow through into 2026. So color is positive, but with a nuanced perspective on the shorter term here.
All right, we'll dig into that nuance, Scott. You're going to stay with us through the open. We are looking at futures that continue to rise, although not at their session highs. We punched through 6,600 at the close yesterday. We'll see if we can continue that rally after the opening bell. This is Bloomberg.
Take us inside and tell us what you can without violating confidences, what it's like to be in a board meeting of Berkshire Hathaway. You've got, for a long time, you had Charlie Munger, you have Warren Buffett still there as the chair, and you've got other people now on the board. Do people ever say, Warren, you're wrong on this? Or Charlie, you don't really know what you're talking about? Does that ever happen?
The difference on the inside versus the outside is really very limited. In other words, this is a company that's valued transparency, candor. I mentioned Warren and Charlie, their ability to teach. And so I would say there were no surprises being on the inside versus the outside because of that culture. I would say the one difference of nuance is it's just amazing how much Warren and before Warren and Charlie together think about the durability of the business, how much they think about risk, how much they are determined that they are trying to build something to last, and the sense of responsibility they feel to their shareholders, the people that have their life savings in it. And that was one of the big lessons from Charlie in terms of our business, was to really reinforce this culture of stewardship.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg. We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller, looking at futures that are mildly higher after we punched through 6,600 yesterday, again to an all-time record. You can see futures are up just about 1/10%, not quite that. A little bit more on the NASDAQ as tech stocks are moving higher, and the Russell futures are down. I should note that the 10-year is just creeping down a little bit as well at 4.04. Here at the New York Stock Exchange, you've got Ralph Lauren, some kind of leadership team there. They've done well. The stock has more than quadrupled over the past 5 years, and the CEO is there as well, Patrice something French, as you would expect from Ralph Lauren. Down at the NASDAQ, you've got kind of the opposite going on. Eric Trump ringing the opening bell with American Bitcoin. He's deep into crypto, also still works obviously for the Trump organization, and that Trump family is absolutely cleaning up, just making a killing. Danny, what are you looking at?
Someone else making a killing. Larry Ellison probably adding, I don't know, another 10 billion to his wealth today. He added 10 billion yesterday. It's about the TikTok deal. Oracle surging up just under 4%. CBS News reported that it could play a crucial role in a TikTok deal between the U.S. and China, the structure of which has not been yet reported on, but Matt Trump saying moments ago that a deal has been reached with what he calls a big group of investors.
Yeah, and apparently Oracle working with TikTok to secure its data for quite a long time, which Carolyn Hyde and the Bloomberg technology team know a lot about, but we're just learning about. Tesla extending gains as Elon Musk says he's back at work. He's planning to go and check out a data center. He's going to talk to the robots team on Friday night. He's going to look at production of the actual cars. He's just doing a ton, and he put his calendar out on Twitter for you to see it if you don't believe it. So those shares continue to power higher as well. He's back in the #1 slot in terms of the richest man in the world. We are back with Citi's U.S. equity strategist, Scott Kroner. Let's talk about this rally, Scott. I mean, it's easing off a little bit today, but still looking at green arrows on the S&P and the NASDAQ. Do you think that this economy, maybe with Fed cuts, is going to do better, expand more than we may have expected previously?
I think that's the setup, Matt, and that's the way we're thinking about it. We still have been arguing for some time now that the equity markets are discounting something approaching soft landing, if not Goldilocks, where you get rates coming down as I think the Fed can get more close to a neutral policy perspective. At the same time, underlying economic conditions remain fairly supportive of fundamentals. The issue, very simply for us, is what's priced in at a given point in time. And as we pushed higher to this latest run up to 6,600, we just get a little bit nervous that in the very short term, meeting implied expectations is going to be a bit tricky in that Q3 reporting period. But the structural setup, I think for our perspective, it's all systems go.
When it comes to what's priced in, it is at least a bond market that's pricing in 5 rate cuts by next summer. Scott, if you go back to the last time we had a rate cut by the Fed, it was last December, and stocks sold off 3%. It was dots that suggested we wouldn't get as many cuts as the market was hoping for. Is there a risk that that happens this time around again?
I think there's that risk, Danny, but I think the way we would come at it is, you know, where are we in the Fed cycle? I'm not sure that you could even really call this a cycle, but as you know, we've gone 9 months now without a Fed cut. I do think here the messaging is important. And again, I'm going to come back to this point. What I think we really want to see is Fed moving towards neutral. And that's an important starting point. And then I think the market is discounting, but we're still far away from getting to a point where you would say the Fed is actually accommodative in trying to stimulate activity. So somewhere in here, when you're talking about moving from still modestly restrictive, which Chairman Powell has mentioned, going back to Jackson Hole, to something more neutral, that's still setting you up for a little bit of economic sensitivity, right? And so we just have to be aware that this path from restrictive to neutral is different than from neutral to accommodative in terms of how the market begins to price in ultimate recovery.
Scott, you have been, among other things in your career, really a pioneer in the ETF space. And I wonder which ETFs or which areas you like right now. One of the things President Trump has been, one of the reasons President Trump has been pushing for rate cuts is that he wants to reinvigorate the housing market, wake it up. Do you think that is, for example, a possibility? Has the market priced that in already?
I don't think the market's fully priced that in, Matt, because we're talking about Fed funds, which is a far cry from where mortgage rates are, right? And so part of the issue here, and this is sort of a city house view, is that you're going to get Fed rate cuts. Let's say in our view, it's 5 consecutive 25 basis point cuts between this week and next spring. But that's still against a backdrop where the rate curve is expected to remain steep. So getting from lower Fed funds rates to a more stimulative mortgage rate circumstance is a little bit less visible right now. The market's begun to price in expectations that's going to happen, but that's going to take more time. That's going to take more time. The what-if work we've done on this is that when you get Fed rate cuts associated with a steeper curve but more negative economic conditions, that actually sets up better for the home builders because you get more quickly to that expectation of rate relief and recovery out the other side. We're not there right now. So this broadening play into traditional rate sensitives, I think it's going to take a little bit more time. It's not going to be a first Fed rate cut. It's going to take that second, third, maybe fourth or fifth cuts from this starting point to really begin to give that stimulative effect. And that's sort of an early 26 time frame.
Scott, what do you think about small or mid-cap ETFs? I mean, is something there that you like? Because a lot of people have lost money betting on the littler companies and, you know, as the big mega cap tech stocks power this rally. But I know that you're partial to SMIDs.
Yeah, so Matt, you mentioned earlier in the last question, what do you think from an ETF lens? And so what's happened in this market is that the small mid-cap space is really interesting. It's typically, from a trading perspective, via the ETFs, viewed as your risk-on, risk-off, but more importantly, economic sensitive risk-on, risk-off trading vehicle. So when you watch the small cap action right now and you see the rally that we've seen in recent weeks in anticipation of potentially a more stimulative Fed, that's where this discussion goes. Small cap really, really likes an early cycle condition where you come off of, let's call it a weaker economic circumstance, and you get Fed accommodation, and then out the other side is a more aggressive fundamental re-rating. We're not there yet with SMID, but what you do have is a more attractive absolute and relative valuation setup. So legging into SMID here, small cap in particular, makes a lot of sense from our perspective. But in terms of that coast is clear call, we think that's probably a second, third rate cut discussion later in the year.
Scott, you just saying this has me thinking about financial conditions. If you're getting a more stimulative Fed, you're going to get tax refunds from the one big beautiful bill. And on top of that, we already saw stronger than expected retail sales. And as Matt Klein over at the Overshoot has been pointing out, this is an American consumer, an American household that has enormous financial firepower at their disposal right now. If conditions loosen further, what does that do to this market? What sort of sugar rush could we get?
Like Danny, I think we're sort of in sugar rush mode. I think I mentioned this earlier. If you look at the move we've had since the Iran bombing, which is 3 months ago now, it's crazy. But you've seen a 10, 11% S&P move. You've seen volatility metrics, whether it's for the stock market via the VIX or the RVX, crude, currency, interest rates, volatility's come down. That's been part of this surge that we've had recently. What I come back to, though, is that when you look at that income distribution, and this is really important to your question, our work on it suggests that the top half of the income distribution is essentially a net saver. The bottom half's a net spender. So when you look at these Fed policies and other President Trump-related administration policy effects, we think of it in terms of who benefits, who doesn't. What's so interesting about this is that top half is also where the equity assets are held. It's also where the money market fund assets are held. So that top half has actually benefited from rising rates. You're getting more interest income monthly on, let's say, your money market funds or deposits. As the Fed eases, that begins to lessen a little bit. So you get a little bit different discussion in terms of who benefits from this point going forward. I just want to come back to this point is that we don't dismiss. We think the Fed should be easing here, but historically, it takes a series of Fed rate cuts before you really, really get that stimulative effect that I think we'll be looking at going into 2026.
Also speaks to the lag you were saying in the housing market, too. Scott, this has been fascinating. Thank you so much for joining us. Citi U.S. equity strategist Scott Kroner. All right, a quick check on your markets this morning. 10 minutes into your trading day. What is moving us higher? We are moving higher this morning by 0.03%, but hey, that's still a record, so we'll take it. It is a push and a pull of tech on both sides. It is Oracle up 5%, just under that amount, with the TikTok deal seemingly something being agreed, something likely involving Oracle. So it's the big tech players, Aura, Meta, Apple, Amazon, Tesla. Again, Tesla still rallying despite that probe over their car doors because Elon Musk is home, and I'm not saying the full quote, and I refuse to. Meanwhile, on the other side, it is NVIDIA dragging us down. No real catalyst here, but again, it's tech on the top and tech on the bottom, just sort of as a function of how highly weighted these stocks are. If you flip it up, though, and look at the individual sectors, it is energy that is leading us higher. Oil prices are moving up this morning. You had President Trump saying to reporters just moments ago that Europe really has to stop buying Russian oil. There was also a Ukrainian attack on a Russian oil refinery overnight too, so that pressuring oil. So energy's up, discretionary staples, the consumer sector also higher after that stronger than expected retail sales, and it is some of the bond proxies at the bottom, Matt. Financials and utilities, the worst performing sectors.
All right, great wrap up there. We're going to continue following this market for you, especially Oracle, absolutely surging this week on, well, the possibility of its role in a TikTok deal is one of the things, but one of the other things is that it's really emerged as one of the big cloud winners in this AI data center build out. Larry Ellison has reigned supreme, especially in his let's say, closeness to the President of the United States of America and Stargate. We'll break it all down for you. Next, this is Bloomberg Open Interest.
When we looked at the businesses in the UK and the business in Switzerland, is our view that those businesses are subscale, and the amount of capital that it would have to go into those businesses to get it up to scale to meet our strategic ambitions would be misplaced. SPAR being where it is and how competitive the South African market is, we really just want to refocus on our home markets. Our liquor brand, Tops, has been around for also about 25 years. And through independent retailers, we've become the single biggest retail liquor brand in this country. Our business has the ability, and our independent retailers have the ability to compete directly with the chains. And we are now the second biggest supermarket brand in this country.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
It's an honor to have him as king, and you know I think he represents the country so well. I've watched. He's such an elegant gentleman, and he represents the country so well.
After Robert Redford passed away today, did you hear about that?
Wow.
He was apparently in his sleep at his home.
Well, that's a good way to go, I guess. But I'll tell you, Robert Redford was great. He had a series of years that there was nobody better. This just happened, I guess, huh?
Yeah.
Wow.
The guy that caught Utah in his sleep.
Yeah.
And what movie would you say you liked the best in?
Well, you have a lot of them. Honestly, I'd say he made 7 or 8 great movies. They were really great. There was a period of time when he was the hottest. I thought he was great.
On TikTok. Well, TikTok goes dark. Are you going to delay the TikTok ban?
Well, we have a deal on TikTok. I've reached a deal with China. I'm going to speak to President Xi on Friday to confirm everything up. We made a very good trade deal, and I hope good for both countries, but a very different deal than they've made in the past.
What companies are going to buy
We'll be announcing that. We have a group of very big companies that want to buy it. And, you know, the kids wanted it so badly. I had parents calling me up. They don't want it for themselves. They want it for their kids. They say, if I don't get it done, they're in big trouble with their kids. And I think it's great. I hate to see value like that thrown out the window.
So on auto, can I ask you, so auto executives...
You know, you're talking about tens of billions of dollars.
Some auto executives are concerned that compromising the 15% for auto tariffs coming in hurts American automakers. What do you say to...
Well, I haven't compromised anything. Where did I compromise?
Going down to 15% from 25.
Going down to 15%.
From 25.
We charge, well, and where did the 25 come from? It came from there. Can you tell me? Just so you know, they paid nothing for years. Now they're paying 15%. And some things can pay more, like chips could pay more. Pharmaceuticals could pay more. You know, there's a bigger margin. With a car, you have to make 15% before you make a profit. It's pretty tough. So, but we had a good deal. Don't forget, European Union is paying our country because of tariffs $950 billion. Think of that. We're talking about a year. $950 billion. Japan is paying us $650 billion. These are countries that paid us nothing until I came along. And China's paying us a tremendous tariff. You know what the tariff is, right? You know what the tariff they're paying us? What?
Yeah, so it's 30% for the fentanyl as well as whatever for the 301s.
20% for the fentanyl. But the overall is about 55%. Okay? That's as opposed to nothing. Would you say that's a difference? We have a big decision coming up, and if the Supreme Court rules the way, hopefully they will, because, I mean, every legal expert said we win that case, but you still have to watch. And the Supreme Court's been terrific. I think they're very fair. All I want is fairness, and we win. But if we win the Supreme Court case, which is the finalization of tariffs, we will be by far the richest country anywhere in the world, and we'll be able to help our people more, and we'll be able to help other countries when we want to. But I will say, if we win that case, our country, you see what we've taken in just on a temporary basis. We've taken in trillions of dollars, trillions with a T, and we will be by far the richest country in the world. There'll be nothing close. And, you know, one other thing, we'll have tremendous power to negotiate. The use of tariffs, I settled 7 wars. 4 of them was because I was able to use tariffs.
Hopefully, the other day in the interview, criticized the fact that some CEOs make hundreds of times more in salary than average workers. He's worried about polarization.
Yeah.
Do you share that concern?
Well, I do say there's a big gap. I do say that. Don't forget, I'm a popularist. There's a big gap.
Mr. President, it's been a month since a month on. Do you think that meeting accomplished what you hoped?
Yeah, accomplished a lot, but it takes 2 to tango also. You know, those are 2 people, Zelensky and Putin, that hate each other. And it looks like I have to sit in the room with them because they can't sit in the room together. There's great hatred there. But no, that meeting accomplished a lot.
Mr. President, you don't have confidence in Patel. What are you hoping comes from his testimony on the Hill today?
Well, first of all, I think that Pam Bondi has done an unbelievable job, and everybody agrees with that. And Cash, if you take a look at what he did with respect to this horrible person that he just captured. He did it in 2 days. It took other similar cases 4 days, 5 days, 4 years, if you look at certain shooters. Now, I have confidence in everybody in the administration. My administration, and a lot of people are saying it, not just me, It's so far the best administration ever formed. You look at our financial people. Our country is making a fortune. We have to keep tariffs because our country is become successful because of tariffs. We have the case in the Supreme Court. That's a very vital case for the success of our country. It's very vital to negotiate with other countries. And remember, other countries charge us tariffs. That's a very, very big case. And if we win that case, our country will be by far the richest country anywhere in the world. And then we can help our people. We'll get rid of debt. We'll get rid of everything. We can help our people, and we can even help other countries where they need it.
Mr. President, narcotics in Venezuela. Narcotics in Venezuela. President Maduro in Venezuela says that you're getting ready to invade his country. What is his message to him?
Well, I would say this right away. Stop sending Tren de Aragua into the United States. Stop sending drugs into the United States. We knocked off actually 3 boats, not 2, but you saw 2. And the problem is there are very few boats out in the water. There are not a lot of boats out in the water. I can't imagine why. Not even fishing boats. There's nobody. Nobody wants to go take a fish. So it's one of those things. But I would say to him very strongly, stop sending people from your prisons into our country. They're sending their prisoners. They've done that already. So the numbers just came out. Another month with 0 people getting into our country. And these are figured, John, with people like you that would like me to do badly. Nobody has ever done on the border like I've done.
Mr. President, what will you tell President Zelensky if you meet with him in New York?
Well, he's going to have to get going and make a deal. He's going to have to make a deal. Zelensky's going to have to make a deal. And Europe has to stop buying oil from Russia. Okay? You know, they talk. They have to stop buying oil from Russia.
Mr. President, there are some
regarded to be the wealthiest man who's ever occupied the White House.
How much wealthier are you now than when you returned to the White House?
Well, I don't know the deals I made for the most part, other than what my kids are doing. You know, they're running my business. But most of the deals that I've made were made before, and that's what I've done for a life. I built buildings, like I'm building a building here. You know where I built? You know what? You see that area? Yeah. That is going to be the greatest ballroom anywhere in the world. And for 150, so it gives me pleasure to do it for the country. And I'm paying for it. I'm paying for it. The country is not, and that's an expensive ballroom. I think it'll cost $250 million, and it will be, I think, the finest ballroom. So for 150 years, John, you know this? They've wanted a ballroom. And now they're going to finally have it. And it's going to knock your socks off.
But is it appropriate, President Trump, that a president in office should be engaged in so much business activity?
Well, I'm really not. My kids are running the business. I'm here. You know what the activity, where are you from?
I'm from the Australian Broadcasting Corporation, Four Corners program.
Well, the Australians, you're hurting Australia, right? In my opinion, you are hurting Australia very much right now. And they want to get along with me. You know, your leader is coming over to see me very soon. I'm going to tell him about you. You set a very bad tone.
Well,
go ahead, John.
When the UAE does a deal like
you can set a nicer
tone. When the UAE does a deal, what does it want in return?
Quiet.
Mr. President, what are you hearing about the operation in Gaza, the Israeli operation? Are you concerned?
Well, I'm hearing that they want to go in, and I'm also hearing that Hamas wants to take our 20 hostages, plus dead bodies. You know, they have about 32 of them, and they want to put them in the way of any attack. And nobody's happy about that situation. It came out yesterday. I'm sure you saw that. They want to, supposedly they've taken the hostage out of deep caves and tunnels, and they're bringing them, putting them on the front line. Nobody's heard of that one for a few centuries.
You saw that the UN said that Israel is guilty of genocide and have committed acts of genocide in Gaza.
They voted on that?
They have a new report out saying multiple acts of genocide.
When it comes to a vote, we'll see what happens. That'll come to a vote, but we'll see what happens.
And what do you make Pam Bondi saying she's going to go after hate speech? Is that, I mean, a lot of your allies say hate speech is free speech.
We'll probably go after people like you because you treat me so unfairly. It's hate. You have a lot of hate in your heart. Maybe they'll come after ABC. Well, ABC paid me $16 million recently for a form of hate speech, right? Your company paid me $16 million for a form of hate speech. So maybe they'll have to go after you. Look, we want everything to be fair. It hasn't been fair. And the radical left has done tremendous damage to the country. But we're fixing it. We have right now the hottest country anywhere in the world. And remember, 1 year ago, our country was dead. And now Washington, D.C. is fixed, and I fixed it. The mayor was fine. The mayor was just fine, okay? The mayor had the sick city for many years. He's been mayor for many years. The one that fixed it was me and my people, and it is so safe. You should take your beautiful wife tonight and have dinner down there. You won't be shot. You won't be accosted. You won't even be looked at incorrectly by anybody. Washington, D.C. is safe. Now we're going to Memphis, where it's pretty rough, to put it mildly. And then we're going to have to go. A friend of mine who is a big railroader, he stops at all the cities. He knows every city. He said, sir, you have to save Chicago. So I'm going to go to Chicago early against Pritzker. Pritzker's nothing. If Pritzker was smart, he'd say, please come in. So last week, over the last week and a half, 11 people in Chicago were killed, murdered, and 38 were shot. And then Pritzker, and by the way, this is going on constantly. If they lose less than 6 or 7 people a week with murder, they're doing a great job in their opinion. Chicago is a death trap, and I'm going to make it just like I did with D.C., just like I'll do with Memphis. Now, remember this. So a man comes into my office, one of the biggest businessmen. I'll tell you, he runs Union Pacific. Is that big? Biggest railroad in the world, I guess. And he started off as a railroader. He was running a railroad, a little caboose. He was in a caboose. Now he runs the whole damn thing. 45 years ago, he started off in a caboose. I don't know what that's all about. And he became the top, so that's a good place to start. But he came in. He knows the country intimately. He's looking to do a merger by another railroad, the one that where it had the little problem in East Palestine, right? And they want to buy that railroad, as you know, pretty public. But I sat with him and I talked. I said, so you know every city? Yes, sir. I go into every city, and I have for 45 years. I said, where would you go next? He said, St. Louis is in big trouble. He said, but Chicago is a great city. You can save Chicago, sir. Don't let Chicago die. This is a guy telling me with great knowledge and stuff. He said, don't let Chicago die, sir. It's dying. Don't let it die. I'm going to Chicago next.
The UAE, Mr. President. What do you think they want when you do a deal with that federal
Well, I just want something to happen, whether it's federal, state, and most likely it's going to be state. The question is whether or not we overlap with a federal judge. So they're looking at that. But the state is very competent. The governor's doing a very good job. As you know, they have the death penalty. It's a tough death penalty, too, as you know. But they have the death penalty. So as to whether or not we judge, we will be working with them. We may or may not be able to judge.
And when it comes to the governor of Utah, what do you make of his overall message of nonviolence?
Well, I agree with it. I agree 100%. But most of the violence is on the left.
Social media is a cancer.
What?
Do you agree with that? The Utah governor said that social media is a cancer and more people should log off and take some time away.
Well, it's not a cancer in all respects. In some respects, it's great. But there are segments. There are deep, dark holes.
President Trump there speaking to reporters a little bit earlier as he heads to the UK to visit with King Charles. He touched on as many subjects as you would imagine he did, from Israel and Hamas to Zelensky and Putin. He made some headlines here. We thought or only had read about so far 2 Venezuelan boats that the U.S. Forces bombed out of the water. He says they've actually bombed 3 Venezuelan boats. And he actually claims that the U.S. has now taken in trillions, with a T he specified, from tariffs thus far. But at least from Treasury Department data, I see a much smaller number.
Yeah, the latest data over the past first 11 months of the fiscal year, tariff revenue was about $172 billion, so a significant less amount than trillion with a T. The other news item he perhaps made is that the Australian Prime Minister is coming to visit soon, talking to an Australian reporter too. He also talked about geopolitics, that Zelensky and Putin hate each other.
Purchasing Russian oil, and they've got to stop immediately. Not fair to us. they're purchasing Russian oil, and we have to, do things. Now, the nice part, it doesn't cost us anything anymore. You know that. Yeah. They are buying everything from us, unlike Biden, who gave away $350 billion. We actually make money, but I don't want to make money. You know what I want? I want that war to stop, because last week, 7,018 people got killed. Thank you.
Russia was targeted today, just now. You know, 70 patriots in Ukraine 2 months ago.
Where are you from?
Ukraine.
Yes.
Will they come, and do you know when there will come? The patriots.
What? Who comes?
The patriots. You announced 70 patriots to Ukraine 2 months ago.
Look, let me just tell you, I love Ukraine. I love the people of Ukraine. That's why I asked. I thought that was a little Ukrainian accent, but the country's in serious trouble. It should have never happened. It's a war that should have never happened. The country's in very serious trouble, but I'm going to get it stopped. I've done seven countries. I've stopped 7 wars in the last 8 months. I thought that would have been the easiest because I know Putin, but it's not, because there's tremendous hatred between Zelensky and Putin. But we're going to get it stopped.
How soon will you go to the Supreme Court to stop Lisa Cook?
The President of the United States, before his trip, we have just seen on a separate feed Air Force One, an accompanying plane on a most important trip. You heard the President talk about the significance of Windsor Castle. He will observe Queen Elizabeth's grave, among other events with King Charles and, of course, with the Prime Minister as well. Lizzie Burden and Anne-Marie Horton will provide coverage across all of Bloomberg for that. This is a joy. I've never done this before as we move to the 10 o'clock hour, and it is with Scarlett Fu, who has always been surveillance celebrity lodestone.
You're still tying me back to surveillance, right? Like, that's my...
No, but I mean the celebrity level of it. And when you have Stacey Vanek Smith with you, in her encyclopedic knowledge of Rumi Mira Zoe and K-pop Demon Star, I mean, what Stacey Vanek Smith, Max wasn't going to allow this on a podcast, but you did K-pop Demons?
K-pop Demon Hunters, yes. Huge hit on Netflix, which has kind of surprised everybody as the movie of the summer. That's very kind, Tom. Thank you.
This is like Nirvana. I mean, it's killing it on Netflix.
It is. It is.
Good morning.
Good morning.
There's
How
a
are you
Fed
doing?
meeting tomorrow.
Oh, is there?
Yes.
I hadn't realized.
We'll have to see. Scarlett Fu, folks, with Bloomberg Intelligence to get you to the noon hour. Good morning.
All right, I'm going to take it from here. Thank you so much, Tom Keene, as we sign you off, and he gets ready for the Fed's two-day meeting. And, of course, they culminate with a decision tomorrow. He will be on Bloomberg Television, Bloomberg Radio to cover all of that for you. In the meantime, I'm Scarlett Fu here with Stacey Vanek Smith. Paul Sweeney is off for the week. We have a packed 2 hours coming up for you of Bloomberg Intelligence, starting with Ira Jersey, Bloomberg Intelligence chief U.S. interest rate strategist, on the retail sales report and how it sets up this Federal Reserve. Anurag Rana, Bloomberg Intelligence technology analyst, on what kind of role Oracle will play in this TikTok framework that the U.S. has agreed to with China. Steve Sosnick will be joining us of Interactive Brokers to discuss the latest in the markets, including all the speculation of whether companies might move to a 6-month reporting schedule versus the current 3 months. And then Henrietta Trey's a managing partner and director of economic policy at Veda Partners on the top political stories, starting with the president's trip to the UK. But first, let's get everything started with Lisa Mateo with our Business Flash.
You got it. This Bloomberg Business Flash brought to you by IBKR. Will December 2025 CME E-minis S&P Future Index futures settle above 6,200 on September 30th, 2025. At IBKR Forecast Trader, the yes recently at 80%. Start predicting today at ibkr.com/forecast. The last trading day for this contract is September 30th. Well, traders, they were in a wait-and-see mode. This is ahead of the Fed's expected first interest rate cut of the year. Now we're starting to see things drop just a bit. The value for retail purchases, that's the eco data that came in too. It's up 0.6%, which was a little bit higher than expected, but on target with July's number, which was revised up. We also had a look into import prices for August. That expectation was for a 0.2% fall. It came in with a rise of 0.3%. Now that prior, it was revised down to 0.2%. So we'll go to the markets. The NASDAQ now little change, down about 12 points. The Dow down 0.4%. 183 points, and the S&P 500 down 0.1% or 7 points. We go to the yield space. The 2-year yield 3.51%. That's down 2 basis points. The yield on the 10-year 4.03%, and that is little change. To commodities, we have gold extending its rally. We have COMEX up 0.3%, $3,732 an ounce. We go to the WTI crude on oil, $64 a barrel. That's up more than 1%. To currencies, we have the dollar retreating against all major currencies. This is to the lowest since July. The Bloomberg Dollar Spot Index down about 0.3%. Some tech news to tell you about. We'll start with Alphabet. Google, their shares, they're down 0.5%, but it joined this elite group of companies valued at more than $3 trillion yesterday. And then we had some more news. Google saying it's going to spend $7 billion in the UK over the next 2 years. And other tech news, that would be Oracle. Its shares are up about 3.5%. CNBC saying the company's going to keep the TikTok cloud deal under a new agreement that could close within the next 30 to 45 days. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Stacey and Scarlett.
All right. Thank you so much, Lisa. We'll check in with you in a little bit later on. As we were just hearing, the president was exiting the helicopter, about to board Air Force One on his way to the UK for a state visit. Let's bring in Tyler Kendall, Bloomberg's Washington correspondent, for more on what we learned from the president as he made his remarks. Tyler.
Yeah, hey, Scarlett. Well, as you said, President Trump is headed to the United Kingdom for this state visit. He started by speaking very highly of the king there. This is his second invitation, something that President Trump really touted. But it was interesting to hear him say that the United Kingdom is actually looking to refine, in his words, the trade deal that's currently in place. We know the UK was able to secure that preferential rate of 10%. In fact, it was the first trading partner to actually secure a deal. But there have been disagreements when it comes to the steel quota and some of the sector-specific tariffs with the trading partners. So I'll be watching to see if we get any sort of movement or development there, as the president really previewed. He also pushed back when it came to tariffs against a reporter, saying that automakers are upset at that 15% more preferential rate that really has been intertwined into a lot of these big deals like South Korea and Japan, the European Union. The president saying that ultimately he stands behind that policy position. I will say that as he makes his way to the United Kingdom, he's going to be joined by his Treasury Secretary, Scott Bessent, who is already in London off of those talks in Madrid over the weekend. And the president reaffirmed that they have a deal for TikTok. But of course, we're still waiting for additional details there. How is it going to be structured, and whether or not it's going to satisfy those national security requirements under the U.S. law that was the divest or ban law. But the president did tell reporters that he appears happy with this deal. He said that there's a group of companies that appear to want to buy TikTok. We know that's, of course, going to be at the center of his discussions with Chinese President Xi Jinping on Friday. And then, Scarlett, I will quickly just add that the president also spoke about the Fed, the big day tomorrow, saying that he intends to congratulate Stephen Myron after that Senate confirmation last night. He said that he thinks the Fed should be independent, but that the Fed has a choice tomorrow. We know President Trump has been advocating for what he calls a big cut.
And what do you see as the primary, I guess, outcome for this visit? Like, what are some of the top issues that we should be looking for as this unfolds?
In the United Kingdom, well, we know that this is a very close trading partner, but also that the Prime Minister, Keir Starmer, has a relatively warmer relationship with President Trump. There's a few different threads that we can pull on. Of course, I just outlined what has to do with our trade relationship with them, but we're also closely watching how we know that the U.S. is actually pushing some of our European allies to impose those so-called secondary tariffs on trading partners that import Russian energy supplies, such as India or China. The U.S., of course, has already taken those moves against India, but so far has held off when it comes to China. So I would expect some conversations, particularly around the war in Ukraine, to also come to the forefront, since we know that the UK has also spearheaded some of those moves to really be a leader when it comes to those outstanding security guarantees that need to be resolved in order for there to be some progress when it comes to these peace talks. But really, there's a lot of pageantry too that has to do with this. President Trump very flattered when it comes to this this invitation from the king for his second state visit.
He's also going to be meeting with the Prince and Princess of Wales as well, so that's a big part of it. I know he's been talking that up. Tyler Kendall, thank you so much. Bloomberg's Washington correspondent joining us from the Bloomberg newsroom on the president's comments before he heads to the UK. In the meantime, let's take a look at some stocks on the move. You have the major indexes lower. I'm Scarlett Fu with Stacey Vanek Smith, and we're joined now Bloomberg's Christine Aquino. And Christine, we got to start with Oracle again in the news.
Exactly. We have to start with Oracle. So those shares, ticker ORCL, up at the moment, enjoying a nice healthy gain of more than 3%. And this is because we did get a report from CNBC that Oracle will keep its TikTok cloud deal under a new agreement that could close within the next 30 to 45 days. Of course, this is related to comments as well from Treasury Secretary Scott Bessent, also on CNBC earlier, saying that he anticipates that President Trump and Chinese President Xi Jinping will agree on a final TikTok deal during their phone call on Friday. Now, Bloomberg Intelligence analysts weighing in on this as well. So they're saying that Oracle will likely restrict its role to providing cloud services and ensuring that no TikTok data flows back to China under any potential U.S. agreement tied to a deal. Because remember, this is the sticking point, right? Between the two leaders, how much data is TikTok really collecting from U.S. citizens? And that's something that has been touted by President Trump and the Trump administration as a potential national security issue. So we'll see what gets ironed out in that phone call on Friday. Analysts also saying that they do see a low likelihood of an equity investment in this potential involvement.
And what about shares of Hershey? They're having a very sweet morning.
Yeah, absolutely, Stacey. So Hershey shares up at the moment, ticker HSY. They're currently up more than 2%. And that's because they're enjoying a double upgrade at Goldman Sachs. And so it's now ready to buy. And also Goldman raising their price target to $222, which implies a 20% increase from Monday's close. The analysts there are saying that market share trends are improving. There are incremental tailwinds ahead. They say that there's also, well, Hershey has enjoyed historically a nice pricing power linked to its portfolio, right? A lot of people very specifically crave their brands. And so they're saying that, analysts are saying that the announcements in pricing, that's expected to drive outsized growth in the next fiscal year. And also cost pressures from tariffs, as well as the increased price of cocoa, are better understood now.
All right. And Christine, very quickly, the final stock you're watching for us is Warner Brothers Discovery, down almost 9%.
Absolutely, Scarlett. So ticker WBD down, as you say, almost 9%. That's because TD Cowen downgraded a stock to hold from a buy. They're also saying that the share increase that it enjoyed last week because of a potential Paramount Skydance bid for the company has just taken a price target beyond what is justified by fundamentals.
All right, Christine Aquino, thank you so much. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's head over now to our very own Ira Jersey, who is our go-to chief U.S. interest rate strategist on the latest eco news and how it folds into how the Fed determines its next couple of steps. Ira, we had retail sales, which showed that consumers are spending quite a bit. What does this tell us, or what does this tell the Fed about the state of the consumer and therefore the economy?
Well, it makes things a little bit more challenging, right? After we had the payrolls data and some of the jobs report, what we saw in there was, yes, job growth is slowing, but wages were still okay. And the wages, so the people who have jobs have more money, and the people who have more money then are going to spend at least a portion of that. And that's some of the things that you've seen in the retail sales report. Remember, the retail sales report is in nominal terms. So one of the reasons why you see some of this growth is because prices are a little bit higher, right? And so if you take out real retail sales growth, it's still positive, but it's not nearly as positive as it has been in the recent past.
What do you think the implications of this are going into the holiday season when a lot of retailers make fully, a third of their revenue for the year?
Yeah, it's an interesting question because as long as people feel comfortable that they're not going to lose their job, then spending can wind up probably continuing at a reasonably good pace. And again, especially if you have the Federal Reserve cutting interest rates, maybe that will give a certain number of consumers a little bit more optimism maybe to buy on credit or, layaway, all the new ways to finance some purchases. So I suspect it will be okay this year. Ultimately, I think from a broad economic perspective, it is going to be, people's sentiment, not the sentiment that you see in the surveys, because people are not necessarily feeling good about the future expectations, but you haven't seen that in the hard data. So things like retail sales. So I think things like the Federal Reserve cutting interest rates, that'll probably keep spending up for a little bit longer than it might be otherwise. But I think that the Fed will have to continue to cut interest rates. I think that you can't have job losses, right? Those types of worries and fears among the consumer is really what could drive spending down very quickly.
Yeah.
I don't think we're quite there yet, but that's probably a 2026 type of event that the Fed's trying to avoid. And one of the reasons why, not only will they cut tomorrow, but we think that they'll probably cut another 3 times before they reevaluate.
And Ira, we know that Stephen Myron, who has been confirmed as the new Fed governor, will be attending his first FOMC meeting today and voting tomorrow as well. Are we anticipating that he's going to vote for a 50 basis point cut?
Yeah, I would imagine. I think that the market is thinking that he's going to dissent if they don't cut 50 basis points, which we don't think that they'll do. But he'll, but at the same time, that just solidifies the idea that the Fed is going to cut and maybe have a string of interest rate cuts. We also have Lisa Cook is going to be there, so she
at least for now, right?
Yeah, well, for now, yeah. But in the past, she's been rather dovish. So I don't think that there'll be any dissents for no cut, but there, might be 1 or 2 dissents for, hey, we should have cut a little bit more aggressively. You had Governor Waller and Governor Brainerd last time dissent saying that they should have cut interest rates in July. So they might be in the Myron camp, right? They might be in the camp of, hey, we should cut 50 because we should have cut last month, and some of the data points to that.
What kind of a reaction do you expect if the cut is indeed a little bit more modest? Do you expect it will have a big impact on the economy and on markets, or pretty muted?
Well, what we're going to be looking at is 25 basis points is baked in, right? So if the shock would be if they go something different than 25. It's going to be the summary of economic projections and that dot plot that I think is going to drive the rates market quite a lot, and that will bleed into the equity market and other risk assets. The reason being is that if the Fed, if we look at the 2026 dot, everyone for some reason has been asking me today about the 2025 dot. I don't care about the 2025 dot. It doesn't really matter if they go 50 or 75 on the dot plot. It's where do they think they're going to go to next year that I think is going to matter. And when you look at 2-year yields and 10-year yields, it's the next year's meeting and end of year dot that winds up mattering in moving markets. So do they expect to be more aggressive than they suggested that they were going to be back in June, or about the same? And I suspect it'll be more aggressive.
All right, Ira Jersey, Bloomberg Intelligence chief U.S. interest rate strategist, on the latest eco data, which included retail sales better than expected ahead of today's Fed meeting and tomorrow's Fed decision at 2 p.m. Wall Street time. This is Bloomberg Intelligence on Bloomberg Radio. Keep it right here. Scarlett Fu and Stacey Vanek Smith with you for the hour.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Well, we've got a mix of red and green on the screen, but little movement. This is after retail sales rose in August for a third month. So we have the NASDAQ up about 3 points. The Dow down 0.2%, 131 points. The S&P 500 little change, down about 3 points. The two-year yield 3.51%. That's down 2 basis points. The yield on the 10-year 4.03%, and that is little changed. The Bloomberg Dollar Spot Index, that's down about 0.4%. Among the companies reporting this week, we'll hear from General Mills, FedEx, and Lennar. After the close yesterday, well, we heard from entertainment and restaurant chain Dave & Buster's. Their shares taking a hit, down 17% still. Second quarter adjusted earnings per share revenue came in well below estimates. Another stock on the move, that would be online comics company Webtoon Entertainment. Their shares are up 27%. The reason why? Well, Walt Disney, they want to bring in all of its marquee comics to a new digital platform and app. So it says it plans to acquire a 2% equity interest in the company. And finally, Tesla in the headlines again today. This time it's for issues with the electric door handles of that certain Model Y vehicles. Could trap people inside when it loses power. U.S. auto safety regulators, they are investigating that. And it actually comes days after Bloomberg reported on this very issue. For on-demand news 24 hours a day, you can subscribe to Bloomberg News now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Stacey and Scarlett.
All right. Thank you so much, Lisa. That was a great story, by the way, by Bloomberg News.
It was. And we had someone in the studio, the author of it, talking about it. It was incredible. The personal stories, really heartbreaking, some of them.
Yeah. So we're going to continue that and do a follow-up on that with our Bloomberg Intelligence analyst on auto, Steve Mann. But that's coming up in a little bit. In the meantime, let's talk a little bit about AI tech-related companies. And I know that's so general and vague, but that's how I feel like you kind of encompass all of them. CoreWeave says its shareholder NVIDIA has agreed to buy cloud services valued at $6.3 billion, which sounds like a lot of money, but I think in this space may not be. Let's bring in Anurag Rana for us. He is Bloomberg Intelligence Technology Analyst to talk a little bit about this AI infrastructure demand. And Anurag, why is this cloud contract with NVIDIA important?
So the reason why it's important is because CoreWeave is considered a neo cloud, or a cloud without a, you could say a backing like, what we have from Amazon's other businesses or Microsoft other businesses. So the two risks people think about CoreWeave is, what if tomorrow the demand for AI cloud infrastructure drops or pricing drops? This deal basically says, for the next several years, if there is any unused cloud capacity for CoreWeave, NVIDIA will come out and take that. So I think this is, another way of telling the investors that, please don't worry about the demand for AI infrastructure. The parent of it all, which is NVIDIA, who's selling the chips to CoreWeave, will take care of the demand if there are any issues.
Do you think that the amount of cloud space that AI will require will be smaller than we think it is? I mean, certainly that shook the markets a couple of months ago.
Yeah, well, at this point, there is more demand than capacity, which is why there is a big rush to create new data centers, install those new chips, create new networks, and go out and start to build applications that are AI enabled. Now, having said that, people have seen this movie quite a bit back in the 2000 era when there was a glut of infrastructure built for internet, but then suddenly in the next 2 to 3 years, there was a drop in demand for that time. And this is what a lot of investors are fearing. And that's, I think, the big overhang on the space, that at this point, everybody's happy. 2025 is great. 26 is great. But what happens after that is the big question mark.
Yeah, well, everyone has to get anxious about something, so we might as well look out to 2027 at this point. Anurag, let's talk about another company. You mentioned NeoCloud. Nebius plans to raise $3 billion in convertible notes and equity to help it expand. This follows a major deal to provide AI infrastructure to Microsoft. Is Nebius also a NeoCloud company?
Yes, absolutely. It's the same kind of company. They are being funded by, private credit, by investors, private investors, and they are creating a similar kind of a cloud infrastructure. And, what's happening with Microsoft is there are two things that are important for people to understand. One, they run ChatGPT instances, which is when I'm tweeting or I'm looking at anything on OpenAI ChatGPT, those workloads are running on Microsoft's cloud infrastructure. It is lack of capacity. So it's going out to neo clouds like CoreWeave and now Nebius to say, I will buy that capacity for you as long as I can need it. So it's Microsoft CapEx, but it's under leasing. Second aspect is Microsoft is basically saying, I don't want to build a lot more capacity for training of my models. I'm going to outsource that. So which is why it's good for those neo clouds. If Microsoft is going to spend that money, it's going to do rental from these cloud providers rather than building some of it in-house.
Jumping now to Oracle, they're having a very good morning, and a lot of that has to do with the President Trump, announcing this morning, or hinting anyway, that Oracle might be involved in a TikTok deal. Can you talk a little bit about that?
Yeah, to be very frank, I was a bit surprised about the stock reaction because I think it was very clear back in January that TikTok would be running in the US and Oracle will be the cloud provider on the back end. So when, similar to what I just mentioned on Microsoft Cloud, if somebody goes on TikTok and is running that application, Oracle runs the back end of it, or the Oracle cloud infrastructure, and that revenue was argued up for loss under the previous administration if TikTok was to be closed. But it seems back from January onwards that the president keeps on extending the ban on it, and Oracle's still making the money off it. The big question is if there is a buyout that's led by U.S. companies, will Oracle have any equity stake in it? And we think it doesn't need to because it's already looking for so much of expansion capacity for its cloud infrastructure because of the OpenAI deal. So we don't think that's the case, but frankly speaking, nothing surprises us anymore.
That's a good way to end it. Anurag Rana, Bloomberg Intelligence Technology Analyst. Nothing surprises us anymore on the AI infrastructure demand, which seems never ending, at least for now. All right, let's take a look at the markets right now because the NASDAQ is still, or the NASDAQ 100 is on course for its 10th day of gains. The S&P 500, however, backing away from a high. So I want to bring in Steve Sosnick, the chief strategist at Interactive Brokers, to talk about what's ahead once the Fed moves ahead with its expected rate cut. There's two camps. Michael Hartnett of Bank of America says global stocks are seen extending their rally. He sees bulls galore everywhere. Then you've got strategists from Morgan Stanley, JP Morgan, Oppenheimer Asset Management talking about how the record run in stocks may run out of steam after this rate cut. Where do you stand?
I think I stand in the latter camp, Scarlett, and good morning. The reason I say that is, we have been on this tremendous run, and I'm not going to discount the statement that there are bulls everywhere because there are bulls everywhere. Under every rock, in every crevice, there are bulls. But I think what we need to remember here is inflation is not cooperating. It isn't. I put out a piece last week on our website, which you can find at IBKR Campus, that very quietly, core PCE and core CPI for four straight months have been rising just ever so slightly. And the core CPI number that everybody celebrated last week of 0.3, it was actually 0.346. So the tiniest little eyelash higher, and you would have had a 0.4 print, and everybody would have freaked out. So I think Powell is going to remind everybody that in the FOMC statement of long-term goals, price stability is a prerequisite for maximum sustainable employment, and I think that's going to be his little pushback against the rhetoric that he gets.
One question that has always kind of haunted me whenever these things come up is why are the markets so singularly focused on interest rates, especially when, as you say, there are concerns about inflation, concerns about the job market, a lot of other things on the horizon that don't look so great.
As I see it, Stacey, I think the thing here is that money is the main input of markets, and if you make it cheaper, it spills the benefits in so many other ways. And right now, I mean, for better or worse, these markets are liquidity addicted, and if you make the price of that liquidity cheaper, that's going to spur markets into greater and greater frenzy, for lack of a better word. And I think the reality might be that we've gotten a bit ahead of ourselves there.
All right. I want to get your take also on this story that's been percolating, which is the president pushing for semi-annual earnings as opposed to quarterly earnings. The SEC says it is prioritizing this proposal. A lot of people have said it's good for companies. It helps them save time, save money, focus on long-term strategy, forget the short-termism. For investors, though, it means less transparency and more volatility during earnings season.
Well, as an options trader by nature, I'd much rather have 4 than 2 events to trade around. On the other hand, it means that you're probably going to get much more volatility if you compress them into 2. You're going to get less guidance. One thing that sort of troubled me in the Truth Social statement was, this is something China does.
Yeah, that was an odd comparison.
And I was like, wait a minute, MAGA, is Make America Great Again really taking its lead from China? But it is something that's done elsewhere in the world as well. The UK and various EU countries do it as well. I think, to me, sunshine is the best disinfectant. And so the more sunshine that you can spread on what's going on inside a company, the better it is for you. There are some companies who are famously terrible with guidance. Google doesn't, Alphabet doesn't really offer it, and it hasn't seemed to hurt their stock price. And so I guess, yes, from a general deregulatory point of view, it's less regulatory activities that a company needs to hold on to.
It does seem like there is some merit, though, to this idea that companies chasing profit increases every 3 months does affect the way companies are run, and not necessarily in a positive way. Could there be some truth to the idea that prolonging the space between earnings statements could be helpful?
It could, and but it still means they're going to be chasing them every 6 months, which is not exactly, like chasing 5-year goals. It's just pushing out your time horizon. It's basically extending the amount of time you can look for a couple of pennies here and there in the proverbial couch cushions of the companies. So I don't think it's tragic one way or the other, and it was brought up in the first term and sort of slow walked through the first administration's end. At this point, it's going to be hard to slow walk it for 3.5 years. They're going to have to come up with a decision one way or the other.
Steve, do you think less frequent reporting would boost the IPO market?
Possibly. One of the arguments is, about companies not going public is the burden of having to report to shareholders. I still think the primary motivation for companies going public is to give an exit for shareholders, for the private shareholders to get money from outside. This way you can get liquidity that way. So I think that's still the overriding concern. But at the margin, I see no reason to dispute that, Scarlett.
Although having said that, we've had a banner last couple of weeks for IPOs. Absolutely. So it's not like the quarterly reporting requirement has really held them back all that much.
Feed the ducks while they're quacking is I think the mantra among bankers.
You're full of these great lines today.
Thank you.
Steve Sosnick, Chief Strategist at Interactive Brokers, talking about these markets. And just a quick mention of a headline that crossed. Bloomberg is now reporting that Saudi Arabia is said to explore AI deals with private equity titans like Blackstone and BlackRock. We can tell you that the new AI company from Saudi Arabia, Humane, has been in conversations with Blackstone and BlackRock. They have explored the possibility of committing billions of dollars to Humane's efforts. We will keep you posted on further developments there. This is Bloomberg Intelligence with Scarlett Fu and Stacey Vanek Smith here in New York. Keep it right here on Bloomberg Radio. The S&P 500 down 0.1%.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Matei. Well, we've got red on the screen, and this is as the Fed kicks off day one of a two-day meeting on interest rates. Now, a quarter-point cut widely expected at tomorrow's Fed decision. Fed Governor Lisa Cook is set to take part in the meetings after an appeals court blocked President Trump from firing her, and so is Stephen Myron, who was sworn in as a member of the Federal Reserve's Board of Governors. Let's get to the markets right now. The Nasdaq, little change, down about 9 points. We have the Dow down 0.3%, 150 points. The S&P 500 down 0.1% or 7 points. In the yield space, the 2-year 3.52%. That's down 1 basis point. The yield on the 10-year 4.03%, and that is little change. To currencies, the Bloomberg Dollar Spot Index down about 0.4%. We have the Japanese yen up about 0.5% at 146.61 against the dollar. The euro up 0.7% at 118.44 against the dollar. To other stocks right now, we have the Live Nation's Ticketmaster unit. That is being probed by the FTC. It's over whether it's done enough to block bots from illegally reselling tickets. Live Nation shares, they're down about 2%. And after vanishing from the public eye during China's tech crackdown, Jack Ma back on Alibaba's campuses. Sources saying he's more directly involved than he's been in about half a decade. We have Alibaba ADRs, they're up about 1.5%. And finally, shares of Chipotle, they're up more than 1% after its board approved an additional $500 million per share buybacks. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Stacey and Scarlett.
Thank you so much, Lisa. We'll be checking in with you later on. In the meantime, let's head over now to the UK and to Windsor Castle, where President Trump will be visiting shortly. He has left already for the UK. So I want to bring in Bloomberg News UK correspondent Lizzie Burden, who is right outside Windsor Castle right now. Lizzie, what is on the agenda? I mentioned that President Trump will be there shortly, but will he be stopping in London first, or is he going straight to Windsor Castle?
Well, you'll note that Windsor Castle is a different venue from the last state visit. Of course, we were at Buckingham Palace back in 2019, and this is an unprecedented second state visit for the president. You'll remember as well when Keir Starmer, the UK Prime Minister, delivered that hand-signed invitation from King Charles III when he was visiting the White House in February. And you'll remember the effect that it produced. Britain jumping to the front of the queue for a trade deal and enjoying lower tariffs than other US allies. Tariffs still there nonetheless. But look, this visit, for Keir Starmer at least, is about building on that economic relationship. And we're expecting, we hear from US officials, that Donald Trump is going to announce $10 billion worth of economic deals with the UK. That will include a tech defense cooperation agreement, a nuclear partnership. We already have the news that Google is going to invest £5 billion in the UK when it comes to AI. And the president is going to be flanked by some of the biggest tech bosses there in the US, the likes of OpenAI's Sam Altman, NVIDIA's Jensen Huang. So there is a lot on the stake on the table for the UK when it comes to the business side of the equation, but a lot at risk politically as well.
Lizzie, I'm curious about some of those risks. After all, I know steel and aluminum, that has been a huge sticking point here. Those tariffs, I believe, are currently at 25%. What are some of the risks that you see potentially going forward?
Yeah, and in terms of expectation management, we're told that there isn't going to be a reduction in the tariffs on Scotch whisky going from the UK to the US. Really, the Prime Minister needs to make sure that even if we're deploying our ace, the King, that there is substantive progress when it comes to trade. But politically, Keir Starmer, this couldn't come for a worse moment for him. He's languishing in the polls here in the UK. He's lost 3 of his government in the past 2 weeks, including the UK ambassador to the US, Peter Mandelson, because of his links to Jeffrey Epstein. And it has to be said, Epstein is the tie that binds Keir Starmer via Mandelson, the King via his younger brother, Prince Andrew, and Donald Trump himself. So that's going to make for some awkward, painful small talk. And seriously, a question to Keir Starmer at the press conference at the end of this trip Does he think that people with links to Jeffrey Epstein shouldn't be in high office? I'm sure that that's going to be something that comes up. There is also the sense here in the UK, given Donald Trump's unpopularity here, that Starmer isn't seen to be appeasing the president. And on one point of that, we have the upcoming UN General Assembly meeting in New York. If President Trump presses Keir Starmer on his intention to recognize Palestine as a state, if Israel doesn't agree to a ceasefire, that could be incredibly awkward for both sides.
Absolutely. Lizzie Burden, well said, well spoken. Bloomberg News television anchor in the UK, and of course our Bloomberg News UK correspondent right outside Windsor Castle. Let's stay on this theme here and talk a little bit about politics and policy with Henrietta Trays. Henrietta is managing partner and director of economic policy at Veda Partners. And Henrietta, let me just start where Lizzie left off on President Trump's UK trip. She mentioned that there are plenty of risks for the UK Prime Minister Keir Starmer, who is not popular at the moment. Does this trip pose any risks for the US, for President Trump at all?
You know, I think the timing is interesting. When this original invitation came from the UK, it was obviously pre-release of the Epstein letter, pre-release of the Wall Street Journal reporting that has subsequently been backed up by the New York Times. So the timing is not ideal and was obviously not intended to go in this direction. If they take questions from the press, I anticipate that they will be highly orchestrated, and any mention of the Epstein case is going to have reverberations across the pond as well, both in the UK and the United States, no question.
What do you see as some of the main issues on the table right now politically in this meeting this weekend?
The most important political one, and for the economy, has got to be Russia sanctions. It has got to be about NATO, Article 5, how the EU is being pressured to respond by imposing secondary sanctions on China and India and Brazil and anybody purchasing Russian oil. And it's going to be a really fascinating interplay to see President Trump, who has done some things to penalize Russia, such as putting 25% secondary tariffs on India, but is resisting the underbelly of the entire fight, which is to allow the United States Senate to impose sanctions via their own actions, which are going to be much more robust, much heftier in terms of signaling to Russia that Vladimir Putin has to stop the war. And I think that's got to be top of mind as we get into energy prices, electricity prices. You can't have a conversation about tech without electricity price discussion. So those issues, I think, are most paramount for the U.S. economy, for the EU economy, and for, obviously, Ukraine.
How much progress can the UK and the US, President Trump and Keir Starmer, the Prime Minister of the UK, make on that issue, which is sticky and is not likely to be resolved anytime soon?
None. I wouldn't expect any material progress. It's more a question of how they telegraph this. So what are the optics? Is it a first question kind of a discussion? Do they bring it up at all? There are a lot of things that the president would like to prioritize. That $10 billion investment piece is really what he's telegraphed going into this state visit. But really, I think NATO is front of mind for the EU, for the UK, for NATO allies.
What about some of the things happening politically around this meeting right now? I mean, it seems like quite a fraught moment in a lot of ways to be meeting. How is that factoring into maybe some of the items on the agenda?
I think that's a great question and setup, because think about the UK-US trade deal, which y'all rightly mentioned is the first one that got established, and there are lower rates for the UK than there are for the rest of the world. But the reality is we don't have trade agreements. We have no legal text. We have no finished documents with the European Union, with Japan, with South Korea, and all of the president's IEEPA tariffs are up for review under the Supreme Court of the United States. So we are in a situation here where the UK offers, through our special relationship, an opportunity for the president to tout a much more comprehensive or established trade agreement, while the rest of them, with literally the rest of the world, is in a limbo space, especially with regards to South Korea and the recent, sort of raid of the 300 South Koreans who were here in the United States working at the Hyundai plant. So it really puts in stark relief how different the UK is than the rest of the globe when it comes to these deals.
And a lot of people have credited the royal touch as one reason why the UK has been able to progress farther in its trade talks with the US. How much credence do you put into that?
I think you could see it live on TV in the Oval Office, the extension of the invitation, the opportunity to go to the palace. I think that was on vivid display for the world to see how positively the president received that.
So that being that actually triggers a couple of follow-up questions. Does that mean Xi Jinping inviting Donald Trump to Beijing will yield a favorable trade deal for the Chinese? Does India need to do something similar in order for them to finalize some kind of trade deal there?
I think those are definitely very big pomp and circumstance opportunities that the president would like to have. However, I would cherry pick the specifics, though, because there's a reason we haven't had those state visits. These things don't happen quickly. We do not have a resolution in Gaza or in Ukraine. We don't have a trade deal with China. India hasn't capitulated. And that's absent or outside of the desire to have these big state visits, which would, of course, be a great opportunity for the president to go put the American, dominance on full display. But think about what China, for example, is doing. They have not purchased any U.S. soy for the foreseeable future, which is positively demolishing the heartland of the United States. And they don't have to give on that, while the president is maintaining very high tariffs under Section 301, under fentanyl IEEPA authorities, and more, for an average of 54% tariffs on China. So that sort of really serious confrontation is still simmering, despite the obvious efforts that President Trump is putting out there that he would like to go to China, have a big state dinner, and have the pomp and circumstance surrounding that. It hasn't occurred because the underlying issues are too big and too much of a formidable problem.
Now, trade deals often take years to work out. At least typically, historically, that's how it's worked. Is there a risk, I guess, in this approach that seems to be more tied into personal visits, more tied into one-on-one meetings? Is there a risk of things not settling down for quite a long time, given how long trade deals normally take?
I think absolutely. I mean, if you're going to telegraph through the Treasury Secretary that $4 trillion in revenue is going to come in through the imposition of these tariffs, you're by definition implying that these tariffs are permanent. If you simultaneously have these repeated shakeups where when a country reaches a trade deal with the United States and promises $350 billion worth of investment, say, for example, with South Korea, and then you raid the very factories that they are creating on electric vehicles and Hyundai and batteries, then you are at an impasse here where your own trade agenda is working against itself. And that does not lead to a quick solution or a quick state dinner. And layer on top of that we don't also have the sectoral tariffs nailed down. And it's my evolving view that we probably won't get those until the IEEPA tariff authority is established, whether the Supreme Court decides the president can maintain these Liberation Day tariffs or not. And we won't know that probably till December. So we have this lingering, outstanding threat of pharmaceutical tariffs, automobile tariffs, semiconductors, aircraft, trucking, shipping, yada, yada. And those can't be resolved, which means there can't be a final trade deal. There can't be a big state dinner. We've got a ways to go. And the president acted quickly upon taking office because these things do take a long time.
Yeah, well, you got to walk before you can run, basically. Henrietta, let's talk about domestic politics for a moment because, we are in mid-September. We're going to approach this end of September deadline, and there's talk percolating in the markets about a government shutdown. Where do you stand on this? Because there are some people who are saying, this is an underestimated risk.
Yeah, and we get that, every time we do this. I'm at 25%. That we'll see a shutdown. I recognize the consensus is more like 80 or 90. I'm used to being in this position. Very often, prognosticators will get very deep into a government shutdown forecast, and I usually just don't go there, mostly because I'm talking with staff who are, in the process of dealing with the negotiations as opposed to the members who are more grandstanding. We have a really long way to go before September 30th is the bottom line. I don't expect a solution to be in the works this week, and then they're going to leave town for 10 days. So that does create a lot of tension, but we're going to have then a period from September 28th, 29th, and 30th where ordinarily they come up with a stopgap. And quite frankly, I just do not see the Democrats coalescing behind a comprehensive narrative that will allow them to shut down with any kind of path to reopen or to gain with their voters for shutting it down. So I don't see the ducks lining up in a way that would allow Chuck Schumer to say, hey, you know what, shutting down the government driven by the minority party is a good idea. And so I don't have high odds of it right now.
All right, Henrietta, always appreciate your taking the time to join us with your instant analysis. Henrietta Trades is Director of Economic Policy and Managing Partner at Veda Partners on today's top political stories. I want to transition now to a Bloomberg Business Week ranking of business schools. This is something that they do every year. And even though the winner for this coming school year, Stacey, is once again Stanford, there are some changes afoot.
Yes, there absolutely are. It seems like graduating from business school is a little more precarious than it used to be as far as the amount of money you can expect to earn and the job that you can expect to get.
So let's bring in Dimitra Kasanides to give us more about the rankings and some of the changes, the long-term changes that are taking place underneath the rankings. Dimitra, welcome to Bloomberg Intelligence.
Hi, thank you.
So tell us a little bit about Stanford being #1 once again, but how some of the long-term changes are slowly taking shape beneath those rankings.
Sure. Yes, Stanford came out top of our U.S. rankings. We have rankings across regions, so it's not globally the #1 school, just to clarify. But you know, it certainly points to resilience and strength of the programs. Stanford, as we know, in Silicon Valley, with all its focus on technology and entrepreneurism and more, has been very, very strong for years. You know, that maybe to some degree masks some of the problems that we see that especially in the U.S., but globally, schools are confronting. I mean, there are a lot of challenges today. There are geopolitical challenges. There are challenges that are more specific to the U.S. with what we've seen play out over several months, given the current administration's stance towards international students, towards issues of diversity. So there are certainly a lot of things that are just making tensions a little heightened right now, and are really raising the level of discussion and concern among deans in a way that has them trying to come together from around the world and really think about how do we best support each other to support education, because what we ultimately are in the business of is education.
Well, clearly some of those challenges have to do with some of the Trump administration's policies and stances going after certain colleges and universities. How has that factored into business schools, to enrollment, and to some of the concerns that you're mentioning that deans of different business schools are taking on?
Sure. I mean, it's starting very slowly. You know, it's not as though we're seeing some great exodus from people interested in schools in the U.S. We still have a very strong system of business schools in this country, also in Europe and in Asia. And there are very particular facets to each of them that appeal to students depending on what they're looking for. But I think that international students who have come to this country in very large numbers to business schools are starting to really question whether this is the best option for them, given the opportunities available elsewhere. And part of that mix also has to do with factors that aren't so specifically about the administration right now in the U.S., but about jobs and opportunities and growth. Our schools in the U.S., in addition to some of the factors that they're facing that are more about some of these issues around diversity and international students, they're also confronting a situation in which, you know, more graduates are finishing their programs with no job in hand.
Yes.
The share of students that are finishing and that have a job offer within 3 months, while it's not, again, a huge shift, but it is a shift we're seeing, is really, it's, you know, that sort of percentage is being cut away at. We've seen so many cuts in technology. We've seen cuts in many other industries that are leading. Consulting is really a big one that draws business school students historically in very large numbers. Consulting is going through a huge shift right now, largely because of AI. We've seen many stories about this, the way it affects the work that they're doing, the way that they're recruiting, how many people they need to hire. So it's affecting all schools in various ways. International programs have a lot of partnerships with U.S. programs.
Right.
U.S. programs send a lot of students abroad. The visa issues are also, you know, very, very touchy right now. So it feels like it's on many fronts, and just coming together in a way that's more sort of pronounced.
All right, Dimitra, really fantastic stuff. Dimitra Cassanides joining us here from Bloomberg Business Week, our senior editor there on the Bloomberg Business Week Best Business School Rankings for 2025 to 2026. Looks like it's Stanford on top. All right, for more news, you can continue to listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Keep it right here for the next hour of Bloomberg Intelligence, starting right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good morning from the Bloomberg Interactive Broker Studio in our headquarters in New York City. I'm Scarlett Fu here with Stacey Vanek Smith. Paul Sweeney is off for the week. Coming up on the second hour of Bloomberg Intelligence, Burt Flickinger of Strategic Resources Group will talk to us about retail sales better than expected for the most recent period. And then Kevin Neer of Bloomberg Intelligence will be joining us to talk a little bit about the upcoming StubHub IPO. Joanne Feeney of Advisors Capital Management, there we go, partner and portfolio manager there, will be talking to us about AI and the equity market. It continues to go up, although the S&P 500 slightly lower at the moment. And then we have much more coming up at the end of the show, talking a little bit about our big take with private markets offering a fragile lifeline for fund giants with Bloomberg's asset management reporter. In the meantime, let's get things started with Lisa Mateo with our Business Flash.
You got it. And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Well, we've got stocks lower. This is ahead of the Fed's expected first interest rate cut of the year. More eco data, well, did little to move the markets, too. We had the value of retail purchases. It increased 0.6%, which was higher than expected and on target with July's number, which was revised up. We also had a look into import prices for August. Expectation was for a 0.2% fall. It came in with a rise of 0.3%. The prior was revised down to 0.2%. So we start with the NASDAQ. Little change, down about 19 points. The Dow off about 0.4%, 188 points. And the S&P 500 down 0.1% or 12 points. We have the 2-year yield, 3.52%. That's down 2 basis points. The yield on the 10-year, 4.03%. And that is little change. To commodities, gold extending its record rally. I want to point out COMEX gold up 0.1%, $3,722 an ounce. We go to oil, WTI crude up more than 1.5%, $64 a barrel. To currencies, the dollar retreating against all major currencies. Right now, it's down about 0.4%. Few companies making news. We'll start with Novo Nordisk. They plan to seek U.S. regulatory approval. This is for a high-dose version of its weight loss shot, Wegovy. This is just the latest attempt to counter Eli Lilly in that obesity market. We have Novo ADRs. They're up about 2%. And Ralph Lauren sees revenue growth remaining similar to recent rates over the next 3 years. That's according to the fashion company's strategic outlook. And finally, President Trump filed a $15 billion defamation and libel lawsuit against the New York Times. It's accusing the paper of serving as, quote, a mouthpiece for the Democrats. We look at New York Times shares. They're down nearly 2.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Stacey and Scarlett.
All right, fantastic. Thank you so much, Lisa Mateo. It's time now for our market drivers, and Nora Melinda is in our studio. Nora, first of all, congratulations on your assignment as Bloomberg Television's markets correspondent.
Thank you, Scarlett. Happy to join you all. Super excited for what's to come. Let's look at some of the stocks that are on the move this morning.
You did your own intro. See, what a pro.
I try. As we're looking at some of the stocks on the move today, I'm looking at the New York Times, ticker NYT here. Of course, we're seeing shares that are lower, down as much as 3.5%. And this, of course, is after President Donald Trump filed a $15 billion lawsuit against the company. He's accusing the paper of serving as, quote, a mouthpiece for the Democrats. So we did see the New York Times in a statement saying that the lawsuit has, quote unquote, no merit, and it is an attempt to stifle and discourage independent reporting. We're going to have to see how this plays out, but we are seeing shares taking a little bit of a breather right now this morning. Also looking at shares of Oracle, let's pop over to a name that is in the green this morning. And of course, this has really been in focus because of the fact that the US and China could be reaching a TikTok consensus. There's call between Trump and Xi that is upcoming. And so this is actually something that people are really thinking about. Oracle could play a really major part in particular here in the idea of TikTok being able to continue operations in the US if a framework deal is finalized. I mean, of course, we know this name has really been in the news for quite some time, especially after the aggressive outlook they gave like last week. So, I mean, definitely a name to keep an eye on here.
Right?
Richest man on earth, surpassing Elon Musk, if I'm not mistaken.
Yeah.
Have to double check Rich Go to see if that's still the case.
Stock. Yeah, I mean, it's like a back and forth between those two, right?
Oh, for sure. They're duking it out here. Shares of Oracle are up about 85% so far this year.
Oof.
So,
yeah,
been on a tear for sure. Another name in the green, Webtoon. That's ticker WB.
Sounds like a cartoon company. I know it's not. But
I know. I'm like, it's really interesting. Webtoon Entertainment here. We're seeing shares that are soaring this morning, up pretty steeply here, up as much as 36%. That's the highest intraday level that we've seen since August of last year. And of course, this is after Walt Disney is saying that it's bringing all of its marquee comics to a new digital platform and app in partnership with Webtoon Entertainment. Of course, this is sending shares of the upstart company surging this morning. Great news for them, of course. Who doesn't want to deal with Disney?
Yeah, that's there are worse partnerships to be had.
I know, and so Webtoon's really just like a storytelling technology platform. A lot of people like to go on there and read some interesting work here. They do a lot of long form stories, so it'll be interesting to see how they do this collaboration with Disney here.
All right, Nora Melinda, thank you so much. And your new title is?
I'm a Bloomberg TV markets correspondent.
All right, see, Nora Melinda, Bloomberg Television's market correspondent. Thank you so much. All right, for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's talk about retail sales, because we did get data today that showed that retail sales rose in August for a third month. It was a broad advance. And Stacey, I don't know about you, but there's always a lot of hand-wringing over, oh, the economy's not doing well. People are anxious. Will they spend? Turns out people spend whether they're anxious or whether they're feeling optimistic. They just spend.
Yeah, absolutely. I mean, I was worried about that myself after the consumer sentiment reports came in kind of lower than usual, and we're heading into the holiday season. But no, apparently happy, sad, stressed out. We spend money.
We spend money. That is our drug of choice. Let's bring in Bert Flickinger. He is, of course, one of our go-to guys on all things retail, managing director at Strategic Resources Group. Bert, when you dig inside the retail sales number that came out from the Department of Commerce, what does it say that matches up with what you see on the ground with the stores, the merchants that you speak to?
Scarlett and Stacey, two things on the Bloomberg terminal. You do such a fantastic job on Europe, Asia, and the Americas, reporting the tariff troubles and the higher prices in calendar quarter Q4. Consumers are pre-buying for their September, OND, October, November, December needs. So the numbers today, which were fantastic, reflect pre-buying or forward buying from consumers. So we expect the numbers in OND, October, November, December, to be muted. But to Stacey and your good point, people are buying for need. They're not buying for want. Hence, building materials are down. Department stores are down. Sporting goods, consumer electronics, somewhat muted. But overall, very good report at a time when University of Michigan's reporting consumer sentiment and consumer expectations down 20 to 30% respectively. And 70% of U.S. consumers are living paycheck to paycheck. So it's a very bifurcated consumer business.
I like the term OND for October, November, December. However, are people then buying in anticipation of prices going up because they think tariffs are going to affect things? Is that why they're kind of preemptively buying?
Yeah, so you saw Nathan Hager reporting at Bloomberg Daybreak this morning,
Hershey's getting all-time high numbers because of the highest cocoa prices in history coming out of Brazil and West Africa. So for Halloween, candy prices will be the highest in history. For Christmas, Hanukkah, Kwanzaa, toy prices will be the highest in history. So that's part of it. And even though the Disney numbers were strong this morning, Dave & Buster's on the Bloomberg terminals down almost 18% because people can't afford to take their kids out to dinner and gaming. So consumers are spending, but cautiously spending.
Bert, one thing you note, and this is something we've seen in the data in earnings for quarters now, is this idea that off-price retailers are in a sweet spot. They can, I don't want to say sidestep tariffs, but it seems like the tariffs doesn't hurt them because as people avoid going to full-price merchants, they are looking for deals, and these are places that are naturally geared towards offering deals. What is the distinction between an Aldi, a Costco, or a TJX?
The key thing is both the off-price and the price impact and the value that you referenced earlier, but also it's the brilliance of the real estate department. So, for example, with normally 5,000 to 10,000 retailers going out of business every year, this year 35,000 will go out of business. So those retailers you presently pointed out, they're getting leaseholds and build-outs from the landlords at 20, 40, 60, 80% off. So they're able to convert stores at record rates around the world, lowest leasehold costs, lowest operating costs, solar for free to low to no solar power, and they have the lower operating costs, pass along lower operating prices. But what's most important is the department stores for 50 years have been stiffing the fashion resources and the vendors. And TJX, Burlington, Ross, Dress for Less, the other off-price players pay on time, in full, every time. So when they need money for raw materials to make goods around the world, they go to the off-price players first. So, and the off-price players as a reward are getting first quality goods before the fashion season instead of after the fashion season the way it used to be.
So obviously, you know, these are August numbers, but we're coming into a really serious season for retailers, October, November, December, OND, as we just learned. So, I mean, are we expecting to see things maybe turn down a little bit because this is a, you know, a crucially important season for retailers?
Stacey, I'm worried about the proverbial train wreck under the Christmas tree or under the Hanukkah lights, literally.
That
because
sounds terrible.
Not terrible, but people still get gifts, but they're getting gifts from our research director, Taylor Brigham, reported, going to Buffalo Exchange. So they're buying pre-owned goods and swapping vintage stores around the country, Salvation Army, Goodwill, first quality goods for garments, toys, clothes at 50 cents to $1. So underpricing the department stores, especially with Toys R Us, no longer a major factor on the field. And as a result, buying pre-owned goods is the key way to save. And what we're also seeing, we're publishing a book, The Explosive Growth of Private Label Brands in North America, eclipsing national brands for the first time. Private label is the biggest part of the equation. And when you mention TJX, Aldi, Costco, Kroger, Winco, all the major Target, all the major retailers are focusing on own label more than national brands. And when you buy own label from our research at Cornell, a family of four can save $5,000 a year. That pays for all the 12 monthly expenditure areas that are at an all-time high.
That's some meaningful money. Bert, always appreciate it. And by the way, Bert Flickinger, one of the big boosters of Cornell Sports. Go Big Red.
Well, we have you and Stacy, Go Big Red women's ice hockey, breaking glass ceilings to win championships in the green room. So.
Love to hear it.
Bert Flickinger of Strategic Resources Group. Speaking of hockey and going to games, StubHub's IPO of as much as $851.1 million has stopped taking orders, or did, as of 4 p.m. On Monday, and it's said to be oversubscribed. So let's bring in Kevin Neer of Bloomberg Intelligence. He's our Senior Media Associate Analyst. Kevin, what do we need to know about StubHub's and its IPO?
Yeah, thanks, Carol. It's a really interesting time to IPO. I think that's the number one question that we're getting is why now, right? They initiated the process back in March after multiple years of speculation that the company would go public. And they paused it for about 6 months. And now the question is, okay, well, does this really speak to the confidence that they're seeing that the secondary ticket market is going to continue growing? And we think it does. We think that they're looking at from a supply standpoint and from a demand standpoint, and the next 5 years look like they could see a lot of growth.
Isn't part of their strategy, though, that they're going to kind of move away from secondary ticket sales and into primary ticket sales? Isn't that kind of part of the reason everyone's so excited about this IPO?
That's right, Stacey. Exactly. So the primary, the direct issuance market, as it's called, the primary ticket market is about 3 times the size of the secondary ticket market. They're still focused on secondary, certainly. That's their bread and butter. They have almost 50% share in the United States. But really, that's what they're going to be going after, especially with Ticketmaster looking like it's still on the back foot fighting an antitrust case.
So what does it need to do to make sure it can take some of that market share from Ticketmaster? What kind of, I don't want to say remedies, but what can it do in advance to make sure that whatever market share it takes, it can hold on to, that it's sticky?
Yeah, absolutely. Well, they keep speaking back to their technology and their product, right? In ticketing, there's very little brand loyalty. Ultimately, consumers just want the lowest price. They want to be able to go to the show, right? So that makes it challenging. But really what the point that they're harping on for direct issuance is that these tickets don't need to be exclusive. Ultimately, if their AI-powered dynamic pricing is best, consumers will show up on StubHub.
I mean, people are so excited about this IPO, but also from what I've been reading, it's possibly a little bit overvalued, or maybe some of the excitement is not totally backed up by numbers. Could you talk a little bit about that?
Yeah, absolutely. So we've been looking at this quite a lot. Valuation is really the other big point that we've been asked about. And the comps that we're looking at, it does seem like the target valuation that they're going for is a little bit above the high end of what we're looking at. I think they're about a little over $10 billion enterprise value based on the midpoint of their price range. But again, they really want to be compared to some of the bigger e-commerce platforms that are growing quite rapidly. They've talked about a 20% top line growth. The industry is looking like it's going to be flatter this year, but ultimately it's going to come down to, can they execute on market share growth, on advertising growth, and eventually margin expansion.
Okay, 20% growth is pretty aggressive, as you said. So are they going to expand beyond ticket sales, whether it's primary or secondary?
Well, they talk about a very large adjacent opportunity that's not anywhere in the near-term road plan. But you got to remember, they do have a dominant position in the U.S., but ultimately they say a very large international opportunity. They talk about a $23 billion secondary international opportunity where there just isn't a lot of dominant players right now.
So their profit margins have been falling a little bit from year to year. Why is that, especially at a moment where, the popularity of live events has been growing?
Right. Well, they've been investing a lot in their new growth initiatives. So that includes the direct issuance, building out the technology. But really the biggest cost item and what we've been seeing is that they're spending so much on marketing. So they've invested a lot in their brand. But now this year, and we've heard this from some of the other secondary ticket players like Vivid Seats as well, there's been some algorithm changes on the performance marketing side. So not only is it more expensive, but the efficiency is down. So you've seen a lot of pressure on those marketing costs.
Yeah, as you said, for these ticket marketplaces, there isn't a lot of brand loyalty, so you just have to get in everyone's face, and that means spending constantly, especially at live sporting events, which is also very expensive. All right, Kevin Neer, thank you so much. Kevin Neer is Bloomberg's Intelligence's Senior Media Associate Analyst on the StubHub IPO, and I believe they priced tonight, is that right? And that means they begin listing tomorrow on the New York Stock Exchange under the ticker STUB. Okay. Thank you so much. This is Bloomberg Intelligence on Bloomberg Radio. Scarlett Fu with Stacey Vanek Smith. We are looking at an S&P 500 down about 0.2%, and yields lower as well, at least on the short end. The 2-year at 3.519%.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Well, we've got red on the screen right now. This is after retail sales rose in August for a third month. We have the S&P 500 down about 0.1%, 6 points. The Dow off 0.3%, 163 points. We have the NASDAQ little changed, up about 2 points. The two-year yield, 3.52%. That's up 1 basis point. The yield on the 10-year, 4.04%, and that is little changed. Among the companies reporting this week, we'll hear from General Mills, FedEx, and Lennar. After the close yesterday, we heard from actually Dave & Buster's. Their shares still taking a hit, down 16%. Second quarter adjusted earnings per share revenue came in well below estimates. Tesla in the headlines again, this time for issues with the electric door handles of certain Model Y vehicles. They could trap people inside when it loses power. The U.S. auto safety regulators, they are investigating. It comes right after Bloomberg did a report on that very issue. And when it comes to full-time MBA programs in the U.S., Stanford is tops. Yeah, it held the top spot for the 7th time in the Bloomberg rankings. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Stacey and Scarlett.
Thank you so much, Lisa Mateo, Scarlett Fu, and Stacey Vanek Smith here on Bloomberg Intelligence on Bloomberg Radio. Paul Sweeney is off for the week. And of course, we do have markets kind of in flux right now. Everyone's just waiting for the FOMC meeting to get started. It began today. And of course, the decision comes out tomorrow at 2 p.m. So for more on where the markets stand right now as we await this decision, let's bring in Joanne Feeney. Joanne is partner and portfolio manager at Advisors Capital Management. And Joanne, there's a real question here about valuations. We've been talking about lofty valuations for so long that I'm not sure there's anything new on when you talk about how expensive Mag 7 is or how stretched valuations are. But what about the other 493 companies in the S&P 500? How stretched are their valuations now that the rally has broadened and we have continued to make record high after record high?
Yeah, it's still, good morning, Scarlett. It's still pretty expensive out there, even when you look beyond the Mag 7. Certainly the rest are cheaper. But when you look at them relative to their historical averages, they're still about 30% above those averages. The Mag 7, or the top 10, I should say, are about 40+% over their long-term historical averages. So both segments of the market, the top and the rest, are pretty expensive. And, you know, one can argue all day about why that's the case. Anticipating lower interest rates could certainly be one reason.
I imagine the markets will be waiting with bated breath for the Federal Reserve's announcement tomorrow. Is there anything they will be looking at beyond just a cut? Is there anything that they will be looking at or reacting to as the announcement comes out tomorrow?
Yeah, I mean, so 25 basis point cut is baked in, right? It's in expectations at this point. There may be some that believe there's a probability that it'll be a larger cut. But I think more likely is what we'll hear about the future path, or at least on what the future path of interest rates depends. Which variables will the Fed be watching most closely? How much do they already see of tariffs filtering into inflation? We've certainly seen some of it. The Fed and its researchers get a look at a lot more data at a very detailed level, so they can perhaps shed some light on how much we're already seeing of tariffs in, more commodity prices. So I think that kind of information will be really useful because it'll help paint a picture of whether more rate cuts are coming later this year.
Although that information sometimes takes a while to trickle out, we're still waiting for the first impact from the tariffs, which hit not so long ago, and people are saying the second half data should really bear that out, and that might not be available for a couple of months. So what do you do, Joanne, in the meantime, if the market is expensive and it goes beyond just the top 7 or top 10, it's now the top, or the rest of the 490 are also expensive? Where do you find value in the big cap space? Does it exist?
Yeah, you can still find plenty of value. In fact, if you look at dispersion, that is the range between the least expensive stocks and the most expensive stocks. Dispersion is actually pretty high now relative to averages over the long term. So that tells you there are a lot of values out there. You just have to hunt them down. We don't invest in the broad market indices for our clients. We do individual stock investing. So we're only picking 40, 50 stocks to design a strategy, and that can be a growth strategy, it could be a balanced strategy, which tends to be a little bit more value oriented. So there are a lot of opportunities. Look around at healthcare, look around at industrials, even some consumer stocks. There are plenty of places where you can find attractive valuations relative to a company's growth prospects, relative to its dividend yield, and build a portfolio that includes both. Some of those big cap stocks, those big growth oriented stocks, and also then build in some, what I like to do in the balance strategy is build in some more income-oriented stocks, some higher dividend stocks, to give folks both exposures, appreciation potential, and income, and do that by diversifying across sectors.
Joanne, you mentioned tariffs a little bit earlier. I'm wondering, there's a lot of uncertainty around the tariffs right now, both on an individual level, when and how much they will rise and fall, but also the legality of the tariffs is currently in question. It is often said the markets hate uncertainty. There's certainly a lot of that right now. How do you see that factoring into the valuations of stocks right now?
Yeah, that's a really tricky time for companies. We've seen some clarity in tariff rates being set on a country-by-country basis, but you point out that a number of courts have declared those countrywide tariffs as illegal. It will now go on to the Supreme Court, and we will get hopefully some light shed on that by perhaps the middle of next month when the stay on removing those tariffs expires. So that creates a lot of uncertainty for companies. How does that affect us as investors and valuations? Well, we know that companies have been holding back because of the uncertainty. Do you build that next factory? Do you expand? Well, you don't know because you don't know the price of your inputs, which you get from abroad. So it's certainly slowed down economic activity broadly and company investments in capital and future products. That does affect valuations because it's affecting their margins. We're also not seeing pass-through of the tariffs that do exist into prices. Companies are seeing it hit their margins. So both of those things reduce growth prospects and reduce margins. Both of those things are not very good for valuations. And so I think some of the companies that are hit most by tariffs or the prospects of tariffs are the ones where you'll find cheaper valuations. And then you have to look beyond that and say, how can they adjust in the long term? Do you have confidence that they can source elsewhere, perhaps?
And that might come down to management, to execution, and to everything else. All right, Joanne Feeney, always appreciate your joining us. Joanne is partner and portfolio manager at Advisors Capital Management. Stacey, I want to turn to a story that you highlighted earlier today, and that's about Tesla fading U.S. auto safety investigations over its door handles. This is a story that Bloomberg had written about last week, and it got a lot of attention.
Yes, the story itself is pretty amazing. The reporters here at Bloomberg did such an amazing job, and I have to say, I mean, the stories themselves were quite harrowing in some cases. People not being able to get out of their cars, people being trapped. It was, I'm glad that it is being looked into.
All right, let's bring in Steve Mann, Bloomberg Intelligence Global Autos and Industrials Research Analyst. And Steve, the fact that people don't know how to get out of a Tesla if it's locked in an emergency kind of situation on impact or if there's a fire is not new, yet the National Highway Traffic Safety Administration did not act on anything until now. Why is that?
Well, it is a very serious situation, serious safety situation. Now, first of all, there is a manual release from the interior of the vehicle, but the safety issue is that you can't manually override the electronics and open the door from the outside. Now, this is an issue that's plaguing the whole industry. It's not just Tesla.
Fair.
Okay. There's a number of automakers have solved the issue, and I think Tesla does need to solve this issue because people have died because of this problem here.
I'm interested in, I was just catching up with Tesla stock, and for some reason the shares continue a very enthusiastic upward march in spite of these really serious concerns and like you say, that is concerns where a solution isn't necessarily.
Yeah, I think from the investor's perspective, there is a solution. There is a number of vehicles, for example, the Audi. They have actually solved that issue, and they solved it by, having a double pull on the latch to actually open the vehicle manually. So I think from an investor perspective, it is an issue. It needs to be solved, and it's solvable. The reason why the stocks are going up, as you know, the $1 trillion pay package and the reiteration of the company moving towards AI is really getting the investor very excited. The robotaxi is rolling out. Apparently, the Model Y is selling really well in China. So, and then in Europe, where we saw a lot of decline in EV sales, seems to be ticking up.
But the pay package rewards Elon Musk for thinking really big, not dealing with how to unlock car doors in the event of some kind of problem. Right. You say that Audi has solved this. Are Tesla engineers going to take their cue from Audi?
Possibly.
Really?
Yeah. I mean, it's important. It's important that they solve this because Tesla, when they roll out the robotaxi, safety is an important issue for them. And it's an important issue not just for Tesla, I think for the whole industry. And it's a reputation that they're trying to build, especially, as they try to roll out robotaxi. And, they want to project themselves as a safe automaker. So I think it's going to be a priority list for Elon Musk and the rest of the organization there.
It does also seem that that people are feeling quite optimistic about this stock, but also there does seem to be a liability issue in addition to a need to solve this problem issue. Is that at all a concern? I mean, from the markets, it would seem no, but.
Yeah, it is a liability, and I wouldn't be surprised that there's going to be other legal issue that comes up. But it's I think from an investor perspective, this is normal business. Recalls are normal, and there are other safety issues that has been recalled, not just at Tesla but in other automakers. So I think the investor are taking this. I don't want to say lightly, but it's normal business that, we're going to get over this.
It's a work in progress.
Yes.
Are there other safety issues in particular that Tesla needs to focus on, pay attention to, that could, if left unresolved, could become legal liability issues?
Oh, I actually thought about this, robotaxi, right? And I think there's still a safety driver. Sitting on the passenger seat on pretty much on every robotaxi. I think there is discussions of taking the safety driver out at the end of the year, but I think they need to tread very, very carefully, especially for Tesla. It's a high-profile company. Anything negative is going to damage their reputation. So if they don't take up the safety driver at the end of the year, I wouldn't be surprised. I think they do need to take it one step at a time and make sure everything goes well before they do a full launch without the safety driver.
All right, Steve Mann giving us something to look ahead to when it comes to Tesla. He is our global autos and industrials research analyst at Bloomberg Intelligence. Stacey Vanek Smith and Scarlett Fu here with you on Bloomberg Intelligence on Bloomberg Radio. Keep it right here. More Bloomberg Radio just ahead.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we've got red on the screen, and this is as the Fed kicks off day one of that two-day meeting on interest rates. A quarter-point cut, that's expected at tomorrow's Fed decision. You have Fed Governor Lisa Cook. She's set to take part in the meetings after that appeals court blocked President Trump from firing her. And so is Stephen Myron. He was sworn in as a member of the Federal Reserve's Board of Governors. So we have the NASDAQ, little change, down about 20 points. The Dow off 0.3%, 162 points. The S&P 500 down about 0.1%, or 10 points. In the yield space, we have the 2-year, 3.53%. That's down 1 basis point. The yield on the 10-year, 4.04%. That is little changed. I want to point out gold. COMEX gold right now, it's down just a fraction, but at $3,717 an ounce. Over to oil, WTI crude up more than 1.5% at $64 a barrel. And over to the Bloomberg Dollar Spot Index, that's down about 0.3%. Some tech news today, a milestone for Alphabet. Yesterday, it joined that elite group of companies valued at more than $3 trillion. And now Google says it's going to spend nearly $7 billion in the UK over the next 2 years. Shares of Oracle, they're up about 1%. That's after CNBC says the company is going to keep the TikTok cloud deal under a new agreement that could close within the next 30 to 45 days. We shall see. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Stacey and Scarlett.
Lisa, you know, there's a Fed meeting today.
I know.
And a decision tomorrow. I feel like we've been talking about this for weeks.
Yes.
You know, and it's so well anticipated. Everyone knows it's going to happen. And yet we're still on tenterhooks as if we're not quite sure how it's going to play out.
Right.
Strange how
it's all up in the air.
It's all up in the air. Or is it? All right, let's bring in Jeff Brown now. He is founder and CEO of T2 Capital Management. And Jeff is here to talk to us about commercial real estate. Jeff, this Fed rate cut that's going to happen tomorrow, it's pretty much baked in. And the big question is what happens after tomorrow? Do we get a series of rate cuts? Do we continue cutting rates into 2026? And do we see a string of rate cuts in 2026? How's the commercial real estate market positioned right now?
Yeah, I think the commercial real estate market is ready to breathe a big sigh of relief. It does seem like a foregone conclusion that 25 basis points is on the table for tomorrow. Expectations for, I think last I saw, we talked earlier this week internally, I think it's 2 additional 25 basis point cuts going into the end of the year. And so, real estate's looking for a reprieve. We've endured these these increased rate shocks from 2022 and 2023. A lot of people have been kind of clinging, holding on for dear life since then. And again, interest rates moving down is a big sigh of relief.
I mean, they're not moving down that much. 25 basis points is a pretty little step down. Does that actually make a difference, or is it more psychological?
There's definitely a psychological element to it. You know, I always say real estate developers are about the most optimistic people that you'll meet. So any kind of light at the end of the tunnel is grounds for optimism. There's at least some clarity now. I think a lot of people went through a period of time a couple of years ago where you just didn't know what's going to happen next. You know, what shoe is going to fall. Then there was great optimism with the current administration in the White House, and we talked about President Trump and his background in real estate, and so expectations that real estate would, open up a little bit, transaction volume pick up. It hasn't manifested quite yet. We've had tariffs. We've had interest rates just kind of stagnate. Office seems to be getting back on its feet at this point. So again, it's not a big shock in the positive direction, but there is glimmers of hope and optimism now.
Even with the rate cuts last year, borrowing costs remain fairly elevated compared to where they were before the pandemic. And as Stacey points out, a 25 basis point cut today is not going to make, tomorrow I should say, is not going to make too much of a difference. You have some major intractable issues that are still holding up your industry, including costs, whether it's the cost of material or the cost of labor. Yeah. Tell us a little bit about how much costs have risen over the last couple of years.
Yeah, that has been a sore spot in real estate, frankly, is when COVID hit. So we're going back 5 years now, and we had this exacerbated increase in construction costs and construction labor, and all of a sudden, it's supply issues and delivery issues. And again, I think we finally got through that. However, what has not really relented is the construction costs. And now as we're looking at, there is a supply shortage that's upon us. There is just a dearth of construction that's out there at this point. So It favors existing landlords, people like T2 that own a fair amount of multifamily properties around the country, student housing properties around the country, because so few are being built at this point. Developers can't make numbers pencil to make a profitable construction development at this point.
What is hampering, I guess, new development? Is it labor? Is it materials costs? I know lumber has been a big kind of topic that's come up quite a bit recently.
Yep, and lumber's even retreated quite a bit. So that's been, again, a bit of a sigh of relief. There is a lot of volatility there, so who knows when that jumps back up. But yeah, I would say the costs and just labor and materials has been the driving factor toward constraining construction activity.
When you and your fellow titans of commercial real estate gather and talk, what do you find yourself lamenting the most?
I wish I were in conversations with titans, for starters. As far as lamenting goes,
what are you celebrating then, if not lamenting?
Honestly, there's a lot of celebrating for clarity. I always say, when I'm a round table, at a round table with other real estate investors, private equity fund managers, and all we ask for is clarity. Define the boundaries, give us some clarity, and then we can operate. We can play the game. For the past 3-4 years, again, interest rate spikes, construction materials just running up unabated, tariffs implemented. It's just been really, really hard to just have a level playing field, have some visibility even 6 months down the road. And so what we celebrate is the appearance of some clarity at this point. And so it does kind of unlock some confidence, unlock some capital. It's been really, really hard just to capitalize project in light of the uncertainty. How do you underwrite a project that you're intending to exit in 5 or 7, let alone 10 years? It's just really, really challenging in light of the lack of clarity that's been out there. So what we celebrate is clarity. And what we lament, I would say, is just frankly the lack of clarity.
Is that lack of clarity, I mean, is there clarity right now? It seems like there's quite a bit of lack of clarity that can come into my mind, especially for companies that are contemplating opening up a factory or something in order to counteract tariffs. I feel like the uncertainty around the tariffs is preventing quite a bit of that. Yeah. But is there clarity that I'm unaware of, or what is this clarity that's getting celebrated?
It's a great point, Stacey. Yeah, I think I don't know that there's crystal clarity at this point, but there's at least the expectation of a lack of a lot of volatility. Tariffs, at least they've been digested. We've weathered that storm, at least temporarily. It doesn't seem like new tariffs are going to come to bear at this point. We all understand that interest rates kind of are where they are. If anywhere, they're going down. And then we understand the fact that construction costs are elevated. And so, again, it's not like celebratory worthy, but I would say at least there is some clarity, even surrender to the facts. And we have reality, we have the playing field. Now we can operate, whether that's being very active or kind of retreating and being back on the sidelines.
So it's kind of an acceptance of the current conditions.
That's a fair statement, yeah.
Well, the acceptance of the current conditions is there's a lot of talk, a lot of happy talk about data centers. Yep. And I'm wondering how much of that talk is being translated into action.
Yeah, it does seem like there is action, and it is a kind of a new frontier. It is the gold rush in commercial real estate right now to get into the data center space. I think the news last week where OpenAI and Oracle are partnering together on if I understood correctly, a $300 billion project. That's real money and backed by a real company in Oracle. We talked a little bit about Blackstone here in New York is very active and very vocally active, at least in the data center space. That's real capital behind those efforts. So I think it has some traction, but how it unfolds and what data centers look like in 2-3 years, and I mean, frankly, this AI revolution and the speed at which adoption is necessary is something I don't know if I've ever seen in the commercial real estate space anyway. But it's here. It's got some real capital behind it, and I think we'll see how it plays out over the next few years.
All right. Good talking with you, Jeff. Thanks
Likewise.
for swinging by. Come back again, maybe after a series of rate cuts, and we can talk a little bit about the increase in clarity that you and your peers are seeing.
Sounds great.
Jeff Brown is founder and CEO of T2 Capital Management. They are investors in commercial real estate. They're also a private equity firm. And on the first day of this FOMC meeting, we are looking at yields slightly lower, at least at the short end. The 2-year yield at 3.522%, the 10-year unchanged at 4.03%, and the S&P 500 losing ground by 0.2%. The Russell falling even more, losing 0.6%. This is is Bloomberg Intelligence on Bloomberg Radio. Keep it right here.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, welcome back to Bloomberg Intelligence. I'm Lisa Mateo, jumping in the last few minutes alongside Stacey Vanek Smith. So there seems to be this shift in the investment space with asset managers expanding into private markets, mutual funds becoming a little bit less popular. It is the latest Bloomberg Big Take topic. So here to break it all down for us in the studio is Lucia Giftopoulou. She is asset manager of Bloomberg News. Thank you for coming in. So what I wanted to ask you is, what is the appeal of the private markets, and why are you starting to see this shift?
Yeah, so like this shift has started happening 3-4 years ago when, mutual funds are falling out of favor. People have shifted to cheaper passive products. So these asset managers, the traditional asset managers, have an existential crisis. Their business models are outdated. So they're trying to find new ways to offer more popular products and also have higher fees so they can sustain, their existence. So this started happening, say, half a decade ago, give or take, but it has really intensified in the last couple of years. And we see all sorts of traditional asset managers buying private assets firms, mainly private credit, or partnering with big companies like Blackstone, Apollo, KKR, to launch joint products that they can then sell to their wealth clients. And this is like kind of the main trend right now in the space.
Why are these products so popular? Because for a long time, mutual funds were seen as like such a safe, reliable investment and sort of a go-to place to put your money. So what is taking their place, and why are they seen as more attractive?
So the mutual funds are falling out of favor because of index funds and ETFs that kind of do the same job and are much cheaper. Active funds charge you more because they're going to, they're going to beat the market. Index funds follow the market. And, there is a lot of research showing that active funds don't necessarily always beat the market. It's quite to the opposite, actually. So index funds would charge you 0.0 something. Some are given away for free on occasions. Well, if you're an institutional investor, you might even get it for free. So this has been the trend for the past decade. Now, private markets come in. There's this big private credit boom. Everyone wants a part of it. It's a good opportunity for them to say, hey, we have all these retail clients. As private equity and private credit are trying to branch out into the wealth space, we have all these retail clients. We can, create joint funds and sell them to the masses, like multi-trillion market of, wealth investors and pension funds, the 401k funds. So that's what's pushing them towards it. Now, whether it's working yet is a different question.
That is the question I was going to ask. Can you give us a little bit of backstory? Because I know in the article you talk about how traditional investment firms, they once dominated Wall Street. So when did things start to change?
So I think, Vanguard, and that's decades ago, started with the index fund. That's what's changed how Americans invest and how America, puts its money to use. But it was gradual. I think about 10 years ago, it was kind of a lot more obvious. If you see how the fees have gone down for mutual funds, like a decade ago, it was about 1%, now it's 0.3 because the passive funds have dragged it down. And, as we say in the story, as one executive put it, you can't eat assets, you can eat revenue. So they're trying to find ways to sustain, to have assets that are fee-paying assets. Mutual funds are in severe outflows for years. This is not something that is going to stop. So can they keep people in by offering them this kind of hybrid funds or buying private markets firms that will offer a hotter asset class that can charge more?
What are the pluses and minuses to this change? I mean, it sounds pretty good. I mean, lower fees sound good, but are there downsides?
To what? To the index funds?
I guess to the shift to private to
the shift into private.
Yes.
I don't know how well it's working yet, and that's what we're trying to say in the story. There are big players like Blackstone that already have this product out for the masses, and they're accumulating a lot of money. Blackstone's private credit fund, BCRED for wealth investors, pulled in 3.7 billion of equity in 1 quarter. There are funds out there by like cooperation of traditional asset managers with private markets firms that have 2.6 billion for the past 2 years. Like they launched 2 years ago. The competition is severe. What the upside is for the investor remains to be seen for the new funds, because many of them have just started. They don't have track records. It's a more attractive asset class the way it's being presented, in the sense that, it has had historically high returns, but those returns have mostly been in the closed funds where you lock up your money for 5 years. This new breed of funds is more liquid, so you can withdraw your money. Some of them, it's not clear to us yet how they work because they're not in market yet, or they have just launched the market. So I think it's a question that will be answered at some point in the future. With the existing funds, there are already track records. People are attracted to them. But now we're talking about a proliferation of this breed.
All right, Lucila Giftopoulos, thank you so much. You got to check out this latest Big Take article. She is asset manager reporter for Bloomberg News. So we've got a lot coming up ahead. I mean, we have day one kicking off of a 2-day meeting on interest rates, a decision tomorrow. So be sure to stay tuned for that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio, Sirius XM channel 121. You can access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us because we have more of your top stories, global business headlines. They're coming up. Balance of power is next. On a day where stocks are lower, we have the NASDAQ down 0.1%, 29 points. The Dow off about 0.2%, 116 points. The S&P 500, that's off about 0.1% at 10 points. The two-year yield, 3.51%, down 2 basis points. And the yield on the 10-year, 4.02, little changed.
I'm Steve Kathan. The formal case against the man charged with killing Charlie Kirk begins to unfold today. The 22-year-old suspect, Tyler Robinson, is expected to appear in court virtually. CBS's Katrina Kaufman on some of the new revelations.
Some information has come to light through these Discord chats that journalists have obtained. In one, he had said, "Hey guys, I have bad news for you all. It was me at UVU yesterday. I'm sorry for all of this." And then in another chat he had written, "I'm surrendering through a sheriff friend in a few moments. Thank you for all the good times and laughs. You've all been so amazing. Thank you all for everything."
A judge has dismissed terrorism charges against Luigi Mangione in New York State's case over the killing of the United Healthcare CEO, but the state's second-degree murder charge stands. Members of Congress have questions about the Epstein files.
Patel praised the Trump administration.
This administration, at the direction of President Trump, has done more to turn over all the credible information we are legally able to do so.
And place blame on the original federal probe for its mistakes.
I'm here to testify that the original sin in the Epstein case was the way it was initially brought.
Democratic Senator Dick Durbin asked Patel if he directed more than 1,000 agents to review the file and
flag any records in which President Trump was named.
Patel said that reporting is baseless. Stacey Lynn, CBS News, Washington.
Tributes have been pouring in since word came of the death of Robert Redford, the Oscar-winning actor and director.
Boy, what is it with you people? You think not getting caught in a lie is the same thing as telling the truth?
3 Days of the Condor was one of several major movies for Redford in the 1970s. He was 89 years old. CBS's Jolene Kent on what's emerging about the deal to keep TikTok operating in the U.S.
According to sources, the structure of the final deal is unclear, but it will include multiple firms. There's no word on what level, though, of involvement there will be from Chinese companies, including TikTok's parent company, ByteDance, and what their role will be in the deal.
The Trump administration has ordered several national parks to remove mentions of slavery.
Sources tell the Washington Post the National Park Service is removing certain signs and exhibits, including the painting known as the Scourged Back, which shows the scars on the back of a slave who had been whipped. Items will also be pulled from the president's house site in Philadelphia, where George Washington kept slaves. Last month, Trump called for a similar review of Smithsonian museums.
We want the museums to talk about the history of our country in a fair manner, not in a woke manner.
Michael Wallace, CBS News.
And checking Wall Street's, right now the Dow Jones Industrial Average down 119. This is CBS News. An artist who's skipping plans to stop in the U.S. has a streaming show.
When Bad Bunny wraps up his residency in San Juan Saturday night, the concert will be live streamed free of charge through Amazon Music. That means fans will be able to watch on the app, on the Amazon Music Twitch channel, or Prime Video. The final show will commemorate the 8th anniversary of Hurricane Maria on the island in 2017. Bad Bunny kicks off his world tour in the Dominican Republic in November. Last week, he explained he'll skip the U.S. to avoid the chance of ice raids. Deborah Rodriguez, CBS News.
Tom Brady reveals he's coming out of retirement to play flag football. The legendary quarterback, now broadcaster and part team owner, says he'll play in a tournament next March in Saudi Arabia. I'm Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The meeting begins, and we know who's in the room. Welcome to the Tuesday edition as the Federal Reserve kicks off a two-day meeting here in Washington with a newly appointed Stephen Myron at the table alongside an embattled Lisa Cook, who is there with the backing of a judge today. And we'll get the latest on this from Kriti Gupta at the White House and from Bloomberg's Michael McKee, who's with us in Washington today. Charges set to be filed in the shooting death of Charlie Kirk just about 2 hours from now, as lawmakers here in Washington debate spending on extra security. We'll get into that with Republican strategist Ashley Davis. And we'll have analysis from our political panel, Bloomberg Politics contributors Rick Davis and Gidi Shanzano, along for the hour. We start, as always, on Wall Street. Let's get up to date on the Tuesday trade with Charlie Pellet. He's at World Headquarters in New York. Charlie, how's it look?
Right now we are lower across the board. Joe Matthew, happy Tuesday. Solid reading on retail sales this morning, doing little to move markets. Equities right now losing steam, close to records, but still down for the S&P and holding above 6,600. Right now the S&P down 10. Drop there of 0.2%, 66.04 where we stand. The Dow down 110, now down 0.2%. And the NASDAQ Composite Index down 36 for NASDAQ, a drop right now of 0.2%. 10-year at 4.02% with the 2-year currently yielding 3.51%. Gold up $6 the ounce, up 0.2%, 36.85 on the precious metal. West Texas Intermediate crude up 1.9%, 64.47 a barrel. And Bitcoin up 0.3%, 115,813 right now on Bitcoin. Policymakers have begun their two-day meeting as Wall Street awaits the first rate cut of 2025. Alicia Levine is head of investment strategy and equities at BNY Mellon Wealth Management. She was interviewed this morning on Bloomberg Surveillance.
If they're data dependent, the data has said the jobs market has slowed, and thus far, we have not yet seen a huge hit from tariffs on the inflation side. And so they're in a really difficult place. But the cuts are already baked into the market.
BNY's Alicia Levine interviewed this morning on Surveillance. Retail sales rose in August for the third month in a broad advance among retail names today. Walmart shares lower, little change, down under 0.1%. Target up 0.9%. Macy's down 0.1%. And Amazon higher today by 1.6%. And Oracle shares up on news that negotiations over the future of TikTok are progressing. Oracle up by 0.7%. Again, recapping, stocks lower with the S&P down by 0.1%. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. Balance of Power continues right now. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie, many thanks to Charlie Pellet, who will be back in about 15 minutes with another read on the markets as we make our way through the early edition here on a Tuesday on Bloomberg Radio, satellite radio channel 121. You can always watch the radio on TV by going to YouTube, search Bloomberg Business News Live, and you can count on us being there on Bloomberg Originals. A lot of ways to find the program. Subscribe to the podcast, too, if you don't get a chance to hear all of our interviews live, although that's one of the cool things about YouTube. You can pause it and back it up. Fed meeting is underway. President Trump is in the air. He's on his way to the UK right now for the big state visit, which will be something we talk about a lot tomorrow. We're going to be talking about the Fed a lot tomorrow as well. With the headline this morning, the U.S. will appeal the court decision blocking President Trump's attempt to remove Lisa Cook from the Fed. But the governor is in place now on day one of a two-day meeting, and so is Stephen Myron, sworn in after a squeaker of a vote that was expected last evening in the Senate. It's all going as planned, I guess, to a point. Kriti Gupta has more for us. She's on the North Lawn of the White House, having heard from the president on his way out of town earlier today. Let's listen to Donald Trump on his hopes to influence the outcome of the Fed.
He'll have a big influence on this, when too late, getting his rates down, I guess. Who knows? You never know with too late, but he's done a lousy job. The rate should be much lower. What do you think about the independence? Oh, it should be, but I think they should listen to smart people like me. I think I have a better instinct than him. If you look, all the economists got it wrong. I got it right.
Of course, the Fed has not been known to operate on instinct. And kind of interesting, we're not even using the name Powell now. It's just too late. As I mentioned, Kriti Gupta is on the North Lawn of the White House right now. Let's bring you there for the very latest on this. Because, of course, the president has just left the building. Kriti, what can you tell us about this move on the Fed?
Well, Joe, he's very much staying in character, reinforcing the need, as you just heard, when it comes to those lower rates, but also reinforcing the need to oust Lisa Cook from her position. Something, as you pointed out, the appeals court has been steadfast in keeping her in that job. She's in the room right now in day one of that meeting alongside Stephen Myron, as you mentioned. But again, the fight is not over. He's taking this to the Supreme Court, according to Bloomberg reporting, and according to people familiar with that story. What we don't know yet, Joe, is the timing of this and the actual rollout of this. If the Supreme Court hypothetically does indeed rule in favor of Donald Trump, one, we don't know the timing, and two, we don't really know what the process looks like after that, how long Lisa Cook can continue to fight, and what kind of precedent it sets for other members of the Federal Reserve Board when it comes to dictating monetary policy. In the meantime, it looks like the two doves, Lisa Cook at least and Stephen Myron, the two that are very much in focus at the moment, are staying ahead of what's expected to be a 25 basis point cut at the end of the decision-making tomorrow.
All right, Kriti, thank you so much. I'll meet you back here for hour two of Balance of Power, live from the White House. Kriti Gupta with me in Washington as well. As mentioned, Michael McKee, of course, down here for the Fed meeting, but this one's a little bit different, and I'm glad, Michael, to have you with us here. It's good to see you in the nation's capital, as always. Just to get to the matter of the Supreme Court here, we couldn't see an interruption in this meeting, have Lisa Cook pulled out of the room somehow, could we?
Well, you can never rule anything out these days in Washington, but I suspect that would not be something that John Roberts would want to do.
Yeah.
We have not heard that an appeal has actually been filed. The White House told us this morning that they are going to. So it may be not a moot point to get through this meeting. And I would think that the court, since the meeting has started and they're both participating, would step back now, wait till this is over if they are actually going to intervene. And that's the next question is, does the court want to take this case, or do they want to let the appeals court decision stand? And if they do take the case, do they grant a stay to the president to kick Lisa Cook off the Fed and give him the opportunity to appoint somebody else to that job while this all plays out? A lot of unanswered questions still.
And still asking these questions after it was reported over the weekend that there was, in fact, a proper mortgage application in which she referred to the property as a vacation home, which kind of challenges the entire case made by the administration.
Well, we've also had reporting by Reuters today, last night actually, that according to people, the city people in Ann Arbor, Michigan, she has not abused any tax privileges there. She did not claim a tax cut for being a primary resident. And so there seems to be at least some evidence that she did not break any laws, and none of that has been litigated.
So as for Stephen Myron, your first day on the job is the meeting.
Yeah.
Is there some sort of orientation? What does a new Fed governor go through?
Well, ordinarily there would be an orientation. I imagine they got about as far as showing him where the bathroom is today. The thing is the members of the Open Market Committee prepare for these meetings for weeks beforehand. They get briefed by their staff. They go through all of the data. They go through all the contacts that they've had with business people. And Myron hasn't had a chance to do any of that, at least not through the Fed. May gives their report on what they think the economy's situation is and where it's going. So we don't know how much he's going to be able to contribute. Obviously, working as the chairman of the Council of Economic Advisors, he has an idea of what's going on in the economy. Sure. And he's probably going to push some things that the president would like him to push, but it may not be the same kind of in-depth briefing that other members of the Fed are giving.
This is fascinating. I haven't heard this anywhere else. And what is the culture of the Fed in welcoming a new member? Are they, when the doors close, Are they giving him a hard time because of everything that's transpired? Are they skeptical of him? Or when you join this body, you're part of the family?
I think it's going to be a mixture. According to people I've talked to at the Fed officials would sort of go out of their way to be welcoming and polite in public. They may look a little askance at him as he's sitting there, and we've all joked about, we wonder who has to sit next to him at the meeting. But I don't think there will be any kind of overt hostility toward him, and they'll wait and see how he, I don't want to say how he behaves, but how he behaves, you know, whether he's a mouthpiece for the White House or whether he is truly giving an independent view.
So he may really need to choose his words at this first meeting. Is there any chance he's sitting right next to Lisa Cook? Is that possible?
There is, because we believe that they sit somewhat by seniority, and they would be the two least senior people on the Fed board, so it's possible, but we don't know.
Talk about the first day at school. So
Wouldn't
how
you
about
like to
the
be
actual
a
business?
fly on the wall?
No doubt. You've got to get some good leaks for us on this. Mike, what's going to happen tomorrow? Is everyone right about a quarter point?
Yeah, I think the Fed has made it its practice that they don't surprise the markets. They've let the markets decide that it's going to be 25 basis points, so they're going to do that. The question is then, do we get dissents? And you could have dissents on both sides, because you might have Stephen Myron say, I want 50 basis points because that's what the president wants. Yeah, right. It is possible Mickey Bowman would join that. I'm not sure Chris Waller would, because going into this meeting, he said he supported 25. But you could have people who don't want any cuts at all. Jeff Schmidt from Kansas City, Alberto Musalem from St. Louis have said that they don't think it's time to cut rates. So we could have a three-way split. It's kind of fascinating. We haven't had this kind of divided Fed in a very long time.
Then you fast forward to a news conference tomorrow. You're going to be in the room. I can't imagine how Jay Powell prepares for this. We're going to be talking about everything from renovations to a potential firing to the newest member. Everything but the data he probably wants to address.
Well, he'll try to address the data, and of course we get a new outlook for the economy from all of them, and we get the dot plot. So Wall Street's going to really want to know, what is the path for rates going forward? Is this the start of a cutting cycle? Are we going to see this repeated? But everybody's prurient interest is going to want to know, how did everybody get along in the meeting? And where do we go from here? And what happens if Lisa Cook loses at the Supreme Court?
Will he answer any of those?
He will answer, but he will probably not give you anything you can quote. I mean, the easiest thing for a public official in this situation, as you well know, is to say, I can't comment because it's a legal matter.
Yes, right.
And so we could easily see that from Powell tomorrow.
I'm just curious, when we see that room, and we'll of course have this all for you in special coverage tomorrow, you'll see Mike in that room along with a lot of other reporters. These are pretty serious folks here who cover the Fed. Has there been any kind of jockeying or playing around with the people who are allowed in that room, the way we've seen in the White House pool? Is Lindell TV at the Fed tomorrow?
No, the Fed is very fastidious, I suppose you'd call it. They're careful on who they allow in. You have to be a legitimate news organization, and you have to be credentialed by the Capitol Hill Correspondents Association to even get considered, and then you apply to go to the press conference.
Got it. How about that? A lot of stuff you never heard before, thanks to Michael McKee. This is why we love it when he's in town, and he'll be part of our coverage, of course, straight through tomorrow with our special coverage on the Fed decision and the news conference that will follow. Michael McKee and Kriti Gupta, thank you both. Ashley Davis on the way in next on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at losses for the Dow, the S&P, NASDAQ 100 Index, NASDAQ Composite Index, and the Russell 2000. All lower right now with the S&P down 8, holding above 6,600, 66.06. That is a drop of 0.1%. Dow Jones Industrial Average down 95 now, down by 0.2%. NASDAQ Composite Index down 20. For NASDAQ, a drop right now of 0.1%. Interestingly, though, on a down day for the rest of the market, our Mag 7 index is pushing higher. That index up by about 0.5%. The 10-year 4.02%, with the 2-year currently yielding 3.51%. Gold up 0.3%, 36.88 the ounce, and West Texas Intermediate crude oil up 1.9%, 64.52 a barrel. President Trump has filed a $15 billion defamation lawsuit against the New York Times, accusing the paper of serving as a, quote, mouthpiece for the Democrats. The Times said in a statement the lawsuit, quote, has no merit and is an attempt to stifle and discourage independent reporting. Shares of the New York Times down now by 2.7%. Again, recapping, stocks lower, S&P down 0.1%. Balance of power continues right now. Back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie, we do appreciate it. As always, Charlie will have more in about 20 minutes as we track the Tuesday trade here on Bloomberg Radio. Satellite radio, channel 121. You can watch us right now on YouTube. Search Bloomberg Business News Live as we keep an eye on an ear, I should say, on Kash Patel's testimony today. The FBI director is on Capitol Hill, and this has crossed over into the noon hour. It's been several hours of, in many cases, contentious back and forth, as you might expect, with the senators who are there, appearing before the Judiciary Committee and facing questions about his leadership of this Bureau, of course, including the firing of top officials and agents, as well as, of course, his handling of the Epstein case and the Charlie Kirk case. There's been a lot to talk about here. And the ranking member on the panel, Senator Dick Durbin of Illinois, the Democrat you've heard from many times on this program, decided to dig right in. He was the second questioner, of course, following the chair. Let's give you a taste of this back and forth.
Director Patel, much like you, Deputy Director Dan Bongino was a conspiracy theorist who built a lucrative career making inflammatory and unsubstantiated statements about the FBI that would be disqualifying in any administration that cared about nonpartisan law enforcement. What is the evidence to suggest the pipe bombs placed outside of the DNC and RNC on January 6th were an inside job?
I appreciate the opportunity to discuss Director Bongino's mine record. So many on this committee and the media jettison our 31 years of public service.
Can you answer the question, sir?
I'm answering the question. You're questioning the integrity of the Deputy Director of the FBI and mine.
If you found any
and I'm going to
evidence.
answer the question.
I'm
The pipe
asking.
bomb investigation is ongoing, and I'm not going to discuss the
Ongoing?
details of the pipe bomb investigation.
That was how things started. Also asked about the FBI investigation into the Discord group chat where Charlie Kirk's shooting suspect allegedly confessed. He said that they're looking at a lot more than the 20 users who have been already described. Now, this is an important day for this story. We're going to talk about a couple of sides of this. Ashley Davis will join us in just a moment for the political side of this story, but Miles Miller has been all over the law enforcement side of things and the court hearing that we're going to see today. Bloomberg's senior national security reporter with us live from world headquarters in New York. Miles, we expect charges to be made public about 90 minutes from now, and then we're actually going to see the suspect in court today? Tell us what to expect.
We'll see the suspect from a video link, likely from his cell. I don't know if he'll actually be brought to court. He's in a special protected unit at the Utah County Jail just for his own protection. But what we know is that 3 p.m. Mountain Time, he is expected to go before that judge. He'll face those charges, which include murder, obstruction, and, of course, discharge of a firearm. We learned yesterday from the FBI director that there is a definitive link between the suspect and the weapon that was found. His DNA was found on that weapon, as well as found on that towel that he allegedly stashed in the woods there. And they know this, of course, because of that Discord server you were talking about, engaging in this conversation in detail about what he did allegedly to Charlie Kirk.
Really interesting here. Will we have cameras, so to speak, in the courtroom for this trial, Miles, or do we still have yet to learn?
Yeah, so for every stage of the state case, and I say that and I'll reference why in a moment, every stage in the state case, there'll be cameras in the court. Utah has that there, but we have heard hints from sources and also from Pam Bondi yesterday on Fox News that this case is likely to also go federal. She also mentioned, the death penalty. Now, of course, the death penalty was something mentioned by Donald Trump. It's not clear if it would go to that stage in state court, but certainly he could face life in prison federally or the death penalty in the federal side as well.
That's going to be 5 p.m. when we see him virtually, as you point out, right, Miles?
That's right.
5 p.m. Eastern time. Great to have you with us, Miles. We'll talk later. Miles Miller, live from World Headquarters in New York, as we add the voice of Ashley Davis, realizing there is an important political side to this whole story. And Ashley is a partner at S3 Group, Republican strategist and former special assistant to the Director of Homeland Security, having specialized in national security over the course of her career here in Washington. It's nice to see you. Welcome back.
Hi, thank you. How are you?
So much to talk about. I'm doing fine, but this is a pretty tough story to talk about, as I'm sure you've been finding as well, as somebody who's doing public commentary and analysis. I feel like things are going to feel differently later today. You hear the charges at 2 o'clock. We're going to actually see virtually the suspect at 5 o'clock. What will that do to the psychology around this case?
Listen, Joe, I think the whole situation is heart-wrenching, and especially obviously for his family, his wife and children. But what I'm nervous about is that the country's kind of coming together right now. Obviously, you see some fractions of people that were celebrating Charlie getting murdered. But for the most part, people are trying to come around and be nice to one another. But when this happened with the president, it lasted a week. And then everyone went back to their corners and started fighting again. And so I really hope that after Sunday, I feel all week, obviously we're going to see what happens today with seeing the suspect for the first time, exactly as you said. I think that we'll find more information out about what was the motive behind this in some of the court proceedings. But after Sunday, when the president does his memorial service in Arizona, I just hope that next week we just don't go back to our old ways.
We're pretty good at doing that.
We're very good at forgetting.
This, of course, coincided with the 24th anniversary of 9/11, which I know is something that's really important to you. And so many people were talking in that day about the unity that people felt following the September 11th attacks and how quickly that went away. We've been trying to reach our way back to that somehow ever since. This could be an opportunity, but we're hearing a lot of blaming, a lot of left versus right here. Even the president himself has been kind of leading this dialogue, and we heard it at the vigils for Charlie Cook. We heard it from J.D. Vance when he filled in on his show, that this is a radical left problem. Governor Shapiro, whose home was firebombed a couple of months ago, of Pennsylvania, a Democrat, spoke eloquently yesterday, much as Spencer Cox has, about it's not good on either side here. Do you feel like we're having the right conversation in that regard?
I think it's very hard. One of the things that's happening right now with the death with Charlie is this is really personal to this White House. This is a personal friend to J.D. Vance. This is a personal friend to the president's son. A lot of the staff are very close with Charlie. Also members of Congress on the Hill. So I think that some of the raw emotions that you see with some of how people are talking about this hopefully subsides, because I think both the right and the left should make sure that they're not getting too much into the blame game, because it's everyone's fault. And I actually agree with the governor, who's saying, first of all, I'm a huge Josh Shapiro fan, think he's a great governor in Pennsylvania, but when the governor of Utah was saying about the social media issues, I really do believe in that, because of the way you're targeted and as well as what the information that you can read online. And you see a lot of this. I was just talking a little bit earlier with this whole Discord app or chat room, whatever it is. I mean, this is where my 16-year-old's on that. That's how they communicate. And so if a lot of things are coming out through this chat system, which is not probably as highly monitored as it should be.
You and I could have a whole different conversation as parents here, because this is very real, and we know these names because we hear about them in our house.
Exactly.
Let's bring your experience to bear here with the conversation over lawmaker security. It was up to Brian Stile this morning, the chair of the admin committee, to present options to the conference, because not everyone is bought in on these ideas. And I'm wondering what you think is realistic. We're not going to have every member of the House walking around with a detail, are we?
No, it's impossible and way too expensive. Even if you go, the numbers today were somewhere between 35 million and 50 million, and that includes not just Congress, but the justices, some senior judges as well outside the justices, and the Senate. I mean, that's just, the money's not going to go very far, as you know. Here's what I keep saying about what happened in Butler, Pennsylvania with the president, and what happened last week with Charlie. How do you manage that outdoor space anyway? You really can't. I mean, obviously Charlie had his own security, and then you had the local police force. But if you saw time and time again how he was set up that day, do you have to move all your events inside? But if you're a member of Congress and go to a town hall, you're not going. The guests aren't going through mags. Right. Like, is that where we're going? I just think that it's almost impossible to do.
Yeah. That's scary, and this is why a lot of lawmakers are terrified right now. It's UNGA week next week, and part of the review that came from the congressional panel investigating the attempted assassination of Donald Trump was, we have a Secret Service that is being stressed by any number of other dignitaries they need to protect, and part of that includes what takes place during United Nations Week in New York. The president's going to be there speaking. How difficult will this be?
Well, a lot of the security that will happen around UNGA will also be State Department. Sure. So that's a little bit different, obviously, than the Secret Service. But I think, listen, what happened, I was on your show shortly after. What happened with the Butler situation was there were a lot of mistakes. There were a lot of mistakes made, whether it was because of their being stretched or not. But I think that the President of the United States is one of the most, is the most secure person in the world. Maybe Putin's just the same, but I have faith in our Secret Service, and there has been a big revamp that's happened. But a lot of these foreign dignitaries that will be here will have their own security as well. But it's a logistical nightmare. I get completely where you're going, Joe.
Yes, absolutely. Let's go to New York. It's going to be a blast.
No, it's going to be a logistical, yes.
We actually will be in New York next week for the president's address, and we're going to bring you special coverage of the Bloomberg Global Business Forum the very day after. This is an interesting moment that we're in here, Ashley, and it's a pleasure to have yourself and others who have some grace to talk about this. This is the way we're supposed to do this around here, and I appreciate it, as always. Republican strategist Ashley Davis, partner at S3 Group, with us here on Balance of Power. We'll assemble our panel next. Rick Davis and Jeannie Shanzano are back together today, and we'll have a lot more to talk about as we turn our attention as well to geopolitics. Israel's invasion of Gaza City has begun, and we haven't talked about this enough as Secretary of State Marco Rubio makes his way from Israel to Doha. We'll get into it with our panel. Also coming up at the top of the hour, our conversation with Mike Herodopoulos, the Republican from Florida, will be with us here on Balance of Power, only on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, they are all declining right now, with the S&P down 8, holding above 6,600, 6,606, down 0.1%. A solid reading on retail sales this morning, doing little to move markets, with Dow down 104, down 0.2%. NASDAQ right now down 10, drop there of 0.1%. Our Mag 7 index, though, higher by 0.6%. Tesla, Amazon, Apple, all leading that index higher. The 10-year, 4.02%. Bond yields barely budging. 2-year, 3.50%. Spot gold up $9 the ounce, $36.88, up 0.2%. And West Texas Intermediate crude oil up 1.9%, $64.52 for a barrel of WTI. Day one of the Fed meeting, Treasury Secretary Scott Bessent is defending the arrangement that has allowed Stephen Myron to take a leave of absence from his White House job while serving as a Fed governor. Bessent told CNBC this morning the plan is for Myron to come back to the White House Council of Economic Advisors as chair after his leave of absence. Now, in that interview, Bessent also discussed the interview process for the next Fed chair at a recent meeting with former St. Louis Fed President Jim Bullard.
Mr. Bullard and I had a very good, approximately 2-hour session. He has incredible experience from the St. Louis Fed. He is an expert on monetary policy, deep academic background, and knows the institution of the Fed very well.
Treasury Secretary Scott Bessent interviewed on CNBC in London ahead of President Trump's state visit to the UK. And coming up Friday morning, 7:30 a.m. Wall Street time, Bloomberg Radio will be interviewing former St. Louis Fed President Jim Bullard. U.S. auto safety regulators have opened an investigation into whether some Tesla vehicle doors are defective, citing incidents in which exterior handles stopped working and trapped children inside. Now, this move comes only days after Bloomberg News investigation covered a series of incidents in which people were injured or died after they were unable to open doors when Teslas lost power. Tesla shares, they're up today by 2.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, always a pleasure to have Charlie Pellet with us on Balance of Power. This is the Tuesday edition, and we'll get back to Charlie at the top of the hour, 1 p.m. Eastern Time, when we also bring you a conversation with the congressman from Florida, Mike Herodopoulos, Republican from the 8th District, is going to be with us as we have breaking news now from the House. The CR draft is out, and if you've been wonking out with us the last couple of days, you know what that means. The House Republican draft bill to keep the government from shutting down at the end of this month just hit the table. It would keep us running through November 21st. Recalling November 20 was supposed to be the magic date here. That's not even to the end of the year. Far cry from the full year CR that the White House was looking for. And it's where we start with our political panel today. We've got a lot more to talk about as well when it comes to geopolitics and what's happening overseas. But let's start here with Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors. Rick is with me here in Washington, Republican strategist and partner at Stone Court Capital. Jeannie up in New York, democracy visiting fellow at Harvard Kennedy School's Ash Center. Great to see you both. Rick, November 21, does the calendar play into whether this works or not, or is this going to be more about clean CR or one that Democrats can actually affect?
Yeah, I think that the timetable is thoughtful. It's right before Thanksgiving break. Usually leadership tries to use holidays as a backstop to get things done. It's pretty typical in Washington to go right up into a holiday, not letting the members get back to their family and constituents until they get a deal. So I think that's thoughtful. And they've made great progress on the appropriations bills. So it gives them time to really get the budget in order to get it passed. That being said, it's all Republicans right now. They don't seem to have a deal with Democrats. So whether or not Democrats can see toward voting for this in the Senate, the CR, is going to be the big question. My guess is they have not gotten a deal At this hour, the CR is out. It doesn't include the ACA patch that they were looking for the subsidy. And so right now, it doesn't seem to be a deal in the works.
What do you think, Jeannie? Where's Hakeem Jeffries, and I guess more importantly, Chuck Schumer, going to be on this? Without the extension of the ACA subsidies that Rick mentions, are Democrats a no on this CR?
It seems that they will mostly be a no. We have heard from, at least Senator Fetterman, who has said that he will likely go along with it. He is not a fan or in favor of shutting down the government. So he indicates he will likely go along with a CR. Again, the devil's in the details because it depends on what's in there. But so could they pull over, 6 or more that they need to be able to surmount this filibuster? It doesn't look like that yet, but I guess they still have six legislative days left to do that. And then of course you look at the House, and they probably will lose somebody like Tom Massey on the Republican side, so it's going to be a numbers game. And I don't think the president going on Fox and going public and telling Republicans, just do it on your own, ignore the Democrats, is helping the situation, to put it mildly.
Interesting. Yeah, well, we're going to see what happens here. The Speaker of the House was just rolling this out before members of his conference in a meeting this morning. We'll see what the rhetoric is like over the next 24 hours, remembering, of course, September 30 is when they need to get this done by. But I wanted to talk to Rick and Jeannie about what's happening in Israel, more specifically in Gaza. Israel finally starting the long-threatened push into the heart of Gaza City, which already looks like the surface of the moon. Rick, the IDF says its troops have begun an expanded ground operation. At this point, the offensive will broaden, according to ongoing assessments, they say, of the situation. When you look at images of Gaza, there's just nothing left. I know they're having trouble evacuating some folks from the north. To what extent can the military effect change at this point after 2 years of bombing this small piece of land?
Well, Israel leadership have been committed to the total destruction of Hamas. And the reason they're giving to go into Gaza City is that Hamas is still constructed. This is where they're operating from, and they are going to finish the job. I think there's no doubt that Israel's made a choice to take a lot of heat from the world community to accomplish this goal. And people need to remember, when their athletes were killed, Israeli athletes were killed in the Olympics, they spent decades inflicting responses to that without ever losing sight that they said those who were responsible for this will pay. Yeah. So I don't see this as being any different. The real question is whether the region can put enough heat on Hamas to surrender and release the hostages, because that is ultimately, in my view, the only way that the conflict will end in Gaza for now.
Jeannie, the Secretary of State was there just yesterday. He just left Israel on his way to Qatar, where he says he's going to try to encourage Gulf state leaders to re-engage in mediation talks here between Israel and Hamas. To what extent is the administration, the Trump administration, coordinating with Benjamin Netanyahu?
Well, in terms of the attack on the Hamas operatives or leaders in Qatar that happened last week, there's some really interesting reporting out of Axios that, in contradiction to what the White House and the Trump folks have said, that the White House was alerted an hour before that attack. And now the White House and the Trump folks have said that it was not alerted until they were in the air. But Axios is contradicting that, which many people who study the Middle East say is more likely that we were alerted, we being the U.S., prior. So that is, I think, enormously important if that is substantiated. And of course, Marco Rubio is over there. And, he had a very mild rebuke of Israel's actions in Qatar, as did the president, which I think speaks volumes, because the reality is either we didn't know and we should have, or we did know and we are not being truthful in terms of the fact that we knew. And then you look at what the UN report has said today. The UN report is devastating when it says 4 of the 5 acts are a violation of the 1948 Genocide Convention. And it is a devastating 72-page report which holds responsible 3 or maybe 4, I think it's 3 Israeli leaders, including Benjamin Netanyahu. Because to your point, why does this look like an uninhabited moon, picture when you look at Gaza? Why do they keep bombing? Rick is talking about Hamas still being there. The reality is they are engaged in an ethnic cleansing. They want to cleanse the Gaza City of the Palestinians. And the concern is next after this, they will move to the West Bank. That is a violation of international law and humanitarian law. And it should be of concern to all Americans as the United States continues to support Israel. And it looks like the White House knew in advance of this attack on an ally in Qatar.
Yeah, I'll be curious to see what we learn about that attack in Doha. That, again, is where the Secretary of State is, Rick, and the administration is doing this full court press to get Qatar back into the fold. How important is it, if this conflict is ever going to end, to have the Qataris back at the table?
Well, I think the Qataris have served a very, very important role in the negotiations between Hamas and Israel. They're the only ones who have the capacity to communicate directly with that leadership. And of course, some of that leadership was killed in the Israeli attack in Qatar. So whether or not that's a legitimate ability to do the same thing in the future is really called into question. And I think, as Secretary Rubio said as he was leaving Israel to go to Qatar, that we no longer have any time or patience to do a deal with Hamas, that they are days away from walking away from the table to try and get a ceasefire or the hostages back, and will prosecute this, as a war situation, not as a negotiation. So whether or not the Qataris will have a role going into the future, I think, is a real question mark. That being said, they have been actually very productive in also creating communications channels with the U.S., Israel, and Iran. And so there are multiple roles that they're playing around the world right now that are productive for the U.S. and our national security interests.
President posted about this, Jeannie, just a short time ago on Truth Social. I have just read a news report, he writes, that Hamas has moved the hostages above ground to use them as human shields against Israel's ground offensive. I hope the leaders of Hamas know that what they are getting into if they do such a thing, this is a human atrocity, the likes of which few people have ever seen before. Don't let this happen, or all bets are off, he writes in all caps. Release all hostages now. What do we mean by all bets are off?
I think we mean what Rick was just talking about, that, as Marco Rubio said before he left to go to Qatar, that we would support or take military action. I think it is very curious. Number one, the hostages should be released immediately. There's no question. But let's be clear about what happened the other day. We threatened Hamas leadership in Doha to come together and look at Donald Trump's proposal for a negotiated peace settlement. When they gathered, they were decapitated. So you tell me if that means we were serious about a negotiated settlement, or if we were helping them gather together, which there's no evidence we were, so they could be decapitated, or if Israel just took that action. But if you're asking people to gather together to consider a peace solution, you don't support a military action taking them out. And so that's where we are at this point. And I concede the frustration that the president feels. This is a dire situation. But let's look at what is happening to the innocent people, 1 million or 800,000 now, in Gaza City, who have been in the process of being their lives completely destroyed. And this is something that the United States has got to take a stand on. And we have not done that in a forceful way. Instead, we have looked to Hamas. We have engaged in verbal attacks against Hamas. That is fine. but the same should be true of support of ethnic cleansing and genocide when you are literally wiping out a population of people, or in the process of, as Israel is doing in Gaza City and threatens to do in the West Bank next.
Jeannie Shanzino and Rick Davis dealing with another difficult issue today, and we'll keep tabs on this for you as Israel makes its way into Gaza City. Bloomberg Politics contributors, our panel will be back in our second hour as we turn our attention to the Fed meeting that just got underway, and a Federal Reserve Board that now includes both Lisa Cook and Stephen Myron. They're in the room together now, and we'll have a lot more straight ahead with news as well on averting a government shutdown here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Lisa Cook and Stephen Myron are now colleagues. Welcome to the Tuesday edition as the Federal Reserve kicks off a two-day meeting here in Washington with a newly appointed Stephen Myron at the table and Lisa Cook still there as well, the embattled governor, with the backing of a judge even as President Trump continues his effort to have her fired. I'm Joe Matthew, alongside Kriti Gupta, who's in for Kaylee Lyons today in Washington. We thank you for being with us here on Balance of Power. Fed Day, tomorrow the big decision, of course, a lot of noise in the air as policymakers get down to doing their work.
Wall Street's preparing for a 25 basis point cut. Donald Trump saying it needs to be way lower than that when you look at the rates picture.
Yeah.
But at the end of the day, the highlight is at least for these next 2 days, Myron and Cook are colleagues.
That's true enough. Even as the White House appeals the latest ruling, this thing is getting to be a little bit complicated. But the back and forth continues here. It's unlikely they'd be able to get this done with a Supreme Court ruling, I think, before this meeting is over. So that's probably the attendance at the table. But of course, the president's left the bubble. He's on his way to the UK right now, Kriti, for an important meeting that will bring him back together with the prime minister, along with the full flourish of the royal family.
Lots to discuss. I'm sure foreign policy will be on the agenda. That's been a real sticking point between the United States and the UK that have been historical allies for a very long time. But tech, very much also on the docket.
That's
Crypto,
right.
maybe, according to some other outlets.
Yeah, we're getting some headlines on that now. Lizzie Burden is going to join us from London coming up here. Congressman Mike Herodopoulos, the Republican from Florida, will be with us for an important conversation as well. So stay with us as we cover all of our bases today on Balance of Power. And that, of course, includes Wall Street. We start there as ever with Charlie Pellet. He's at World Headquarters in New York with his take on the markets. Charlie, what are you looking at?
Right now, looking at a lot of red, Joe Matthew, ahead of the Fed decision tomorrow, 2:15 Wall Street time. Right now, though, the Dow, the S&P, NASDAQ, they're all declining. Lower little changed on the S&P, holding above 6,600. 6,609 right now on the S&P. Down 5, drop there of under 0.1%. Dow Industrials down 91 on the Dow, decline there of 0.2%. NASDAQ Composite Index down 4 points, just about flat on the day. 10-year yield 4.02%. Spot gold up $11 the ounce, $36.90. That's a gain of 0.3%. West Texas Intermediate crude oil up 2%, $64.55 a barrel. And Bitcoin trading higher by 0.7%, just above 116,000. U.S. retail sales rose in August for a third month in a broad advance. Mixed picture for a lot of the retail names today. Walmart down 0.3%. Target up 1%. Macy's up 0.1%. Amazon up by 1.5%. Oracle shares higher on news that negotiations over the future of TikTok are progressing. Oracle up by 1%. And with President Trump en route to the United Kingdom, just getting word that the UK and the U.S. are set to announce closer cooperation on crypto. That, according to the FT, we got more on that coming up right here on Balance of Power. Recapping, stocks lower, S&P down 0.1%. Balance of Power continues right now. Back we go to Washington. And once again, your hosts, Kriti Gupta and Joe Matthew.
Many thanks, Charlie Pellet, live at World Headquarters in New York. He'll be back in about 20 minutes with another read on the markets here as we make our way through this Tuesday. Thank you for joining us on Bloomberg TV and radio. You can find us as well on YouTube by searching Bloomberg Business News Live. The Tuesday edition with President Trump in the air. Kriti, he's on his way to the UK for an important visit. He and the First Lady, for that matter, that will be part business and part, I guess, fetting by the royal family. He's done this once before, so it should look pretty familiar.
Really taking up that invitation. The envelope, he was very clearly handed by Keir Starmer directly from King Charles at the time. Real showmanship in that relationship. We'll see if he has something to say, though. At the departure today, he had plenty to say on that relationship. We'll see if there's more.
Well, you were there in the driveway when he left. Let's listen to Donald Trump on his way to London.
They want to see if they can refine the trade deal a little bit. We made a deal, and it's a great deal. And I'm into helping them. Our country is doing very well. We've never done this well. We're having trillions of dollars coming because of the tariffs. They'd like to see if they could get a little bit better deal. So we'll talk to them.
President and First Lady are set to arrive this evening. The main focus of their visit is really tomorrow. They'll be at Windsor Castle, where the ceremonial welcome with the honor guard will greet them, followed by lunch with the royal family. And the president will, of course, enjoy the flyby. They're going to have the Red Arrows out there, along with a couple of F-35s provided by the United States. But on Thursday, he goes to Chequers to meet with the Prime Minister. And helping us put this ambitious schedule together is Lizzie Burden. Really great to have Bloomberg's TV anchor and correspondent live from London. Lizzie, what's the security going to be like? And what's the feeling on the ground?
It's already tight, Joe. We've got police in their droves here in Windsor. We're actually not at Buckingham Palace for this state visit. We're at Windsor Castle, this 11th century fortress behind me, because, as you know, this isn't Donald Trump's first state visit. It's an unprecedented second state visit to the UK. And there is much on the agenda here. As you allude to, this economic partnership seeking to be built upon after that trade deal, for which Britain really was at the front of the queue. Of course, we're enjoying lower tariffs than many of the US's other allies. We're expecting $10 billion of economic partnerships to be signed here, including on defense technology, a nuclear partnership, also efforts to bring together the financial hubs on both sides of the Atlantic. And already we've heard from Google saying that they're going to put £5 billion into artificial intelligence here in the UK, although, of course, that's really a drop in the ocean for Alphabet. But significant nonetheless for the UK, but I have to say this could not be coming at a worse time for Keir Starmer, so it's fraught with political risk.
Well, Lizzie, the FT, as we were talking about earlier in the program, has talked about more cooperation, not just on the tech front, but on the crypto front as well. We know this is an issue that's close to the Trump administration's heart. What can the UK offer when it comes to the crypto agenda?
Well, of course, crypto crucial to the UK when it's financially. I would say that there's a difference between the UK and the US on the regulation. You know, on the Washington side, Donald Trump's personal interest in this when it comes to investing in crypto and regulatorily as well. In the UK, we've been a little more hesitant on it, including from the Bank of England Governor Andrew Bailey. And perhaps that's going to be something that holds back the UK, that caution. So I am sure that this is something that will come up in the conversations, not just between Starmer and Donald Trump himself, but also when the US Treasury Secretary Scott Bessent meets with Rachel Reeves. And of course, they're going to be round the table with many of the traditional banking heads, the likes of HSBC and Bank of America, when they're gathering in Chequers on Thursday. So there's much to be discussed, but I really have to underscore the risk here. Look, Keir Starmer's government has lost 3 in just the past 2 weeks, including the UK ambassador to Washington, Peter Mandelson, over his links to Jeffrey Epstein, and this comes down to a Bloomberg scoop. It is going to be absolutely painful, not just in the room between the two of them, but possibly in a press conference that we're expecting at the end of this visit, if, for example, Starmer is asked, do you believe that somebody with links to Epstein should not be in high office? There is that, there is the crypto question, there is the question of Palestine as well. Starmer looking to recognize Palestine at the UN General Assembly meeting in New York next week. So above all, Starmer can't afford to look to be appeasing President Trump, who is deeply unpopular here in Britain.
It's really great to have you, Lizzie. Thank you so much for the readout, and we'll be staying in touch with Lizzie Burden over the next 48 to 72 hours as the President and First Lady make their way. By the time we're on the late edition of Balance of Power, when you join us again at 5 p.m. Eastern, we should be looking at their arrival if all things stay on time. We do have some breaking news coming from Capitol Hill, and it has to do with a potential government shutdown, or in this case, averting one. The continuing resolution that has been written up by House Republicans would keep government funding static. A continuing resolution continues the budget that's already in place until the 21st of November. That's roughly what we expected, with reporting yesterday suggesting the 20th of November would be the case. And it's a far cry from going to the end of the year and pushing everybody into a Christmas deadline, and an even further cry from the full year CR that the administration had suggested. It's a great opportunity to start our conversation with Congressman Mike Herodopoulos, the Republican from Florida's 8th District, is joining us now live from Capitol Hill. And Congressman, it's great to have you with us. How do you feel about this idea? I know the Speaker presented some options to the conference this morning. Are you good keeping things where they are until November 21st?
I am. We want to make sure the government stays open. It is common sense as we're getting our economic rebound with the new bill that, of course, keeps taxes stable. We do not see a tax increase. And, of course, all the investment coming from overseas. We want to keep that momentum going. And I'm optimistic we can strike a deal. But Republicans are 100% committed to keeping the government open. We know how vital it is as we move forward.
Representative Herodopoulos, some of your colleagues, I'll just name a few here, Representatives Massey, Burchett, Sparks, Davidson, even Green, have started to raise questions about this particular bill. Do you think you're going to get them across the finish line, or do you still need to appease some of the centrist Democrats that are holding out?
Well, we're going under the assumption that Democrats simply want to shut the government down. You've heard Chuck Schumer's comments throughout the last few weeks. They want to play politics with it. We choose to keep the government open. I know that some of my colleagues in the House have some concerns, and that's always part of the internal discussion we're going to have. But that said, I'm committed to moving the government forward. I got elected to get things done. I'm happy to say that the border has been secured. And of course, we passed the big budget bill back on July 4th, which finally offered certainty and stability to taxpayers. And another part of the process is to make sure we keep the government open as we look to lower interest rates and do other things to make sure that we stimulate this economy and send a message around the world that the United States is open for business.
There's been some talk about maybe a longer-term conversation, Congressman. You get the CR out of the blocks, and to be able to actually get to the table with Democrats over the expiration of Affordable Care Act credits. Some have suggested that extending those might unlock a potential deal with your colleagues on the other side of the aisle. We've also seen polling, and I believe it was Tony Fabrizio, that the expiration of those credits could cause a lot of trouble for Republicans in the midterms. Where are you on that conversation now? Should that be the point of engagement with Democrats?
Well, I think more than anything else is we want to have a discussion with the American public about what this bill is and what it isn't. These credits are important to a lot of families, but we also want to make sure we have a level playing field for people who are buying insurance without the help of the federal government. So I think that will be one of the key points as we move forward. But let's be clear here. The Democrats want to shut the government down. They're in a total chaotic situation, and they think the only way to appease their base is probably to shut it down. What Mike Johnson has done as our speaker throughout the year has always been able to bring this caucus together to push some common sense forward. And of course, the president has been leading that charge. And so I think we'll work this thing out. But again, we have to work under the assumption, given the rhetoric from the Democrats for weeks now, that they're okay with shutting down the government. We're not. And we're going to do everything in our power in a common sense way to protect taxpayers to keep the government open.
Just to be clear, Congressman, does that mean that even though, as you mentioned, it's a key sticking point, is that's not necessarily the starting point when it comes to these discussions ahead of Thanksgiving?
Well, again, all I can say is I can't speak for others. And you know the in and out maneuvers that the Democrats have been talking about. But bottom line is they think that if you raise taxes and grow government, that somehow that's going to stimulate the economy. We happen to think differently. I always welcome conversations with the Democrats, but they need to put something up on the table. The American public was very clear last November. They wanted change in Washington. We've given them that change, and we've solved the problems on the border, and we solved the problems with the tax situation, which was very much uneasy. I mean, Bloomberg is dedicated to business, and the best thing the government can always do is offer certainty and stability to the business world. That's what we're trying to do. We hope that the Democrats don't throw in some kind of monkey wrench to mess this up.
Well, you know, we've heard from a lot of them, and I'd love to ask you about business and the Federal Reserve meeting that's starting today, Congressman. But just lastly, we've had Democrats, including Brendan Boyle, the top Democrat on the Budget Committee, explain that their concern boiled down to not just the debate over the big, beautiful bill, but the rescissions that followed, that there's a lack of trust between the two parties because monies agreed upon and appropriated were clawed back by Republicans. Do you see them on that front? What would be your response?
Well, it's a good question to ask, but let's be clear. The Democrats were absolutely okay, given how they voted, to raising taxes. I mean, if you looked at the big bill, they were okay with going back to the old tax rates, which on average would have been a 23% tax increase. I don't think that's a good thing for the economy. As far as rescissions bills are concerned, when you look at what we cut out of there, we're talking about NPR and PBS. That is not a vital government function. Remember, when I was growing up, there might have been 3 or 4 channels, but today there are hundreds of channels with whatever people want to see. And so we don't need to be subsidizing those programs. And it was a message that we wanted to send out.
USAID, wasn't it?
How we worked out. Oh, the USAID, it was even clearer to me. I'm glad you asked, Joe. I mean, if anybody looks at this in a common sense lens, they're going to say, we spent money on that when we have a budget shortfall. I thought the USAID cuts were the most obvious ones to make, and I think we need to look further. And it's one of the reasons why I created a bill that we're looking at called the Ledger Act. It says everything should be out there. You should see exactly where all of your money is being spent, not just the top line, but the specifics within. That's what we did in Florida, and we're the most transparent state in the nation, and it turned around our economy. It's the reason why Rick Scott, our U.S. Senator, and of course myself, has pushed this bill with literally 70 co-sponsors in the House. We want to make the government more transparent so we don't have these bogus expenditures like we saw with USAID.
Congressman, we've also got one eye firmly on the Federal Reserve. As Joe had mentioned earlier, I just want to play with for you some sounds, some comments that the president had made earlier when it comes to the new appointee to the FOMC board, Stephen Myron. Just take a listen.
Thank you.
He'll have a big influence on this. When too late, getting his rates down, I guess. Who knows? You never know with too late, but he's done a lousy job. The rate should be much lower.
You think about the independence?
Oh, it should be, but I think they should listen to smart people like me. I think I have a better instinct than him. If you look, all the economists got it wrong. I got it right.
The president there speaking, of course, ahead of his departure to London. Congressman, he's making the case that rates should be significantly lower. Traditionally, when we hear rhetoric like that, it means that the economy is in trouble, that we're heading for recession. Do you see any signs of that?
Well, I think we all had concerns with the latest job reports, and the president has said we've been pushing for this for months. Unfortunately, the Fed board has been giving us kind of the runaround on that. But bottom line is this. I had Mr. Powell in the committee where I serve, on the Financial Services Committee where I serve as whip, and I asked him two fundamental questions. Did they make a mistake in the Biden years on the interest rates? He admitted, yes, we made a mistake. Second, I said, did the overspending in Washington also stimulate this inflation? He said yes. So with that in mind, when other nations are cutting their interest rates, we need to do the same here. Where I live in Florida, the difference between a 7% interest rate and a 3% interest rate on an average home where I live is $1,200 a month. That's $15,000 a year, and people can't afford it. That's the inflationary effect we want to get rid of. We want to tackle inflation by doing common sense things, by reducing spending and giving certainty to the economy, by keeping the government open and making sure that people know that the tax rate is stable now and they can make those investments long term.
It's got to be an interesting day in the room, Congressman. You've got Stephen Myron, first day on the job, presumably sitting next to Lisa Cook as they hash out this decision and review the data. Do you believe Lisa Cook should be fired?
Well, I think that facts speak for themselves, and we want people who truly understand the economy. It's the reason why I'm out in the real world every day talking to people who create jobs and opportunity, not just the folks here in Washington, D.C. And as you saw in the last meeting of the Fed, there was a split vote, which is very rare, as you know. I think that given the numbers that we're seeing right now, I think there's a good chance we'll get at least a quarter point, hopefully a little bit more, to help people who've been so hard hit the last 4 years with higher rent prices and gas prices. We want to help them out, and one way to do that is to help them on their mortgage payment.
I know you mentioned the facts speaking for themselves. Do you think she deserves due process in this case before she's fired or not fired?
Well, look, we always want to provide that, but also when you apply for jobs like this, you need to be honest. And clearly that was not the case. And I think that full transparency that I talked about earlier, Joe, that idea where government spending should be in the sunshine, we need to do that. But bottom line is the Fed needs to react to the markets, and the markets start telling them reduce interest rates.
He's a man who took his doors off his own office back when he was president of the Florida Senate. Congressman, it's good to have you with us on Bloomberg. Come back and see us again. Mike Herodopoulos, Florida's 8th District. Alongside Kriti Gupta, I'm Joe Matthew in Washington. We'll assemble our political panel next. Rick and Jeannie are on the way in. Only here on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got NASDAQ just turning higher. Little change, though. That is the key takeaway at this hour. Up 5 right now on the NASDAQ Composite Index. That is a gain there of under 0.1%. Bottom line, though, this stock rally hitting a wall in the run-up to tomorrow's Fed decision. Right now, we have got the S&P 500 Index. It is down 4, drop there of just under 0.1%. Dow Industrials down 121, decline there of 0.3%. The 10-year at 4.02% with the 2-year 3.50%. Gold up $9 the ounce, 36.88, up by 0.3%. And West Texas Intermediate crude up 2% now, 64.57 a barrel on WTI. Binance said to be nearing a deal to escape the compliance monitor that was imposed by the Department of Justice. Developing story, headlines right now on the Bloomberg Professional Service. And Amazon's Prime Video has become the first major tech streamer to strike a deal with Augusta National Golf Club, airing the early rounds of the Masters tournament in 2026. Amazon up now by 1.5%. Recapping, we've got NASDAQ higher by just about 0.1%. S&P, though, in the red, lower, little change ahead of the Fed decision, down now by 0.1% with the 10-year, 4.02%. Balance of power continues right now. Back we go to Washington. Once again, your hosts, Rudy Gupta and Joe Matthew.
Always a pleasure. Charlie Pellet. We'll have more from Charlie in about 15, 20 minutes when we get back to the markets, as we anticipate a couple of important things in the next couple of hours in the case of Tyler Robinson, the man accused of killing Charlie Kirk. First at 2 p.m., a little more than a half an hour from now, charges will be made public. We're waiting to hear from the Utah County Attorney Jeff Gray, who is expected to appear to make the charges public and tell us a little bit more about what they have learned in the early days of this investigation. Then at 5 p.m., we're going to see the suspect via video link, Robinson, due to appear in court virtually, at least, for criminal proceedings that will be coinciding with the late edition of Balance of Power. So we should have our eyes on the courtroom, as I mentioned, around 5 p.m. Eastern time. Miles Miller is covering this full-time for us these days, Bloomberg's senior national security reporter, and joins us now live from World Headquarters in New York. Miles, what are we going to learn about these charges at 2 o'clock?
Yeah, we expect to see what charges stay as part of this. Of course, they charged him with murder. They charged him with firing that firearm, and then they also charged him with obstruction. What we expect to see is that this evidence is brought forth that he is definitively linked to the gun and to the towel found at the scene of, or near the scene of, that crime. Now, Tyler Robinson, of course, the suspect in this incident, is in a special holding cell at the Utah County Jail. He's been there since Friday when he was arrested. We know that he said nothing to investigators since the moment that he was arrested. He confessed, we're told by sources, to his father, but said nothing to law enforcement. Law enforcement working off of that evidence, as well as what he said on a Discord channel he was in with more than 20 people. Kash Patel, of course, the FBI director, saying on Capitol Hill today that he expects to go through that chat and see if there are any other people who are related to this. The focus of the feds is, was there any outside influence to the shooting? And the focus on the local end is figuring out just how he planned all of this. And we have yet to hear if there'll be federal charges in this case as well.
Miles Miller, thank you so much, live from New York, as we wait to hear the details on these charges. There's, of course, a political conversation that's being had, and it's been a pretty messy one over the past week or so, with a blame game being played by the President of the United States, and a lot of fear that we've discussed with lawmakers and with others here in our Washington studios when it comes to the next shoe to drop, the idea of retribution, the radicalization of Americans on both sides of the aisle when it comes to social media. Dick Durbin spoke to this in the hearing today with Kash Patel, the FBI director. Durbin, of course, a longtime Democrat from the state of Illinois and ranking member on the Judiciary Committee. Let's listen to what he said.
All of us in public life, on both sides of the aisle, have a responsibility to bring down the temperature and to work to unite the American people. Let's be clear. Republicans are not Nazis, and Democrats are not evil, as Mr. Patel has claimed. Democrats are not responsible for the murder of Charlie Kirk, and Republicans were not responsible for the murder of Melissa Hordman. Our political opponents are not our enemies. We are all Americans, and we should be working together to keep the American people safe and protect their constitutional rights.
You would not think that any of that would need to be said at a congressional hearing, or that it would be controversial. Let's see what our panel thinks. Rick Davis is here, Bloomberg Politics contributor, Republican strategist and partner at Stone Court Capital. And in New York, Jeannie Sheehan Zaino, Bloomberg Politics contributor, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. It's great to see you both here. And Jeannie, I'm guessing that you agreed with everything that Dick Durbin said. Is that the answer to the blame game that's been going on here in Washington? Governor Shapiro, whose home was attacked by an arsonist a couple of weeks ago, made the point yesterday publicly, not unlike Spencer Cox, that political violence on both sides must be condemned. Why do we have to say this out loud now?
Well, I do agree with Senator Durbin. I would tweak it a little bit. I don't think I understand Patel was in front of him for an oversight hearing. I don't think I would name check him like he did in that process, but I do agree. I agree with Josh Shapiro. I agree with Governor Cox from Utah. Amy Klobuchar made a similar statement during the hearing today, and that is what we need. The reason why it has to be said is because we have people in the administration, in particular from the president on down to the vice president and so forth, who have been going public and saying they blame one side, being the left, for political violence that has been going on in the country, and that they are going to take steps to seek revenge for that and to address it. And of course, not only doesn't the data support that, it also is not what we need. There's one thing we know from the research on political violence: it's contagious. So once it starts, the way to try to bring it into control and try to mitigate it is for leaders to take offense, particularly to people on their side who engage in it. That's the way you try to get it under control. And of course, this the context we've been hearing on the podcast and elsewhere in the last 48 hours has been the exact opposite of what we need.
Rick, weigh in here. How do we get political violence under control?
I think that's a really hard question to answer. I don't think it's for lack of will, right? People generally want a safe environment to practice politics in, to have a public discourse. But we have also been imbued with this performance politics, right? Where you're out there trying to get clicks, and it's less about what you're voting on that day or the policies you're pursuing than it is about how many people are clicking onto your site and or giving you a donation, all of which seems to revolve around the most hyperbolic kind of conversation that you can generate. So until fundamentally that changes, it's really hard to believe that people are going to act against their own self-interest, right? Political violence has been stoked over the years in a lot of different ways. This is not new. It brings it to focus because of the assassination of Charlie Kirk. But 6 months from now, we'll be talking about something else, and we'll have not made progress. I actually think until at which point in time Congress starts holding hearings like they did 3 years ago on the pernicious impact that the internet has on young women, vulnerable communities. We were making progress then. People actually realized that the spread of these social media outlets were hurting our society. Now it seems we've forgotten all that. And I think it's a perfect opportunity for Congress to resurrect some of the good work they were doing just a few years ago.
Well, it strikes me that you can't have a cancel culture without social media, to your point, Rick. And there's been a lot of talk, Jeannie, about an emerging cancel culture, not the libs getting upset at MAGA and having them canceled for saying things that are out of date or sexist or whatever it may have been in the last iteration. Look no further than J.D. Vance, who filled in on Kirk's former podcast yesterday. He said anyone celebrating Kirk's death should be fired from their jobs, quote, call them out, and hell, call their employer, unquote. All of the major airlines have said that they have fired employees over the past couple of days for inappropriate remarks online on social media about Kirk's death. Is this the new cancel culture?
It may well be. You know, we have seen a lot of that. And of course, those can be litigated if somebody is fired by an employer for speech that can be litigated. I think equally concerning, speaking of podcasts, was Pam Bondi, the Attorney General, on another podcast saying that they were going to address hate speech. And of course, that is clearly a violation of the First Amendment jurisprudence as it's ever been defined in this country, because the last thing most conservatives, including Charlie Kirk, were very clear on, and liberals, is that you want the government vetting what speech is appropriate and what speech isn't. But there's a lot of attacks on the First Amendment going around. Just yesterday, the president sued the New York Times. Today, speaking to Jonathan Karl, he said, maybe I'll go after you, Jonathan Karl being a really well-known reporter from ABC. So there's a lot of attempts to use the legal process to chill speech. That is very concerning. So we've got to be cognizant that when Congress does attempt, as Rick was just talking about, and hopefully they do, to find some way to regulate some of these social media sites, they do so without limiting our First Amendment rights to free speech and free press, which are critical to any democratic system. And we really, really need to be cognizant that we protect speech we don't like even more than we protect speech we do like. But there's a big difference between speech and violent acts.
Let's talk about another use for social media, at least when it comes to Kash Patel and his handling of the kind of hunt for Charlie Kirk's shooter. At the time, of course, Tyler Robinson is now the man accused. We're awaiting updates shortly. He's saying that his only crime is transparency and giving those live updates on the investigation. What did you make of that hearing?
Yeah, obviously some senators were upset about the fact that they had detained someone and claimed they had the killer in custody when they didn't. And again, I mean, that is probably more attributable to this sort of performance politics than it has anything to do with good police work. And yet, at the same time, the decision to make public the photographs and video that they had of what appeared to be the shooter was, I think, the reason that they were able to take him into custody. So it's kind of a two-edged sword, right? The same sort of performance kind of style of Kash Patel got him in trouble on the onset, but may have helped him find the killer on the downside.
You've prepared a number of elected officials and others over the years for hearings. Bring it on. Is that how you start a hearing?
That's not how I would suggest you start, but I've never sat in front of Kash Patel before and hopefully never will.
Fixing for a fight, maybe with an audience of one. Rick Davis and Jeannie Shanzano, great panel and a great conversation. Thank you both, as always. Bloomberg Politics contributors. Stay with us with much more to follow here on Balance of Power. Alongside Preeti Gupta, I'm Joe Matthew. This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. U.S. stocks trading little changed right now. The stock rally hitting a wall in the run-up to tomorrow's Fed decision. S&P right now down 4, down just under 0.1%. Dow Industrials down 0.2%. NASDAQ little changed on the day, lower less than 0.1%. 10-year 4.02%. We've got spot gold up $8 the ounce, 36.87, up 0.2%. And West Texas Intermediate crude 2.1% higher, 64.65 a barrel. President Trump has filed a $15 billion defamation lawsuit against the New York Times, accusing the paper of serving as a, quote, mouthpiece for the Democrats. The Times, in a statement, says the lawsuit has no merit. Shares of the New York Times down 2%. Balance of power continues right now. Back we go to Washington. Once again, Kriti Gupta and Joe Matthew.
Okay, Charlie, many thanks. As the Fed meeting gets underway, of course, Charlie's looking at this just like we are, the true connection of Washington and Wall Street. And around this time tomorrow, we'll be in special coverage, special Fed coverage with the crew in New York. The outcome seems fairly well determined. It's a quarter point, right? Tell me if I'm wrong. The big question is the conversation that takes place in the news conference afterward, knowing that right now, just imagine, to be a fly on the wall, it is entirely possible Lisa Cook and Stephen Myron, who are in the same room, are sitting right next to each other based on the seniority that dictates everyone's position around the table. Learned that from Michael McKee earlier today. And so what will this meeting bring, and will it be justified? We're joined now by Kitty Richards, Senior Strategic Advisor at the Groundwork Collaborative, former official at the U.S. Department of the Treasury in the Biden administration. Kitty, it's always great to have you. Happy Fed Day, almost.
Thanks for having me.
I'm wondering your thoughts here, just broadly, with all of the confrontation and drama that has surrounded this meeting. They're behind closed doors now. Culturally speaking, can the Fed handle this?
I think that the Fed has been put in an unprecedented situation. That said, as you alluded to, we pretty much think we know what's going to happen with the interest rate decision. The Fed has been signaling for quite some time that they were seeing interest rate cuts on the horizon, but not yet. I think markets and the signals we've been getting from various Fed governors from across the political spectrum all point to a quarter-point rate cut. In some ways, that makes the Trump administration's really vicious targeting of Lisa Cook especially surprising and potentially counterproductive. The reason that we all think that the Fed is going to be cutting rates is that we've seen significant deterioration in the labor market. Between last month's job reports and the big revisions we saw, it looks like the labor market has been softer for longer than policymakers understood, and now we're seeing a market slowing. We're seeing job openings below the level of job seekers for the first time in several years, and we've seen a spike in the Black unemployment rate, which is both troubling for Black workers and often a harbinger of further softening in the labor market to come. And so all of those things are really pointing to the Fed loosening monetary policy to try to boost that struggling labor market. That's been made more complicated by inflation, which remains elevated and which is being driven up by the Trump administration's handling of tariff policy. But all of those things would point to a rate cut. Unfortunately, by undermining the Federal Reserve's independence in the eyes of the market, we are seeing some signs that market participants are going to start to worry that the Fed is not going to keep inflation under control. And that can be a self-fulfilling prophecy that actually makes it harder for them to lower real long-term interest rates, which can be very important.
The irony of this whole thing is that the market reaction to the very fears you've laid out is ultimately showing up on the longer-term interest rate side of things, the very piece that affects the housing market, which is the very crisis that the White House is trying to warn everybody about. Does a 25 basis point or even a 50 basis point rate cut address that?
You know, that's exactly right. That what we're seeing is that yield curve is getting significantly steeper. That is, there's less and less difference between what you have to pay to borrow short term, where the market is predicting those interest rate cuts are going to come, and long term, where the long term rate is really driven by the market's expectations about future inflation. And so if what the president is trying to do is bring down mortgage interest rates, we're going to start to see whether the Fed is losing its ability to drive down those longer-term interest rates.
So what's the job for Jay Powell tomorrow? They'll make an announcement on interest rates. The markets will do what they're going to do until the news conference begins. And I suspect that everybody in the room, including Michael McKee, is going to be asking about a lot of difficult stuff that he doesn't want to talk about. Lisa Cook, Stephen Myron, is he going to go back to the White House? The renovations, for crying out loud, at the Eccles building. There's so much that doesn't include data that reporters want to ask about. Does that also cloud the picture for the chair?
I imagine that he is going to try at every turn to bring folks back to the conversation about data and reinforce the idea that the Fed is just moving along business as usual, not getting caught in the noise or the political football, and really just continuing to make data-informed decisions. Because for the Fed to be able to do their job and affect those longer-term interest rates, they really need to signal that they still have a steady hand at the till and that they are going to be making data-informed decisions that can then be relied on to move the markets in the ways that they're supposed to.
The Donald Trump's tariff policy is what's muddying the water, it feels like, even though there's been a bipartisan consensus that rate cuts is what this economy needs, even just a normalization of rates, if not ultimately stimulus. But if you look at the data, it feels like there's arguments to be made here that the U.S. has been able to absorb higher tariffs and higher rates, and it hasn't affected the end consumer in the way that maybe we thought of on April 2nd. Your thoughts? Is it?
You know, we have seen prices begin to rise. And one of the complicated things about the tariffs is twofold. One, just the chaos around what are tariffs, what will they be in 90 days, creates a lot of uncertainty that makes it difficult to invest. The other complicated thing about predicting when consumers would start to see price increases is that there's often a big lag on those tariffs. Companies place orders, retailers, for Christmas starting 6 months in advance, right? We have shipping times. We did see a pullback around Liberation Day, and then we saw that filter into prices over the following months. At the time, many analysts were saying, you have to watch and wait, and we are seeing those prices go up. As you said, I do think there has been a lot of strong indication that the Fed should have begun normalizing rates a lot sooner. I was on this show almost 2 years ago arguing that housing prices and mortgage prices were really weighing on consumers, and that the inflationary period from the pandemic supply chain shocks had largely worked its way through. And I do think that you're right that Trump's tariff policies have made it more difficult for the Fed to engage in the kind of rate cutting that many people were advocating for.
But if there's a time for prices to go up for the American consumer, is this the right time? And I say that with the caveat of we're still sitting on COVID-era stimulus. We're still sitting on elevated savings as kind of the broad American consumer. Retirement savings are up. Loans aren't as much of a burden as they were, say, 3 years ago because so many people have paid off their debt. If there's a time for the American consumer to absorb tariff costs, is that now?
You know, I'd be very careful when thinking about things like retirement savings being up. It's true that people who have significant retirement portfolios have seen asset prices rise dramatically. Also, people who already own a home have seen those asset prices rise dramatically. That has driven up wealth for people who have substantial holdings in the stock market and own a home. That is not the majority of Americans. And so I think working people are really being squeezed squeezed. Now they're being squeezed on both ends by a faltering labor market and rising prices. And those consumer goods prices and things like groceries and housing costs, those are a big, big part of the typical family's budget, less so the kind of folks who are seeing those asset prices appreciate and seeing their wealth go up.
Great to have you with us, Kitty. Just to be clear, you're expecting a quarter point tomorrow, right?
That's what the markets seem to be predicting.
Sure, great. To think you've been coming back for 2 years. It's wonderful, as always, to spend time with Kitty Richards, Senior Strategic Advisor, Groundwork Collaborative, former Treasury official in the Biden administration. Keep this conversation in mind right around this time tomorrow as we're waiting for the headlines to roll on interest rates and waiting for the news conference to begin. We'll have special Fed coverage 1:30 p.m. Eastern time right here on Bloomberg TV and radio. One of the other major stories that we've been following in the past 2 days is a potential sale of TikTok. This came out of nowhere, but based on talks that were had in Europe over the weekend with Treasury Secretary Scott Bessent, there appears to be, as we discussed yesterday, a framework in place. How that framework is going to work and whether it becomes an actual deal is a whole other matter. President Trump was asked about this by reporters in the driveway of the White House as he was leaving this morning for the UK. Let's listen to what he said.
We have a deal on TikTok. I've reached a deal with China. I'm going to speak to President Xi on Friday to confirm everything up. We made a very good trade deal, and I hope good for both countries, but a very different deal than they've made in the past.
What companies are going to buy
We'll be announcing that. We have a group of very big companies that want to buy it.
A group of very big companies want to buy it. Will China sign off? And will this meet the letter of the law? We have a law here that the president of the United States had signed after Congress passed this. Remember, divest or ban TikTok. No one knows more about this story than Matthew Schettenhelm, and I'm really glad to say that he's here right now. From Bloomberg Intelligence, he's an analyst, media, telecom, litigation, and policy, so keep the legal aspect in mind here. Mr. Schettenhelm, great to see you.
Hi, Joe.
Where to begin? We talked a lot about this law as it was being debated. It was passed and it is now in place. As we understand any of the details of this framework that would reportedly include a licensing of the algorithm, would this fulfill the law?
Yeah, that's the big question. I mean, this has been an unusual path from the beginning. This isn't the way the law usually works.
Yeah.
You know, this law said that as of January 19th, TikTok is banned, and companies can't continue to carry it in their app stores after January 19th.
It's technically banned right now.
It's technically banned. That law is on the books, and yet President Trump every 3 months grants this extension. His Department of Justice has written these letters to the company saying you're not violating the law, although it's not clear how they're not violating the law. And so now the question is, if we have a deal, does the deal honor the terms? Because Congress was pretty specific about what sort of divestiture it envisioned. And as you said, one of those terms goes to the algorithm. And the law says that there should be no operational relationship between ByteDance and this new entity going forward with respect to the algorithm. And so that's going to be the big question to watch is how are they, does law matter, first of all, is the big question here. But if law still matters, how are they going to address that?
Are there enforcement mechanisms here?
Yeah, so the law contemplates that the Department of Justice can bring a suit against these companies that host. So that has really been, you know, the hang up here is President Trump has said, look, it's up to me, my Department of Justice, to enforce the law. I'm not going to enforce it. Lawsuits can be filed as well, in theory, you know, trying to push to say, look, you're not honoring the law. You could envision competitors of TikTok trying to do that, but if they wanted to do that, you would think they would have done it in these past 8 months, and we saw nothing there. And you know, there was a real passion about going after TikTok in 2023, 2024. A lot of that political courage has melted away. I'm not sure there's a lot of will from TikTok's competitors to raise the ire of President Trump with the lawsuits.
See, you know about politics too, not just the legal side of things. With the potential buyers, let's say there's a consortium. I'm assuming Larry Ellison is part of this, but we'll find out. Would they then also have to be vetted by the Chinese government? Because Beijing still needs to sign off on
Yeah,
this.
I mean, it's not clear, you know, how much China needs to be involved. Clearly, that's been a hang-up of a resolution here, is China signing off on how is this valuable algorithm going to be handled, who's going to handle it, where's this data going to go, where is it going to operate. So the devil is very much in the details on all of that, and it remains to be seen. Our law, the U.S. law, contemplates that the president should determine that this arrangement satisfies the law. Yeah, right. And so there's even a legal question there. If it's the president's determination, can he say whatever, you know, yes.
And he's a fan.
Yes.
I never asked you, are you on TikTok?
I'm not.
That's the right answer if you're covering it, right? I guess, Preeti, you from time to time? Is it on the phone?
I'm a member of the youth. I have
too old.
to.
I don't really. Okay, show me how someday. We'll do that in the meantime and meet you back here at 5 p.m. Eastern. Matthew Schettenhelm, Bloomberg Intelligence, thank you. The late edition of Balance of Power at 5 o'clock. See you then.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, I got my glass of water and 2 teas. I am ready for the next 60 minutes here on Bloomberg Business Week Daily.
No wine?
No wine.
No wine,
It's
okay.
only Tuesday, Tim.
It's Tuesday and it's 2 o'clock, so
Yeah.
maybe tomorrow after we hear from Jay Powell, you can take a drink.
Yeah, I mean, the Fed, as you know, everybody, welcome. It is Tuesday, September 16, 2025. Carol Masser, Tim Stenivek, live here on Bloomberg Business Week Daily. Fed kicking off their 2-day meeting. Today, we get that decision tomorrow. Stock investors, though, looking at my Bloomberg here, taking a little bit of a breather, and that's following a solid retail sales report here in the United States. We're going to get into all of this over the next hour.
Yeah, front of mind, top of mind for us, the U.S. economy, monetary policy, and the makeup of the Fed once again in focus. Michael McKee down in Washington, D.C. He's going to be chatting with us in just a minute.
Katie Kaminsky is also going to stop by from Alpha Simplex Group. We're going to talk about U.S. rates this year, next year. What is she expecting in terms of Fed moves, or is it still TBD? So we'll get to that. And then, Tim, we're going to talk a little bit about investing in American infrastructure.
And by that, we mean a lot of data centers. But if you've been paying any attention to infrastructure talk over the past 2 years, you know that's what that means. The CEO of the $77 billion market cap REIT, Equinix, is joining us a little later this hour.
All right, first up, let's get to the trade. And ahead of that Fed decision tomorrow, here is Charlie Pellet.
This time tomorrow, we will know for sure what it is that the Federal Reserve has done, and we'll be awaiting Jay Powell's news conference, 2:30 p.m. Wall Street time. Right now, though, we are looking at stocks essentially in a holding pattern with the S&P down 6 right now. Little change. That rally hitting a wall earlier today, down 0.1%. The Dow down 120 right now, down 0.3%. NASDAQ, we'll call that flat on the day. The Mag 7 index up now by 0.5%. The 10-year 4.02% with the 2-year 3.50%. Gold up $8 the ounce, up now by about 0.2%. 36.87 the ounce on spot gold, while West Texas Intermediate crude now up 2.1%, 64.65 for a barrel of WTI. Oracle shares, they're higher by 0.8% on word that negotiations over the future of TikTok are progressing, relieving some uncertainty around one of the software company's key customers. U.S. auto safety regulators have opened an investigation into whether some Tesla vehicle doors are defective, citing incidents in which exterior handles stop working and trap children inside. Now, this move comes only days after Bloomberg News uncovered a series of incidents in which people were injured or died when they were unable to open doors when Teslas lost power, particularly after crashes. Tesla shares, they're up now by 2%. Recapping, S&P lower by 0.1%. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So a lot going on, and certainly a lot coming out of investors still when it comes to some of the economic data points. We did get an update on U.S. retail sales. It showed an American consumer that appears to be in good spirits. Not so for U.S. home builders. Their sentiment stays low despite a drop in mortgage rates. You had U.S. industrial production barely rising in the month of August. And then, of course, there is the Fed, tomorrow's rate decision. There's also President Trump's bid to fire Fed Governor Lisa Cook from her post. That bid, that action, blocked for now, but it ain't over, it seems. And then you've got the President Economic Advisor, Stephen Myron. He's on his way to joining the Fed board. He should be there, I would assume, after the Senate confirmed him to the post in a vote last evening. So let's get to it. The economic backdrop, the Fed preview. We head to Washington, D.C. Bloomberg TV and radio, international economics and policy correspondent Michael McKee joining us. Mike, let's start with Lisa Cook. She's involved in this Fed decision, and yet the president still seems to be trying to get her off the Fed. How is that happening, and how might still some legal actions impact anything she does at this Fed meeting?
Well, it doesn't look like anything's going to impact what she does at this Fed meeting because she's already there, and
We have not heard that the White House has actually filed its appeal to the Supreme Court, so we're not expecting any immediate moves from the justices that would interrupt this meeting. It's probably something that will play out after the meeting is over. But she is at the meeting, the Fed confirmed today, as is Stephen Myron. They may be sitting next to each other, we're not sure. And so whatever happens is going to happen at this point. The legal stuff is sort of off the radar for 24 or 48 hours.
So because she's there, Mike, I think it's worth talking about her views and what she would talk about potentially, given what you know about how she thinks about monetary policy right now. We're not in the room. Obviously, we won't get the transcript for years, but what is the conversation that you think she is having right now?
Well, you're right, Tim. Each one of the members of the Open Market Committee gives a presentation on what they think the economy is doing and what the monetary policy should be for that. And in her case, she has been relatively dovish over the years, but generally sides with the chair. And of course, the Fed has raised and lowered interest rates over the past 2 years. So her time on the Fed, she hasn't really made an independent mark. And nobody's really expecting her to do so at this meeting. The feeling is she'll vote with Powell to cut rates 25 basis points. So it isn't going to be anything that changes anybody's policy minds or anybody's views of what's going to happen to the economy. But as a labor market economist, they'll certainly be looking to her for some thoughts on where we're going with the labor market, given the rise in unemployment and the fact that we're hiring almost nobody these days.
All right, well, I'd be an idiot if I don't follow and say, what does she say about the labor market and where things are going?
She hasn't said a whole lot. She doesn't speak all that much, but she has suggested that the labor market is not as healthy as it has been.
Hey, one thing I do want to ask about, okay, so she's relatively dovish, often sides with Fed Chair Jay Powell, but Stephen Myron, right, he's kind of the wild card, and I'm just curious, are we going to feel the imprint of his presence?
We're not going to feel the imprint of his presence either, except that he might dissent if the Fed does a 25 basis point cut, and he might call for a 50 basis point cut, because that seems to be the reason he's been sent over to the Fed by Donald Trump. And the reason it sounds somewhat suspicious is because he's keeping his job as chairman of the Council of Economic Advisors, just taking what he calls an unpaid leave of absence. So he's going to be sitting in on the Fed meeting and voting on monetary policy while still being employed by Donald Trump. And so there's a lot of suspicion about what he's going to say, what he's going to do, what kind of positions he's going to take. And it's probably going to be on him to prove that he's actually independent if he wants to do that.
How does that work? How do you take a leave of absence from a job and take a new job completely? I understand the idea of maybe not getting paid by one role and while you take this other role, especially because it is, not a full term that he was sworn in for. It was the remainder of a term. But how does that work from an independence perspective?
Well, it doesn't work from an independence perspective if you're talking about impressions, because obviously it looks bad. We don't know the exact legalities of taking an unpaid leave of absence from a government job, but the Federal Reserve Act says that governors cannot have any other employment. Now, does that mean any other employment that is full-time paid, or does it mean that you can get away with an unpaid leave of absence? Nobody's really challenged that. That's not gone to court, and I don't know that it will, but it is going to be an interesting question. And I think one thing that gets lost here, I just want to mention so that you have it on your radar screen, if his term ends in January as expected, and the president doesn't appoint someone else to take the seat, Myron can stay as long as there is no new appointee. So he could be in the situation that many Trump cabinet officials were in the first term, and serve as an acting governor for an unlimited amount of time, basically.
I guess what I'm wondering when we talk about independence, Mike, and who knows what goes on behind closed doors, right? In terms of members of political office. But I mean, do we assume that members of the Fed, they're not talking to members in the White House on a regular basis? And I mean, I know I'm jumping to conclusions, but I mean, or are we jumping to conclusions that there's kind of now someone who is friends with the executive branch and friends with the president, that there's likely to be kind of a direct, potentially flow of information from the Fed and what's being said internally to the White House because Myron's now a member of the Fed board?
Well, it's a bit complicated.
And is that a problem? And is that a problem even?
It could be a problem. It's a bit complicated because this is Washington, and everybody in Washington knows everybody in Washington, and they all go to the same parties and that sort of thing. So they do have contact. Now, in the past, Fed chairs and members of the Board of Governors have taken pains not to be seen talking to administration officials on any kind of a regular basis. Jay Powell's only met with Donald Trump once. And I think that Powell and his predecessors in office, Janet Yellen and Ben Bernanke, did not meet with Joe Biden or with Barack Obama very often, if at all.
Right.
They do meet with the Treasury Secretary on a weekly basis, but they don't meet with anyone else. Now, there have been criticisms of people from both parties of a revolving door where they go back and forth. Lil Brainerd went from the Fed to the White House. Austin Goolsbee was in the White House and now is on the Fed. So there are certainly questions raised about how cozy the two sides can be.
Hey, one last question. We all know about the dual mandate of the U.S. Central Bank. Stephen Myron, though, cited a third mandate that it must also pursue, and this is the Fed, moderate long-term interest rates. And when that happened, he said this, chatter lit up bond trading desks as analysts debated what it all meant. The third mandate said to be a long-forgotten part of the Fed statute in full. I've been doing this a fair amount of time, but you're the Fed expert. What do we need to know about that, just quickly?
Well, it is part of the overall mandate, but it flows from the other two. The feeling has been at the Fed that if you have maximum employment and stable prices, you will have moderate long-term interest rates because the markets decide that the economy is in good shape. And the worry is that if the Fed tried to deliver moderate long-term interest rates, they would have to do something to interfere in the markets, a more of a QE type of situation where they would buy longer-term treasuries or sell longer-term treasuries, and the markets don't want that. So it's just been kind of left to the side for these many years.
All right, we're going to leave it on that note. Listen, Mike, thank you so much. Well set up, certainly, for the Fed decision. That is, of course, our Bloomberg TV and radio international economics and policy correspondent, Michael McKee. Mike will be in the lockup, the Fed lockup, tomorrow when we get that Fed decision at 2 p.m. Wall Street time. The expectation is that we will get that quarter-point cut in rates. Long time in coming and expectations. The market, though, pricing in some more, although we know in conversations, Yelena Shaletyeva, that we spoke to from the conference board yesterday, talked about, I think, was it 5 in total, including tomorrow's meeting. So there are other folks that said TBD, the Fed's going to be data dependent and have to watch things very closely.
And right now, in the equity market at least, not a lot of activity. Potentially seems like investors and traders waiting to see what happens with Jay Powell tomorrow. The S&P 500, little change, but down close to 0.1%. The NASDAQ flat, the Dow down 0.2%. In terms of what treasuries are doing, yields slightly lower across the curve, the 10-year at 4.02.
All right, everybody. And of course, we have been watching the markets right now. Just a quick check here as we just look at kind of a quiet trade here, lower across the board. S&P, call it just down about 5 points unchanged. The NASDAQ 100, a decline of about 17 points. We do want to take you to Utah and update on the filing of the Utah man, the charges against him who has been jailed in the killing of conservative activist Charlie Kirk. Let's take you to Utah, where the Utah County Attorney Jeff Gray is scheduled to hold this press conference. I believe he is at the podium. Let's listen in.
Of the people of Utah and of all those who visit here, but Charlie Kirk's murder also strikes a more personal and intimate chord. Charlie Kirk was first and foremost a husband and a father to 2 beautiful young children. He was a son, he was a brother, and a friend. Like all murders, the senseless and needless taking of Charlie Kirk's life has shattered the lives of those he loved and those who loved him. To Charlie's wife, Erica, his 2 young children, his parents, his family, and his friends, I express my sincere condolences and offer my heartfelt prayers on your behalf. I also want to express my concern for everyone who was at Charlie's Turning Point USA event at the Utah Valley University, and all who have been impacted by this tragedy. As county attorney, I am charged with bringing justice to those who offend our laws. I am charged with bringing justice for those who are harmed. I am charged with bringing justice for Charlie Kirk. I am committed to these aims. I take this responsibility seriously. Today, after reviewing the evidence that law enforcement has collected thus far, I am filing a criminal information charging Tyler James Robinson, age 22, with the following crimes. Count 1, aggravated murder, a capital offense for intentionally or knowingly causing the death of Charlie Kirk under circumstances that created a great risk of death to others. Count 2, felony discharge of a firearm causing serious bodily injury, a first-degree felony. The state is further alleging aggravating factors on counts 1 and 2 because the defendant is believed to have targeted Charlie Kirk based on Charlie Kirk's political expression and did so knowing that children were present and would witness the homicide. The state is also charging defendant with count 3, obstruction of justice, a second-degree felony for moving and concealing the rifle used in the shooting. Count 4, obstruction of justice, a second-degree felony for disposing the clothing he wore during the shooting. Count 5, witness tampering, a third-degree felony for directing his roommate to delete his incriminating texts. Count 6, witness tampering, a third-degree felony for directing his roommate to stay silent if police questioned him. And count 7, commission of a violent offense in the presence of a child, a Class A misdemeanor, for committing homicide knowing that children were present and may have seen or heard the murder and did so based on Charlie Kirk's political expression. Also, following the press conference, I am filing a notice of intent to seek the death penalty. I do not take this decision lightly, and it is a decision I have made independently as county attorney, based solely on the available evidence and circumstances and nature of the crime. Because we are seeking the death penalty, the defendant will continue to be held without bail in the Utah County Jail. Turning to the 10-page information, these are the allegations. On September 10th, 2025, at approximately 12:23 p.m., Charlie Kirk was shot and killed while speaking to a large crowd on the campus of Utah Valley University in Orem, Utah. Police found the suspected murder weapon, a bolt-action .30-06 rifle, nearby. Over the next approximately 33 hours, police conducted a manhunt for the shooter until the evening of September 11th, 2025, when Tyler James Robinson surrendered to police at the Washington County Sheriff's Office. DNA consistent with Robinson was found on the rifle's trigger. After shooting Mr. Kirk, Robinson hid the gun, discarded the clothing he wore when he fired the rifle, and told his roommate to delete incriminating text messages and not talk to police. Children were present at the time of the shooting. The shooting. Turning Point USA, a nonprofit organization founded in 2012 by Charlie Kirk, organized a public outdoor event to be held at noon on September 10th, 2025 at UVU. The event was the first in a series of similar events to be held at college campuses nationwide. Mr. Kirk is a well-known conservative activist, famous for these type of events, where he discusses various political issues and debates with audience members. His events and comments have garnered a significant number of supporters and drawn the ire of many who disagree with his political views. The event at UVU was announced far in advance and garnered significant publicity and interest. Consequently, several hundred people attended. Mr. Kirk was interacting with the crowd before the event officially got underway. Then, at approximately noon, Mr. Kirk seated himself under a portable canopy behind a table and microphone. He began speaking to the crowd and fielding questions from attendees, a format Mr. Kirk commonly used at his events. Mr. Kirk allowed his questioners to approach a microphone positioned directly in front of him. Mr. Kirk's team members were very close to him on his right and left, as well as some behind his canopy and others at various close locations near him. The large crowd surrounded Mr. Kirk on three sides. Temporary metal fencing separated attendees from Mr. Kirk by only a matter of feet. Directly above and behind Mr. Kirk was the UVU Hall of Flags, an indoor walkway spanning several hundred feet with floor-to-ceiling glass windows which overlooked the plaza where Mr. Kirk was seated. People were in the walkway at the time of the shooting. Approximately 15 minutes into the event, Mr. Kirk was answering a question about mass shootings by transgender individuals when a gunshot rang out. The bullet struck Mr. Kirk in the neck. He slumped to the ground almost immediately. The bullet's trajectory passed closely to several other individuals beside Mr. Kirk, including the questioner who was standing directly in front of Mr. Kirk. Children were visible near Mr. Kirk's stage when he was shot. Mr. Kirk was rushed to a nearby hospital where he was declared deceased. The medical examiner's report is still pending. So UVU surveillance. So at the moment of the shot, a UVU police officer was watching the crowd from an elevated vantage point. As soon as he heard the shot, he began to scan the area for threats. Believing the shot came from a rifle because of its sound, he looked for potential sniper positions. He noted a roof area approximately 160 yards away from Mr. Kirk as a potential shooting position and rushed there to look for evidence. The suspected shooting position is adjacent to an open, publicly accessible walkway. To access the suspected location, a person must climb over a railing and then drop to the roof only slightly below. The UV officer climbed over the railing and down onto the roof. He then walked to the suspected shooting position and confirmed a clear shooting corridor between the position and Mr. Kirk's seat. He also noticed markings in the gravel rooftop, consistent with a sniper having lain on the roof, impressions in the gravel potentially left by the elbows, knees, and feet of a person in a prone shooting position. Police reviewed surveillance from the camera covering the roof and discovered that it recorded an individual dressed in dark clothing cross the railing from the public walkway and drop onto the roof at approximately 12:15 p.m. Although the individual moved out of the camera's view for a short time, the camera again captured the individual running across the roof and then low crawling to the area the UVU officer recognized as where the suspected sniper had dropped into a prone shooting position. After a short time, which matches the known time of the shot, the individual arose and ran across the roof to the northeast. This discovery led to an intensive review of UVU surveillance recordings to attempt to track and identify the suspect. Surveillance revealed the following. At approximately 11:51 a.m., the suspect entered campus from the north. He is seen wearing a black shirt with an American flag in the center, a dark baseball cap, and large sunglasses. Throughout the surveillance, the suspect keeps his head down and rarely raises his head enough to get a clear image of his face. As he proceeds across the campus, he is seen walking with an unusual gait. The suspect walks with very little bending in his right leg, consistent with a rifle being hidden in his pants. This unusual gait continues until the suspect is seen crossing the railway off the open walkway and onto the roof, where he leaves the camera's view. A camera later captures the suspect as he runs across the roof to the suspected shooting position. Immediately after the shot was fired, a camera captures the suspect running across the roof carrying an item whose shape is consistent with a rifle. The suspect is then seen climbing down from the roof. He appears to drop the item he was carrying as he hits the ground in a controlled fall. He then picks up the item and runs toward the northeast end of campus. Expanded crime scene investigation. Law enforcement officers followed the suspect's escape path to the northeast end of campus, where they believe the suspect left campus and entered a wooded area. In that wooded area, investigators found a bolt-action rifle wrapped in a towel. The rifle contained one spent round and 3 unspent rounds. This is consistent with the facts officers observed at the time of and immediately after the shootings. No shell casings were found on the roof, suggesting a bolt action rather than an auto-loading weapon, and only a single round was fired. Each round in the rifle contained an etched inscription as follows. The fired cartridge was etched, "No Tice's bulge, OWO, what's this?" The second cartridge that was again not spent, the last 3 were not spent, were not fired. The second, "Hey fascist, catch," with arrow symbols. The third cartridge, "Oh Bella Chow, Bella Chow, Bella Chow, Chow Chow." The fourth cartridge, "If you read this, you are gay," LMAO. The rifle, ammunition rounds, and towel were sent for forensic processing. DNA consistent with defendant was found on the trigger, other parts of the rifle, the fired cartridge casing, 2 of the 3 unfired cartridges, and the towel. Law enforcement was unable to immediately locate the shooter, so they published photos of the shooter from the UVU surveillance cameras and asked for the public's help to identify him. Meanwhile, law enforcement continued to try to identify the shooter through other means. The Washington County investigation. On the evening of September 11th, 2025, as law enforcement continued their investigation, Tyler James Robinson went to the Washington County Sheriff's Office with his parents and a family friend to turn himself in. Robinson's mother stated that the following to police. On September 11th, 2025, the day after the shooting, Robinson's mother saw the photo of the shooter in the news and thought the shooter looked like her son. Robinson's mother called her son and asked him where he was. He said he was at home sick. and that he had also been at home homesick on September 10th. Robinson's mother expressed concern to her husband that the suspect shooter looked like Robinson. Robinson's father agreed. Robinson's mother explained that over the last year or so, Robinson had become more political and had started to lean more to the left, becoming more pro-gay and trans rights oriented. She stated that Robinson began to date his roommate, a biological male who was transitioning genders. This resulted in several discussions with family members, but especially between Robinson and his father, who have very different political views. In one conversation before the shooting, Robinson mentioned that Charlie Kirk would be holding an event at UVU, which Robinson said was a stupid venue for the event. Robinson accused Kirk of spreading hate. Robinson's father reported that when his wife showed him the surveillance image of the suspected shooter in the news, he agreed that it looked like their son. He also believed that the rifle that police suspected the shooter used matched a rifle that was given to his son as a gift. As a result, Robinson's father contacted his son and asked him to send a photo of the rifle. Robinson did not respond. However, Robinson's father spoke on the phone with Robinson. Robinson implied that he planned to take his own life. Robinson's parents were able to convince him to meet at their home. As they discussed the situation...
All right, everybody, you are listening to, right now, Utah County Attorney Jeff Gray. He has been speaking for the last 15, 20 minutes, really laying out the charges against Tyler James Robinson, age 22, has been charged with murder in the death of the conservative activist Charlie Kirk. You obviously know the story, the reality, but the charges now being laid out, 7 counts. The most egregious, no doubt about it. Count 1, aggravated murder, which is a capital offense. The County Attorney Jeff Gray also saying that he will pursue the death penalty, filing a notice of intent to seek the death penalty in this case. In the meantime, Tyler Robinson will be held without bail in that Utah County jail. We'll continue to monitor and bring you any more details. But again, kind of going through all of the details in terms of the investigation that led them to the finding ultimately of Tyler Robinson.
I want to bring in Bloomberg News senior reporter Miles Miller, who covers Homeland Security and the FBI. He joins us here in the Bloomberg Business Week studio. A lot to take in just now, Miles. What did we learn new in this press conference?
We learned that his parents are the ones who recognized him on television and really got this investigation moving. You know, after that 9 o'clock press conference by the FBI, his father recognized the gun that was shown as a gun that he purchased for him for Christmas one year. His mother called him, said, "Where are you?" He said that he was feeling sick, and the father encouraged him to come in. They take him to the Washington County Sheriff's. Looking through this court filing, you know, he talks with his roommate, who is his partner, and he said, you know, I hope to keep this a secret till I died of old age. I'm sorry. And his partner says, well, what happened? And he says, you know, were you the one who did it? And he said, you know, I thought they caught the person. And he goes, no, they grabbed some crazy old dude, then interrogated someone in similar clothing. I had planned to grab my rifle from my drop point shortly after, but then that side of town got locked down. So he's talking in detail about what happened in this case, and then you know it's all detailed in this complaint.
You know, for those who aren't familiar with this process, I mean, these complaints, I think Tim and I were kind of saying, well, the detail and all the information, but this is pretty typical in a case like this, or any case.
That's right. You know, the prosecutors don't always detail every part of the investigation. Sometimes in the initial filing, it'll just be the charges. Certainly here in New York, if it's a grand jury thing, they'll just put the counts, but you have this prosecutor laying out in detail everything that happened, and they're hitting him with every charge imaginable. Just scrolling back up just to go to the charges here about what relate to this case. Aggravated murder, first-degree felony, which is a capital offense, which means life in prison or the death penalty. Felony discharge of a firearm, that carries 5 years to life. Obstruction of justice, 1 to 15 years. 2 counts up to 30 years. Tampering with a witness, meaning telling his partner to delete the text messages, or if they come to him, say ask for a lawyer, that goes up to 5 years, or 2 counts up to 10 years. And then violent offense committed in the presence of a child, meaning that some of these these students in the college were under 18. That's up to a year in jail.
This is we learned this from Jeff Gray, Utah County Attorney. These are state charges. Does he also potentially face federal charges?
Yeah, so
completely separate from this.
Right. The Attorney General hinted at that yesterday. The FBI director on Capitol Hill this morning also hinting at that the federal investigation continues. It is likely that he will see the state case go forward and then be charged, once this gets to a federal grand jury, with some sort of federal charge. In cases like this, where the state charges first, the feds come in after, they'll do it concurrently. What was most eye-opening is that they're actually going for the death penalty in this case. The Attorney General Pam Bondi saying yesterday in Utah they still have a firing squad there, just to show the contrast about what happened in this instance and what could happen to him.
How is it that something becomes a state case but also a federal case? How does that happen?
It depends on who takes the lead in it. In this instance, Utah officials, law enforcement officials, were on the scene within minutes. Mm-hmm. Obviously, 6 officers from the university, but then the Utah County sheriffs came in as well. FBI came in to aid the investigation. So sometimes the states take it. In this case, the state took it first, but the feds are still very involved in this.
What I find pretty remarkable about this is even with all the manpower, the person power that the federal and state agents had, it was in releasing information. Of course, they gathered DNA and they were able to release a timeline. In the end, it was the family of this this person who came forward.
Yeah, I think that, in law enforcement, you see something, say something, one thing, the reason why my friend who used to run, he was the chief of detectives here in New York, he used to say, I put a bad guy on TV every night, because it's that multiplier force that you put somebody on TV, somebody may have seen them, it jogs people's memory, and I think I said this in the day after it happened, somebody's going to have seen him at a gas station, in passing on their Ring camera, and that is what led to this. But that's not to say that the investigative parts weren't helpful. Once they had that framework, right, they had already arrested him, then they could get into his phone, they could figure out that he's on Discord and all of that, and that has played a crucial role in this investigation. That's how they were able to get this complaint, because they've got all the text messages from him and his partner. You only get that if you are, in fact, able to do that investigative 10-page complaint here.
Hey, before you go, earlier today we had a New York State judge dismissing first-degree murder charges against Luigi Mangione. This is obviously the individual who is charged with fatally shooting the United Health Group executive earlier this year. What do we need to know here?
Yeah,
was that a surprise?
It's surprising that prosecutors went for the terrorism charge. The terrorism charge came about after 9/11. It's specific for incidents that, there was an incident in Times Square a couple of New Year's Eves ago where a guy went up to cops and tried to stab and kill them. That can be used as a terrorism charge. It was a stretch for this. The judge in this case said that there wasn't enough evidence presented to prove that it was terrorism in this case, but of course the murder charge still stands, and it's second-degree murder because in New York State, first-degree murder is reserved for cops, firefighters, people in the public service. It's different in this case, but it still, faces a long term in prison as well.
All right, so appreciate it. As always, Miles Miller, he is our senior reporter covering Homeland Security and the FBI, joining us right here in studio. Let's go back to the markets, get a check on the trading session. Here is once again Charlie.
Hi, thank you very much. We are looking at a down day. I do want to begin with a number of developing stories breaking in the past few minutes here. President Trump establishing an emergency board to investigate disputes between the Long Island Railroad and its unions. The LIRR is the nation's largest commuter railroad. The White House also issuing an order delaying that TikTok ban until December 16th. And President Trump said he spoke to Indian Prime Minister Narendra Modi in a move that offers to ease tensions between the two major economies. As S&P 500 index right now lower, little change, down under 0.1%, down 366.11. Dow Industrials down 110, down 0.2%. NASDAQ just about flat on the day, down now by 2 points. We've got the 10-year yielding 4.02%, the 2-year ahead of the Fed decision 3.50%. Spot gold up $10 the ounce, 36.89, up 0.3%. And West Texas Intermediate crude up 2%, 64.58 for a barrel of WTI. President Trump has filed a $15 billion defamation lawsuit against the New York Times, accusing the paper of serving, quote, as a mouthpiece for the Democrats. The Times said in a statement the lawsuit has no merit. New York Times down 1.7%. Recapping stocks lower, little changed. S&P down under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie with the rundown on the markets, reminding us, of course, the Fed kicking off that 2-day meeting today. We get that Fed decision. We'll be all over it 24 hours from now. We'll know exactly what the Fed is up to. In the meantime, you've got a 10-year with a yield of about 4.02, 5-year note with a yield of 3.58, 2-year note with a yield of 3.50. Keep in mind, we did have a $13 billion 20-year auction today, our Markets Live blog saying that there was pretty strong demand. So let's get to, Tim, a trusted voice when it comes to the U.S. Treasury trade and what the Fed is up to.
Katie Kaminsky is Chief Research Strategist and Portfolio Manager with Alpha Simplex Group. She joins us from Boston. Also the co-author of the book Trend Following with Managed Features, The Search for Crisis Alpha. Katie, good to have you with us this afternoon. First, make the call about the Fed's, not just tomorrow's move, but also the move to the end of the year. We want to put you on the spot here. What do you think happens tomorrow, and then what do you think happens for the remainder of the year when it comes to the path of policy?
Oh, you love to do that. I get
do.
that. So I'd say 25 tomorrow, but that's consensus. But I do think we will get some more cuts later this year. And the market has definitely already been pricing that in, particularly in the futures market. What that means is that people are expecting this to be a catalyst, a start of a new regime, which is important.
Well, having said that, I was thinking about your background. You've got a Bachelor of Science in Electrical Engineering, a PhD in Operations Research from MIT. Yeah, you're super smart. We know. I'm just wondering, Katie, is it easier to kind of figure out Fed policy, the U.S. fixed income market right now, or is it easier figuring out a complicated electronic schematic? I'm just curious with all that's coming at investors.
I actually think it's equally as complex. And let me tell you why. Is right now is a very interesting time in history for looking at the Fed, and just the amount of dissent is actually is unprecedented. So we haven't seen 3 dissents since 1988, and you're starting to see a much wider range of views on the Fed itself. So I'd like to say that this is going to cause a much wider reaction, a range of reaction, or more volatility in the reaction function of markets once those decisions come out, and we try to figure out what that means.
Is that dissent, in your view, political, or is it representative of a lot of things coming at investors and maybe some mixed signals?
Well, I think, there's clearly some political leaning in terms of that type of dissent. I mean, but just the fact that you have such wide range of opinions. And I think, like I said, we haven't seen this many dissents in Fed votes for decades. So it kind of suggests a new regime shift, a very different type of Fed to try to analyze. And everyone's trying to understand, are these dissents going to move to a new consensus, or are we just going to be in the same scenario for a longer period of time?
Do you think the Fed is independent right now?
I mean, I think, it's hard to have, nothing is ever 100% independent in Washington, as you guys already noted, as you all already noted. But I think the fact that, there's definitely influence coming from those that are appointed, that has a potential to make independence a little bit weaker than it was before. And that's definitely the market's sentiment on that. And the things that you see is there's a lot of concern over that. And that could put the bond market at risk.
So when you look at what are you now looking and thinking in terms of how low rates can go, Katie? I mean, we have talked with you throughout the last 3 to 6 to 9 to 12 months. And there's points where we were talking about, 5% on the 10-year. We've gone below 4% on the 10-year. We're right now kind of at it. So I'm just curious, what's the smart thinking, in your view, when it comes to where U.S. rates trend?
So this is a very good point. We have seen more long pressure in bonds. We're starting to see trajectory towards lower rates. What I get concerned about is if we stay in the middle and we sort of have that smooth and steady ride down in rates, I think that may be something where no balance gets tipped. On the other hand, if we have a very aggressive move downward in rates, we could have some overstimulation. We could be at risk for inflation, and we could risk losing parts of the long end of the bond curve just due to investors being concerned about rates being too low and inflation being too high. So I think for me, it's coasting in the middle will give us a nice trend down in yields.
Wait, so did you give me levels? Did you give me
Not
numbers?
exactly, but maybe 3. I don't know.
Really?
Hopefully,
For
I
the
don't know.
middle?
Maybe 1.
Wait,
depends on the time horizon, though.
Did you say 1?
No, I definitely didn't say 1.
Okay, but maybe 3. Are you saying 3 for like the 5
3,
year?
3.5.
3.5.
Perhaps.
All along?
I mean, the 6-month SOFR contract is already trading at a 3.4. So, we could get there. I don't know.
What about when it comes to growth? Should investors be concerned about stagflation?
Well, I mean, I think stagflation is one of those corner cases where, if things are calm and we have a balance in terms of growth is strong enough to withstand, for example, tariffs, inflation, then we should be in an okay position. I think what people really get concerned about is sort of putting the pedal to the metal, right? So you basically cut rates too quickly, try to overstimulate, it doesn't work. And then suddenly inflated prices are there anyways. And so I think there is a concern because it is really sort of a very bad economic situation. It's not just low growth, it's low growth when the power of your purchasing power has gone down. And so I think we love to talk about it because it's sort of like the Armageddon of difficult scenarios.
Hey, I just want to get a couple headlines that are crossing the Bloomberg right now. Silver Lake and Andreessen Horowitz in a TikTok investor group. This according to the Wall Street Journal. The Wall Street Journal also reporting that TikTok's U.S. consortium would include Oracle. The TikTok deal would create a new entity, and U.S. TikTok users would be asked to shift to a new app. This is all according to the Wall Street Journal. This comes after we did learn a little earlier that the U.S. has extended the deadline to sell TikTok until December 16th. The White House issued an order earlier, just in the last hour, on TikTok, extending that TikTok enforcement delay.
Hey, Katie, before you go, what are you watching out for most? We get a dot plot tomorrow. We've got a new member on the Fed board, Stephen Myron, of course, from the Fed, not from the Fed, excuse me, nominated by the president. So I'm just curious, what's top of mind? I feel like there's going to be a lot coming at us tomorrow.
I think for me, it's the dispersion in the dot plots. Do we see a much wider range, and how do we distill that information? And also the size of the cut, let's just be honest. Like, do we get a surprise? I mean, I think that is always an interesting scenario to think about, a 0 or a 50.
All right, gonna leave it out there. Always appreciate your time and such a timely interview at that. Katie, be well. Katie Kaminsky, she's Chief Research Strategist and Portfolio Manager at Alpha Simplex Group, joining us from Boston, Massachusetts. Again, 24 hours from now, we will be well into the Jay Powell presser and talking about all that he has to say. Hey, over the summer, one of the things that caught our attention, Bloomberg News reporting that the world's largest technology companies, so we're talking Microsoft, Amazon, Google, all of them planning to spend billions of dollars, more than $344 billion on capital expenditures, with much of it, Tim, going to data centers for AI models.
According to Bloomberg intelligence analyst Mandeep Singh, companies have, quote, basically tripled CapEx investment in cloud due to AI, with executives emphasizing the need to invest quickly to get ahead. Our next guest is helping those hyperscalers scale up when it comes to AI. With us in studio is Adair Fox-Martin, president and CEO of Equinix, the nearly $76 billion market cap data center REIT. It trades under their ticker EQIX, down so far this year about 18%. Adair, welcome. Good to see you.
Thank you so much. Thank you for having me.
Nice to have you.
So how's business?
Business is very good.
Like the best you've seen it?
like we're in the middle of a very strong cyclical demand cycle for, the products and services that we offer.
When you say we're in the middle, help us understand how long that means of a runway there is to go here.
Sure. At Equinix, we see a very significant trend from the training of models in the AI economy that you refer to in your opening there with the hyperscalers to the deployment of those models in enterprise systems. And that deployment is called inference. And we see that opportunity as potentially double the size of the training opportunity. And at our company, we feel we were built for this moment.
Has that happened faster than everybody anticipated? Because I do feel like the conversation, although we've been talking about AI now, almost 2.5 years, well into 2.5 years, but we are now increasingly talking about all of this stuff starting to be put to work.
Right. You can certainly see organizations, we have 10,000 customers across the world moving from proof of concepts into production systems and applications of the technology.
One of the things I think we're curious about is, as you know, the news flow is fast and furious from the White House and out of Washington. And there have been some announcements out of the Trump administration about AI infrastructure initiatives specifically. So I'm curious, Adair, have you seen any impact of that on your existing properties leasing effort? And I'm curious how you compete with, how does that kind of compete their program with your own development program?
Look, we very much welcome the focus that the current administration has on data centers and the importance and the recognition of data centers and their important role in the infrastructure of any economy. And we certainly are looking at, some of the properties that have been, identified as potential for RFPs, and we would choose based on locations that would be accretive to our business, because we're very focused in cities, in metro areas close to where humans are who will use this technology.
Are you getting pushback from cities and humans who don't necessarily want those data centers near them?
Not hugely. I mean, we're very conscious of the role that we play and, the role that we play with communities where we have data centers. And we're very considered about our approach there.
What makes a good location for a data center? Because it doesn't actually, apart from the construction, it doesn't actually involve that many people to keep it up and running relative to the amount of money that's spent on it and what actually happens in there.
Yeah, it's really interesting because I think, when you think about the operations of a data center, you tend in your mind to go immediately to technicians and technology. But actually, there's a whole series of unsung heroes in the operation of a data center, which are the craftsmen and the tradesmen and women, the plumbers, the electricians, the engineers, who basically keep the internet up and running, through this data center infrastructure.
So difficulties in finding those workers? We've done some reporting about that there's, okay, yay, great, the spend and the build, but there's not enough workers to do it.
So I think, the constraints that the industry are facing are around energy and power, around skilled workforce, and then into the supply chain for the equipment that's part and parcel of a data center.
But is that slowing the build that you guys are trying to do and meet the demand?
It is something that you have to actively manage as you are looking to build. For example, in our case, around some of our supply chain portfolio, we've pre-purchased in order to ensure that we can have the delivery dates that we need to bring capacity online.
We talked about the $344 billion that some of the world's largest tech companies are planning to spend when it comes to CapEx. It's like the thing we look for now quarterly when a company reports results. How much of hyperscalers' CapEx budgets actually flow through your company?